Very good morning. Welcome to India Market Open. What powerful pictures there on the tarmac between Putin and Prime Minister Modi, and telling that message going loud and clear across the world, maybe in some extent to Washington as well. But we have an exciting show today, guys. Policy Day.
Yeah, it's going to be a great one to watch, not just because of the policy measures, but because of the rupee.
Yeah, I think for once the interest rate bet gets outshone by what happens with the rupee, or are there any measures that the RBI will take to control the rupee? Will we just leave it as it is right now?
Yeah, simply because the rate decision seems to be a foregone conclusion, and therefore surprises out there, sure, but otherwise the commentary on the rupee really becomes important.
Yeah, so rupee in focus. What is the impact of all of the measures or MOUs or plans that India and Russia have on specific stocks? All of that and a lot more on the show. Take a look. All right, let's get you through the global setup very quickly. It was a mixed day of trade for US markets, even as the focus remains on tech stocks. So you saw some movement in the Nasdaq. The Max 7, as usual, was doing okay, Meta, etc. But the Dow slightly in the red. All eyes are, of course, on the Fed meet. So central banks are dominating equity markets, I would say, over the next few days. We have a chance of a 25 basis rate cut being factored in. This is the December 10th meet, which will take place. Key data on consumer spending and inflation will also be out today, so that's important. The PCE has not been released since the US government shutdown, so that data is important. There's also been private jobs data, which is looking at a soft labor market, that jobs have been lost in the month of November. That is increasing the chances of a rate cut, or at least what the street is anticipating. Bond yields also rose ahead of those key data releases. The 10-year was at 4.1%. Oil prices have risen ahead of that expected rate cut and stalled Ukraine-Russia talks. The Brent was at a $63 per barrel mark. We'll pull up Asia for you, mirroring Wall Street, at least in early trade, with a spot of weakness continuing even now. The Hang Seng nearly 0.5% down is the Nikkei, which is 1.5% down this morning. India implied completely flat, nothing really moving there. And, you know, you see this more and more on Policy Day, guys, that before the 10 o'clock speech starts, sometimes the morning gets very, very muted, perhaps waiting to see what comes. And in the past, the governor has really been the catalyst that the markets need. So policy at one point, but let's quickly go across to Edward Yardeni, President Yardeni Research as well, joining in this morning for his take on all things on global markets and, of course, how he sees the Indian market. Edward, great to have you on. Thank you so much for joining us this morning on India Market Open. Okay, let's start.
Thank you very much.
Thank you. So let's start with the anticipation of a rate cut at the December 10th meeting. What are you penciling in?
I think it's going to be 25 basis points. It's the market's expected to such a great extent that I don't think the Fed could just suddenly surprise us and not do it. However, when they cut on December 10th by 25 basis points, we may also find that there's more than one, two, or maybe even three dissenters saying that they're not in favor of cutting interest rates. As you mentioned, Friday morning in the United States, we're going to get the consumption deflator, which is like the CPI, a measure of consumer prices that the Fed follows very closely. That's not expected to really change anybody's mind at the Fed. So I think there's going to be a rate cut, but we just don't know the extent to which it turns out to be what I would describe as a hawkish rate cut, to the extent that the Fed sells it as maybe the last rate cut for a while. So not one in January, maybe not one for a while in the first half of next year.
Good morning from where we're at, and Alex here. so much of what the central bank does is adjusting expectations. And so I take what you're saying. I'm just wondering what you read from the consumption data that you saw earlier in the week, because if you look at the holiday season buying, then on the face of it, that number was higher. But when you look under the hood, people are buying essentials. So I'm just wondering where that inflation bug will come to bite, and whether it'll be sooner rather than later, in your opinion.
Well, you're making a very good point. I think let's look at tomorrow's data, which will include consumption not just of goods but also of services. And I think the service economy is still quite strong. So that's the way I'm looking at it. The consumer is very bifurcated. There's consumers that are higher income consumers that are clearly doing a lot of spending. Lower income consumers are focusing on essentials and they're not buying discretionary. But all in all, the consumer is still keeping the economy growing, notwithstanding some weakness in the labor market. I think that's partly because the consumers are sitting on a lot of net worth that just keeps going up with the stock market. So the stock market's had a positive wealth effect.
Dr. Yardeni, you've been constructive precious metals for a while now. What we're seeing is an almost all commodities rise kind of a move, because base metals have had a phenomenal last few days as well. What's your sense of how much does this last, both precious metals as well as base metals?
Well, I think with regards to gold, which I've been doing more focusing on than some of the other precious metals, though the other precious metals have done very well. Platinum has been very strong. But with regards to gold, I think gold continues to consolidate its gains since the beginning of the year. It's gone up from about 3,000 to 4,000. I think it continues to move sideways, maybe through the first 3 months of the year, and then I think it'll resume its climb. And I see it getting to 5,000 by the end of 2026. And if it maintains its relationship to the stock market, I'm very bullish on the stock market. I think earnings are going to be very strong. I don't think we're going to have an economy-wide recession for the next few years. So I have the S&P 500 going to 10,000 by the end of 2029. If it does that, then I think we'll see that gold may very well get up to that price level as well. So bullish on stocks, bullish on gold.
Dr. Yardeni, perspective on India, from the perspective of the slide of the rupee in the recent past. And I'm just wondering, from the outside in, does that make India less attractive, even more so than it has been in recent months from a foreign institution perspective? And what will be required for that to change?
Well, sentiment can change pretty quickly. And I think this year, the Indian stock market has been suffering from too much success in previous years. So it was one of the strongest emerging markets, one of the strongest global stock markets since before this year. And so I think it's been consolidating its gains. I think it may continue to do so into early next year. But with the Fed likely to cut rates some more, with the global economy doing really quite well, and with Prime Minister Modi diversifying India's relationships, economic relationships around the world, I think the Indian economy will do just fine, and Indian earnings will do as well. It's just the valuation multiple maybe needs some time for earnings to catch up.
Edward, one big development here today is, of course, the visit of Putin to India and all the talks that are taking place. Even as we wait for the unending wait, I would say, for an Indo-American trade deal continues, there's also going to be investments opening up from Russian investors into India, the announcement of a mutual fund, etc. How do you see some of these developments?
Well, it's actually pretty confusing, right? I mean, the United States, the Trump administration has been putting a lot of pressure on the Modi government to cooperate less with Russia, to buy less Russian oil, and to basically align India's interests more with American interests. And I think what Modi is clearly demonstrating quite publicly is that India has its own foreign policy has its own interests, and some of those interests involve keeping a relatively good relationship with Russia, notwithstanding the American pressure. So I think it demonstrates a certain amount of, clearly it demonstrates a lot of independence on the part of India, and a confidence that India can do just fine no matter what the pressures are from the United States or any other country.
Yardeni, as always, a pleasure speaking with you. Thanks so much for taking the time.
Thank you. Thank you.
All right, let's talk about what's happened in trade yesterday. It kind of set the context for today because we were anticipating, or the market was anticipating the move by the central bank today. And so, understandably, it was a very, very choppy session. In fact, the benchmark rebounded twice from negative territory, once at the start and once midway through the session. You see those red marks on the screen. And in fact, it traded within that 160-point range, but managed to close above 26,000, which is going to be critical to watch. RIL's sharp fall actually at the end of the day caused the Nifty 50's late slide. Pull up that chart if you can, because that's going to be very evident on the screen. RIL in fact dropping as much as 1.6% from the day's high, and from the Nifty 50 basket only Hindalco had a sharper fall from the high point of the day. Of course, you had another stock that was at lows, and that was Interglobe Aviation, but it was lower from the start. IT stocks actually powered gains through most of the session, and several IT stocks gave up gains towards the end, but you still had the index that ended with gains of about 1.36%. That was still lower by about 1/3% from the high point of the day. Now, defense, FMCG, realty, auto all logged gains, but they were modest. And the Nifty Bank actually underperformed, ended flat with a negative bias. So that's something that didn't lend support in yesterday's session. Of course, those financials are going to be in focus on account of the RBI monetary policy. I guess to a certain extent that caution was visible in trade yesterday. The broader markets underperformed, ended with cuts, but the mid-cap index ended largely flat, however, with a negative bias. There was a lot of giving up of advanced declines from one to the other through the session. Take a look at that. What a chart. It looks like a Rorschach ink stain, effectively. Anyway.
Sorry.
Yeah, no one knows what you mean, Alex.
Yeah.
Okay. I'll explain later.
Let's move on to the market. It looks like an ink stain of some sort. Yes. So fine. Interesting chart.
He's talking about a psychological test you do where you put an ink stain in the middle of a paper.
Yeah.
Since you brought this up,
Yes.
now I have to do this. And then you open it and a psychiatrist will tell you what it looks like, and you think it looks something scary, maybe there's something wrong with
Okay,
you.
let's move on.
That's the test.
Okay. Well, the markets are anything but Rorschach's ink test, but for the fact that individual portfolios are hurting, but not much to talk about really, because frankly, it's showing almost every single day that any kind of predictions made on what the index will do are turning out to be wrong because of the intraday volatility, and this is despite the VIX being so low. So bear that in mind. I think in focus today will be just 2 or 3 sectors that you squarely got to keep in mind. One, a rate cut positive for NBFCs, no rate cut positive for banks. So that's the thing. But I would presume that a rate cut is a given. The extent of the rate cut and the dovish commentary is something that you want to watch out for from the Reserve Bank of India. So that's one set of stocks you want to keep an eye out for. And 2, anything opening up from Russia on the buy list, if you will, becomes an important one. Could not in a large measure, but in a small measure, could some of the sectors, export-oriented sectors from India, get some kind of an antidote from Russia? I think that remains a key. Maybe, maybe not, but it's something that the markets are talking about. Let's see if that were to come about. And therefore, textiles, gems and jewelry, etc., I don't think it any way becomes enough to fill the gap that as of now exists. But some small measures might be helpful. So keep an eye out for those.
Okay. So I think the biggest factor today, the no-brainer and no prizes for guessing, is what the monetary policy is going to spring up. We've done a poll of economists in which a majority are saying that there will be a 25 basis rate cut. I think there is one who says 50 basis point, and of course the rest of them all saying that there will be no rate cut, but nevertheless a rate cut is being factored in. That's the big one, I suppose. RBI monetary policy, watch out for that. But just zooming out to a slightly broader India strategy, and this is what Rajiv Batra of JP Morgan India is saying. He says the Indian equity market performance year to date has been lackluster. Quantitative tools suggest that conditions are improving. See sustained recovery in India's cycle indicator, corroborated by a recent uptick in macro data. See potential for an imminent catch-up in equities, accelerating earnings growth, supportive policy tailwinds, a narrowing valuation gap with emerging markets, and the prospect of a US-India trade breakthrough all point in the right direction. Top overweight sectors: financials, consumer, discretionary, and materials. So keep an eye out for some of those, but from a longer-term view. As far as today is concerned, Nifty has shown a mild positive bias by closing above the crucial 26,000 mark in trade yesterday. So at least we have that. We are poised for a volatile session ahead of the RBI MPC meet. Attention on rate-sensitive pockets such as banking, auto and realty, of course, will be there. Immediate outlook is for consolidation with a slight positive bias. Index holds above key moving averages despite weak momentum indicators. So that's a relief. The key determinant for the upcoming sessions, of course, will be the defense of support levels at 25,900. Immediate support at 26,000. Crucial breakdown is sustainably below 25,900. And an upside target would be at 26,100 to 26,300. Major resistance at 26,500 and immediate resistance at 26,100. For the Bank Nifty, crucial resistance at 60,000, immediate resistance at 59,500 and crucial support at 59,500. So these are some of the technical levels. Apart from this, I would say watch out for crude sensitives. I mean, as much as we're talking about Indigo's pain point in the context of its flight disruptions, the fact is that a weakening rupee and the impact it has on their crude imports or their ATF imports is what's going to hurt that stock as well. So watch out for the crude sensitives, watch out for the rate sensitives. And I would say some of those defense stocks as well, because we'll have more details of what is inked between India and Russia. So HAL and stocks like those may be in focus. Having said that, let's go across to Puneet for the FNO setup this morning. Good morning, Puneet.
Well, good morning to Mana and Antonio and Alex as well. It's been a very interesting day yesterday. While some lack of triggers, as you might call it, but a 100-point recovery from the Nifty's day low is something that the market would have taken with both hands on a Sensex expiry day. While the implied open is indicating a downward bias of 3 to 4 points, we will continue to monitor largely on the MPC day, results day, whenever there is the outcome. We do see the Nifty marginally flattish, looking and waiting and in anticipation for 10 a.m. So largely we'll start to see those triggers playing out at that time. So watch out for that. In terms of the open interest, slight dip seen in Nifty 50, but let's go across to the foreign investor position. It's been another day when we have seen selling by foreign investors, net short position being built in the system, and because of that, the subsequent index long position have slipped back to the 12% level. So it does indicate that it was a very brief hiatus from foreign investors moving towards having increased long position. That seems to have fizzled out very quickly as we've gone into December, and the first week of December is all that it lasted. The net OI put call ratio also very, very neutral right now. Directionless to say the least. So one put for every one call that they hold. Open interest distribution is also throwing up similar signals as yesterday, that 26,000 continues to be a level where both calls and puts have the high open interest. 26,500 for the calls, while 25,500 for the puts continues to be the level that they are dominating. And in terms of stocks, just a couple of them to highlight. One's, of course, Keynes Tech. A lot of the issues that came out yesterday from Kotak's report were well known, but the stock still tanked almost 6% trade, and there was a buildup of shorts. It'll be interesting what happens today as well, something we'll monitor. And HUL in open interest losers was something that was dominating in the higher open interest of almost 22%, but short coverings. Today is the record day for the ice cream business demerger, so watch out for that. So overall, a lot of sectors like IT will continue to be in focus because of the rupee amongst others, but watch out for smaller ones like Realty amongst others, which gave a positive bias to the market yesterday as well.
Okay. About 4.5 points down in the red. I mean, it's completely flat is what is being indicated by the implied open at this point. But let's take a look at some of the stocks that should be on your radar. I mean, when Indigo is flailing in terms of managing the new rules for pilots and how much rest they should have, that's essentially the issue. SpiceJet has come out with some very positive commentary during its analyst meet takeaway. They've in fact guided for a sharp scale up in operations in the second half of this financial year up to FY27. They've said fleet size has been increased to 68 in December 2025 from 54 in Q2. Operational fleet increased 32 in December 2025 from 19 in Q2. They have seen ASKs doubled from 55 crore in Q2 to 110 crore in December 2025. And they expect ASKs as average seat kilometers, if I'm not mistaken, to double from 110 crores in December 2025 to 220 crores by December 2026. They're focusing on raising their concentration of operations in a few key airports as well. So watch out for that stock. It was about 5% down in trade yesterday. Tech is the other one. They've received orders worth 120 crores from the Defense Ministry to supply comprehensive training nodes. That Tech we're talking about. So that's good news. But like I said, I think the overall defense basket is something that you should have on your radar today with Putin in town. And clearly, the one big area of cooperation, like we saw with the S-400s during Operation Sindoor, etc., between India and Russia is in the defense space. So watch out for that. Not just that, if we're talking a bit about India and Russia, and I'm going to just take a second over here, the fact that there is a India-focused mutual fund that is going to be open to Russian investors aligned with the Nifty, I thought was quite interesting. And one of the large banks wants to have commercial operations here as well. HUL is the third one, and this is not an up and down. This is an FYI, but something to keep in mind. The shares of HUL will trade ex-date from today. So basically, the demerger with Quality Walls India takes place today. So the stock exchanges will conduct a special pre-open session to determine the fair price of HUL shares post the demerger. And the entitlement ratio between HUL and Quality Walls has 1:1, which means one share of face value of 1 rupee in KWIL, that's Quality Walls, for every share held in HUL. Basically, this is part of the larger plan of Unilever to demerge its ice cream business. So Quality Walls will be a separate listed entity from today, and you'll see that adjustment in the price as well.
And for a short while, it'll be an ice cream company on the Nifty 50, which is quite interesting.
No, I think you'll have 51 scripts for a short while. There will be an ice cream company on the...
Did you think that you'd ever say that? No, I don't. Well, I didn't think so. But anyway, for a short while at the very least. I've got ITC Hotels on top of my list, and it depends on what occurs today, because British American Tobacco is set to offload its shares worth nearly 3,000 crore rupees if all of this stake that it intends to sell is sold, because it's a pretty wide range. It says that it will sell between 7% and 15.3% stake in ITC Hotels. So therefore, that positive is conditional. If it sells its entire stake, it is a positive. That entire stake stands at 15.3%. And it's positive because that overhang of supply into the market then goes away. What's interesting is that the floor price is set at very close to the market price currently. So 205.65 is the floor price. The close yesterday was 207.8. Let's see. We'll have to check with Somit perhaps to check whether there's going to be demand for that issue or that share stake sale. Diamond Power is on my list as well as the second stock. It's gotten a significant order, 750 crore or thereabouts from Adani Green. This order is for supply of transmission cables for Khavda and Rajasthan projects. And this comes soon on the heels of another order that the company got from the group as well, about 250 crore rupees just a couple of weeks back or so. This order is set to be completed in 2026. Remember, this a company with a market capitalization of just over 7,000 crore rupees. So this is quite a significant order from that perspective. Interglobe Aviation, this is a thumbs down for various reasons, but I want to focus on a note by Morgan Stanley. And by the way, there's another Citi note. We'll talk about that maybe later in the day. But Morgan Stanley is maintaining an overweight, but it's cut its target price to 6,540 from 6,698. It says that Indigo is hitting a rough patch. It's seeing rising cost headwinds, and the entire industry, of course, will face these, and capacity is tight. Expect airfares to rise gradually as a partial offset. they say that demand trends are improving. In the November, domestic sales or passengers was up as much as 7% year-on-year, compared with a 2% drop in the second quarter. But that INR depreciation against the dollar could affect fuel and maintenance costs. As you know, it accounts for about 40% of the total costs of an airline or thereabouts. And so anything that shifts on that front would be material. Of course, beyond all of that, there's also the troubles that they're facing and the reputational risk, because people will shift to other airlines while this is happening in the near term.
Yeah, most certainly. And not necessarily out of choice, but you have to. And it'll be interesting to see how it impacts the multiples, including the earnings of Interglobe Aviation. So should be interesting to see. Are you guys flying Indigo anytime soon?
We were supposed to, but I don't think it's going to happen. You know, I must say that speakers expected to come on our channel today have all over the place. The spillover effect of a country that is so mobile right now is astonishing. I mean, of course, this morning we're looking at it from the lens of Interglobe Aviation, but if you have a player with a 60% market share that can't get its act together, and the fact is that it can't get its act together. They've gone and told DGCA we need more time for rules which we've had 22 months to prepare for. That's
really
a
sad
fact. So you've had a 60% market share player just not ready, and the spillover effect is all over the place.
Which is why you have people protesting at the airport.
Yeah, and you know, just a small 10 seconds here. It was almost a blemishless record from efficiency perspective for Interglobe Aviation. People talk about how efficient they are on so many things, including airport ops, etc. This is quite the contrary, really. So it should be interesting to see. Okay, very quickly, 3 stocks on my list. Brookfield India REIT, the 3,500 crore QIP launched at 320. How well this gets subscribed could be interesting. So keep an eye out for that. Keep an eye out for Tata Power. We've been talking about this for some time now. They expect the operations at the Mundra unit to resume by December 31st. It's a big shot in the arm. Now, does this propel the stock near term? Remains to be seen, but keep in mind, this has the potential to do that. Delta Corp, after a long time, the promoter entities bought some stake in the stock. So it should be interesting to see what Delta Corp does, if it does anything today. So these are top 3 on my list.
Okay. Well, I think the biggest thing on our watch list is not a stock, but it's a person, or actually a team, and what they will do at the Reserve Bank of India. And Vishwanath are there standing outside the RBI to tell us what exactly is expected. This is going to be more about commentary on the rupee than the actual rate cut, isn't it, Rishi?
You know, Tamanna, this morning I've got a friend who's been waiting at the airport, wondering if his flight is going to take off or not, and that's kind of what is expected at the RBI as well. Everybody's out here waiting and watching if the RBI or the MPC is actually going to cut rates or not. There is a camp of economists who believe that 25 basis point rate cut is given. There's another camp that believes that no, it would be a blank fire, so it's better to hold on to the rates. There's one guy out there who still believes there's a 50 basis point rate cut chance. So it's a pretty much of a split verdict, not so widely split, but there is that split is seriously considerable because it's 24 versus 11 on a 25 basis point rate cut versus a pause. Few factors to consider: 8.2% GDP growth for Q2, so that sort of puts cold water on any expectation of a rate cut. But on the flip side is the inflation number at 0.25% for the month of October. The November data will come in later. Economists are expecting that you may even see negative reading on the CPI inflation. So if you're an inflation targeting central bank, then your call is inflation's down, I should cut. But then the growth number comes into the picture, and then the rupee comes into the picture, because the rupee currently weakening past 90. Of course, last evening during the close, it trended above the 90 mark. But we don't know whether that is going to hold today when the markets actually open or not. But any rate cut will have an impact on the rupee as well. So a bunch of factors in front of the MPC. Now, they've spent 2 days discussing this. The RBI governor in the recent past, as well as in the October policy, has mentioned that there is room to cut. Does that room open up in December or later in February? And if it opens up in December, is there room again in February and then post that or not? These are all questions that the MPC will have to answer. Sanjay Malhotra will have to answer these questions when the press asks him, because they will all want to know what the guidance on the rate factor is, as well as the guidance on what forex management is going to look like, because that is also key. The last thing on my list that I will watch out for is liquidity management, because that is every time you go out and sell dollars, you're pulling out rupee liquidity from the market. So how does the RBI intend to manage that liquidity? Because any rate cut will only pass on to the end consumer if banks have that liquidity to go out and lend. So, bunch of factors to consider here. But yeah, to cut or not to cut, that's the question.
Okay, I think to cut, yes. How much, maybe. I don't know. We'll wait and see. I think I'm on the fence that there will be at least a 25 basis point rate cut today.
I'm not on the fence. I believe there will be a 25 basis points cut for sure.
So 25 basis points it is. Well, thank you for that, Vishwanath. And we'll, of course, come back to the story close to the time we have that announcement, which is at 10 a.m. But meanwhile, this is an NDTV Profit News Break confirmed. The SEBI, that's the Securities and Exchange Board of India, has issued an interim order against finfluencer Avadhoot Sathe. You remember Avadhoot Sathe from the famous pictures now of him having this whole session and a dancing session really with his team. So he has been accused, and there's an order against him for alleged unlawful gains of more than, hold your breath, 546 crore rupees, directing that they should be impounded from him and his academy. SEBI's order also bans Sathe from the securities market until further notice and prohibits him from advertising his performance or those of his course participants. He's also been directed to not collect any fee from existing course participants and remove all website and advertisements related to his academy. Remember, earlier in August, we reported that SEBI had conducted a search operation at his trading academy and could impound the finfluencers in unlawful gains. Just pull up those pictures again. Just the fact that it's 546 crores. It's not just the model. There might be others who are doing this right now in a very frothy market and telling people that, and literally his modus operandi is telling people that Fno trading is child's play, and he got a 13-year-old to come up and show it. But 546 crores is mind-blowing.
It is mind-blowing. It just shows the extent of the operations that they may have had or he may have had, and the number of people who may have participated for some very wrong reasons. I'm not against people saying that I've got a Eureka formula on trading and come and see, and everybody should do their own due diligence. But to tell kids that options is a child's play is really not kosher.
So it's not about the guy dancing. It's actually, for me, it is about the crowd participating in the way that they were participating. It's nothing else but being hoodwinked by somebody.
Yeah. Well, time for a very short break. We're back with top trading strategies of the morning and what you should look for. Stay tuned.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course.
Welcome back. You're watching India Market Open. It's set for an exciting morning, and don't go by the implied open. I think everybody's waiting with bated breath to find out what the RBI governor announces at 10 a.m. today, and you'll find all of that action right here. But for now, let's talk about the key levels that you should watch over the course of today, not just in the opening hour. And to do that, we've got Kush Bora, founder of kushbora.com, in the BKC studio. Kush, of course, every Friday we speak to you in the morning, and every Monday. What has changed over the interim of the week, and what does that indicate to you about the direction going forward?
Lovely. Nice setup, Alex. First up, a very good morning. Or should I say, Dobre Utra.
What?
Haven't you guys been brushing up on your Russian? I'm completely
We're just listening to Rara Rasputin on loop.
Lovely song. No, with the kind of proximity, who knows? I mean, you know where this might take us, right?
Yeah.
Wow.
No, but seriously, last week भी मैंने Friday को यही complain किया था, आज भी वही है. Friday इतना packed कौन रखता है? But this time it's not on you guys. There's just so much happening outside, right? So completely understandable, and as you rightly said, an exciting Friday morning. As far as the index goes, I think, Alex, what's changed is that the near-term pain has accentuated. That's all. But otherwise, let me start with the positives first. The 20-day moving average has been held on yesterday for the second time. The Nifty is still in that upward sloping channel that we've been speaking about. After 4 sessions, you've got the higher high, higher low formation on the daily charts, which is the first sign, the green shoot that you look for when you look for a turnaround or a reversal. So that could very much be on the cards. So I still remain very constructive on the Nifty. I still maintain the targets of 26,500 and 26,900. So those are the levels that we could still perhaps go and hit. First hurdle obviously is 26,300. We're waiting for a trigger. The market, it just seems like it's waiting for a trigger to move out. Perhaps the Russian announcement, if any, comes out. Who knows? Could be one of the triggers. The concern is on the bank Nifty. A slight concern, if I can put it that way. Private banks were consolidating anyway, correct? PSU banks, after the announcement that came day before, took a knock. Yesterday we saw some recovery, but I think even the banks are waiting for a fresh trigger. The RBI meeting announcement today could perhaps be that trigger. Targets of 60,200, 60,900 still intact. Supports at 58,500. And Alex, what else is looking like the Rorschach test? The index, the index, slightly ambiguous because the medium-term structure is still upwards, but the intraday moves have been seeing that selling pressure, right? So mild concern. Overall, I remain optimistic on the Nifty and the bank Nifty, but because of that ambiguity, I don't suggest a preemptive trade. Wait for the markets to turn around, give you that move. There will be a long enough run-up for you to capitalize on. Just don't be preemptive.
So kind of you to catch my reference, as poor as it was. and for you to utilize it. But Kush, what stocks are you looking at today?
So going with two longs yet again, Sansera Engineering and Ipca Labs. Mind you, Sansera Engineering is something that we discussed about 8 or 10 sessions ago for the second target of about 1680 or something. That's been hit. The stock is in a very strong uptrend. So why not continue that play? There's been a brief profit booking along with the market, but yesterday you again saw the stock show you an uptick. So now for targets of 1740, 1780 with a stop loss at the 1660 mark, Sansera Engineering is still a buy. And then Ipca Labs. I think the two sectors which have done well in this market have been IT and pharma. So a lot of names from the pharma space, even in my list. Ipca Labs has given you a multi-month breakout. On the upside, 1485, 1515 are your targets. 1425 is where you keep that stop loss.
Okay, I'm going to ask you about Keynes Tech, Kush, which got completely battered yesterday. They've actually just put out a statement, and this is a strange situation because its impact was based on a research report, everything that we saw. So Keynes Tech says, we respect all forms of independent market analysis and research. External perspectives help deepen understanding, broaden dialogue. External perspectives help play important role in shaping informed investor decisions. I mean, not something that will move the needle one way or the other in terms of what they're actually saying. But do you think at the levels that it is at, Keynes Tech maybe sees some of a rebound here?
Yeah, what a beautifully worded response, isn't it? But I'm not sure if it'll help the sentiment on the street. Yesterday on the closing show, I think I mentioned this, that this is where all the fundamental analysts are going to be super happy, right? I mean, everyone said that the entire space is overheated, the valuations are super stretched. Took a while coming, but all of these stocks are now giving you that catch-up rally, at least on the valuations. No, I don't think that the worst is over for Keynes. The reason being, while the stock started its downfall somewhere, early October, even in the last 2-3 sessions, including yesterday, the downtick has been on very serious volumes. So I would have a wait-and-watch approach on Keynes Tech and the entire EMS space. The only stock that I like in this space is PGEL because it's already had its big crash some time ago, and now it's steadily on its way up. So if you do want to play this at all, then PG Electroplast is your stock. But other than that, I would still be a little wary of the moves in this sector and not go bottom fishing.
Okay. Dare I ask you about Interglobe? Would you buy Interglobe this morning? Or SpiceJet?
No, SpiceJet is a big no-no. So, like the only tickets that you can book perhaps are Indigo, at least on my list, right? The only stock that you can consider in this space is Indigo.
You'll buy Indigo?
I will, not now. It's just that, it's been a bit turbulent ride, and, there's this nosedive and crash landing, but I'm not sure that the landing has actually happened yet. I want the stock to settle, give me that turnaround, and I'll buy it just before the takeoff. So not just yet. I don't think the worst is over for this one as well. Some more downside, 200-day moving average broken, so a little cautious. But from a medium-term perspective, I like the stock. So as and when it, this fall stems and it takes that, takeoff, just at the takeoff level, I would be more keen to buy Indigo.
Kush is on fire today with his analogies. His analogy is excellent. All right, but talking more about Interglobe, it's chaos in the sky and panic on the ground. Some fresh visuals we got this morning of someone who's waiting several hours at the airport, and more of those coming through. But what is the impact on the balance sheet as far as Indigo is concerned? So here's what's happened. It's India's largest domestic carrier, cancelled over 1,000 flights across Mumbai, Delhi, Bengaluru, Hyderabad over 4 days, leaving thousands stranded and desperate. But Sumit, the fact is that there is chaos, social media, wrath, all of that, and then there is the actual balance sheet for Interglobe. And this is a strong month for the sector.
In fact, it's a strong quarter for the sector, and in that quarter, we are seeing this kind of an impact coming in. So over 1,000 flights have been cancelled over the last 4 days. Just to give some perspective, Indigo operates nearly 2,250 to 2,300 flights on a daily basis. So this cancellations is just 11% of the average daily flights that Indigo has. So what could be the financial impact of these cancellations? Now we are doing this calculation based on Q3 FY25 financial, which is the last year financials. And what you are picking up from that is that on an average, Indigo has around 190 seats on each flight, and average kilometers that happens on a fly is around 1,000 kilometers. So the capacity that it flies per flight is around 1.9 lakh, which is just 190 into 1,000 rupees. So that gives you the capacity. Now, what could be the notional revenue loss for every flight for Indigo which gets cancelled? That is 5.44 rupees is what they earned, and if you multiply that by 1.9 lakh, you get the amount at 10.3 lakh. So this is the notional revenue loss. But the impact on the profitability will be much lower, given the fact that if a flight gets cancelled, the variable cost is kind of a saving for an airline company. So it's the fixed cost that is that gets impacted on the bottom line. So the fixed cost amount is 2.5 rupees. So if you multiply 2.5 by 1.9 lakh, you get the amount 4.8 lakh. So that's the impact on the profit for every flight cancellation. Now, total loss of 1,000 cancellation would be around 48 crore. And again, to just give some perspective, in the Q3 of FY25, the company earned a profit of 2,449 crore. So just 48 crore is just 2% of the top line of the bottom line impact. And when it comes to the top line, 103 crore could be the potential revenue loss, and that is just 0.5% for Indigo. But the bigger problem for Indigo is the rupee depreciation that we have been seeing. In this quarter so far, rupee has depreciated by nearly 1.3%, and INR depreciation could affect its fuel cost and maintenance cost. Nearly 60% of the cost for an airline is dollar denominated, and with every rupee depreciation, this gets impacted. But this of the 60%, some of this gets offset, given the fact that 15% of the top line comes in from dollar or other currencies. So that gets offset, but the remaining 45% definitely gets impacted. Indigo does some hedging for the part of its exposure, but analysts believe that with every 1% rupee depreciation, the net profit gets impacted by nearly 7 to 8%. And moreover, there's a notional loss of around 900 crore, which also comes to their P&L. Obviously, this is a notional loss and not a cash loss, but this comes to their profit and loss account because of the lease liabilities that they have. But this will be realized at a later stage when they have to make a payment. At this moment, it's just a notional loss and not a cash loss. But the 7 to 8% is definitely a cash loss for Indigo.
Thanks so much, Somit, for getting us that calculation, and certainly very interesting to consider. And I love the fact that he's explained how he's arrived at that. So, of course, we're talking about 1,000 flights cancelled over 4 days. You can extrapolate that over the course of the next few days. And of course, we'll bring you updates on an ongoing basis. But for now, let's bring in Jinesh Joshi, who is a research analyst at PL Capital, to talk about some of this impact. Jinesh, very good morning to you. Thanks so much for taking the time. I hope that you heard Somit's presentation and calculation. First of all, are you thinking along those same lines, one? And two, do you agree with the impact being limited on the bottom line at this point, at 1,000 cancellations? And do you think that it gets far worse? What's the view right now?
Sure. See, actually, the situation has been worsening. I mean, if I look at the data which came out a couple of days back, the cancellation rate was anywhere between 70 to 200 flights a day. Now, yesterday, that figure was approximately 550 flights. Now, Indigo operates approximately 2,300 flights a day. So if I take the figure which was announced yesterday, I think that roughly about 23% of the flights were cancelled. So definitely what is happening is that the new regulations that have come into place are kind of creating an unforeseen chaos for the airline. And in the near term, what needs to be looked at is how soon this situation is being brought under control. Because if I look at the last 2 to 3 days, the situation has aggravated a bit.
Okay. Jinesh, I'm wondering if this is an opportunity for other players, listed and unlisted right now. And what is the cost escalation that takes place? Indigo, for example, is telling DGCA that it needs up till February of 2026 to get this in place. Do they, at the end of the day, have to simply hire more crew?
Absolutely, absolutely. So if you look at their employee count as of FY25, they had approximately 41,000 employees. Out of that, the crew figure was somewhere around 5,400, if I'm not mistaken. Sorry, that was the pilot number. The crew number was anywhere between 10,200 to 10,300. So what can perhaps happen is that in order to meet these new regulations, they may have to hire a few people. And to kind of give you a perspective on cost, I mean, employee cost as of FY25 for Indigo was somewhere around 9% of the top line. The absolute number, if I'm not mistaken, was somewhere around 7,400 crores. If I look at the number for 1H FY26, that figure was somewhere around 4,000 crores. So when it comes to the cost impact, I think employee cost is one area where you might see some kind of an escalation come through in the near term. And as far as your question with respect to the opportunity for the other airlines is concerned, see, this is basically a duopoly. Indigo has about 65% market share and balance 25% is with Tata's, and then you have certain smaller players like Akasa and SpiceJet. So in the near term, till the time this chaos gets resolved, obviously there will be some opportunity for the other players to kind of jump in. But the situation with respect to the other airlines also is with respect to the shortage of inductions that are there, especially with Air India and some other airlines. So how the situation pans out over there remains to be seen. But yeah, in near term, there could be an opportunity for the other players to kind of grab in the market share. But it all depends upon how soon Indigo is able to resolve this situation.
Okay, Jinesh, it seems like this is a case of somebody having been given homework and having 22 months to do it and turning up and saying, oh, sorry, we just couldn't finish it on time, and hoping that there's going to be an extension. And there's chaos along with all of this. It's not just them that's getting impacted. What is the potential for the DGCA to come down heavily on this with a penalty? And is that a major concern that an investor should have? Two, what would the response from a potential investor be and an existing investor be? Because there is potential for downside on the earnings front from here, let's face it. And if you are looking to get into the stock, do you get an opportunity down the road in your opinion?
Yeah, I think this is a tough one, especially the DGCA part that you highlighted. I think very difficult to comment. But yeah, I mean, no doubt they were given sufficient timeline to kind of implement the norms. The first phase was supposed to be implemented from 1st of July. The second phase was supposed to be implemented from 1st of November. So no doubt there has been some kind of a lag in that. But when it comes to penalty, honestly speaking, I don't have a very clear answer to that. And yeah, I mean, in terms of opportunity, yeah, definitely. What can happen is that, say, for example, if the situation is not brought under control in next 1 week, and there is some kind of a impact on the stock price, which you're already seeing. Even yesterday, there was some bit of a correction that had come through. Then maybe from a long-term perspective, one can start nibbling in. But see, unless and until the situation kind of resolves and we get to know, okay, yeah, this is the bottom, in the sense that from here on the situation will ideally reverse, because of the last 2 days, we have seen aggravation that has essentially come through.
Okay. Jinesh, thank you so much for joining in this morning and giving us a sense. Last word, would you buy Indigo right now, or would you buy, I mean, the only other listed player to buy really is SpiceJet. So would you buy any of them right now?
No, I will not buy Indigo at this point in time. I'll wait for the situation to stabilize, because that is where we'll get a clear idea that a reversal is around the corner.
And what about the other listed entity?
We don't cover that, so I may not be able to comment.
Okay, thank you so much for that. Okay, here are what brokerages are saying on the situation. There's a Citi and a Morgan Stanley note. Morgan Stanley has maintained an overweight but cut its target price on Indigo, 6,540, anyway, way above where it is right now. They're saying it's hitting a rough patch, raising cost headwinds for Indigo. Industry capacity is tight, fares may rise gradually, and demand trends are improving. November domestic passengers were up 7% year-on-year versus 2% in Q2. Depreciation to affect fuel and maintenance cost. As far as Citi is concerned, they have also maintained a buy with a target price of 6,500. They say the on-time performance has declined considerably across the airlines. Given Indigo's more complex network, disruptions in any flights build up faster and to a larger extent. The new FDTL, which is basically norms for how long pilots can fly, put simply, also reduce the flexibility in rostering, and normalization could take some time. There could be near-term disruptions in operations. Expect normalization over the next 1 month. On the profitability side, we think that deterioration in INR versus USD and rising ATF prices could impact profits in the seasonally strong Q3. So that's the Indigo story. But having said that, let me go across for the segment that we look forward to every morning. Heard on the street. So Amit Sarkar joins in with all the chatter from the team. Be quiet.
Well, when it comes to stock-specific action, firstly, it's Biocon that remains in focus. Now, yesterday, the street was quite disappointed because of 2 reasons. Firstly, because the company mentioned in the release that they might consider a QIP, so that was something that the street took negatively. And also, there was a lot of long unwinding that we saw on the counter, because before this board meet announcement, the stock had run up around 3 to 4 odd%. So some longer unwinding also led to this downfall in Biocon. But what dealers are now indicating is that Biocon might consider consider a share swap and merge Biologics subsidiary with itself, and the merger ratio could be in favor of Biocon. So keep an eye out for that counter. When it comes to Shriram Finance, mutual funds have been seller in this counter, and dealers are clearly indicating that a couple of top mutual funds were selling that shares in trade yesterday in Shriram Finance. For Birlasoft, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are also on the higher side. For SRF, multiple dealing rooms are recommending potential positional buy calls to their clients. They are seeing two triggers when it comes to SRF. The first one is that they're expecting volumes to pick up significantly in the second half of this financial year, and they're also saying that ref gas, which is refrigerant gas, one of the key products for SRF, the prices for the same are quite stable. And lastly, when it comes to Hitachi Energy, that counter has been falling for the last couple of sessions. It's down more than 10% in trade in the last two sessions, and what dealers are indicating is that one of the potential order wins that was supposed to come to Hitachi Energy will not come now. It has been cancelled, and in fact its peer, that is GE Vernova, might probably win that order, and that's the reason we are seeing this kind of a downtick when it comes to Hitachi Energy.
Absolutely. Thanks so much, Soumit, for that. And we were seeing this play out in trade yesterday. Towards the end of the session, there was a worsening of Hitachi Energy towards the end of the session. It ended with cuts of 8%. I'm just wondering what the view is on the charts. Does it stop here, or is there more pressure on the downside?
So Alex, with the kind of volumes on which it fell and the kind of closing that it gave, which is very close to the low point of the day, I won't be surprised if there could be some extension of that fall. But just to put it in context, in the last 20-25 sessions, the stock had actually run up 35+%, right? So anyway, it was due for a round of profit booking. This was way sharper than what anyone could have expected. There is now the 19,000 level, which is the 61.8% retracement, which is technically a strong retracement level. So that's where perhaps the stock could halt its fall. If that happens, I think there could be a sideways consolidation that could come about. So not an immediate buy, even if it comes to that 19,000 mark, but that's where it could go and find some support.
Okay, we'll take a very short break. Pull up the implied. We're coming back and speaking with Dharmesh Kant as well. Oops, my glasses just fell there. But very short break. We'll be right back. A lot more action lined up for you.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
back. You're watching India Market Open, completely flat on the implied open. It's giving you a sense of what the big story really is, and it's going to kick off at 10 a.m. Meanwhile, pre-market, a few things have happened. The entire ITC Hotels block deal has taken place, where BAT, that's British Tobacco, seems to have exited its stake in ITC Hotels. So that's one stock to watch out for. But let me welcome Dharmesh Kant, Head Equity Research, Chola Securities, on the show now. Dharmesh, apologies. I think we had a Indigo type technical glitch on our end as well, and a bit of delay there. So apologies for that. Some traffic which led to that perhaps internally. But great to have you on the show as always. Give us a sense of what you're looking out for from a market's perspective when it comes to the policy at 10 a.m. What is it that you want to hear the governor say?
Yeah, good morning, Tavanna. I mean, the only thing which we would like to hear is a policy rate cut coming through. People may say that the GDP number was strong, but look at the nominal GDP number. That was not strong. That was 8.7%. At the same time, GST collection for the month of September, when this GDP thing is actually kicked in, was only 0.7% kind of a growth, which was to my mind very dismal, because few pockets may have performed and that became the headline. But overall economy, had it been stronger, then at least 10-12% kind of a GST number growth should have been there on backdrop of everything playing out. So that was not the case. The third aspect is, I mean, RBI's only aim is to maintain the monetary policy, not to monitor the growth. That's the part of the finance ministry in the government. And that is, I mean, 0.5%, 0.44% was the CPI inflation index, far below to 2% to 6% window. So, I mean, everything is there, and why not, fuel the economy further and make it more resilient, more stronger. So I would ideally say there should be a 50 basis point rate cut, but I think that's a very wishful thinking. But 25 basis point rate cut should come into play in this policy, and that's much needed for a larger part of the MSME segment, which has been affected by, US. If you talk to those people, basically in the Peninsular India, so there's a lot of pain happening out there in those part of the segment. So that rate cut would be beneficial, and the immediate beneficiary of this rate cut would be the NBFC, please. Banks definitely will be under a weather for some time, but NBFCs will be there for a kicker. So I think one should be having a watch out on all the NBFC plays today morning.
And good points that you're raising there, Dharmesh. You're not the only one who has that wishful thinking. Vishwanath Nair told us this morning that there's one other economist that is being tracked that has a view that there's going to be a 50 basis point cut. So you're not the only one out there. Let's talk about a stock that was under pressure in trade yesterday, and we did refer to this, Keynes Tech. Kotak, of course, flagged off inconsistencies, and then JP Morgan has issued an overweight report on the stock, but is cautious, or rather it's cautioned that the balance sheet and cash flow concerns remain key headwinds. Puneet joining in to tell you more about what they're saying. Puneet, of course, that clarification also coming through from the company, but what is this brokerage saying?
Well, Alex, thank you for that. So, as you rightly said, there are three key updates that have happened just in the last 24 hours. So, Kotak's report came in yesterday on annual report analysis of 2025, where they've highlighted these issues. Today, JP Morgan in the morning have come out with a note, and post that, just about half an hour ago, is Keynes Tech's response on the same. So, JP Morgan has mentioned that they're advising investors not to bottom fish at this point in time, even when they maintain an overweight rating. And I think this is one of the key takeaways from this particular report. They maintain a target price of 7,550 versus the current market price of just about 4,900 rupees, and mentions that some questions on revenue growth barring the smart meter space is also warranted for investors to look at. But overall, I want to just focus on Keynes' response as well, because on Kotak's report, they've had a filing today in the morning. They've specifically mentioned Kotak in the filing as well, and said that there are these 6 issues that Kotak has raised and given a detailed clarification on each one of them. So they have said that yes, the contingent liability has increased, but it was because of an acquisition that they did last year and because of the goodwill as well. On issues such as what Kotak had raised, that higher interest cost of 17.7%, Keynes has said that there was bill discounting included in that, so it has to be excluded. And these are just some of the examples of that 6 key issues which Kotak had raised. All have been addressed at this point of time. So we have reached out to the management to come and speak to us on all of these issues as well. But largely, investors need to look at the exchange filing as well, because it's quite detailed. And in terms of clarification, Keynes has gone all out to give us that as well. But overall, it's a very interesting juncture where the stock finds itself in. Mutual funds have done some selling, the likes of Motilal Oswal amongst others. But individual investors need to look at the detailed filing as well and also speak to their advisors, because it's a key one, it's a key stock, up almost 10x from issue price, but it's down from the highs of almost 8,000 rupees that the stock touched just a few weeks ago.
Just one quick follow-up over there, Puneet. You've seen the JP Morgan note today. We saw the Kotak note today. And then we've seen Keynes Tech's response. What is that key concern that would still remain as far as investors are concerned?
The one key aspect has to be net working capital. Now, over 120 days, there's so much of cash that is locked in the net working capital right now that Keynes Tech itself will take roughly 3 to 4 quarters to lower it to a respectable level. Now that is the concern, which is a big one for investors, a big one for mutual funds as well, and hence we've seen selling in that stock. So it will take some time for these issues to come down. The management has said that all measures have started to do so, but it remains one of the key monitorables, at least for the next 3 to 4 quarters.
Okay, thank you so much for that, Puneet. Dharmesh, any views on Keynes Tech?
Yeah, I mean, the issues which has been highlighted, one is to look from the lens that whether it is a normal business issues in the day-to-day course of operation, and sometimes they are, playing. So these are, I think, these are not structural bottlenecks to the decelerating kind of a growth to the company. These are issues which every management comes through in the course of the business over a period of time, and that is exactly where Keynes is being cornered as of now. They are taking proactive steps. I think when the management is there on your channel, the more clarity will emerge from what the issues are. Largely, I think the selling which is happening in the EMS space, not only Keynes, other stocks are also being, painted with the same brush. The reason is, one is the L&T announcement that they will foray into the EMS space in a big way. L&T is a large conglomerate, so definitely the scale will be far higher. And secondly, the valuations were too high. So whenever there is a big announcement coming through from a major player, then the valuations does take effect. We have seen in wire and cables, all the polycaps, KI, all the same is played out, and now in EMS space, same theory is being playing out. So business will restore back, but valuation still is, expensive. So no need for, catching the falling knife as of now. Let it settle down, and maybe after 6 months down the line, more clarity will emerge whether you should be buying Keynes Technology kind of a company at 60, 70 kind of a P multiples.
Got it. Okay. All right. So keep an eye on Keynes Tech. Looks like it's going to start lower once again today. Watch out for the downside. Onto the brokerage call of the day, and we've got Jefferies that has maintained a buy call on PB Fintech. Sharad is joining in to talk about why they're bullish on this particular stock. Sharad, morning.
Good morning, Alex. Bullish commentary coming in for PB Fintech coming in from Jefferies. They're maintained buy, but the target price that has been hiked from 2100 to 2150 odd rupees. They've stated that the dominance in the segment is expanding, but there are certain regulatory overhangs as well. The company is having a dominant space in the insurance market, and they're expecting for the next 3 years a premium growth ranging between 35 to 40 odd %, as their share for PB Fintech's healthcare insurance, that is only just 10%. That means there is a significant headway going ahead as well. Growing margins as well as renewal premiums share, that's increasing, and the bullishness is coming from the new initiatives as well. They're suggesting an upside for FY27 PAT guidance, but of course there is an uncertainty when it comes to the GST rate pass outs.
Okay, PB Fintech on focus. Just want to see what's moving in the early hours. ITC Hotels looking quite interesting this morning, that all of that block is done. The exit of the parent company in that sense from ITC Hotels, that stock doing okay, 908. So that means your pre-open session is done, which is now set up for opening trade. Zentek on that order win is doing fine. There's some more order win companies that you should take a look at. RailTel is among them as well. So that's doing okay as well. On the losing side, you have, of course, Keynes Tech showing pain. One of the top losers in the pre-open session has been Keynes Tech, about over 2% down. Vijay Diagnostics, Sapphire Food are the other stocks which are hurting. I want to look at what's happening at Interglobe and if there is any action as far as Interglobe is concerned. In fact, let's look at some of the other stocks that you should have on your focus, and IT space is important. As the rupee weakens, this could actually be good for some of your IT export companies. So TCS, Infosys, HCL Tech, let's look at some of them. Infosys not looking bad at all, about 1% up this morning. Just take a look at the defense pack, HAL, BEL, BHEL. All of them will maybe see some action neutral right now. And of course, there's the RBI meet today. SBI, PNB Housing, Godrej Properties will be in focus. And of course, a lot of other rate-sensitive stocks that you should look at as well. Zentek, Railtel, we talked about some of those with the order wins that should be in focus. Dharmesh, anything in the defense pack that you're finding interesting?
Yeah, I mean, whole host of companies are interesting in the defense pack. Only thing is, one is to keep an eye on the valuation front while checking out there. And these are structural growth stories into the play. This should not be looked on quarter-to-quarter basis. But that's the only problem which happens with traders when looking at defense companies. So I think many announcements may come through with Mr. Putin's visit to India, and most of them will be favorable to our defense companies. As transfer of technology would be the theme which would be playing out in the announcement. So there would be order wins, deal wins in the course, but more importantly, how much transfer of technology is happening out there, and that will be margin accretive for most of them. So we have been for last 1.5 or 2 years, we have been consistently buyers in HL and BL, and those two companies remains the top pick out there. Not that other companies are bad, but just the valuation comfort is high and the structural growth story order book, if you look at almost 5 times to sales, is where they are being at. So any declines out there should be bought into. The only caveat is be an investor and wait patiently for 2 or 3 years for meaningful gains to come through.
All right, you'll have to be patient with BEL. It's going to be in focus today along with the rest of the defense pack amidst that Putin visit. Kush, I want to come to you on ITC hotels. From the broader markets, it seems to be one in focus, right? It's gaining on the back of that large trade, possibly a clean-out trade by BAT. And with that overhang going away, there might be an upside. It's been pretty much range-bound for a long, long time after that issue, right? Do you have enough data to say that it's going to be up and up now?
Not up and up in the sense that, there will be like a vertical rally, but what's happened is that in the last 15 odd sessions, there's been a good consolidation that's come about. The bias has been mildly positive, and the momentum indicators also have been pointing north, just at the 50 mark. So once it crosses the 55-60 zone, that's when the momentum really picks up. Also the 200-day moving average at 212, 213 zone. So a couple of technical, I would say, speed breakers rather than hurdles. Once they're taken out, that's when I think the stock could turn around. Has a lot of catching up to do. But from here on, interesting risk-reward ratio, so can be considered as an investment idea. Let
me also ask you about the IT pack, because once again, after the pre-open session, it is the index that stands out in front with gains of about 0.4% or thereabouts. So would you be betting on any of the frontline names, or would you go broader if you were to pick?
So, Alex, two stocks that have been our picks have been TCS and LTI Mindtree. TCS, we just released a call, I think yesterday, that was day before, for slightly elevated levels of 33.40. I think that momentum could well continue, and now the big names are starting to participate. But one other name less discussed is Cigniti Technologies. It's had a very good run. The stocks hit our second target of 1910, something that we discussed on the channel as well. But I think there is enough and more momentum and volume action for the stock to go on and hit 1950, 1980 zones as well. So if I had a position, I would continue to hold Cigniti Tech. Fresh initiations in TCS.
Okay, TCS is on radar this morning. In fact, IT stocks are the only ones which are looking relatively okay. At what point would you look at the Bank Nifty in a favorable light, Kush? You'd wait post any announcement, 10:15, 10:30 maybe?
Yeah,
maybe later.
No. So from a fresh trade perspective, you obviously want the big event to be out of the way. But from a levels perspective, I think it's 58,800. That's the level that you want to, perhaps see if the support does indeed kick in. Then you want to buy, keep your stop losses at the slightly lower level of 58,500. 20-day moving average is still being respected. So as long as that happens, I think the Bank Nifty will still be in good stead. as I said, the components are where the concern is. Private banks not doing well, PSU banks after that, announcement, the unfavorable announcement kind of not, picking up steam. So maybe some consolidation on the cards, but it's healthy. I would look to buy at around the 58,800, 59,000 zone.
Okay. On the fundamentals, at least, it seems like the one big beneficiary very clearly of a rate cut is going to be NBFCs. So from that pack, would you pick any because they'll benefit significantly on the cost side?
Yeah, so LTF was, our weekly pick with what's happened in the market. It's slid a little lower, gone below the 300 mark, but I still remain constructive because the fall is on the back of very low volumes. So still remain constructive, medium term, long term trend on LTF very much intact. So with a positional stop at the 292 mark, higher levels of 315 and about 330, still constructive on LTF.
What is your top NBFC pick this morning, Dharmesh, if that rate cut does happen?
Taman, I wish I could, share that name, but the others, it's a play like, Bajaj Finance looks pretty attractive.
Now, you're saying you wish you could share the name, but you like Bajaj Finance.
Yeah.
Okay, that's a good hint actually, right there. All right, so many factors this morning and it is going to be a slow boil, think of it that way. Maybe a bit of a muted start, that's what the GIFT Nifty was indicating, that's what the pre-open rates are indicating. But the action is going to start post 10 a.m. because you'll hear from RBI Governor Malhotra this morning. I think defense stocks already buzzing as a result of Putin's visit to India and whatever will be happening there. Nifty IT is where all the action is, and not for anything great that the IT companies may have done recently, is because with the rupee at 90, this gives you a big boost to IT exports and it will help their balance sheet one way or the other. As far as the Sensex and Nifty is concerned, absolutely muted, like we said. Nothing's happening there. The mid cap and small cap also flat. I'm going to pull up the heat map for you very quickly and take a look at what's working and what's not. Well, there you have it. Infosys at the top and Interglobe at the bottom. But the range is quite narrow. It's just about 1% here or there. So Infosys 1% up, doing well, and the boost is coming from a weakening rupee. Wipro likewise there on that top row as a result of this. Bajaj Finance, we talked about it. You're going to have some of these NBFC stocks in focus as the expectation of an interest rate drop of by 25 basis points get penciled in. Shriram Finance also up in the green as a result. Aisha doing okay, so is Eternal. But I would say more red than green on the screen right now, and on the losing side, Interglobe definitely seeing some of that pain, as is Tata Steel, Nestle, HDFC Bank. So a whole clutch of them. I would say range bound but quiet is how I would describe the opening at this point. Maybe stock-specific action is what's going to dominate. A lot of news in the last few minutes before trade is open.
Absolutely. Let's see how some of these are reacting. But first, before we do that, let's pull up the sectoral indices, and they're more or less going to be mirroring this. You're likely going to see more red on the screen than green. That indeed is the case. Defense pack is in focus. IT not necessarily up and about. There's a little bit of caution playing out there as well. Just about 0.1% higher or so right now, but no big losers either. You have the metal index that's down about 0.33% or so, but these metal counters have been buzzing. They've been roaring in the recent past. Bear that in mind. Let's talk about individual stocks, and in a few of them. The defense pack, of course, in focus. HAL, something like a BEL, something like a BHEL, all in focus on account of the Putin meet. But not too much of a big move. I guess there's going to be a wait and watch here as well. Let's look at a Tata Power or a Deepak Nitrite on the back of operations commencing. Tata Power announcing that end of December is when one critical facility is going to have operations. Deepak Nitrite also similar announcement on operations. Not too much of a big move for Tata Power. Deepak Nitrite up and about. Remember, in the context of not too many stocks moving in a big range, this is a pretty big move in that context. Order wins. There are a few big movers here. Let's pull up a few of these. And one of them is Diamond Power. It's gotten a sizable order, 7,500 crore odd market capitalization company, and 700 plus crore order that it has gotten. Zentech is up and about, and so is Railtel. Not the biggest order for Railtel, but it's still a positive development for them, 1.2% higher. Large trade. Let's talk about ITC Hotels and see how it's moving. You saw the big block take place this morning, even before the start of trade, it's holding out at above yesterday's close. Remember, the price at which the deal got struck was not too far away from the current market price. Indigo impact. Let's talk about one, Interglobe Aviation. Of course, it was one of the big losers when we started trade. It has recouped some of those losses. Remember, it lost in trade yesterday as well. But SpiceJet has guided to a significant ramp up of operations, and that seems to be getting bought into by the street, particularly in the context of the woes that Interglobe Aviation is currently facing. Things can shift very quickly, of course, and this is an important quarter for the aviation industry as a whole. And finally, let's talk about the brokerage impact. Keynes Tech, there is a clarification that came through as well. And there are irregularities that have been flagged by Kotak Institutional. The stock was down as much as 6% yesterday. Again, the stock is seeing a little bit of selling today. I wonder where that will stop. We will look forward to speaking to the management as well to figure out what they have to say. But Neeraj, from my perspective, not too many big movers on news. Of course, I think a lot of people waiting with bated breath for 10 o'clock.
And rightfully so, Alex. You would argue that one is, of course, the policy, and is there a surprise out there on the rates front, or will there not be? So that is one, of course, key thing to keep an eye out for. The other thing also will be whether there is some positives that are coming in from the Russia-India meet. So I think that is something to keep an eye out for. No big movers. Aditya Birla Real Estate, the top mover on the gaining side. M&M Financial out there, Zentech out there. But those are few and far in between, 2.5% apiece for most. Dharmesh Kant is with us. Kush Bora is with us. And Kush, I'd like to come to you. Anything on open which is sizzling enough for you to try and think of taking a day trade?
I think I'll still go with Liquidity Technology, something that we discussed just before the markets opened, because the momentum on this one, very strong volume action yesterday, also very healthy. The 1910 target was hit yesterday, but like I said, 1915, 1980 very much on the cards. So if you want to consider, you can. Of course, 1950, 1980 aren't the day targets, more positional ones, but good enough momentum for you to consider for a day trade as well. As a stop loss, I would consider the 1880 mark. So Liquidity Technologies is something that you can keep on your radar.
Dharmesh, do you guys as a house have coverage on Keynes, and what have you made of this recent spate of price damage that has happened there, the management clarification that has come in? Does it assuage fears? Because it's not showing in the stock price today. The stock price is still down.
Yeah, Neeraj, good morning. I think it will play out for near term. There would be further price damage. One point is because of a bigger player like L&T coming into the foray in the EMS space. From that time, the entire sell-off started happening in the EMS basket as such. Not only Keynes, the others like Dixon, Amber all saw good selling happening out there. I think Keynes is this is structural. It's not a structural problem, but it's a transient working problem out there, and they would sort it out, all these working capital issues and the balance sheet concerns, which has been highlighted by other brokerages. And I think these are all normal course of the business. So that's not an issue to my mind.
Listen, Dharmesh, you might want to hear it from the management about whether they are able to resolve some of these or no. So I urge you to stay on, because you might want to hear what Mr. Ramesh Kunikanan, who is the Executive Vice Chairman of Keynes Technology, has to say with regards to all of this. Mr. Kunikanan, thank you so much for joining, and I hope I'm pronouncing your name correctly. This is Neeraj Shah here. But
no problem.
Yeah, perfect. But thank you for joining in. Now, fill us in. I mean, you've issued a clarification, so I'll first let you answer the need for that, and then we'll come to the specifics of the 2 or 3 things that we want to ask you.
As far as we are concerned, we have, there is no inconsistency or anything. It is only as far as P&L, balance sheet, everywhere it is all appear.
Sir, I would just try and see if we can maybe just get a clear line, because right now I'm finding it very difficult to hear what you're trying to say. Alex, I don't know if you have better luck, but it is a bit of an audio issue there. But this is a very important conversation, and I urge viewers to stay on. But if we can resolve this line, Mr. Kunikanan. Yeah, no, Mr. Kunikanan, I would urge you to either stay on or come back on this line as well. But it's very important, because a lot of our viewers would want to know and hear from you. So we need to have this conversation. Dharmesh, maybe you just finish your point while we wait for Mr. Kunikanan to come back.
Yeah. So, I mean, the point was that I think this is a transitory issue with the Keynes Technology. They would, sort this out. I mean, this is not alarming enough to have a deceleration going into the business. So the only problem out there is the valuation was always a concern. Such high valuation multiples is not sustainable if you have a CVA or serious competition coming into play. So L&T coming into the EMS space is definitely would be, most of it would be mitigated, the valuation part, and that is what is happening out there. So my only thing is whether 70, 80 kind of a PE multiple would still warranted when you have a growth rate of say 25-30%, and that is what is being playing out in most of the EMS players.
Okay, so for Dharmesh Kant viewers, it is all about the multiples and everything else is transitory. Mr. Kunikanan, thanks for joining in. And like I said, we'll come back to you with specifics, but the issues that you've had felt the need to clarify in response to a note or two that have come out. Could you talk about that? Do you believe some of these issues are transitory in nature or they are just wrongly portrayed?
It is just a transaction related and wrongly portrayed. We have clearly explained this.
I want to just take us through what stood out for you, because I see 6 points on which you've made a summary of the observations and giving your response to it. Which is the one that stood out for you the most, sir? Mr. Kunikanan? So let me ask you specifics. Okay, the contingent liabilities, right, which have increased, and as per Kotak, they're about 18% of your net worth. How would you respond to that?
Sir, good morning. Thanks for asking for this clarification. If you see the 18%, this is including the bill discounting and the working capital. If you split it up, it's coming to only 20%. But if you apply the same logic for the previous year, it was 25%. Because bill discounting as a process when we acquired the new business and the Iskramico, where the metering business, the nature of the business, it takes a little longer time to collect it from the receivables of the government and the transactional business of this. It has happened like this. So these are all the transactions. If you apply the same logic, the 17% this year was 25% the previous year. So we fully understand as an organization, we are committed for giving a transparent feedback and information to all the investors, shareholders, and people like in the public. But the only thing that we wanted to say is we have given this response because there is a concern that is raised. Yes. As far as we are concerned on all the 6 points, when you see, most of the transactions is as per the statutory standings. The only thing is, during the year of transaction from Iskramico, during the merger of the year, one disclosure it inadvertently missed, but the balance sheet and P&L has that information. That's as a related party transaction. First 6 months they were as a supplier, second 6 months is the part of the related party transaction. That is the only thing that we feel that we will improve in the governance and our disclosure.
But that's where the problem arises, and I just want to confirm, am I speaking to Mr. Kunikanan?
Yes.
Okay, Mr. Kunikanan, so that's where the issue arises, because this is not a small transaction, it's 180 crore rupees. So I think the concern that is raised, and of course your statement is that it was inadvertent, but then that's where you have...
So it is already, we had no disclosure problem, because if you see, it is there in the balance sheet and everywhere it is there. It is only in Keynes Electronics, notes to accounts is missing. So it's an error. We agree, we will correct it.
That's one of 6 points. This is Tamanna here, and again, I want to thank you for joining us. We were just clarifying on who's speaking to us because we heard two different voices. But never mind. I just want to come to point number 4, which is about average borrowing costs in FY 2025. What have been your average borrowing costs? Are they at close to 18% figure?
No. Our average borrowing cost is around 10%. JPS is also with me. He would like to add. He's our CFO.
Yeah. Sure, sir. Yes.
Yeah. So fundamentally, this what is divided by the borrowing. Actually, this is rotated almost 4 times a quarter actually, and these are all costs that we incur for discounting our receivables actually. So if we take a simplistic method of taking the total cost and dividing it by borrowing, this number will come. But otherwise, if you really see, these are all part of...
Cost of borrowing is around 9-10%, not more than that.
And these are all part of working capital demand loans actually, which rotate every 90 days. So 4 times a year we will utilize the same funds. So I think any other balance sheet also, if they are using discounting, exactly the same situation will emerge. Cost of borrowing in our case, in fact, we are not allowed to show the sanction letter from bank because it's confidential between us, but it's sub 9% today as we speak.
Okay, this question actually for Mr. Ramesh, and I'm going to come back with more specifics for the CFO as well. Why do you think that you've gone from darling of the street to this kind of a situation right now because of one note? How do you look at it? Is it some lack of communication? Is it maybe some mistakes which have happened? How do you see it, sir?
I think somewhere we would have lack of communication or something, which we could have clarified better, which we will improve. I'm sure my team will improve. We have continuously improved and reached here. So this is one more passing phase. We will reach there. I'm very confident because ultimately the business numbers are looking very promising.
Sir, just on that point, for thus far, the revenue growth of the core EMS business, right? If I exclude Iskraemeco, is what? Was 20% FY25, but the H1 is circa what, 5%, right? And yes, there is a broader EMS slowdown, but these numbers relative to the growth that you've shown?
No.
It is, right?
If you see, before Iskraemeco acquisition, we were a supplier to them. So we were supplying all those things. So if you add that, whatever number what we are quoting is all right. There is nothing wrong in that.
Okay. Sorry, you want to make a point, the CFO, please?
No.
Okay, no problem. Okay, then let's try and wind it around growth rates, right? Your growth that you exhibited, with or without the acquisition, is at an X% for H1. Do you reckon H2 will be better than H1?
Always H2 will be better than H1.
How
but
much,
only
sir?
thing is, this year H1 is not looking that attractive, but I'm sure and certain whatever numbers which we are talking, we will achieve.
Okay. And therefore, what you said, or I believe what the conversation that we had after the numbers about you sticking to your growth guidance of 40-50%, I presume that stays even now.
Yes.
Okay. And will that happen with receivables and the working capital issue getting resolved in the second half, or will it take a couple of quarters to get resolved?
Second half, it should improve. It should become sub 90. But to have a total improvement, it will take some more quarters.
Sir, is the ideal number of days that you would like to have on the working capital?
EMS industry is a working capital intensive industry. However, the ideal spot what we are looking is around 75.
And when do you think that 75 is achievable realistically, sir?
It is still a long way. Whatever I have projected for 28, no? That is the type of number when we will achieve that.
FY28, I just want to confirm. FY28 is when you see 75 happening.
Yes.
Sir, there was a SEBI show cause notice also earlier in this year, and the queries there were on a structured digital database maintenance. Have those concerns been resolved?
Yeah, it has been resolved already.
Okay. In terms of the core of the issue, and we're coming back to it, just as you know, we wrap out this conversation, but just to understand, the core of the issue is that your last quarter's numbers looked robust because of an acquisition of a company called Iskraemeco. Now, the treatment of some of those components on your balance sheet has been the core of the issues. I come back to this. Has there been an oversight there, a lapse there, or a misunderstanding in the reading of those transactions?
It is only a misunderstanding in the reading.
Who has misunderstood over here?
I think you have said a lot of things in your question itself. See, fundamentally, there is no difference, no lapse, etc. in terms of numbers. There were two disclosures which ought to be also typed in as notes to accounts in one of the subsidiaries. We have about, I think, 16 to 18 subsidiaries. So obviously, as a company, a young company which starts growing with a standalone financials into a consolidated financials, there are some of these misses that happen. Why they happen, of course, we are trying to fix that. But fundamentally, those two disclosures, if we were there, that this entire note actually has no locus standi at all. So what they have said is, if somebody has extended this whole logic saying that, okay, 2 lines are missed, so is there something else missed, etc. Nothing is missed. This is all also checked multiple times, and these auditors are also auditors who audit other listed entities and all that. So there is absolutely no problem of accounting or putting it together or even business. So these are all decisions we take in acquisition of companies, and companies' prior performance is something which is out of our bounds, right? We cannot go back in the past and change anything. But getting forward, we have also tried to alter the course of, let's say, the business from being an AMISP kind of a situation to a device maker and so on, and that we are true to that. And the other businesses in second half, as you know, you would probably see a smaller percentage of Scrum Echo in our total shipping, and there will be other businesses like railways and aerospace and all that. So the way to look at all this is that, yeah, it's an important point of view, but we wonder whether people, you would ask this question about from being darling, etc. We thought that we did a better job in the second quarter.
I think I am very sure and certain we will continue to be the darling of that.
Yeah, we'll come back stronger, I guess, because some of these misunderstandings happen with people who who want to.
I agree. Once there's clarity, things always improve, and the business has been strong. It's just about the goodwill and intangibles part of the acquisition and the treatment thereon. You're saying that also, Mr. Sampath, I'm directing this at you now, was a misunderstanding or...
No. The India standards allow us to call it an intangible. So, always there is a decision to be taken. You can call it a goodwill, you can call it intangible. Our auditor in his wisdom has advised us that make it intangible because it is pertaining to a particular customer business contract. Supposing this was to be extended beyond the business contract, then you can probably call it a goodwill too. So it's just a choice. It does not take away from the robustness of business or governance or any of this. This is a decision made. And we will be evaluating, we'll be constituting committee internally, evaluating all the policies, accounting policies. They are already published in our website. We will take some comments from people. So supposing we had called it goodwill, people can come back and say, why is it not called intangible? In which case, we will not be able to answer that question. So it is not a misunderstanding. It is just a...
Jairam, the question that arises for now a very large entity that a lot of people are interested in, I think your investors would want to know whether you were given appropriate advice, because seemingly you have followed advice and that has not gone to plan. So would you say that you would be reviewing where you're getting advice from as well?
Yes, in due course we would do that. I'm not at liberty to tell you publicly, but certainly we have taken all of these points into consideration, and we will take whatever actions that are required, without limit, to make sure that this is put back on rails as far as the perception bandwagon is concerned.
Gentlemen, both of you, my final question at least is that the issues that have been highlighted, or seemingly issues that have been highlighted by a note or two, come on the back of some growth concerns for the industry, but more specifically for you. And because of the multiple, the PE multiple that your stock traded at or trades at, it becomes an even more important determinant of how well you grow. You are confirming today, as we speak right now on NDTV Profit, that your growth rates that you guided for, Mr. Sampath, at the end of Q2 numbers and even now, stay as they are. The OSAT facility, aerospace, defense, etc., all contributing to it.
Yes, absolutely.
Okay.
Yes.
And you did confirm, I think Mr. Kunikanan did confirm, that the working capital issue and the receivable issue gets resolved in part in the second half and improves further in FY27.
Absolutely. Yes. Yeah, that's the practical view of looking at it. Obviously, that's the point I told. It's not a fix that we do. Yeah. Yeah. Absolutely.
Okay.
I think that's quite a clarification there. Just one last bit. The contribution of this new acquisition, which seems to be at the source of all of this right now, do you see that contribution as maybe overvalued, or will it be a majority contribution to your revenues going forward? Can you give us some perspective on that?
Yeah. So this particular acquisition gave us an entry into the entire power distribution infrastructure electronics. And we have been, whenever I've had the chance, we've always said that the high rate of sales is driven by the RDSS project of the government, and which is going to last for a limited amount of time, 8 to 10 years time frame. And then thereafter, we are also focusing on, there are other relationships that we have other than just Iskrameco, wherein we are going to build grid electronics. We are going to build substations and distribution points and feeder points, etc. So our ultimate destination after 5-10 years time frame is that. But this is a necessary component of understanding this entire, let's say, electrical distribution structure and being in touch with all the AMISPs, being in touch with the Indian system. And that's what we have been basically working on. And this is going to be becoming a smaller portion of our sales over time. We are going to have a run rate of whatever 800 to 1,000 crores every year over the next 8-9 years time frame. Whereas the other sales will keep increasing. So as a percentage of importance in terms of our P&L and also concerns of balance sheet, etc.
We are planning only to become a device manufacturer.
Sorry, can you say that again, sir? You're planning to become only a device manufacturer?
We are a device manufacturer.
Device.
Not like an EPC company wherein, we have extended the commercials with the customer, etc.
Okay.
So we are an ODM player, solution and devices. Yeah.
Okay, thank you so much,
Thank you.
Mr. Ramesh, and of course, Mr. Sampath, for that clarification, for coming in and taking our questions. We always appreciate it when management answers all the tough questions, because that's only fair. The investing public has put faith in your company and your growth. So thank you so much for that. I'm going to pull up thank you. I'm going to pull up the intraday chart. So you had more comprehensive, and I think the two top execs speaking, including the CFO, on NDTV Profit, asking all of our questions. Slight uptick in that stock as they were speaking, but I mean, I think the pain is going to be there. I want to go to Dharmesh Kant, and Dharmesh, thank you once again for staying by and listening to what they were saying, because you were talking earlier about a clarification that was needed. What did you make of the clarification?
Yeah, Taman, I mean, two things are very clear. One, there is a working capital stretch out there, and it will take time to get it under control. And that will have its own implication on the financials and the interest outgo which the company is facing. So this is point number one. Point number two is, the growth rate which the management now is saying 45 to 50%. I mean, they can do it for this year, to which I doubt. I think 40% is a bit far-fetched. They would land up by 30-35% kind of a growth rate. And if you look at a historical trajectory, it was 100% kind of a growth rate, which has been slowing down to 40-45%. Going forward with competition heating up, it will come to around, say, 25 to 30% kind of a growth rate for next 2-3 years. So the valuation concern is there. Third part is, when fund managers or individual high-end HNIs are, re-evaluating the investment decision in the EMS space, particularly for Keynes, and they are seeing this multiples being high and competition coming in. Then such kind of event or such kind of a report, rushes your decision to exit the stock. So I think this selling is more to do with people who was thinking of getting out of it because of the valuation concerns. They are getting out of the company as of now. But for Keynes, for long term, I mean, trading place can still be there. There can be bounce backs. But I think for 1 year or so, it will stagnate in this zone. It will be hard for it to come out unless you get back to the structural growth. So resetting of valuation with realistic projections are likely to play out for Keynes.
Noted. Okay, Dharmesh, Kush, gentlemen, thank you so much for staying by and listening to the conversation, as well as giving your opinion today on various facets of the markets. Really appreciate your time. Keynes Tech, keep in mind, after this correction, trading at 82 times trailing 12 months P multiple. The multiple is the problem. When you're trading at those multiples, you can't put a foot wrong. And I think that is hurting the stock right now. Well, no such problems for Tega. They, of course, remember about a couple of months ago, signed a pact to acquire Molycop for an enterprise value of 13,000 crores. Large expansion, large acquisition, and a large market to address. It's been a while that we've spoken to Mehul Mohanka, who's the MD and Group CEO of Tega Industries, to try and assess how this is shaping up. And Mehul, great having you. Thank you so much for joining in today. Neeraj here. Good morning. most people who track your business talk about the large addressable market that Tega and Molycop together now can address, and how growth rates for you. Okay, I think we've just got the RBI governor walking in, so we'll just stay on. But yep, this is the man of the moment, something that the street will be really wanting to hear. So keep this in mind. Okay, and remember, the policy statement comes out at 10 a.m. We'll be with the policy as soon as the RBI governor starts speaking. But Mehul, what I was coming to was the large addressable market for the combine, as well as the big possible hockey stick uptick in growth rates for Tega as a combined entity starting FY27 itself. Would you concur? Would you give some color there?
Morning, News. Thank you for having me on the show. So if I can just jog back everyone's memory to where Tega was before we did all the acquisitions, including McNally. So Tega's addressable market was about close to $4 billion when we started out. With the McNally acquisition in March of 23, we expanded that by an additional 28 billion. So that becomes a 32 billion addressable market. And with now Molycop, we add probably another $10 billion of addressable market. So moving from close to 4 billion to in excess of 40 billion is what we've been able to achieve in the last 2 years in terms of addressable market. So the Molycop transaction is on track. We've announced the closure of the definitive agreements. So we have the share purchase agreement in place. We have our shareholder agreement with Apollo also stitched up, and we've closed the first round of our preferential allotment raise, which was about 1,713 crores. And the transaction is on track, and we see probably FY27 when we'll start to consolidate Molycop's financials into Tega. And the idea would be to grow the business, extract all synergy values within the first, I would say, close to 18 months. And that's how we see the business start to evolve from there on.
Just wondering about the capital infusion with Apollo and specifically with regard to the agreement with the affiliate of funds that is managed by American Industrial Partners. What is the mix of that infusion?
So we're acquiring the business from American Industrial Partners. It's a US-based private equity firm, partnering with Apollo. So Apollo and Tega combined in a consortium are completing this transaction. Tega will hold a 77% equity in the business, and Apollo will have 23% equity.
Okay. Now, you spoke about the 1,713 crore rupees, and this is something that will play out over FY27, as you pointed out. But you've mentioned another 400 to 500 crore worth of an equity raise. This is in a conference call that you did. What are the timelines that we're talking about, and what is the method that you're contemplating with regard to this raise?
So we had earlier said that we need 2,300 crores in total for our equity contribution for the 77%. So with 1,700 odd crores coming in now, we're about close to 600 short. And that's the equity raise we would be doing. We hope to complete it within December. And the choices are preferably a preferential allotment again. It's just easier to do so, but we are also not averse to a QIP as well.
Okay. And what are the timelines of that, very quickly?
So December, we hope to complete the preferential allotment in December itself. And if it's a QIP, it will spill over to January.
Mehul, it's really unfortunate things have gotten stretched today, and we're working towards the RBI monetary policy at 10 a.m. this morning. So we're going to have to cut this conversation short, but we look forward to speaking to you really soon because there's more that we wanted to speak to you about. Unfortunately, because of the paucity of time, we're not able to do that. But thanks so much for taking the time, and pleasure speaking with you. We have to slip into a very quick break. On the other side, we'll talk about policy, so do stay tuned. Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access.
Welcome back. Countdown has begun. 8 minutes to go before we hear from the governor. But before we hear from the governor, we are hearing from top economist Dr. Aurodeep Nandi, India economist and Vice President Nomura, with us on the show. Dr. Nandi, thank you so much for your time. Great to speak with you as always. What are you going to be watching out for? And are you assuming or penciling in a 25 basis point rate cut? Is that a no-brainer at this point?
Well, we are penciling in a 25 basis point cut. Is it a no-brainer? I don't think so. I think this is going to be a remarkably close policy meeting. The question is sort of, what do you look at, right? On one side, you have very high 8%, over 8% real growth. Now, one way to think about it is that, okay, growth is strong. You know, even if there is policy space to cut, what is the policy need to cut? And this is sort of the logic of the October meeting when RBI said that there is policy space, but, you know, we'll wait and watch. Growth is fine, so there's no need. The other way to look at it is that, look, RBI is an inflation targeting central bank, and inflation is way, way, way below the target. I mean, it's currently tracking around 0.3% as of last month. RBI's target is 4%, the lower band is 2%, and you know now you're below 1%. So in this situation, the current real rates then are extremely elevated, and you know if you're inflation targeting, it's on both sides, right? If inflation is high, yes, you would hike. Similarly, when inflation is too low, you need to target that. And you know if that's the situation. you would say that there would be a cut. I think what another point which would be interesting to see is what is RBI's assessment of growth, because is RBI going to take the 8% plus growth on its face value, or is it going to say that actually no, the output gap isn't bridged or isn't positive, but there's actually some inherent weakness still in the economy?
Dr. Nandi, like you said, what do you focus on? And so I'm just wondering, you spoke about a real GDP overshooting perhaps and inflation undershooting. The RBI did not change its projections for the full year for GDP at least. Do you think it's going to be forced to do that this time around? And what about inflation? Do you think that they're going to have to adjust that as well?
Absolutely. I mean, RBI's FY26 inflation growth, if I'm not mistaken, is around 6.8%. The first half of the year growth has averaged 8%. So even if you assume a slowdown for the next 2 quarters, you're essentially looking at around 7.4% or so. Similarly, on the inflation side of things, we see the inflation for this year to be around 2.2%. It's currently the RBI has it at 2.6%, which is way up. Our own forecast is 1.9%. So yeah, I mean, there's going to be a readjustment of growth, readjustment of inflation. And then the question is, well, now that you've adjusted these forecasts, how does your new policy framework then fit into these forecasts?
I do have a question, and this is not normally something we take up, Dr. Nandi, but we have to talk about the rupee, and I'm guessing that the RBI governor will have to do so as well. What would you anticipate in terms of commentary? Because they've been pretty clear in the past, at least when they speak at press conferences. But do you think they're going to say anything different this time?
I mean, look, I think they're going to maintain the stock lines that we always intervene on when it comes to capping volatility. I know there is a section in the market who believe that okay, RBI's interest rates, why should they cut because rupee is weak? But here's the problem with that logic: RBI is and should be an inflation targeting central bank. It can't go and start targeting exchange rate one day or deposit rates the other day, on lending rates. So it's focused on inflation. So I'm sure and I think the market would be interested in anything that the governor has to say around exchange rates and its sort of tolerance. But I don't see much of the interest rate policy sort of being linked specifically to what's happening in the exchange rate. If it happens, I'd be quite surprised.
And thank you for putting that out as well, because it is important to get that dissection too. I believe Madhvi Arora, lead economist, MK Global Financial Services, with us as well. Madhvi, thanks for joining in. And 2 points that Auradeep made, which I would want to get your view on. One, that it may not be a complete given that there is rate action. I differ, but Auradeep is the more informed one and the more intelligent one. So I would love to get your opinion on this. And 2, is the policy commentary going to be a lot more about what the RBI does with regards to the rupee as well, or not quite?
Hi, thank you. So I don't think, I'll start from the last bit. I do not think that rupee would be a great consideration for the Reserve Bank. I understand that the currency has been quite a discussion point. It's down almost 5% plus since beginning of the fiscal year. And we obviously underperformed against other emerging market peers, especially in Asia. But to a large extent, this is something which is warranted. This is something which ought to happen given the fact that we have been penalized much more than our peers as far as US penalties concerned. And, the byproduct of that has to be a weaker current account and a weaker capital account flows. So and rupee tends to become the adjusting factor in that. So I think to that extent, rupee is basically an automatic stabilizer. I think the policymakers, both on the fiscal and monetary side, probably seem to be okay with the depreciation of rupee in a more stable form. Of course, nobody likes volatility around, but I don't think this would be one variable which should deter the Reserve Bank. And very honestly, in India, that whole argument of interest differential leading to a stronger rupee doesn't really work, at least in the near term. Now, Coming to other points, we are looking at 25 bips rate cut. We have been arguing for one even after the June policy gave a 50 bips cut. We've been arguing that there was more space for the Reserve Bank to cut. To be very fair, in the second half of this financial year, RBI's last forecast of inflation would be probably undershooting our numbers by as high as overshooting our number by as high as 130 bips. So I think it'll be very difficult for them to actually ignore the kind of inflation undershoots versus the Reserve Bank's own forecast have been. In fact, for the last 4 consecutive policies, they've been only revising it down, and this policy would not be any different. To be fair, both markets and Reserve Bank have sort of misread this macro cycle as far as inflation growth forecasts are concerned, which also underscored how unreliable these forecasts have become in this cycle. So I'm not sure whether it makes sense for the policymakers to actually lay too much emphasis on 1 year ahead inflation or 1 year ahead growth forecast per se, because we as Street, we as Reserve Bank have absolutely gone wrong in terms of the current macro landscape. So I think they've already communicated a relatively dovish stance in the recent discussion with the media. I understand that it still is a very close call, and there could be a split in MPC on the timing of the rate cut, but not necessarily on the on the need for the cut. For me, the bigger variable would be how they communicate, whether they cut or not, and of course, how they are going to manage the liquidity infusion going ahead, because I think liquidity would be a bigger variable to watch out for as far as market transmission is concerned, and we are hoping that they would address that and probably come out with some measures in the next 1 month or so. We are expecting the Reserve Bank to infuse roughly 2 lakh crore worth of liquidity by end March to be able for them to reach a 1% of NDTL liquidity. That is what they had sort of softly pegged beginning of the year.
Okay. We are just about a minute or so away from the policy statement, and we'll cut to that as soon as that comes in. But Madhvi, just a quick word on... Okay.
And namaskar to all of you. We are in the last month of an eventful and a challenging 2025. We look back at the year so far with satisfaction. The economy witnessed robust growth and benign inflation. The banking system further consolidated, and the regulatory framework was refined to strengthen the financial system, enhance ease of doing business, and improve consumer protection. At the same time, we approached the new year with hope, vigor, and determination to further support the economy and accelerate progress. Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. For the first time since the adoption of flexible inflation targeting, average headline inflation for a quarter at 1.7% in Q2 this year breached the lower tolerance threshold of 2% of our inflation target. It dipped further to a mere 0.3% in October 2025. On the other hand, real GDP growth accelerated to 8.2% in Q2, buoyed by strong spending during the festive season, which was further facilitated by the rationalization of the GST rates. Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period. Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Inflation paths remain divergent, with headline inflation remaining above target in most advanced economies. Pressures in most emerging markets, however, are contained, providing them the room for accommodative monetary policy. conflicting pulls and pressures from AI-fueled optimism and concerns over high valuations are playing out in global equity markets. Divergence in monetary policy trajectory of central banks is adding to the uncertainty on the capital flows and yield spreads. I will now come to the major decisions of the MPC and the RBI. The MPC met on the 3rd, 4th and 5th of December to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. Consequently, the STF rate under the LAF shall stand adjusted to 5% and the MSF and bank rate to 5.5%. The MPC also decided to continue with the neutral stance. Moreover, in view of the evolving liquidity conditions and the outlook, the Reserve Bank has decided to conduct OMO purchases of government securities of 1 lakh crore rupees and a 3-year dollar-rupee buy-sell swap of $5 billion this month in December to inject further durable liquidity into the system. I shall now briefly set out the rationale for the decisions of the MPC. The MPC noted that the headline inflation has eased significantly and is likely to be softer than the earlier projections. This is primarily on account of the exceptionally benign food prices. Reflecting these favorable conditions, the projections for average headline inflation this year and Q1 next year have been further revised downwards. Core inflation, which had been rising steadily since Q1 last year, eased at the margin in Q2 this year and is expected to remain anchored in the period ahead. So both headline and core inflation are expected to be at or below the 4% mark during the first half of next year. In fact, the underlying inflation pressures are even lower as the impact of increased prices of precious metals in this inflation number is about 50 basis points. Growth, while remaining resilient, is expected to soften somewhat. Thus, the growth-inflation balance, especially the benign inflation outlook on both headline and core, continues to provide the policy space to support the growth momentum. Accordingly, the MPC unanimously voted to reduce the policy repo rate by 25 basis points to 5.25%, and the MPC also decided to continue with the neutral stance. I will now spell out in some detail our assessment of growth and inflation. First of all, growth. Real GDP registered a 6-quarter high growth of 8.2%, as you are all aware, in Q2. This is underpinned by resilient domestic demand amidst global trade and policy uncertainties. On the supply side, real GVA expanded by 8.1%, aided by buoyant industrial and services sectors. Economic activity during the first half of the financial year benefited from income tax and GST rationalization, softer crude oil prices, front-loading of government capital expenditure, and facilitative monetary and financial conditions supported by benign inflation. High-frequency indicators suggest that domestic economic activity is holding up in Q3. There are some signs of weakness in few leading indicators. GST rationalization and festival-related spending supported domestic demand during October-November this year. Rural demand continues to be robust. Urban demand is recovering steadily. Investment activity remains healthy, with private investment gaining steam on the back of expansion in non-food bank credit and high capacity utilization, which is of the order of about 75%. Merchandise exports declined in October amid subdued external demand, accompanied by softer services exports. On the supply side, agricultural growth is supported by healthy kharif crop production, higher reservoir levels, and better rabi crop sowing. Manufacturing activity continues to improve, while the services sector is maintaining a steady pace. Looking ahead, domestic factors such as healthy agricultural prospects, continued impact of GST rationalization, benign inflation, healthy balance sheets of corporates and financial institutions, congenial monetary and financial conditions should continue to support economic activity. Continuing reform initiatives, moreover, would further facilitate growth. On the external front, services exports are likely to remain strong, while merchandise exports face some headwinds. External uncertainties continue to pose downside risks to the outlook, while speedy conclusion of various ongoing trade and investment negotiations which the government is undertaking with various countries and jurisdictions present upside potential. Taking all these factors into consideration, real GDP growth for this year is now projected at 7.3%. This is up by about 0.5% from our earlier projections. Q3 is projected at 7% and Q4 at 6.5%. Real GDP growth for Q1 next year is projected at 6.7% and Q2 next year at 6.8%. The risks are evenly balanced. I will now move to inflation. Headline CPI inflation declined to an all-time low in October 2025. The faster than anticipated decline in inflation was led by correction in food prices, contrary to the usual trend witnessed during the months of September and October. Core inflation CPI remained largely contained in September-October, despite continued price pressures exerted by precious metals. Excluding gold, core inflation moderated to 2.6% in October. Overall, the decline in inflation has become more generalized. Turning to the inflation outlook, food supply prospects have improved on the back of higher kharif production, healthy rabi sowing, adequate reservoir levels, and conducive soil moisture. Barring some metals, international commodity prices are likely to moderate going forward. Overall, inflation is likely to be softer than what was projected in October, mainly on account of the fall in food prices. Considering all these factors, CPI inflation for this year is now projected at 2%, again about 0.6% downwards from our earlier outlook. Q3 is at 0.6% and Q4 moves up to 2.9%. CPI inflation for Q1 and Q2 next year are projected at 3.9% and 4% respectively. I may, however, add that the underlying inflation pressures are even lower, as the impact of increase in price of precious metals is about 50 basis points. The risks are evenly balanced. I will now draw your attention to the external sector. India's current account deficit moderated from 2.2% of GDP in Q2 last year to 1.3%. This is a decrease of about 0.9% in Q2 this year, on account of robust services exports, which continue to do well, and strong remittances. In October 2025, merchandise exports contracted YOY, whereas merchandise imports continued to increase for the second consecutive month. This resulted in widening of the trade deficit. Healthy services exports coupled with strong remittance receipts are, however, expected to keep our current account deficit for this year modest. On the external financing side, gross FDI to India increased at a robust pace during the first half of the year. Net FDI too increased significantly due to a decline in repatriation despite a rise in outward FDI. FPI to India recorded net outflows of $0.7 billion this year so far, basis figures till December 3, primarily due to outflows in the equity segment. Flows under ECB and non-resident deposit accounts moderated as compared to last year. As on November 28, 2025, India's forex reserves stood at a healthy $686 billion. This provides robust import cover of more than 11 months. Overall, India's external sector remains resilient. We are confident of meeting our external financing requirements comfortably. I will now talk about the liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average surplus of 1.5 lakh crore rupees for the period since the MPC last met in October. Money market rates have remained largely aligned to the policy repo rate, which was 5.5%, amidst comfortable liquidity conditions. GSEC yields have remained range-bound since the last policy. In response to the cumulative 100 basis points cut in the policy repo rate, the weighted average lending rate of scheduled commercial banks declined by 69 basis points for fresh rupee loans during this period. In fact, the interest rate effect is even more at 78 basis points. The moderation in the weighted average lending rate of outstanding rupee loans has been to the extent of 63 basis points, which again is very satisfactory. The transmission has been very broad-based across sectors. On the deposit side, the weighted average domestic term deposit rate on fresh deposits has declined by 105 basis points, while that on outstanding deposits has softened by 32 basis points over the same period. I would like to take this opportunity to reiterate that we are committed to provide sufficient durable liquidity to the banking system. We continuously assess the durable liquidity requirements of the banking system, which happens due to changes in currency in circulation, forex operations, and reserves maintenance. Going forward too, we shall continue to do so. And after reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. The details will be notified separately later today. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission. I would also like to clarify that injection or absorption of liquidity through purchase or sale of government securities under OMOs, and that through operations under the LAF, which is VRR or VRRR, which are of short-term duration, serve very different purposes. While the objective of purchase and sale under OMO is to provide or absorb durable liquidity, the purpose, which is long-term, and the purpose of repo operations is to manage transient liquidity, which is of very short nature, so as to align the operating target, which for us is the weighted average call rate or the Walker, to the policy repo rate, which now stands reduced to 5.25%. So it is quite possible that on the one hand, we inject durable liquidity through purchase of government securities under OMO, while simultaneously withdrawing transient liquidity through a VRRR operation on the other hand. I would further like to reiterate that the primary instrument of monetary policy is the policy repo rate. It is expected that changes in the short-term interest rates will transmit to various long-term rates. At the same time, the primary purpose of OMOs is to provide sufficient liquidity and not to directly influence GSEC yields. I will now talk about financial stability. The system-level financial parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain robust. Similarly, the system-level parameters of NBFCs too are sound. They have adequate capital position, and they have improved gross NPAs. The total flow of resources to the commercial sector has been strengthened. This is bolstered by greater non-bank intermediation. In the current financial year so far, the total flow of resources was more than 20 lakh crore rupees, precisely 20.1 lakh crore rupees. This is against 16.5 lakh crore rupees in the corresponding period of the previous year. Outstanding credit from bank and non-bank sources put together increased by 13% year-on-year. Bank credit too has seen an uptick. The latest number that we have is 11.4%. Sector-wise data reveals that growth was supported by sustained lending in retail and service sector segments. Industrial credit growth also firmed up, aided by buoyant credit flow to the MSMEs. Large industries too recorded an improvement in credit growth. Now, before I conclude, I have one additional measure to announce. You are all aware we have been focusing on improving customer services. We have taken a large number of measures in this regard. Re-KYC, financial inclusion, Aapki Punji, Aapka Adhikar campaigns are some of the initiatives taken in association with other stakeholders, including Government of India, Ministry of Finance. Earlier in the year, we reviewed our Citizens Charter too. We made applications for all our services online. We have the Prabha portal. Some 204 services are online over there. We are publishing the summary of our monthly disposal and pendency of various applications on the 1st of every month for the last 3-4 months now. And I'm happy to note that more than 99.8% of the applications are disposed of within the stipulated timelines given in the Citizens Charter. However, in the recent past, as a result of inter alia receipt of a large number of grievances, pendency with the RBI Ombudsman has increased. I therefore exhort all regulated entities to kindly keep customers central in their policies and operations, improve customer service, and reduce grievances. Further, in this regard, we propose to hold a 2-month campaign from 1st January next year with an aim to resolve all grievances pending with the Ombudsman, with the RBI Ombudsman, for more than a month. I elicit the support of all regulated entities in this endeavor. Let me now conclude. Despite an unfavorable and challenging external environment, the Indian economy has shown remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability. Thank you, Namaskar, and Jai Hind.
Well, Governor Malhotra delivering exactly what the street expected, which is why you've seen that beautiful spike in the bank nifty, the nifty realty up and about, the rupee showing some resilience. So that's actually what the key word of this policy would be, resilience. So the 25 basis point rate cut delivered as expected, 5.25% now is the rate. A big takeaway is the sharp increase in the GDP number that the governor is penciling in and the central bank is penciling in for this financial year. That's 7.3%, up by about 0.5%. Meanwhile, inflation outlook is dropping. The inflation number for this year has dropped by 6%. I mean, if you think about it, this is the dream combination, right? You have high growth, low inflation coming in. And I would say, Alex, some moves, maybe not overtly, but covertly, to support the rupee as well, which is why you've seen that rupee improvement. Yeah,
for me, you've already highlighted a couple of the takeaways that I've written down as you were speaking, as Governor Malhotra was speaking. Of course, that rate cut. What stood out also is the fact that it's unanimous, and particularly from the perspective of what Dr. Nandi was telling us earlier today, is that it was not a foregone conclusion. It would have been a little close, but the room that they have on inflation has provided them with the ability to cut 25. But more importantly, what they've not said on the rupee, but what was implicit in what is being done, beyond the 1 lakh crore that is being put through OMOs, there is also going to be a 3-year dollar-rupee swap. And what this essentially means is that the RBI will step in and buy dollar and provide rupee, ostensibly to provide liquidity to the system in the way that the RBI expects that the system will need that liquidity heading into the last quarter of the year. But more importantly, you've seen a sharp move. Actually, there's a lot of fluctuation because you moved about 14 paise on the upside, appreciation, and then it's cooled off just a tad bit from that point. But importantly, a little bit of that speculation that you might see or might have seen in the rupee might go away. I wonder what Vishwanath Nair has to say about this, because that dollar-rupee swap stands out to me, maybe in a way adding a little bit of stability to the currency. But beyond that as well, Vishy, we were talking about the fact that will they, won't they? They ended up doing exactly that, cutting rates, and it was unanimous.
Yeah, so, Alex, to be fair, the swaps is something that the RBI has implemented before as well, whenever there was rupee weakness or undue rupee weakness. The OMO part, now that's the one that to me makes a bit of surprising sense, because 1 lakh crore that is coming in through that route, and that is an important liquidity provider for the economy, and it's going to happen in this month. 5 lakh crore from the dollar rupee buy sell swap is a 3-year liquidity that is available. OMOs are more permanent, so that's a sense of money that is available to people, for banks specifically, to go out and lend and ensure that this rate cut that they've announced, this 25 basis point rate cut, cumulatively now 125 basis point cut just in 2025 by the MPC, that gets passed on to the consumers. Now, You heard the RBI governor point out that a 69 basis point reduction in the weighted average lending rate has already happened. And that is an important reduction because now you have more rate cuts to be passed on. You will have to ensure that adequate liquidity is available to the system to do that. And that's why these measures are important. What also struck me a little bit is the calculation on the GDP and the inflation front, specifically on inflation. You know, the RBI is now coming out and saying 0.6% for Q3. That's a steep number. That means for now 2 consecutive quarters, you will see inflation undershooting that 2% bottom mark from the target. They have the tolerance band that lasts up to 2%. So for 2 consecutive quarters, you are going to see inflation coming in lower than that. We don't know what Q4 is going to look like because this was something that was clarified during the October policy and the policy before that in August as well. But inflation has consistently undershot the RBI's estimate. So if Q4 also starts undershooting, you're going to have a peculiar situation. 3 consecutive quarters of inflation coming in below the RBI's target or the tolerance band. And that would mean that the MPC will have to write a note to the government explaining why their rate action has led to this. That will be something that they did when the inflation was breaching the 4% and 6% mark later. And now on the reverse side as well, they'll have to go out to the government and explain themselves.
Okay. I just want to quickly take you through what the markets are doing in the interim. Vishwanath, stay on with us. The Nifty reality is startling in the way it's been responding. Pull up the Bank Nifty also intraday, the PSU Bank indices, all of them up. Nifty reality actually cooling off a bit over there, but the key indices, the Nifty itself also zooming on the those rate cuts announcements and then maybe cooling off a bit. Sriram Ramanathan, CIO of Fixed Income HSBC Mutual Fund, joining us this morning. Sriram, great to have you on. Your first takeaway in everything that has been responded, including the subtle defense of the rupee, I would say.
Sure. Hi. No, I think heading into this policy, this probably was one of the trickiest ones without a doubt. I think a lot of confusion because on all 3 parameters you had, for example, growth, you had very good growth numbers backward looking, but FY27 still was in that sub 7% zone. Same thing with CPI and of course on the rupee side. So it was a tough one for the markets to get their head around. And in fact, I think for most market participants, left side of the brain did not agree with the right side. So it was that split. I think the governor has provided a lot of clarity in terms of the announcements, very clearly talking about the rate cut given the space provided by the very low inflation. The way the growth and inflation forecasts have been tweaked also gives a lot of comfort. I think it is very important to note that Q2 of next year now, CPI forecast is at 4%. So we are no longer in that. We started off at 4.9 earlier, 2 policies back, then came down to 4.5 for Q1 of next year. Now Q2 of next year is at 4%. So I think that gives a lot of comfort to the market. Rates, of course, have been reduced by 25 basis points to 5.25. But importantly, also, I think the stress on providing durable liquidity to the markets as required, and which was really underscored by the 1 lakh crore OMO. He didn't announce a time period earlier, but later on he clarified that was in just the month of December. So that gets all of us to work. We are all going to pen down numbers for what we expect for Q4, which is the Jan to March quarter, how much more OMO. Our sense is another 1.5 to 2 lakh crores is likely, which means your total OMO number for this year becomes extremely significant. And I think we are hoping that this gives enough impetus to the bond markets to have a meaningful reversal for yields to head lower, at least given the up move that we have seen recently. So overall, I would say a good policy. A lot of us in the bond markets can now have a little bit more of clarity on RBI's framework and way of thinking. And I think this gives us a bit of way to position ourselves going forward as well.
Okay. Important takeaways from that, Rajneesh, and rather Sriram. And we're joined this morning, of course, by Rajneesh Kumar. That was the name that was on my mind. Thank you, sir, for taking the time. Give us the banking perspective, because ultimately you're talking about credit growth that has just inched up into the double-digit territory, but a portion of that is being driven by gold loans. Would you say that with this 25 basis point cut, there is the anticipation that some more credit growth will take place?
Yeah, so it's a demand supply function, and I think the signs are good because it's not only gold loan. If you look at it, there is a decent growth in SME credit, and as well as there are early signs of demand coming from the corporates. So I think from credit side, after a long time, I'm seeing the growth which is across the sectors, retail, SME, and as well as corporate houses. But as always happens, now the deposit mobilization would be an issue for the banks, how to fund the growth. Already the CD ratio, it is reaching the level which are currently not a matter of concern, but the scope for further deterioration in CD ratio, if it goes above 80%, it will become a little bit of a challenge for the banking system. The rate cut, I think real interest rates were high because inflation expectation is now anchored around 2%, then there was no reason probably for RBI to keep the real interest rates high, despite the decent growth which we have seen. So I always say that the management, always they are challenged. Sometimes it is deposits which are flowing and no demand for credit. Now the situation is reversed. Now the challenge is that the credit demand for credit is there, but challenge will be how do you fund it?
Okay, I'm welcoming Ashima Goyal, former MPC member of the RBI, into the conversation. Ma'am, thank you so much for speaking with us. I see you at an airport. Hopefully your flight is not delayed, but we'd love to have that conversation. Of course, we also have Sriram Ramanathan with us, as we have Rajneesh Kumar, former chairman of SBI. Ma'am, I want to ask you about we've gone into this policy coverage talking about how tricky it was, and that has been the overarching theme. When you see what has been announced by the governor, do you think that that tight balance has been maintained?
Yes, I think they've done exactly the right things, which is cut the repo, since there were signs of growth slowing forward-looking manner, although past growth has come in really high. And since core inflation is trending low, and that is the trend inflation, there was room to cut, and because interest rates going up, G6, and if the government is borrowing more or cutting taxes, the RBI is restrictive. That is the worst combination, because that tends to, the pass through of interest rates had slowed. The other really good thing in this policy is they've announced support for liquidity because of all the intervention that had squeezed market liquidity a bit. And they've also announced that they will be intervening, to prevent the rupee really excess volatility. That's very important to emphasize that, because there's a perception that this regime is hands-off. But it is the old RBI policy, and they continue with it, that they will prevent excess volatility and persistent misalignment. I think that should give confidence to the market.
Yeah.
The mode of intervention can change. I think they've moved to a sort of step. They're not defending any rate, but they will prevent persistent misalignment.
Yeah. Important to state, and it's not like they don't have the artillery. They have about $686 billion worth of forex reserves. But, ma'am, even as we were speaking about that, the rupee has once again erased those gains that it made while the RBI governor was speaking, now trading very close to that 90 level. So let's see what happens once this dollar-rupee swap actually kicks in. Radhika Rao joining in as well. She's Senior Economist, Executive Director, DBS Bank. Radhika, your quick view on the 25 basis point now that it's come through, the liquidity measure, and finally on the rupee, and the efficacy of that dollar-rupee swap over the course of the next 3 years. Does it lend that stability? And do we move higher as we wait for this deal to be struck with the US, or do we stick here till that is done?
Hi, I think the RBI has certainly delivered on most, if not all fronts that the markets were looking for. They wanted a cut, they've given a cut, they wanted liquidity. Initially, there was some expectation that liquidity might come outside of the policy meeting, but I think not only have they announced OMOs, but they've also gone ahead with the swaps. And we had anyway expected them not to comment too much on rupee. I think they usually don't, except to say that, they're there, and then if there is any volatility, they would act, just like Ms. Goyal mentioned. So coming back to the rate cut, we had expected a rate cut this time, and I think that was really at the crux of it. What weightage do they give inflation and what weightage do they give growth? I think very clearly, because inflation was not only in October at a series low, but if you see the run rate for fiscal 26, it's running below the target range. So I think it is I think we're quite clear cut that they've given much higher weightage to the inflation targeting regime, and then they've gone ahead to lower rates. Now on the liquidity front, I think what the central bank, the expectations were that the total liquidity infusion could be anywhere in the range of 1.5 to 2 trillion. I think if you put the swap rupee value together, and if you put the 1 trillion OMOs together, we are there already. But this might not be the last. I think in the March quarter, we might see one more announcement. And again, I think this is going to be nimble-footed in terms of what they want to do as liquidity pans out. Overall, I do think this might be the last rate cut for this cycle, but the guidance has been dovish, and I think that is the one that will help remain supportive of market action per se. We did see a knee-jerk reaction in the yields, but I think there's very clear focus on preventing a rehardening of bond yields, we would think. So yes, liquidity, I think here and now, certainly very important. And also, I think going forward, we do think there'll be more action going into the March quarter.
So when you say, Radhika, hi, Tamanna here, when you say last rate cut this cycle, by when do you think the next one comes in?
Certainly, Tamanna, I think in terms of policy easing, I think the central bank has really, delivered, at least based on what the inflation numbers were presenting. I think if you see the forward-looking guidance on inflation, it seems to suggest, which was also what we were expecting, which is that we're kind of at the bottom, and from here numbers would go up. I think so. From that point of view, growth, base effects receding, one-off factors receding, growth settles into the 6.5% kind of range, and then we got inflation that's picking up. So this was a very good window, and I think they have really delivered on what was expected. Now going forward, I think the conversation thereafter goes into, do they go into an extended pause, or do they hike rates? I think pause looks more likely right now, but I think they will also want to be nimble-footed, right? So if the trade deal continues to get pushed, if exports come into more pressure, I think they would be ready to act. But for the time being, I would think the growth inflation mix, we would think that leans towards a pause, extended pause going into 26.
A pause going into 26. All right. I just want to, some of the reactions which have happened in the last 10 minutes or so, or last few minutes, I want to address them. First of all, markets off its highs, and a bit of a plunge there. The rupee is slipping again past 90. Sriram, what do you make of the kind of reaction that we're seeing from the street as well? Not that I want you to respond on, every minute by minute kind of movement, but in the context of, are there concerns that are still unaddressed?
I think I can speak, of course, for the bond markets. I think yields have been kind of ranging and trending higher. That, I think, to some extent has got arrested. We have seen some softening of yields today post the policy. Yields are down about 5 to 10 basis points in different segments of the curve. And my sense, like I said earlier, is that I think going forward as well, there's a bit more of visibility and clarity now, especially in terms of the open market operations for the Jan to March quarter. So demand supply becomes maybe less of a concern now going forward for the markets. So we do expect this downward move to sustain in terms of at least interest rates. The other segment I think that is likely to benefit is because there were worries developing on the liquidity front, that the pace at which durable liquidity was reducing, given the FX interventions and expected CIC drainage over the next few months. There was a bit of hesitation even at the short end of the curve. That's also now got addressed by the RBI governor in terms of the measures, and again the clear statement of intent that going forward they will be providing enough and more durable liquidity to the markets. I think that kind of again brings down even CD levels for banks, for example, as well as for a lot of corporates on the shorter end, NBFCs on the shorter end of the curve. So I think in general we see this policy as providing a lot more clarity to at least the bond markets and money markets. Currency, of course, I think is a lot more dependent on the trade deal and overall the global dollar movements, etc. So I do think the pressure might continue on the currency till we hear something definitive on the trade deal. But I think overall, even in terms of from a rate cut perspective, at least a kind of projections that have been made by the governor for Q1, Q2 of next year, growth being below 7% and inflation being at 4%, I think provides that one more rate cut possibility. That's at least our expectation in the Jan to March quarter.
Interesting. So we've got one view that there is going to be a pause after this. We've got one view that there's going to be one more 25 basis point cut culminating at 5% for the repo. I wonder what Ms. Goyal thinks about this. Do you think that there's one more in the offing, or do we see a pause? And what do you think about the increase, the sharp increase in the projection for the GDP, the drop in the inflation projection? This was warranted, but do you think it's enough?
Yes, I think it is good at present going forward. But what is really well done is that the neutral stance is retained, but there is a cut in the neutral stance and the guidance given is dovish. So I think markets had earlier, after that 50 basis cut in June, they had internalized because of the hawkish language that there cannot be a cut in neutral. And I think bond markets had hardened, rates had hardened. So this time, the perception should be that it is going to be data-driven going forward. You know, there is a lot of uncertainty about growth and inflation because you're going to see rebasing to a new base year, as well as base effects coming in. And really, both inflation and growth numbers are very uncertain going forward. But we know that we are much below our potential growth, because inflation is soft, it's below target, so that they have done the right thing to stimulate growth and to keep the forward guidance data-based. Neutral allows you to move in any direction. So depending on how the data pans out, they could give a further cut or they could go into extended pause.
I have a question for Radhika. Radhika, these liquidity measures that they've announced, of course, the OMOs is on one side, but the USD, INR, forex swaps that they're talking about, 3-year period, $5 billion worth of liquidity that is aimed to be supporting the economy. Have dollar swaps in the past been that successful in providing the durable liquidity for the need of the hour? Because this year we've seen other forex swaps also happen, first 5 and then 10. Or the other way around. I think the first was 10 and then 5. Have these been successful enough in providing that liquidity?
Hi, Vish. Certainly, I think so. They have been announcing these time and on, and I think that usually coincide with when they do feel that there is a considerable pressure. They've intervened, and then they would like to replace some of that intervention effect as well. So I think as a standalone, perhaps it has a mixed, impact. But I think what they would like to do is again see it as a part of a larger framework or a larger mechanism. And in way, matures when it matures 3 years from now. At that point, they already have prepared, and there's enough ammunition with them to kind of make sure it's not very market moving at this point. So I would a straight question answer from my part would be yes. I think it has had impact, but perhaps they don't see this as a standalone move, and they see this as part of a larger mix. And coming back to the currency, just like the other panelists mentioned as well, I think the currency has little to do with the rates right now, and it's looking at whole set of other catalysts, where the tariff differential is, and in terms of where the trade deal deferment has come from, and then also about generally keeping the currency at an undervalued level, which also tends to be exports and manufacturing friendly. So at this point, a dollar rupee going above 90 again, I think again I wouldn't see that as a signal or an I would say indication of where the rate action has been. I think that's really moving on its own catalyst, which is very separate from the policy rate. So the kind of connection we used to see in the past between rate moves and the currency, that kind of correlation isn't very much in place at this point, particularly for today's rate decision.
Okay. Of course, in terms of beneficiaries, NBFCs stand out. Of course, in the financial space, you're looking at the implications for banks. So, Mr. Rajneesh Kumar, the question to you is, with rates lowering, transmission, do you anticipate that it's going to be quicker considering the kind of shift that you've had in the newer lending that has taken place, one? And do you see an improvement in asset quality on the MSME side? there's a little bit of relief that gets provided on that side, incremental a little bit. How do you see that panning out?
Yeah, no, transmission now is faster because RBI a couple of years ago told the banks that the lending has to be repo linked rates. So almost, I think now bank to bank it may vary, but 50 to 60% of the portfolio is repo linked. So automatically the rate gets adjusted, and rest of the books is all is fixed. So I have seen that transmission is now much faster than what it used to be in the past because of this change in the lending rate mix at the balance sheet. And lower interest rate definitely helps in terms of asset quality. There is no doubt about it. And the asset quality, if you look at the data which has come out, all the banks have declared their results for September. So it is holding on, and it is holding on well. And lower interest rate definitely, because it has a positive impact on the profitability of the businesses. So in return, the indirect benefit flows to the bank. So banking system, I think overall in the lower interest rate regime, though some pressure on the margin could be there because there is a lot of competition for the deposits, and the ability to reduce the rate of interest on the deposit side, that is a bit of a challenge, as I said earlier. And if the bond yields come down, then there are many other benefits on the mark to market that goes to the bank. So it is a complex balance sheet. But overall, the banks are not going to lose when it comes to the impact of this rate cut.
Rajneesh sir, thank you so much for joining in for your comments this morning, and we always love having you on. That was Rajneesh Kumar, former chairman of SBI. But I want to go back to Radhika Rao on a point that you made about how the larger worry is something quite different, and the governor alluded to it as well. He said that the conclusion of the many trade conversations that are on right now would be a positive up move. Now, if that doesn't happen anytime soon, how much is this whole trade impasse with the United States beginning to wear on us? We're seeing it in our current account deficit, we're seeing it in our manufacturing exports dropping, and we're seeing it on the rupee as well.
Yeah, I think the trade deal is important from the point of view of where the tariff differentials are, and I think if the deal goes through, the gap between where India's tariffs are and rest of the region, for example, would narrow significantly, if not completely vanish. So that would be a positive for the currency. And I think until then, what you might see is that there will be a tendency to certainly keep it at more competitive levels. It does help to also take some part of the sting away from from tariffs, and generally also aligns with the larger goal of improving exports as well as pushing through the manufacturing activity. So wherever there's again logistics or whatever differential that kind of helps with the competitive rupee. So I think that's the larger goal. I think from here there's not going to be a one-sided move in the currency, and I think you're going to see as and when there are drips of news, positive or otherwise, that the currency reacts accordingly. But the central bank is going to be present. I think the intervention will be more obvious when there are sharper moves, less obvious when it's generally aligning with where the rest of the market is. So I think, as a near-term catalyst, I would think the trade deal is very important. But that said, I think the larger focus will still be to keep the currency at competitive levels, especially compared to its regional peers, which gets captured by either of the real effective exchange rate metrics.
Okay. Do stay with us, Radhika and Sriram as well. Ashima, thanks so much for taking the time. Pleasure speaking with you today. One of the points that was being made was with regard to realty, and we were asking Mr. Rajneesh Kumar what he thinks about transmission, and ultimately one of the first beneficiaries is going to be the realty space, because people tend to wait for these decisions and bear in mind the cost of a home loan perhaps. So Santosh Kumar, Vice Chairman of Anarock, is joining us on the phone line. We've got Nitin Babisi, who is the CFO of Ajmera Realty as well, joining us. Nitin, I'll come to you first. Demand on the ground, it might have cooled off just a tad bit. I'm wondering whether you get a bit of a fillip now, considering that you've got that rate cut.
Very good morning. I think RBI has given the very timely boost to by reducing this repo rate, which was overdue. And he has addressed the liquidity measures as well, kind of a thing. So I think on both the fronts, like on the cost and as well the quantum of capital, kind of a thing, what we expect and hope that this turns into a quick transmission to the loans, kind of a thing, the borrowing rate which we have on our books and the portfolio, kind of a thing. And definitely the home loan rates is going to become more affordable, kind of a situation. So yeah, overall it's a positivity for the sector as such. And going forward, the outlook given for the inflation and as well for the growth, it really becomes a very conducive case in going forward, whereby there would be more headroom for the further rate cuts, kind of a thing. So all in all, it's very, very positive. And coming back to the realty sector, yes, ground reality has been very, very challenging last few or rather couple of quarters. Because of the environment and the regulatory challenges, but those challenges are now behind us. And this particular timely rate cuts is come very, very apt, kind of a thing, which will definitely accelerate the demand side, kind of a thing, and the affordability side of a thing. A lot of launches are also in pipeline, kind of a thing. It will definitely give a good boost to the home buyers looking for very, very dream home buying, kind of a thing, at an affordable rate.
Obviously, Mr. Nitin, yeah, I mean, rate cuts good for real estate. That's obvious. You're seeing that in how the stocks are also responding. But is that demand really coming in?
Surely, so the numbers which the branded and the very good track record driven developers, they have a good numbers, and they are seeing a good demand base, kind of a thing. And this particular kind of boost will further accelerate that particular momentum.
Okay, I'm going to go across to Santosh Kumar, Vice Chairman, ANAROC as well. Mr. Santosh, thank you so much for speaking with us. Your just first response to what has been announced today.
Yeah, this is a good move from RBI. The RBI's decision to cut the repo rate by 25 BPS is a distinct positive for the Indian real estate sector as we close the 2025. Especially, since April, I think there has been a reduction of around 125 BPS. On the back of the earlier easing, this move further sweetens the value proposition for the home buyers, particularly in the affordable and mid-income segment, which are highly sensitive to interest rate fluctuations. So the real impact, especially on the effective transmission of these benefits, if banks swiftly pass on this rate cut to the borrowers, I think we anticipate a renewed surge in the sales velocity carrying firmly into the next year as well. So there has been a little bit of impact on the demand in the last 2-3 months. But having said that, this push from the RBI will definitely help in increasing the velocity and demand for the real estate sector going forward.
Okay, so real estate, the story is there. That's positive. Santosh Kumar and Nitin Bhavisi, thank you so much for joining us on that aspect. But if you look at it overall with, some of the big takeaways that we need to see, and I want to come back to you, Sriram Ramanathan, on that. Come back with a question on the trade deal with the United States, which is hanging fire, and those differential tariffs. Do you see that as a pain point that continues? Because it all ties in, right? Your net FDI is in the negative territory because of equity outflows.
Yes, I think it is a critical one. And fact of the matter is we've been waiting for the announcement for quite some time. In fact, next week, I think, again, the US delegation is over here for the trade talks. I think we just need some clarity on that. And I think one thing to point out over here is we need a fairly significantly good trade deal to get announced whenever it does, right? Because it's not just about the...
We seem to be having a little bit of trouble with Sriram's feed, but then the point that he was making was fair to make, that a good deal will have to be announced for there to be a dramatic shift in the sentiment as things stand right now. But we are more or less at the high point of the day for the benchmark Nifty 50. I wonder how the broader markets are doing and whether they're keeping pace with the benchmark Nifty mid-cap index. Let's pull that up, and the small cap index while we're at it, recouping those losses that you saw. It's been a choppy session, and that's understandable. 0.5% lower for the small cap index. We're joined by Ashwini Kumar Tiwari, who's Managing Director at State Bank of India. Mr. Tiwari, thanks so much for taking the time, and pleasure speaking with you. Help us understand this from the banker's perspective as well, because of course it's positive in that one would assume that credit growth gets a bit of a leg up, but then from your perspective you also have to defend your margins.
That's always a balance, as you rightly said. So as we all know, that deposit rates, especially the term deposits, take time to reprice, because as they mature, then they are repriced. And this process had been playing out for the last several months after the last rate cut, and would have ended in the next maybe 1 quarter. So with this rate cut, maybe this gets pushed back by another 2-3 quarters. So that will continue. At the same time, we cannot reduce rates very drastically, because the savers also deserve a little bit of fair compensation. So our committee will meet to decide on that. But loan rates will surely be repriced very quickly, because these are linked to external benchmark mostly, and the deposit rates will take time to get priced in, provided we decide to cut them. So therefore, there will be some pressure on margins, but overall, it will settle down in the next 2-3 quarters. And on the credit growth, I think the growth for us, credit growth, especially on the retail side, has been very strong. So there'll be some more enthusiasm and some more pickup in that. But overall, I think the material impact on credit growth is not likely to be very significant, because it's already very strong.
Just to follow up on a couple of those things, Mr. Tiwari. One, I just want to understand how much of the book currently is MCLR linked, marginal cost of funds linked, in that, and also how long do you think that those loans will have to take to transmit today's cut? And second, already Mr. Sethi is guided towards an improvement in the credit growth for SBI. Does that change at all from this point?
So the improvement guidance was provided recently only. So it was from 10 to 12 to 12 to 14 now. And we stick to that guidance, because what we are seeing is very strong retail growth, mortgages, auto loans, the personal loans, all of them, gold loans especially, all of them have been growing very strong. So therefore, the guidance reflects the improved sentiment and the growth numbers as we stand. Even the corporate side loans had picked up in the last quarter, and we expect that also to come back into double digits. So we don't, at this point, we don't want to revise it further upwards, because we need to see how this goes from here. It's in my view, it's already quite strong.
Just sorry, on the MCLR portion, sir?
Sorry, MCLR. So our external linked benchmark rate is above 50% now. So that gets repriced very quickly. The MCLR linked rate is roughly around 30%, if I remember the number right.
Mr. Tiwari, interestingly, in the RBI governor's speech, he pointed out where weighted average lending rates are, and I'm calling back to your point about deposits getting repriced later. But if you look at where the weighted average lending rate for new loans is, that has come down by about 69 basis points between February and October. That's something he pointed out. He said that the effective impact on rates is about 78 basis points. On the other hand, weighted average deposit rate for the fresh deposits is down by 105 basis points. So you're actually seeing the inverse, where the rate cut or passing on the deposit side is higher than what is there on the credit side. So I'm just trying to understand how that transmission works out.
So said that the stock of deposits, that rate has come down by 32 basis points. So therefore, the repricing impact clearly is with a lag. And this is borne out, and this will continue to play out as we go forward.
Okay. Mr. Tiwari, very good morning. Tamanna here. Just a question on the kind of transmission that you are expecting to see. And this is not specific to SBI, but on the sector overall, this has always been one question, that is transmission keeping pace with the direction that the central banker is giving. So just your view on that.
Yeah, good morning, Tamanna. So the transmission has been happening. If you recall, the governor in his speech said the transmission has been satisfactory. And what we are seeing is on the lending side, because there is a lot of repricing on the corporate side which is happening. And also on the retail side, since most of the loans are linked to the external benchmark, they get repriced, the new loans get repriced very quickly. And the older loans, again, many people come back to banks and ask for a reduction, or they shift banks. So therefore, reduction on the loan side, even though what was just said that the overall reduction is 79 basis points and deposit rates seem to be higher. But what we are seeing on the ground is that there's a whole lot of reduction which is happening on the loan side. So that will happen. And deposit side, while reductions have been done, in our view, there is not much scope to cut rates further on the deposit side, regardless of the rate cut which has happened today. And our committee will meet to finalize this. But the deposit rates on the term deposit side are at a bottom, and we don't think we should reduce it further for our savers. So therefore, this rate transmission will happen very quickly.
Okay. So you're saying that deposit rates can't go any lower, close to rock bottom is, I'm assuming, how you look at it. What about lending rates? How much more scope is there, you think?
Oh, lending rates, the external benchmark, which is repo / T-bill rate, will get repriced on its own quickly, because that's immediate. On the other side, the longer term loans, again, as I explained, the corporate side, there is a lot of repricing for longer term loans, the MCLR linked loans. And on the other retail side, mortgages, which are big ticket loans, there again, the customers come back to the bank and ask for reductions. And in case some bank is resisting those, they shift the bank. So therefore, the retail side loans and the overall loans in general will also see the repricing happen quickly. That will be much more pronounced than on the deposit side, in my view.
Mr. Tiwari, just a logical, or logically taking that forward. So on the one hand, you're saying that it's going to be hard for you to cut deposit rates further. On the other hand, you're saying a large portion of your book is external linked loans where the transmission will be automatic. You've managed to defend your NIM at that 3% level for the domestic side. So therefore, the question is, will it be hard to do that in the third quarter? And can you expect there to be an erosion there?
So there will definitely be a pressure on NIM for sure, because that is something which is a natural outcome of these kind of rate cuts. And if we don't reduce the deposit rates, clearly there will be pressure on margins. Now, how much there will be, our endeavor would be surely to make sure that whatever repricing we do for on the corporate and SME loans is not that large. It should be just in line with this, and we hope to improve some realizations in the other categories of loans which are higher yielding. But overall, yes, I take your point. There will be a pressure on the NIMs. How much that will be, we have to see.
Mr. Tiwari, you've utilized the savings bank rate to ease a little bit of pressure, and it's already pretty low. Will you consider lowering that further? Because I don't think your depositors bother too much about the rate that you're providing. So you might have room there?
We haven't thought about this so far because right now, I mean, the house view was also that there may not be any further rate cuts. Now, with this happening, I think we will go and see what happens to the NIM in the Q3 and decide from there on. Right now, there is no decision as to whether we want to reduce the saving rate further.
Just one last question on the treasury gains that you might possibly have, if you have an opinion on that, assuming that you think that the rate cuts are over for now. But you've still seen a rate cut today, and I'm wondering about transmission in the bond market as well, whether you expect that to bolster PAT in the third quarter?
Well, the rate reductions always have an impact on the mark-to-market because there is a stock of higher yield securities. So there will be some impact on the mark-to-market. We haven't assessed that as to how much that will be. And to that extent, there could be some positive impact on the profits in the Q3 and going forward. But we haven't yet analyzed that as to how much that could be.
Fair, Mr. Tiwari, thanks so much for taking the time. Absolute pleasure speaking with you, and look forward to talking real soon.
Yeah. So the completely power-packed show,
yeah,
and news day, because you have mass cancellations of flights on Indigo. Putin will be meeting Prime Minister Modi shortly. Those live visuals on your screen. And RBI Governor has delivered.
And a recovery in the market.
So we'll take a very short break. We're coming back with Ask Profit on the other side, where your queries get answered. But before we get into that break, listen in to the RBI Governor Sanjay Malhotra speaking on action that central bank will take by buying 1 lakh crore of bonds and conducting a $5 billion forex swap.
After reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. We are hopeful that these measures will ensure adequate, durable liquidity in the system and further facilitate monetary transmission.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors.
Hello and welcome to NDTV Profit. You're watching Ask Profit. Of course, a very truncated session today, largely because of the RBI policy meet and the comments coming post that. But we'll start and take just all of the queries which you guys send right now, and get straight into them as we speak. So let me take the first one, which is from Satyan, and we'll also take it with with our guest as well. So let me also introduce our guest as we speak, and get those perspectives to you from them. CA Tapan Doshi, he's the research analyst at CA-Tapan.in, and Osho Krishan, Chief Manager and Technical and Derivative Researcher at Angel One. Gentlemen, thanks so much for joining in for the limited part of the show. The first query that we're getting is on Central Bank of India. Satyan from Palakkad is asking if we can hold on for the next 1 year. Tapan, what would you recommend on this query?
Yeah, see, of course, seeing this RBI rate cut, and I think all the PSU banks are quite in a sweet spot. And I think from here also double-digit credit growth I can see for Central Bank of India. Even the CASA rebuild will be there. Retail and SME loan growth will be there. Again, if you see even the profitability, I think now it's been stabilizing, because if you see the gross NPA and net NPA, it's going down. So yes, I'm quite positive in this stock. One should continue hold this stock.
Next query is coming in from Shiva from Hyderabad. He's holding around 11,500 shares of Sadhana Nitro at an average price of 15 rupees per share. His current loss is around 55%. Should he continue to hold this counter or exit? Tapan, any view on this counter, Sadhana Nitro?
See, it is going through a tough time, and I think still it's not out of the blues. If you see, the demand recovery will slowly and gradually will go up. Raw material prices stability is going to be there over the time, but now the PAT impact will be there. Again, the capacity utilization is improving, but slowly. So I think things will be getting on board slowly and gradually. So if he is not in hurry, I think she can hold the stock for now. Currently, maybe 1 or 2 quarters he can check it and then take a decision.
Got the view, Tapan. We have the next query on Vardhaman Textile, and our viewer is asking a short-term query on this one. Holding roughly 1,000 shares at 514. What would you recommend? Osho, welcome to the show.
Very good morning, Puneet. For Vardhaman Textile, the view is quite sidelined. The counter has not performed well in the recent period, and it is hovering below the long-term moving average. So I expect that there can be some kind of continued consolidation that can be seen in the counter, although there is no positive or even negative sentiments associated to the counter. On the higher end, I am expecting 460-65 to be seen as the immediate hurdle, and a breakout above 465 can provide some kind of momentum in the coming period. So from medium to long-term perspective, it will be advisable to hold the counter.
The next query is coming in from Mohit from Kerala. He's holding few shares of Kamath Hotels bought at a price of 290 rupees and Glottis India bought at a price of 77 rupees. Both the stocks are currently trading below his buying price. He wants to know whether should he continue to hold this counter for the next 3 months or should he exit and book losses. Osho, any views on Kamath Hotels and Glottis India?
Kamath Hotels is looking quite okay to me on the technical front. It is at a very strong support level. So from here onwards, there is possibility of some revival can be seen in a short-term perspective, but it is having a very strong resistance level around the zone of 270 to 280 kind of a zone. So that will be a critical level to watch for. If it gives a breakout, then from there onwards, we can see some kind of positive momentum in the coming period.
That's Osho's view on Kamath Hotels. We have another caller now dialing in from Mumbai. Nikhil has a stock query for us. Nikhil, welcome to Ask Profit. What's your query?
Good morning. Body Renewable Technologies Limited taken at 1099.80 shares.
Okay.
Right now it's trading at 993. I believe that it is having a court case. Do you think it will recover and go back to its old figures?
And got it. Got Nikhil. Osho, let me come to you on this one. Nikhil has bought Vari Renewables at 1099. What would you recommend on the charts? Can come back to this price?
Technically, the counter is into kind of a correction phase. It has seen a kind of deep dive from the zone of 1300, and there has been one-sided move in the counter. So I expect that in the short-term perspective, the pain is still evident in the counter. On the lower end, I'm expecting 960 to 950 to see some kind of cushioning or provide some kind of cushioning to the counter. But on the positive front, I am not witnessing any kind of reversal at current levels. So once it tests the zone of 950, then we need to review the counter that whether from those levels it can see some kind of reversal or not. But at current levels, 30 point of downside can be seen in the counter.
The next query is from Surendra from Chennai. He is holding 70 shares of Olectra Green Tech, bought at a price of 1,270. He wants to know whether should he continue to hold this counter or should he add more or should he sell. Tapan, any view on Olectra Green Tech?
Olectra Green Tech, if you see that electric vehicle profitability expect to grow gradually over the next 2 years. Even the battery localization is going to improve the margins. And see, the EV adaptation is there, so that's why this company will be benefited over the time. If you see the tier 2 also demand is going up, and for company realization is improving to the premium mix. So yes, I know of course the stock is going down, but I think the valuation has also come down a lot. So I think one can hold this stock for the next 1 or 2 quarters. I think things will be getting settling down for this stock over the time.
Got the view, Tapan, but we have another caller now dialing in from Chennai, and Swaminathan has a stock query for us. Swaminathan, very good morning and welcome to Ask Profit. What's your query?
Yeah, that is, I wanted to purchase Keynes Technologies because Kotak has passed some strictures on Keynes Technology, as well as the lock-in period is also over. So the people are telling it whether it is the right time to buy or shall we wait and buy, whether for short term as well as for the long term.
Got it, Swaminathan. Tapan, would you recommend buying to Keynes Tech right now? Because a lot of news flow coming in from yesterday as well as on today. Stocks almost down 10% in the last 2 days. What would you recommend?
I think one can let it settle down, but the company is good over the time. If you see the results are also coming good. Even if I see the EMS demand is expected to strong next 2 years. The operating cycle is expected to be normalized. But the problem was with Keynes was the valuation was on a higher side. Now slowly and gradually it is coming down. If he's not in a hurry, I think he can wait for 10-15% down from here also, and then he can start accumulating slowly and gradually. Overall, long term, I'm bullish on Keynes Technology.
The next query is coming in from Sunil from Bangalore. He's holding 350 stocks of Moschip Technologies purchased at a price of 255. Should he continue to hold or sell? Osho, any view here, Moschip Tech?
Again, the counter has seen a decent correction from recent period of nearly 218.85 kind of a zone and is hovering at a comfortable level. So one can stay invested in the counters and even can add further positions once it gives a breakout above 220 kind of a levels. So overall, one can look for accumulation purpose and even can hold it from medium to long term perspective.
Got the view. We have another, and right now what you're seeing on screen is also live visuals from Delhi. Now this is coming in, of course, because Russian President Putin is in India, and we got you the extended coverage yesterday. Live visual coming in of him entering the Rashtrapati Bhavan. So we'll get you and continue to get you a lot more updates as and when they happen. And that's a key one that you have to monitor in terms of defense agreements, amongst others, that could come in as well. But after arriving in New Delhi for his nearly 27-hour India visit, he will hold a meeting with the Prime Minister Narendra Modi and attend the India-Russia Business Forum at the Hyderabad House in the national capital. He will also, and that's going to happen before addressing a press meeting. And there on Friday, later in the day, of course, later today, the 73-year-old leader will also attend a private event, meet President Draupadi Murmu at the Rashtrapati Bhavan, amongst others, and attend a dinner with the Indian leader there before flying back to Moscow. So we will continue to get you all these exclusive coverage right here on NDTV Profit. But let me go across to and take the next query as well on Cochin Shipyard. Lokesh Kumar has been holding this particular counter for roughly about 61 shares. He's currently sitting at a loss of about 25,000. He's not mentioned his buying price yet, but Tapan, any view on Cochin Shipyard? Can he hold it for the next 1 year?
The stock has come down because of the high valuation, but you know that shipbuilding demand is going to be strong in next 2-3 years, and margin is also going to improve slowly and gradually. The problem is the execution part. They are not able to execute in a way with the market is expecting. Even the revenue is falling compared to if you see the valuation. So I think because the strong defense is there and export pipeline is there, I think if he can hold the stock, I think he should hold, but it will take some time to recover. I think if he wants to switch also, I think GRSC or Mezagon will be a better option if he wants. But yes, Cochin Shipyard will take time to recover.
Queries from Anusha from Warangal. She's holding 2,800 shares of Tata Steel bought at a price of 180. She wants to know the short-term view on this counter. Osho, what's your short-term view for Tata Steel?
The counter is into a corrective phase, but looking at the recent development, the counter is at a very strong support levels also. So I expect that the zone of 160 will be providing cushion to the counter, and from these levels, there might be some kind of recovery phase that the counter can enter into. So from short-term perspective, I expect 160-64 to seen as a support zone. On the higher end, it is having a resistance around 175. So a breakout above 175 can provide some positive trigger. So it will be advisable to hold with 160 stop loss, and 175 should be kept at a watch list. Once it breaks through 175, then 185 to 190 will be the next target.
Got the view, Osho, but it's time now to take the only rapid fire round in this edition of Ask Profit. Osho as well as Tapan, you know the drill. Keep your answers on buy, sell and hold so that we can take as many queries as possible. The first one is from Keetana. She's holding Biocon at 418. Should he continue to do that, Tapan, even after the amalgamation decision of Biocon Biologics?
Yeah, continue to hold.
Next query is from Venkat Ramani from Bangalore. He's holding 1,000 shares of SpiceJet bought at a price of 44. Is it a good time to buy more, Tapan?
No, sell.
Indian Bank bought at 846. What should he do with this counter, Osho?
Indian Bank is a hold.
Next query is from Sai Kiran from Bangalore. He's holding 1,369 shares of Sagility India bought at a price of 51.15. Should he add more? Osho, any view here?
Sagility is looking positive to me. In the coming period, we can see some kind of a strong momentum. It is advisable to hold.
Mascon Doc bought at 3,100,000 shares by Akhil. What should he do, Tapan?
Buy at current levels, also on deep.
Sunil from Bangalore has 500 shares of Geo Finance purchased at a price of 220. Should he hold or book profits, Osho?
Hold.
Our viewer has, Vivek from Kolkata has 1 lakh rupees to invest. What can he buy right now, Tapan, according to you?
I think defense will be a better option. Also NBFC and PSU banks.
Agashri holds few shares of Tata Consumers bought at a price of 1,172. What's the near-term perspective here, Osho, on Tata Consumer?
1190 to 1200 is a very strong resistance level. Once it gives a breakout above 1200, then only some positive trigger can be seen. But on the lower end, 1120 is a very strong support levels also. So it will be advisable to hold the counter. A breakout is expected to be seen in the coming period.
Tata Motors, PV and CV, both shares held by a viewer. What should he do with either of them, Tapan?
CV is in a much more better position than the passenger vehicle. CV can buy, passenger vehicle wait for 2 quarters more.
Rajesh from Chennai holds 7 lakh shares of IDFC First Bank bought at a price of 76. What's the target here, Osho, for IDFC First?
For IDFC first target that is expected to be seen is near about 88 to 90, and if it breaches, then again we can see some kind of 3-digit number.
GMR Airport bought at 105 by Pratap. Should he continue to hold, Osho?
Yes, it is a hold. It has given a breakout and retesting the neckline, so I'm expecting 98 to 100 as a support level.
Right.
Gul has few shares of Reliance Industries bought at a price of 1,200 rupees. Should she continue to hold this counter? Tapan, any view?
Yes, hold, and you can buy it every deep.
Tilaknagar Industries bought at 469. What should he do with it, Osho?
Tilaknagar is a hold at current levels.
Shinoj from Abu Dhabi has 348 shares of Delivery bought at a price of 416.51. He's currently sitting on a loss of 5,000 rupees. Should he buy more, sell or hold? Osho, any view?
It is at a very strong support levels. Try to accumulate more around the zone of 430.
Well, Osho as well as Tapan, thanks so much for joining in today. That's all the time we have on this edition of Ask Profit. but appreciate your answers on the 24 queries that we managed to solve in this short span. But also viewers, thanks so much for joining in today, getting us perspective and sending in your queries for a truncated session. KYC comes up next.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where we get your queries in and we find out companies where the interest is there for the viewers. And today itself, the company in focus is CWD. It's a short form company, but the question remains is why we want to know about this company. Just the market cap is 830 odd crore rupees. What is this company actually all about? But first is why we are getting this company in our show. That's much more important. First is, what are the upcoming expansion plans coming ahead? Companies dealing in soundboard as well. And also the revenue and margin outlook going ahead. What would it be? Will it be a turner in H2? That's the question we'll be asking the management as well. The third question is, what is the addressable market for two new things which are there? First is the QR codes, then is the sound box. Is the market going to be really big when it comes to this segment? Fourth question, what's the market for them? Overall potential size coming in, what's the growth outlook coming in? This company also deals with smart meters. That's also something which we'll be asking. The CNIC execution, that's expected to accelerate. That's what the management has stated. So we will ask these important questions as well. And importantly, the direct OEM sourcing, will that also improve the margins going ahead? That means there are twin boosters for this margin segment where we can say largely that an up move can come in. So this is the questions we are asking about CWD, but this is largely untracked business, and I would like to just give the details about this company, what it's actually all about. Largely when you have a look at the QR codes or the sound boxes, so they do a lot of work in both the information and the communication tech side. This includes hardware as well as certain software integrations as well. Now the manufacturing, looking at it, the integrated solutions, they come in both software and electronics, and the company is having its own manufacturing setup as well. The business segments also, which companies are actually working on, this includes consumer electronics, and this also includes your smart meters and solutions related to it. And also the product profile, that is very much interesting, and to be honest, these are the future products to look at. And let's look at it. This is the first one being the smart medical devices, how things are going for growth over there. Weather monitoring system, not a very big contribution to the revenue, but nevertheless these are the new places where the work is happening. And smart energy, that's a huge market. The way India is growing at the cusp of electrification, and smart energy is very much important. Employee safety tools, very smaller versions of it, but nevertheless very much important. But the majority of the revenue which actually comes in is from the QR codes and the sound boxes and the smart meters. These are the three pillars where we will be questioning the management. Where is the growth lying, and is there a margin up move coming in the H2 as well? But let's give you the rating parameters where we judge a company in KYC. We have spoken about the company, what are the questions we want to ask, but rating parameters much more important. Income statement, balance sheet, cash flow, return ratios. These are the four important ratios which you need to track in the financials, but non-financials also. It's very much important, like shareholding, street cred, valuation, outlook. These are the 8 parameters where we will be judging the company and giving our ratings. But before we go into giving the judgment and discussing each and every parameter one by one, we will be talking to the management as well to actually understand what has happened and what didn't happen and what will be the outlook going ahead. But before that, we'll be taking a small break. Well, yes, of course, before that actually, let's just take in the income statement. That's one of the first parameters to judge the company, and largely let's looking at the numbers. The revenue has seen a 3-year CAGR of 30% growth coming in. EBITDA also 12% growth. That's a kind of a decent up move coming in, but there's a concern for me, and that's the margin front. They had spoken about the margins going up in H2 as well, but to be honest, looking at the numbers till FY25, the margins, there hasn't been an up move coming in. Net profit, not so much to share with. Right now, it is also very minuscule, but net, let's look at the margin trajectory, how things have panned out. And from FY22, it was 33%. But after that, it has not breached the 25% mark. Even the H1 numbers, that's where the concern still lies for me. So net, I will still give a neutral rating to the company. Of course, the company has been listed from 2021 itself, but the numbers need to show. And that's why I have given a neutral basis when it comes to the income statement. Up next is the balance sheet. Over here also we look at it, the important metrics which would be in focus. They include the equities, the borrowings and the cash bank levels, and largely equity base is unchanged, not so much happening here, but borrowings, that has actually come down, and the size of which the company has, that's down from 12 crore to almost 9 odd crore in FY25. So that's a good positive point coming in. But one thing which has taken my eye is the cash bank balance. The question is, will they deploy this cash in expansion, or will it be some kind of a return to the shareholders? Because there has been a very significant up move in the company. So technically they should be actually focusing much more on their expansion part, because be it sound boxes, be it the manufacturing setup, they all need capex, and a couple of capex programs are still going on. So it's decently placed. Cash bank, that's roughly 27 odd crore rupees, which we are seeing in the screen for FY25. So net for the balance sheet segment also, I will be giving a thumbs up for it. So we have done already 2 parameters. One is the income statement where we gave a neutral rating, and for the balance sheet we have given a positive rating. The third one is the cash flow segment, and that's also very much important because the company is dealing with not only the software related products where it's generally cash flow accretive, but hardware related manufacturing is also there, and that is why the volatility comes in when we speak about the operating cash flows. That's why you see the operating cash flows, no clear trend is coming, but it's on the positive side, roughly 3 odd crore rupees for FY25, and net cash flow that has actually improved significantly, and that's a very good indicator for a company when you judge, especially in cash flows. It's in a new industry area, so it takes time to actually understand what's the actual business model of the company. So currently the net cash flow is sitting handsomely at 22 odd crore rupees in FY25. So based on this, I would still give a neutral rating in this segment. After the 3 ratings we discussed, the 4th rating is the return ratios, and that's where a jump has come in. The overall, the ROE ratio, the return on equity ratios, generally it should be around 15 to 16 odd %, but the way the company is at the stage, it's quite early, to be honest, if you look at the product life cycle of the company as well, because India just hit its inflection point. So this is a starting story when it comes to the medical devices, the sound boxes, and fintech and agri-tech related stuff. But ROEs has been single digit lower side for both FY25, but see the spike. For H1 FY26, it's at a consolidated blended level of 8 odd %. That means the strength is coming. Now in future, of course, we will be asking the company whether this 10 to 15% is sustainable and by when this ROE numbers can hit. That will be something very much important. But on the current historical basis, I would be giving a thumbs up for the company. So now 4 ratings are done. Off to the 5th one, that is the shareholding pattern, and not much change has happened in the promoter segment. We see it's flattish at 72 odd %. That's decent, but there's an area of concern for me. No significant participation has come from the institutions, be it the domestic institutions or even the FIs. There's a slight 1% up move coming in for the DIs, but to be honest, there's nothing much there for the institutions. So interestingly, for the public itself, if you can just show how the public movement has happened, there is a significant up move from 28% in March. There's almost a 10% holding coming in retail. There's a significant interest coming in. So of course there is divergence. The retail on the one hand is showing a lot of strength, while on the other there is no participation from the institutions, and at times that becomes very risky for a stock. That's a historical data which I am mentioning to you. So net I will give you a neutral rating when it comes to the shareholding pattern. 6th one is the street cred. That is also very much important, is how the returns have actually panned out if you are a long-term investor in this company or even a short-term. 1 month, 15%, not bad. 6 months, 59% returns coming in, and that's an area of strength. Year to date, 138%. And looking at the 1-year return, which we had asked you about and guessing the company, that's out almost 181%. 5-year share price, almost 1,000 odd %. So there's a significant uptick. It's this journey from a micro cap to a small cap, and it has sustained that growth. And of course, that is coming in the name of new industries and a very higher top line growth coming in. But we need to see whether these numbers actually percolate down in the PAT numbers or not. But on the basis of street cred, if you are a short-term investor, positional investor, or even a long-term investor, all the boxes have been ticked right. So it is a plus, a thumbs up when it comes to the street cred. Valuations, whenever the stock goes up, the valuations indirectly they go up very high. The company doesn't have a strict peer. So in my analysis, I have just taken the trailing 12-month P ratio, and that comes in at 88 times, and that is the concern. So if the rate of growth of the company in the future by chance comes down, then there would be a significant correction. We have seen that in EMS players also, how this thing plays out. But the company itself is a quasi-EMS player and very dedicated to certain segments. So there is of course a risk involved in these segments as well, and the valuations are sky high, 88 times. So I would be giving a thumbs down for that when it comes to the valuations part. So 7 rating parameters have been done. We are coming to the last but not the least, the outlook parameter. That's a very important parameter to actually track. The first one is the sound vertical. That's expected to have an 18 to 19 crore monthly revenue in H2. Also, there is a segment called the CNI segment. It's a high margin segment, and that's where the bullishness is coming in. They're expecting the H2 numbers to be on the stronger side as compared to the H1 numbers. And there is a decent order book as well. Company's market cap is roughly 800 odd crore rupees, but the order book stands at 200 odd crore rupees. That's executable in the next 12 to 18 months, and that's where the revenue visibility also comes in for the company. Apart from that, the most important kind of announcement is that H2 FY26 is expected to be materially stronger than H1. Already we are seeing a strong up move coming in. Maybe the stock is factoring in the key H2 growth numbers. Company also came out with its Q2 numbers, and that was also coming on the bullish side. So overall, net, I will be giving a thumbs up rating when it comes to the outlook going ahead, basis on the management's guidance, plus the industry tailwinds which are there in this segment. Now, this is a new company, that's why we are trying to break it down slowly, but the rating parameters is something which we are looking at. Income statement, it has been largely neutral, but balance sheet, especially on a higher cash balance, that is where the momentum is coming for me in my analysis. Cash flow, it's decent, but still the company needs to prove it. The industry is a bit quite early also sunset, so that's why I've given an equal rating. Return ratios over here, that's been on the positive side, but some numbers, of course, they were changing. Shareholding, it largely we can say it's a neutral thing, but the retail participation has picked up, and that's the reason why we have got this company in KYC. 10% increase in retail participation in terms of the total shareholding in last 6 months. A street cred was superb returns coming in, valuations on the higher side just because of very high returns, and outlook overhead that largely looks decent and strong going ahead. But net from our side, on the higher side of scale, we have given 5.5 out of 8 to the company CYD. But let's slip into a very quick break. On the other side, we will be joined by the management. Do stay tuned.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
$2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The story that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका
We are now joined by Krish Kothari, Head of Business Development at CWD. So thank you for giving us your time. What are the key drivers that give the company the confidence that H2 will deliver materially stronger performance than H1?
Yeah, so as you would have seen, our H1 performance so far is about 40 crores. And we're looking at H2 to do about 18 to 20 per month, 18 to 20 crores per month. So the key driver here is our extended manufacturing capacity, which will be supporting the large order book that we already have. So we have set up 2 new factories in Mysore. Currently, our manufacturing capacity was about 5,000 units per day, and now we are at minimum tripling that to 15,000 units. So that is what's going to be supporting the large order book that we already have from our leading customers, and that's why you will see a huge boost in the H2 revenues.
Well, that's an interesting take. 18 to 20 crores of top line revenue growth expected in H2. But how did the scale up happen in the soundbox business? You know, how will it drive the strong H1 performance, and will you think this will be sustainable going ahead given the full expected capacity utilization in H2 and the projected monthly revenue of roughly 18 to 19 odd crores rupees as you had stated earlier?
So what has happened in the first half compared to what's going to happen in the second half is, as I mentioned, that we are going to just be manufacturing a sheer larger volume. But at the same time, we are looking at the international markets as well, right? So we are looking at other customers based in the Middle East and Africa, where we are already in discussions with to expand our offering, our product offering as well, and increase our order volume. In terms of the manufacturing capacity, as you were asking, you're right, like we might be capping out in terms of the maximum amount of manufacturability of these devices at about 2.5 lakh units a month. So beyond that, beyond 2.5 lakhs to 3 lakh units, we'll have to be looking at to extend a new facility or extend our manufacturing facilities even more.
And Krish, with the capex rising sharply, almost from 3 crore rupees in FY25 to 15 crores in H1 FY26 alone, what is driving this accelerated investment, and how will it support the growth across the key business segments? Could you just give us some timeline to that?
So this large capex that you just noted was for these 2 facilities, as I previously mentioned. You know, these 2 new factories to support the over 200 crore order book that we have, right? So we already have an order book of 200 crores, and that's why this investment to extend our manufacturing capabilities to bring more tighter quality and control over the products that we are making for some of the leading customers in India and globally. Right, so that's why there's such a large capex that you see an increase from the previous year to this year.
As the management speaking about a larger capex coming in, and because of that executable 200 crore order book, something which Krish is bullish on. But Krish, what impact will the new CNIC plant bring to the table? It's becoming operational in the month of January. And what would be this impact on the margins and the execution pace for this?
So by bringing manufacturing domestically and by bringing more parts of the product under our control, our margins are going to definitely improve, and we are also saving, duties on the other end, import duties on the other end of things. So that's why, with larger volumes, our costs will also come down in terms of on a per unit cost for the components that we'll be importing also, and also we'll be able to extend that same benefit to our customers. So this is a mutually beneficial relationship for both the customer, for us, and for the supplier.
So there is a relief for both the customers and the supplier, and that is where the question, Krish, comes is what would be the revenue and the margin visibility from the large CNSI opportunity, given this Cyan Connor's 14.75 million meter order book has come in, and CWC has confirmed this order as well.
So here, as you would have seen, yes, as you mentioned, there's about a 1 million order book that we are sitting on. For this, our projected revenues over that entire volume is 45 crores, right? So we have decent margins out there because we are, again, doing the entire end-to-end manufacturing, the design, development and manufacturing in India domestically. Again, here we are not manufacturing the entire meter, but we are only supplying the communication module part of things. So there our R&D time investment is also lesser, and so our margins are higher out there as well.
Right, and last question, Krish, for you is how will the new integrated facility expand going ahead, and what could be the execution and the speed coming from this, and what kind of operating leverages will kick in once these segments are there? Soundbox, CNSI, and even WMS segments are there, if I'm not wrong. So what will be the view on that?
So these two new facilities are definitely fungible across all our product lines, right? While some products are seasonal, the Soundbox is not, because there is a monthly fixed volume that we have to supply to some of our leading customers. These two facilities combined will have over 700 people working per shift, right? So across 3 shifts, you have over 2,000 people that are going to be working. Currently, we have 2 high-speed, high-precision dual-lane SMT lines set up with 6 assembly lines for capacity of 400 people. So we still have capacity to add an additional SMT line out here, and also in terms of the other facility to increase the number of machines for manufacturing. So we have planned these 2 facilities with the next 5 to 7 years in mind, with the current order book and also with our anticipated orders and new customers that we're talking to.
All right, thank you very much, Krish, for your time and giving the views for CWD. A lot of retail interest has come up, and the stock also has jumped a lot over the last 1 odd year. But you must be wondering what the discussion has been overall, and we have put that in 3 sentences. What the management has stated, will they walk the talk or not? That's the question. They're looking at an 18 to 20 crore revenue in H2 as well. A bigger, better H2 is expected to kick in. Also, looking at the second takeaway is a large capex plan, and because of that, they are executing a 200 crore order book as well. And lastly, I'd like to point out the savings which are expected to come in for the import duty. That's also going to aid the margins. Of course, the question is, will this overall EBITDA margins go back to those higher historical levels which we had seen earlier? So that's the entire takeaway from today's show at KYC for this company called CWD. That's all, folks, today for tuning into KYC. Thank you very much.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV
Good afternoon, you are watching Markets at 12 with me, Sharad Dubey at NDTV Profit. And let's see the markets, how they have actually reacted, especially after RBI MPC's meet. And that's at around 10 o'clock, the movement started, and markets are still at the day's high levels, and they are sustaining above the 26,100 mark. Let's pull up the Nifty Bank Index to see where the movement is happening, and the support is coming from the larger players as well, and it's sustaining above the 59,500 odd mark as well. The interest rate sensitive stocks, let's pull up the Nifty PSU Bank Index, the Nifty Private Index, Private Bank Index, all of them jumping in the trade as well. And interestingly, the commentary also is coming in, especially from the NBFCs, that there would be a strength coming in as well. And now we can see the RBI governor, the live footage coming in. He's going to join in some moments. The press conference will also start. And of course, the street will be looking out for is what will be the views on the rupee as well. Interestingly, the rupee, it did touch and went past the 90 mark, but then again it recovered back. The bond yields, there was a slight downtick coming in, but interest rate sensitive stocks, they have been showing a good strength as well. In some time, the RBI governor will be giving a presser conference on about the RBI MPC meet, the GDP raising, and also the inflation setup, how it's going to look for the nation going ahead. But let's just pull out the gainers and the Nifty for the time being, and we'll see what's happening. And in just some time, we will be cutting across to RBI's presser conference as well. Let's just show the Nifty banking constituents, how they have performed. And that's over here. We are seeing a strong up move coming in the larger players, the PNBs, the SBIs, all jumping in trade. Let's also show the Nifty Realty Index. That has also jumped a lot. But now let's move on to the RBI presser also, where the action is there and the markets will be focusing on that.
2025-26. We have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri T. Ravishankar, Shri Swaminathan J, Dr. Poonam Gupta, and for the first time, Shri Shirish Chandra Murmu. We also have with us today Executive Directors, Dr. Ajit Ratnakar Joshi, Shri Indranil Bhattacharya, and for the first time, Shri Sanjay Kumar Hansta. I also welcome my other colleagues from the Reserve Bank. Before we begin, we have a few housekeeping announcements. Sir, there are 26 participants from the media. I will be requesting the media participants to please stick to one question so that everybody gets a chance. I would also request everyone to switch on the mic while speaking so that those watching the live telecast are able to listen carefully, clearly. And once you have finished speaking, please switch off the mic. Sir, with your permission, I will now call out the names.
Yes.
Yeah. Thank you, sir. I would request Ms. Latha Venkatesh from CNBC TV 18 to please ask the first question. Over to you.
Thank you, Mr. Bridgewater.
You are the opening batswoman.
Opening batter, they have made it these days. Governor, let me begin with the inflation forecast, since you all have brought it down from the earlier two policies ago. You had forecast Q1 next year at 4.9. Now it is, the forecast is 3.9, and then 4 for the next quarter. Also, you're saying that if you remove gold, it would be 50 basis lower. Would you say that gives the MPC further space to support growth? And volatility, if you can also give us your comment on the currency. Do you think it was undervalued? What is the RBI's approach to the currency?
So 2 questions. Whether there is more space going forward. We are at neutral today. We believe that, as you have also alluded, and as I mentioned in my speech and in my assessment, the important thing is that inflation is very benign. It has been benign, 3.5%, if you exclude food, which has been volatile. Last 2 years, it has been 3.5%. And going forward too, if you exclude gold and precious metals, silver, our expectation is that it is going to be very benign. Now, whether that opens up a policy for further rate cuts, that will be, getting into speculation. I don't want to get, into that question. For me, the more important thing now is that having reduced the policy repo rate by further 25 basis points, we have to now, concentrate on the monetary policy transmission. And considering the fact, that inflation is going to be very benign, I think let it first transmit into the real economy, and then we'll see, as to how inflation behaves, how the growth inflation dynamics behave, and we take it policy by policy. Second question on the rupee. See, our stated policy always has been that we allow the markets to determine. We don't target, any price levels or any bands. We allow the markets to determine the prices. We believe that the markets, in the long run, especially, are very efficient. It's a very deep market. We saw this earlier in February. The rupee to dollar had climbed up to almost 88, and within a period of 3 months, it came back to below 84. So these fluctuations, this volatility does happen, can happen. Our effort has been always to reduce any abnormal or excessive volatility, and that is what we will continue to endeavor. Our external sector, as I also mentioned in my statement, is very strong going forward. We do believe that we are having sufficient reserves. Current account is very manageable at about 1% or so. And given the strong fundamentals of our country, we should get good capital flows as well going forward. So I think we are in a very comfortable situation insofar as the external sector position is concerned.
Thank you, sir. We'll take some more questions from our left side before we move here. So for the next question, I will ask Mr. Mayur Shetty from Times of India. Mayur, please.
Thank you, sir. Thank you, Governor. Governor, historically, the current account deficit was of around 2% was seen to be manageable because we have this capital flows. But now, with this flows coming down, is there a change in what you see as manageable? Is it around the present level? And a second part of the question was, you cut the rate despite the recent volatility in the rupee, and many forecasters had revised their expectation. So does this is it reflecting your comfort with the situation in the forex market?
Yeah, see, as mentioned even earlier in one of my post MPC conferences, we are mostly, the MPC is mostly driven by growth inflation dynamics, especially, given the fact that ours is a domestic demand driven economy. I mean, our dependence on the external sector, it's a small percentage of our total GDP. So we continue to do so, and that's why while these factors are, of course, considered by the MPC, but given the growth inflation dynamics, this decision was taken. Your first question, I think, I don't have more to add to what I told in response to the first question by Lata, which is that we are at a very comfortable. I do not expect the CAD, to be as high as 2%. Some of the numbers, that you are giving out, and so on the external sector side, we are very comfortably positioned.
Thank you, sir. I will now request Ankur Mishra of ET Now to ask the next question. Ankur, please.
Thank you so much for the opportunity. Good afternoon, Governor. I want to draw your attention towards the growth revision this time. You have revised it upwards. While surprises are always welcome, but last 2 quarters, the growth has been much more than what RBI has forecasted. So therefore, I want to understand what has been reasons for that. And more importantly, last time when I asked you a question about the aspiration, you mentioned 7% plus should be the aspiration. Now that you have forecasted more than 7%, 7.3% now, do you think the aspiration should move towards 8%?
So you could also have said 9%. 7 plus can mean, anything, right? So that is the baseline. When I said 7, that is really the baseline, because these are difficult things to actually estimate as to what, our potential GDP is. Of course, aspirations can be, very high. And so having delivered, of course, 8% now on an average last 3-4 years, certainly this is certainly, well within our reach, and we should certainly, aspire for anything which is in that region.
Yeah.
Right?
Thank you, sir. I now request Anup Roy of Bloomberg to ask his question. Anup, please.
Thank you for the opportunity, sir. Sir, the markets were expecting some kind of rupee measures in this policy. And in October, we have seen RBI was probably intervening heavily, but it stopped intervening, and then rupee rapidly moved to 90. So are you comfortable with this kind of level for rupee?
I don't have anything more to add than, what I think you people don't have more questions.
Yeah. Sir, I will then ask the
same question,
Sir, I will then ask that how does this dollar-rupee swaps help in this context? Because it is not infusing.
It's more of a liquidity measure.
Yeah.
It's a liquidity measure. It's not to support the rupee. And your first question I also already answered, that we don't target any level, whether it is whatever levels are there. So we don't target any level, and we only allow for we just let the rupee find its correct position, correct level and band, just for an orderly movement.
Thank you.
Thank you, sir. I now request Hamsini Karthik from Money Control to ask a question. Hamsini, please.
Thank you, sir. Good afternoon. What would your message to banks be in terms of credit growth? Usually the barometer is that credit growth is 2x GDP. That's the ballpark with which we normally work, right? But it's now GDP is ballpark of 8%. Credit growth is just at around 11%. And what is that number? You've done a lot of front loading now. 125 basis points reduction in repo. Transmission has also been quite healthy, healthier than what we've seen in the last cycle. What would your message to banks be? And what is that magic number in terms of credit growth that you would like to see will bring a smile to your face?
I think, I don't know where you get, the 2x figure of credit to GDP growth rate. Last 10 years, it's been more or less 1x. More or less, it's been 1x. And we have done well. The growth rates are also, real growth rates are about 7%. When one talks about 2x, those are the times before 2011-12, before earlier, we used to have very high credit growth rates, and you did see what impact it had on bank asset quality. So I don't think 2x is the kind of number that we are looking at. We don't target any particular growth rate for the economy. Let's keep in mind that these things are mostly dependent on the structure of the economy. The monetary policy has a role only, in the short term, not in the long run. We can't accelerate or decelerate the rate of growth of the economy and at the same time of credit.
Thank you, sir.
Thank you, sir. We'll now take a few questions from this side. I'll request Sangeeta Mehta from Economic Times to ask a question.
Thank you, sir. Sir, in the policy statement, you have said that growth is expected to soften somewhat. Could you elaborate why do you expect growth to soften? And you've already answered the aspiration question, so that was my other question.
See, we are going by whatever are the high-frequency indicators that we track. So it's basis that we feel that the growth that has been about 8% in H1 will not be of the same order. We have already given out our numbers for this quarter and going forward. If you look at the various sectors, we can separately. I don't have those details right now, but we can give you separately those details. Okay.
Details on
which sectors will probably not do as well as historically or in the past they did. And would you like to? Do you have some numbers? Would you like to add over here?
Nowadays, the base effects will play out as well. Currently the growth rate is very, very high. So when one is talking about softening, it's from these very high levels. Sectorally, I think the outlook is highly resilient on each one of the sectors. So this small softening that we are talking about will be distributed across sectors, primarily based on the base effects.
And some of it is also, export-led. So we had earlier reduced the growth rates because of the high tariffs. So all those sectors which are tariff impacted, for example, textiles, leather, to some extent gems, jewelry, shrimps, these sectors certainly, although they have a very small component in our total economy, they will certainly be impacted.
Thank you, sir, and thank you, madam. I will now request Manojit Saha from Business Standard to ask his question.
Good afternoon. You have not mentioned there is space for supporting growth in this policy. So that was mentioned last policy, I think last to last policy also, but this time. So from a real rate point of view, which according to RBI's last report 1.4 to 1.9, is there any space for a real rate point of view? And also wanted to know whether implicit in the assumption behind to the decision was there is no trade deal with US. Was it also a consideration? That very unlikely.
No, that's not a consideration. See, as I mentioned to you, ours is mostly a domestic demand-led economy, and whatever is the impact of the tariffs, higher tariffs, that has been already included in our projections. So it is not on account of the higher tariffs. It's a totality of things that we look at. Space, as I again mentioned, it will depend going forward, will be data-driven as to whether there is further need, scope, first of all scope, and then, whether there is a need. All I can say is that going forward, we expect benign inflation. And so if the inflation continues to be the way it is, we expect the rates, the policy rates, to be low and not high. Whether now, what rate it will be, that will be, getting into speculation. But going forward, we expect benign inflation, and so we do expect low policy repo rates rather than higher policy repo rates.
Thank you. Yeah. Thank you, sir. I will now invite Vishwanath Nair of NDTV Profit to ask his question.
Good afternoon, Governor. The comments on rupee that you made, we don't want to target levels, step in when volatility. Has that threshold of stepping in changed at all? As in, is there a point in the volatility where you're saying, okay, this much volatility is fine because it's the market forces at play, but beyond this is where we'll step in? And the second part to that is then this historically low inflation and blistering growth doesn't seem to be felt on the ground level. So I'm just trying to understand where the dissonance is. People on the ground not feeling the inflation come down that much, nor that the pace of growth is as fast as it is.
I don't know. I mean, where do you get this? Because we do rely on the numbers that are given out. I think there is a good growth. Inflation is certainly very low, and especially if you take out precious metals, I think it is being felt on ground as well. Of course, there can be, because there is a geographical distribution to it. Some states it's lower inflation, some states it's higher. The consumption basket again, of various sectors, segments of society is different. So there can be, differential realization. But on the whole, inflation has certainly, come down. You look at historically, it used to be about 7% and 5%, and now, it's even much lower. So inflation has come down. Growth, of course, if you look at the improvements in the living standards of people, that has certainly, over the years, it has improved. So undeniably, I think it's being felt on the ground. It's a very hard, your first question is very hard, to put a formula or as to how, it's more an art than a science over there, and so that's what we try to do in managing.
Has your tolerance increased of the volatility? That's the core question.
Definition of volatility.
For me, it has remained the same, and I think even for the RBI, I don't find, that there is much of a change. We'll have to see, as to, one can go back and look at the numbers and calculate for oneself as to whether volatility the number is there. One can calculate what the volatility has been there, and you can find out, if the volatility index, VIX or whatever, you calculate, you can calculate it and find out as to whether volatility has actually increased or decreased over the years. But we don't think that there has been any conscious attempt to change our tolerance to volatility.
Thank you, sir. I will now request Swati Bhatt Shetty of Thomson Reuters to ask a question.
Thank you, sir. Governor, today you've reiterated multiple times that inflation, the underlying pressures on inflation are really low. I just wanted to understand what are these factors. Yes, food prices down, precious metals like you mentioned, but is the consumer demand also not picking up, particularly in urban areas? Is that also leading to low inflation? And secondly, related to that, are we also feeling, the spillover effect of the Chinese overcapacity kind of leading in? It's happening in other Asian economies. Are you also feeling that in India? And also, is such low inflation really a good thing for an emerging economy? 0.25% is really low. We are way below 2% as well. So is this the right level of inflation for an economy like India? Thank you.
Certainly not. I mean, 0.2 is not the right level of inflation. We target 4%, and so, it's that kind of an inflation that we try to achieve. At the same time, I don't think we should be, looking at really, 0.2%, because there are going to be fluctuations. There is going to be volatility in markets, whether it is forex markets. Vishwanath asked that question, or whether, it is the Sensex stock markets, or whether it is prices in general, that volatility will be there. And, some of the impacts are also, because of the base effects. Earlier, you had very high food inflation, and so now, because of the base effects, it seems to be low. But underlying inflation, as we have said, is certainly, on the lower side, and that's why we gave this rate cut.
So consumer demand and the Chinese deflationary pressures, can you please?
Yeah, I mean, all these things, it's both the supply and the demand side factors, and both of them are at play. One can't, and it will be, sector to sector, it will depend. So if it is food, it's more, the supply side factors. It's not, so much the demand side factors. And so it will depend, on sector to sector. There cannot be, one answer as to whether it is only demand or only supply, or which one is more. I think it's a combination of both demand and supply factors. And because there are demand side factors as well, that's why we have reduced the repo rate. We have been, in an easing cycle to further support demand.
Thank you, sir. I will now invite Piyush Shukla of Hindu Business Line to ask his question.
Yeah, good afternoon, Governor, DGs. Sir, two questions. First is on your rate cut. You mentioned about transmission happening. Banks are caught in a fix because there's increasing competition on deposit growth that is there. CASA, there is a challenge to build. Do you feel today's rate cut will translate into lowering of deposit rate as well? That is one. Second is on the annual report that had come out. It had mentioned about gold, RBI bringing back more gold, 64 odd tons of gold in H1, bringing back to India. Is there a conscious effort to bring back, physical gold held in foreign countries, considering that some of the foreign nations have, plot back because of the war, they have held back on certain countries' gold. Is there a conscious effort by the RBI to bring back the physical gold held in other countries? Thanks.
We are diversifying, it's not good to have all your gold, at one place. So there is certainly a diversification effort that is behind, this move. What was your first question, sorry?
Will today's rate cut in
depositors?
Yes.
See, we have to actually be looking at the real interest rates. When inflation is so low, and going forward also, it's going to be low, then even though the nominal interest rates may seem to be low, the real interest rates today are quite high. So that's true not only for borrowers but also for savers. And so we do expect that going forward, especially after this repo rate cut, deposit rates will to some extent moderate.
Thank you, sir. We'll have some questions from the left side again. I'll now request Ekta Suri of Z Business to ask a question.
गुड आफ्टरनून सर. सर मेरा सवाल होने वाला है कि अगर बहुत सारे मंच पर हमने सुना कि सेबी चीफ ने ये कहा कि बैंक्स जो हैं उन्हें नॉन एग्री कमोडिटी डेरिवेटिव्स का हिस्सा बनना चाहिए, तो क्या इसके लिए बैंकिंग रेगुलेशन में आने वाले दिनों में क्या कोई बदलाव हो सकता है? ऐसा मुमकिन है? क्योंकि उन्होंने एक से ज्यादा प्लेटफॉर्म्स पर इस बात को कई बार कहा. और दूसरा ये सर कि विदेशी बैंक्स में फॉरेन निवेश आ रहा है, तो पीएसयू बैंक्स में आपको लगता है कि जो एफडीआई की लिमिट है वो 20% से ज्यादा होनी चाहिए ताकि वहां पर भी विदेशी निवेश आए और कहीं ना कहीं पीएसयू बैंक्स भी जो हैं और उनकी रोबस्टनेस में वृद्धि हो?
पहला प्रश्न आपका है ऑन
कि क्या बैंक्स जो है वो निवेश कर सकते हैं नॉन एग्री कमोडिटी?
सेबी ने जो प्रस्ताव भेजा है वो अभी प्रस्ताव हमारे पास में अभी हाल ही में आया है और उसका हम अध्ययन करेंगे, लेकिन आपको ये मैं बताना चाहूंगा कि बैंकिंग रेगुलेशन अधिनियम के तहत इस प्रकार की गतिविधियों में बैंक को सम्मिलित होना वो वर्जित है, वो अलाउड नहीं है आज के दिन में। तो इसमें कानून में संशोधन होना पड़ेगा। ये केवल एक रेगुलेटरी मुद्दा तक ही सीमित नहीं है। दूसरी बात, पूर्व में भी इस प्रकार का प्रस्ताव आया था, तब इसका परीक्षण किया गया था और तब इसे उचित नहीं समझा गया था। क्या अब इन 8-9 वर्षों में कोई स्थिति में बदलाव हुआ है, इसका हम अध्ययन करेंगे। उचित नहीं होगा कि मैं आपको कोई उत्तर बिना उसका प्रोज एंड कॉन्स का अध्ययन किए हुए मैं आपको दूं।
बट सर, अभी अध्ययन वाली स्टेट तक
नहीं, अभी हाल ही में यह प्रस्ताव आया है, तो इसलिए ये उचित नहीं होगा कि हम आपका इसके ऊपर में कोई आपको मैं रिस्पांस आपको दूं।
और सर, एफडीआई लिमिट जो पीएसयू बैंक्स में
20% के आसपास है, उसमें क्या, क्योंकि प्राइवेट बैंक्स में पैसा आ रहा है।
ये जो मुद्दा है ये भारत सरकार के क्षेत्राधिकार में है कि क्या उन्हें ये उचित लगता है कि 20% से इसे बढ़ाना चाहिए या नहीं बढ़ाना चाहिए। तो इसके ऊपर भी मैं कोई टिप्पणी करना अभी उचित नहीं समझता।
धन्यवाद सर। I'll now request Anurag Shah of ET Now Swadesh to ask his question.
थैंक यू सर। सर, सबसे पहले तो बधाई सर, आप 1 साल पूरा कर रहे हैं। 125 बेसिस पॉइंट की हमने कटौती देखी और आम लोगों को उम्मीद होगी कि आगे भी ये जारी रहेगी। सर, मेरा सवाल है सर, 81 बॉन्ड से जुड़ा हुआ सवाल।
डिपॉजिटर्स के लिए इंटरेस्ट रेट्स बढ़ते रहेंगे और लेंडर्स के लिए इंटरेस्ट रेट्स कम होते रहेंगे।
यस सर।
होना चाहिए, एफिशिएंसीज बढ़नी चाहिए बैंक्स की भी निश्चित रूप से।
यस सर। सर, मेरा सवाल सर 81 बॉन्ड से जुड़ा हुआ है। इन दिनों काफी चर्चा में 81 बॉन्ड, कई सारी सरकारी बैंक की 81 बॉन्ड से पैसा जुड़ा रही है और कई सारे निवेशक सामने आए हैं जिन्होंने शिकायत की है कि एक मामले में उनका पैसा शून्य हो गया। और सर, वहां पर हमने देखा है कि इंश्योरेंस रेगुलेटर आईआरडी के द्वारा भी आरबीआई को एक पत्र लिखा गया था। आईआरडी के चीफ ने कहा कि ये इस फैसले से जो इंश्योरेंस कंपनियां, लाइफ इंश्योरेंस कंपनियों का जो काफी नुकसान हुआ है और उसमें आम लोगों का पैसा था, तो उस पे सर आरबीआई का क्या कहना है। और जो आम निवेशक है उन्होंने कई बार कहा है कि मिस सेलिंग की वजह से हमारा जो पूरी जिंदगी भर की पूंजी थी वो शून्य हो गई और ऐसी कोई कठोर कार्रवाई नहीं की गई है। और आरबीआई ने भी कहा था कि हम कुछ गाइडलाइंस लेके आएंगे 81 बॉन्ड से जुड़ी हुई रिटेल निवेशकों के लिए। और सर, जब मिस सेलिंग होती है बैंकों के जरिए और 81 बॉन्ड के अलावा हम दूसरी चीजें भी देखें तो बैंकों के जरिए जो क्रेडिट लिंक प्रोडक्ट बेचे जाते हैं, बंडल्ड प्रोडक्ट जिसमें लाइफ इंश्योरेंस, हेल्थ इंश्योरेंस वगैरह, वो बाकी विश्व भर के करीब 38-40 देश है वहां पर रेगुलेटेड है या फिर बैन है। तो क्या आपको लगता है आरबीआई को कि इस बात को भी संज्ञान में लेना चाहिए, जिससे जो मिस सेलिंग एक बड़ी चिंता है जिसपे सर आप भी काफी आपने भी अपनी राय दी है, वित्त मंत्री ने भी उस पर चिंता जताई है, तो उसको आम लोगों को भरोसा दिया जा सकता है?
नहीं, बिल्कुल। देखिए, 81 बॉन्ड का जहां तक प्रश्न है वो मामला अभी उच्चतम न्यायालय में लंबित है, तो उसके ऊपर में अब जब मामला विचाराधीन है तो कोई टिप्पणी करना उचित नहीं होगा। तो उसके बारे में मैं कुछ नहीं बोलना चाहूंगा। लेकिन मिस सेलिंग निश्चित रूप से हमने पहले भी कहा है, पुनः मैं ये कह रहा हूं कि हमारा सभी रेगुलेटेड एंटिटीज को, बैंक्स को ये निर्देश हैं और सुपरविजन में भी जब वो जाते हैं तब भी इस बात का ध्यान रखा जाता है, देखा जाता है, ऑडिट किया जाता है कि क्या जो भी हमने नियम बनाए हैं, कानून बनाए हैं मिस सेलिंग के बारे में, जो वर्जित हमने किया है कि मिस सेलिंग में यदि बंडलिंग जैसे आपने कहा तो उस प्रकार की कोई कार्यवाही, उस प्रकार की कोई गतिविधि नहीं होनी चाहिए। ये हमारा सतत प्रयास रहा है और उसी प्रकार से जैसे इंश्योरेंस है तो इंश्योरेंस के लिए आईआरडीआई ने भी नियम उन्होंने भी लाए हैं कि कम से कम 3 प्रोडक्ट्स जो है 3 इंश्योरेंस कंपनीज इत्यादि का साथ में टाई अप होना चाहिए। तो सभी रेगुलेटेड एंटिटीज के साथ में मिलकर के हमारा ये प्रयास रहेगा कि आगे आने वाले समय में और अधिक हम अपने नियमों को और अपने सुपरविजन को हम और सुदृढ़ करें, ताकि मिस सेलिंग की जो शिकायतें हैं, मिस सेलिंग जो फिर भी कुछ जगह पे होती है, वो और कम हो, और इस प्रकार के जो भी कोई मिस सेलिंग के हमारे पास में वाकये सामने आते हैं, उनके विरुद्ध में हम लोग कठोर से कठोर कार्रवाई भी करते हैं।
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है, उनको सेलिब्रेट करने का है।
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर।
$2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When we
Good afternoon and thanks so much for joining in. You're watching
Profit Buzzers.
Profit Buzzers. That is Puneet Javeri.
Javeri.
Come on, I thought we were playing this off as a jugalbandi. Anyway,
Sorry, man.
okay, that's Puneet Javeri. My name is Alex Matthew. Of course, I was expecting Puneet to introduce me, but then obviously this is an error in communication. Anyway, we're talking about equity markets in the context of the RBI monetary policy, and let's take a look at where things stand right now. You have the Nifty 50 that's more or less at the high point of the day, up about actually even higher than what it was about 5 to 7 minutes or 10 minutes back. Now 0.6% higher, edging towards that 26,200 mark, and it is the financials that are in focus. Let's pull up the Nifty Bank and see where it's at right now, up about 0.7%, also at the high point of the day. So let's take a look at this, right? You have IT and you have banks that are supportive. Pull up the contributors for the Nifty 50 and see what really are the movers here, and I would hazard a guess to say, there you go. HDFC Bank is the top contributor. You have Bajaj Finance that's also up and about there. SBI is contributing. Reliance Industries supportive. Remember that in the end of trade yesterday, Reliance Industries slipped and pulled the benchmark lower as well. I wonder if the strength for the benchmark continues to the end of the session as well. Very quickly for you, the key takeaways from the RBI monetary policy, if you're tuning in for the first time today. First, there's been a rate cut of 25 basis points. This was expected, but it was unanimous decision by the Monetary Policy Committee. Second, there's been a significant infusion of liquidity. 1 lakh crore rupees has been announced as open market operations, and there is also a dollar-rupee swap that will be taken up over the course of the next 3 years to pump in liquidity. A clarification coming from the Reserve Bank of India governor that the dollar-rupee swap is not meant to influence the rupee in any way. It is actually only a liquidity measure. Further, GDP projections for the current financial year have been increased quite significantly, and the inflation projection for the year has been brought down as well. But the RBI governor saying that there is softness on the cards on the growth front, which is why the RBI MPC has voted in favor of having a rate cut. And finally, there are a few statements that have been made on the rupee, but the RBI is comfortable with the way that it's panning out right now. So that's one big story. The other big story, of course, has to do with the India-Russia conversation. And you have Vladimir Putin that has already met with the Prime Minister as well as the President of the country. But let's go across to Sharad now to get you a detailed picture of what is anticipated and what sectors might be impacted. Sharad, quite a lot of action today. What is the latest on Namaste Putin? Well, that's a very interesting take from our producers itself. But Alex, this is not just the story of defense. This is a story of fintech also. There's a story of shrimp also. A lot of other sectors will be in focus as well, apart from defense as well. Let's look at how the relationship of Russia has actually panned out over the years. I've taken the data since 1985. That time I was not even born. Look at that, Russia's share of defense in the imports, that was very high. That's almost 78% coming in. But then there was a slight downtick coming in, but still it is at a healthy 34% when it comes to the contribution of defense imports. And you can expect some announcements also as we go through the day. But let's look at the imports, how it actually pans out, and I have divided that in the oil segment as well as non-oil segment. The real action starts in the last 3 years, 2023, 2024 and 2025. You can just show those numbers on the screen. That is where we see almost $54 billion and $57 billion of imports are coming in this segment. Now, but how important is this trade with Russia and India? That's very much important. These are some qualitative numbers, but very much important if you're tracking it. Russia is India's 4th largest trading partner, and the trade volume is on the higher side, $69 billion, largely aided by oil numbers. Also, let's compare that with India's export to Russia. That's roughly around $4.88 billion. And if we compare that with the US, that's of course on a very lower side, $86.5 billion. Also looking at how the trade surplus comes out, there's a $41 billion. It's the largest amongst all the trade partners. That's with US. But on the other hand, there's a trade deficit with Russia. That's roughly $59 billion. This is the second largest coming in after China. Also, the trade deficit, apart from this surplus is only of 2 of the 15 partners, and US and Netherlands. These are the only players where we are having a surplus. But let's look at the products which are much important. The imports, it's of course petroleum taking the lion's share, but coal, edible, agri oil, and even fertilizers do make in. Looking at the exports is very much interesting. Electronics is there, chemicals is there, small numbers. Pharma also makes it to the list, and also constructive materials as well. But you must be wondering which stocks are in focus, especially with the announcements going to come in. This includes, of course, BL and HAL if India-Russia defense deal is announced, and this is likely for an aircraft or S-400, which is the anti-dome solutions to perspective, and the nuclear announcement. If that happens, then BHL will also be in focus. So a lot of stocks, a lot of sectors might be coming in, and this is the first visit actually coming in after the Ukraine and the Russia war started on a full-scale basis.
Thanks so much for that, Sharad. But Russia is also eyeing more Indian spare parts, FMCG goods, as well as machinery. That's the word that's coming in from Olga Kolikova. He is the business Russia's ambassador to India. He was speaking to my colleague Rishabh. Listen to what he had to say.
This has been a monumental sort of forum, a lot of bullishness that has come in from Russian companies investing into India. Talk to us about the broad areas of cooperation that you've witnessed over the last couple of days.
Well, actually, the potential that between India and Russia, it really impresses everyone, and we are all looking forward for our cooperation. So, in respect of different importing things that can be there are actually few options. So, first of all, of course, we are all looking forward to different spare parts, FMCG products, different machinery. So, there are actually many things we can think about, and I do believe that Indian products, they have a vast potential in the Russian market. And
all right, so that's the word from the ground there, and we'll bring you more updates over the course of the day. Lots that's going to emerge. Keep watching this space. But in the meanwhile, let's bring in our expert on the show. We've got Mr. G. Chokalingam, who's the founder and managing director, Economics Research, joining us now. Mr. Chokalingam, as always, a pleasure speaking with you. Let me ask you about interest rate sensitives, and they seem to have finally got a little bit of tailwind, and they're up and about in trade. What would be your preferred picks, given that we have the RBI rate cut that comes through and the anticipation that we may well be at the end of the rate cutting cycle? So in that context, what would you pick?
Definitely, it's a big tailwind. But in the short term, there will be little pain because it has to be transmitted to borrower. And on the other hand, the deposit growth rate has slowed down. So it's going to be a little tough time in the short term. The little pain may continue on margin pressure in Q3, Q4, but this is a big positive because the credit growth still around 11% in double digit for the banking industry. So this reversal of interest rate cycle would boost up further the credit growth. So medium to long term, that is beyond March 2026, the prospects will be far superior. I do believe that, I may be wrong. This is not end of the cycle. I think still, at least another 25 to 75 basis cut would happen to help the manufacturing sector. So therefore, a lot more positive news would come apart from this double-digit credit growth. So the preferred pick would be, PSU banks because they have a very high exposure to CASA deposits, which is helping them in a difficult time. And therefore, one can hold SBI with a target of till 1,000 rupees. And then I like most Bank of India and Bank of Maharashtra in the banking space. Both are trading at attractive valuations.
Got the view, and that's Mr. Chokalingam's view on the interest rate sensitives as well. But the latest word coming in on the India-Russia meet as well. Prime Minister Narendra Modi actually tells the President Putin that trust and dialogue must guide the road to peace, reaffirming India's consistent push for a peaceful resolution since the Ukraine conflict began. Listen to what he had to say.
एक्सेलेंसी, यूक्रेन के संकट के बाद हमारी लगातार चर्चा होती रही है। आपने भी समय समय पर एक सच्चे मित्र के रूप में हमें सभी चीजों से अवगत कराया है। मैं समझता हूं कि विश्वास बहुत बड़ी ताकत है और आपको मैंने अनेक बार इस विषय की चर्चा भी की है और विश्व समक्ष भी मैंने रखा है। विश्व का कल्याण शांति के मार्ग पर ही है। हम सबको मिलकर के शांति के रास्ते तलाशते जाइए। और पिछले दिनों जो प्रयास चल रहे हैं, मुझे पूरा विश्वास है कि विश्व फिर से एक बार शांति की दिशा में लौटेगा।
All right. Now, let's turn to another big story, and this is something that a lot of you might have experienced already. It is chaos in the skies, it is panic on the ground. It is Indigo, India's largest domestic carrier, which has cancelled all flights till midnight at the Delhi airport, and various other airports also seeing significant cancellations. Over 1,000 flights across Mumbai, Delhi, Bengaluru and Hyderabad have been cancelled over 4 days, and that number is rising quite significantly. It's left thousands stranded and desperate. We've got Danish joining in from New Delhi, and he's been tracking what's been happening because there's a lot of moving parts here. One, the DGCA response to what the Pilots Association is claiming. Danish, put all of this into context for us. What's happening on the ground?
The number of flight cancellations that Indigo recorded in the month of November was just 1,200, but over the past 3-4 days, this has almost crossed the November cancellations, which is a very difficult situation, not only for Indigo, but also for the stranded passengers, like you said. And as far as the DGCA exemptions are concerned, yesterday when the meeting was held between Indigo and DGCA, Indigo clearly informed the regulator that they need certain kind of exemptions from the flight duty time limitation norms because they don't have adequate number of pilots that can fly these aircraft because as per the new norms, the rest period has been revised from 36 hours to 48 hours, which clearly means that the pilots are now mandated to get 8 hours extra rest. And usually the normal pilot shift is somewhere around 8 hours, which includes the duty time as well as the flying time. So this has been strongly opposed by ALPA, which is the Pilots Association, and they have written to the DGCA, and we have accessed that letter, and they have clearly objected that the recent steps that have been taken by the DGCA to give relief to Indigo. ALPA believes that if this kind of relief is given to Indigo, then other airlines might also start asking for this relief because ultimately these new regulations were meant to ensure that the flying is more safe and the pilots, they are well rested and the fatigue is not there in the pilots because it is a very risky and a safety matter, and we all know how aviation works. But coming to the cancellation, and this is a very big update from this morning till midnight, none of the Indigo flights, whether domestic or international, they will not be taking off until midnight. And as per the data that I have with me, Indigo flies somewhere over 250 flights from Delhi. In fact, a top government official also told NDTV Profit that initially Indigo requested DGCA that if they can if they can't have any flights today till 4 p.m. They had pitched a pan-India no flying thing till 4 p.m. But that was clearly rejected by the regulator because this can have a huge cascading effect on the entire aviation ecosystem across the country. So right now, we know that the flights from Delhi, almost 250 flights of Indigo from Delhi, they will not be flying until midnight. And we're also hearing that the same thing the same information might also start coming out from the other airports. So we'll have to stick around and we'll have to see that whether this move that we're seeing in Delhi, whether the same thing will be followed at other larger airports or not. Because until now, over 600 flights from the metro airports, and by that I mean Delhi, Mumbai, Hyderabad, Bengaluru,
right,
they have been cancelled. So the same could also happen at the other airports managed by the AI.
Okay, so therefore, a couple of questions just to follow through on that is, one, what is the official word from Interglobe Aviation? In fact, what you've told us about the New Delhi airport has been a communication from the airport, if I'm not mistaken. So what is the airline saying about this? And two, what is the process and what is the airline saying about refunds at this point?
Till now, there has been no official communication from Indigo to NDTV Profit, but they have told us that they had indicated to the Delhi airport, and like I told you, that it was clearly indicated to the government that they had initially pitched a no flying for all across India until 4 p.m., but that wasn't taken well by the aviation regulator. But as far as the refunds are concerned, we have policies in place which talks about betterment of the passengers. So the refunds are being given to the passengers. At least the process has been started, and where they're unable to give refunds, they will be Indigo will be able to somehow match up to the expectations of passengers. But from Indigo's point of view, from an official words point of view, we'll have to wait till now. In fact, yesterday we accessed an internal email by Peter Elbers, who's the CEO of Indigo, who clearly stated that they want to restart the flights. They want to, recapture the trust of the passengers. But all of this will take a lot of time because in its communication to the DGCA yesterday, Indigo has said that the next 3 days, and by that I mean Friday, Saturday, and Sunday, we will see a lot of flight cancellations, and it is all pre-factored in not only by Indigo but also by the government. In fact, the airline has also told DGCA that they are expecting a proper normalcy to return back to their ops by 10th of February. So there's a lot of time left, and we'll have to really see that what really turns around in the next few hours.
Yeah, absolutely. Thanks so much for that. In the meanwhile, and I'm asking Puneet to do this as I speak to you right now, and we'll get you an update on SpiceJet. So pull up the share price of SpiceJet, by the way, because there was an update that SpiceJet shared about the ramp up in operations, and as a result of which, since this morning, the stock price is up as much as 6%. But because of the cancellations that Interglobe Aviation has announced with Indigo, the fares have been shooting through the roof. And were you able to check that?
The interesting part is for Air India, for Akasa and for SpiceJet, the flights start from 25,000. So it's going all the way
Delhi-Mumbai flight?
From Delhi-Mumbai, one-way flight is 25,000.
And that is taking off today?
That is taking off today. So all of those flights, there are multiple, of course, but because of the demand that it is, since it's an originator...
And you're checking this on a platform?
I'm checking this on Make My Trip, and all those flights are costing upwards of 25,000. Quite a bit have already gone, so these might be the last few, but they all the way up to 36,000, 37,000 as well as some of them. So it is one of the major disruptions that we've seen in the country in quite a long time.
Yeah, absolutely. So there you go, 25 to 35,000 rupees for flights taking off today from Delhi to Mumbai in that sector. And this is unprecedented, right? You have, obviously, a company that controls 55% of the air traffic of the country and over 60% of market share is clearly facing a significant disruption. And we will bring you more details on that story. At this point, Interglobe Aviation down about 3%. As Danish told you, the implications of this are that it will last for some time if there is no rollback or easing of the norms by the DGCA. Let's get Somit in to tell you about the financial implications for the company, though. Somit?
In fact, it's a strong quarter for this sector, and in that quarter, we are seeing this kind of an impact coming in. So over 1,000 flights have been cancelled over the last 4 days. Just to give some perspective, Indigo operates nearly 2,250 to 2,300 flights on a daily basis. So this cancellations is just 11% of the average daily flights that Indigo has. So what could be the financial impact of these cancellations? Now we are doing this calculation based on Q3 FY25 financial, which is the last year financials. And what you are picking up from that is that on an average, Indigo has around 190 seats on each flight, and average kilometers that happens on a fly is around 1,000 kilometers. So the capacity that it flies per flight is around 1.9 lakh, which is just 190 into 1,000 rupees. So that gives you the capacity. Now, what could be the notional revenue loss for every flight for Indigo which gets cancelled? That is 5.44 rupees is what they earned, and if you multiply that by 1.9 lakh, you get the amount at 10.3 lakh. So this is the notional revenue loss. But the impact on the profitability will be much lower, given the fact that if a flight gets cancelled, the variable cost is kind of a saving for an airline company. So it's a fixed cost that is that gets impacted on the bottom line. So the fixed cost amount is 2.5 rupees. So if you multiply 2.5 by 1.9 lakh, you get the amount 4.8 lakh. So that's the impact on the profit for every flight cancellation. Now total loss of 1,000 cancellation would be around 48 crore. And again, to just give some perspective, in the Q3 of FY25, the company earned a profit of 2,449 crore. So this 48 crore is just 2% of the top line of the bottom line impact. And when it comes to the top line, 103 crore could be the potential revenue loss, and that is just 0.5% for Indigo. But the bigger problem for Indigo is the rupee depreciation that we have been seeing. In this quarter so far, rupee has depreciated by nearly 1.3%, and INR depreciation could affect its fuel cost and maintenance cost. Nearly 60% of the cost for an airline is dollar denominated, and with every rupee depreciation, this gets impacted. But this of the 60%, some of this gets offset given the fact that 15% of the top line comes in from dollar or other currencies. So that gets offset, but the remaining 45% definitely gets impacted. Indigo does some hedging for the part of its exposure, but analysts believe that with every 1% rupee depreciation, the net profit gets impacted by nearly 7 to 8%. And moreover, there's a notional loss of around 900 crore, which also comes to their P&L. Obviously, this is a notional loss and not a cash loss, but this comes to their profit and loss account because of the lease liabilities that they have. But this will be realized at a later stage when they have to make a payment. At this moment, it's just a notional loss and not a cash loss. But the 7 to 8% is definitely a cash loss for Indigo.
Right. Thanks so much, Somit, for laying that out for us. Now, bear in mind that 1,200 odd, more than 1,200 flights cancelled in the month of November. And so if you contemplate that the third quarter is going to be the strongest quarter for Interglobe Aviation, the implications of continued cancellations are something that you will have to extrapolate on an ongoing basis. So at this point, in the month of December, you're talking about over 1,000 flights already having been cancelled, and you're talking about further flights that are being cancelled in New Delhi, of course, till midnight today, and in various other states or cities in the country. So you'll have to extrapolate that 10 lakh odd impact per flight cancelled on the revenue and the 2.5 lakh per flight on the profit, and there could be a dent if this continues, and there's no reason to expect that that's going to go away anytime soon. Very quickly, I want to ask Mr. Chokalingam what his view on this entire thing is, and would you at any point right now consider looking at opportunities to get into this because it will be settled eventually?
Yes, if it falls more, it will be very attractive. There are three things. One, bit surprise, a company sitting on more than 21,000 crore of gross cash, but unable to solve this problem as being a leader. And second, yes, rupee depreciation is a problem, but then let us not forget the fact that oil price is down almost 24% from the 52-week high, which is a big positive for aviation leader. And all these problems are only temporary. Ultimately, the leader would survive. If leader cannot survive, the whole industry cannot survive. Simple economics. So it will come out of this problem. Yes, for smart people, it could be an opportunity. I don't know whether today is the right day or right day will come after a week or month, but definitely it will come because India is a perennial growth story for aviation industry with more than 140 crore people and with huge geography. So it's a structural tailwinds are very much in favor of the industry. And it will be a great opportunity. One has to monitor the developments and stock price. Definitely it will be, because I believe oil price will remain weak and it is likely to remain more weak in the next few quarters or even few years.
All right. There's a reason why a lot of people don't like the aviation sector. Turbulence is something that you have to contend with. Having said that, Puneet,
as a customer, as a shareholder,
in multiple
aspects, yes.
I'm very disappointed myself. I was supposed to fly out this evening, and I've just heard that the flight has gotten cancelled. So it's unfortunate. It is, of course, a wedding season. It is a holiday season. A lot of plans getting disrupted. But we'll slip into a very quick break. There's more lined up on the other side, so do stay tuned.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Welcome back to Profit Bazaars right here on NDTV Profit. Now, we have been speaking about the chaos caused by market leader Indigo in the aviation space, but let's pull up a stock, SpiceJet, and that'll show you that the disparity in the space, because at its analyst meet, which now looks very timely, SpiceJet is actually signaling a major ramp up ahead, outlining an aggressive scale up in operations through H2 of FY26 and into FY27 as well. Somit is now back with us to tell us about why this matters for the stock. Somit.
SpiceJet stock remains in focus given the fact that the company conducted their physical analyst meet yesterday, largely post-market. Now, what are the key takeaways that are coming in from this analyst meet? Firstly, the management has guided for a sharp scale-up in their operations in the second half of this financial year and in FY27 as well. They have clearly mentioned that their fleet size has increased by nearly 18% from 54, which was the number that we had seen in the second quarter. This has increased to 68, while the operational fleet size has increased from 19 to 32, a growth of nearly 65%. 19 was the fleet number that we had seen in the second quarter, while the operational fleet size at this moment for SpiceJet stands at 32. Their ASK, that is the capacity or the available seat kilometer, that has doubled over the same time frame from 55 crore to 110 crore, and they're expecting this capacity to double by the end of 2026. From 110 crore right now, this number will grow to around 220 crore by December 2026. Also, the management clearly said that their focus remains on some or the few main airports and not on pan-India basis. They'll look to increase their operations in certain airports that the management has mentioned. And when it comes to the debt side or the liability side, they're saying that the lesser liabilities now stands at close to 2,381 crore rupees, and the management is confident that nearly 35% there could be a reduction in this liabilities, and they're expecting that for the next few quarters the company could remain profitable.
Well, thanks so much for that, Somit. But Mr. Chokalingam, how would you view SpiceJet as a stock right now, given what we are seeing in the current tailwinds? Any view that you have given the company's commentary, as well as where it, at what time it's coming to, also it's very interesting.
I would still prefer Indigo leader for various reasons. First of all, it's a short-term problem for the leader. I don't think this is a perennial problem. And second, whether any airline can, cater to the shortage overnight, I doubt. You can't increase the number of aircraft substantially within few days or within few weeks. And third, if you look at the balance sheet, there's a lot of comfort in Indigo in terms of gross cash. And therefore, I wouldn't suggest buying Indigo today, definitely. But what is going on can be an opportunity for Indigo in the next 1 week or 1 month.
We also have Akshay P. Bhagwat, the Senior VP at JM Financial on the technical side. Akshay, always a pleasure. Very good afternoon to you. Given the current context and given the comments that's coming in on SpiceJet, could it be a near-term buy? What would be the targets, and if any, that you would be looking at?
Good afternoon to all. Yes, there's a lot of mayhem around. It's more of a short-term phenomena as I see. And first of all, if you look at the charts of Indigo, it's given a technical short-term breakdown at the levels of 5,600. So that would slightly put the stock on a negative footing. Maybe it might need some time to stabilize. But if you were to choose for an airline stock and probably go for a SpiceJet, I think it's still better to wait it out and not jump the gun. Let it get stabilized. So at this current point of time, I would not recommend a buy on SpiceJet as well. Just waiting for some confirmations. If you're owning the stock, continue to hold, but no fresh buy recommendations as of now.
Well, the 6% move on SpiceJet is not enough for Akshay to give a buy call as of now, but we'll continue to monitor that space. But it's time now for a new segment that we've started in the show, Trending in Trade. Your snapshot of the stocks making the most noise in trade today. And my colleague Jasmeet is now joining us. First up on Delta Corp, and why that counter is in focus today. Jasmeet, over to you.
Well, thank you for that. If you look at Delta Corp journey, it has been a roller coaster for the company. The stock is down almost 60% on a year-to-year basis, and it's down almost 20% last month. But the stock is buzzing in trade today. And while this buzz comes after the promoter buys 14 lakh shares in the company for rupees 68.46 per share, if you look at the current value, it's a discount of almost 5%. Well, this promoter buying creates an overall sentimental push in the stock, showcasing that the company has a long-term value. That's why the stock is buzzing in trade today. While the promoter is Jaidev Mukund, who roughly owns 0.52% stake now after the acquisition. If you look at the earlier chart for this particular company, he owned almost 3 lakh shares. That's roughly 0.1% stake as September. But with this, has increased the stake in the company, showing a long-term momentum in the stock going forward. So all in all, we see a positiveness coming for the company, but still wait and watch how does the Q3 and the H2 pans out for the company going forward, given the recent GST cut has had a major impact on the particular company stock.
Thanks so much for that, Jasmeet. But Akshay, let me come back to you on Delta Corp. It's a stock that's corrected quite a bit in trade over the last few months. Any sign of revival for someone who's already holding the counter?
See, technically, still things don't change. It's in a negative downtrend. It's just that it's highly oversold, and last couple of days there has been some spikes in volumes, which is just showing some kind of trading interest, which is picking up for a temporary bounce back. Technical support for positional traders would be lying somewhere around 60. So maybe 60 is the worst case downside you can look forward to. Would not recommend to buy as of now, but if you're owning the stock, then continue to hold with a stop loss below 60. It may take some time, but a slight recovery around levels of 85 to 90 is the point where you should be looking to exit the stock.
That's Akshay's view on Delta Corp, but Zen Technologies is the other one. It's a counter that when you look at the year-to-date chart, it'll give you a perspective because it's been volatile to say the least. There were concerns on order book, and you see almost a 43% downtick in the last 1 year, but it has seen a revival from the lows of about 900, and Zentech today has gotten an order of 120 odd crores from the Defense Ministry. Jasmeet, why does this matter for the counter?
Well, thank you for that. Well, this particular order showcases the strong order book of the management. While this 120 odd crore rupees order for Ministry of Defence is showing an overall momentum when it comes to the orders getting in from the higher authorities. While if you look at the overall orders to supply of comprehensive training knots, and if you look at the Q2 order book of the company, which particularly stands at 675 odd crores as of October, we look at the Q2 intake order book stands at 94 odd crores. So basically Q2 had an intake of 94 odd crores, but the Q3 just start off it has already received an order of 120 crore, showing an overall positive momentum in the stock, as we see stock is up almost 2% in trade today.
Well, Mr. Chokalingam, on Zentek, it's still away from the highs that it saw, roughly about 2600 almost. Any concerns, or what should investors look at in context of the order book that's starting to build up again?
Maybe, because it's corrected a lot, one can continue to hold the existing shareholder, but I would not suggest, rushing and buying at this level, because even after the correction, still trading at over 51 PE. And, something related to drone, we have seen a lot of new players are continuously coming in, and that can be a area of concern. And also September quarter, year-on-year basis, not done anything great. So considering all that, at best, I would give just a hold call for existing investors.
And we are sticking with the theme of the rate cuts as well, and that's the other key, the fourth theme that we are putting in focus. Now, it's, rate cut has had an impact on the related sectors as well. Jasmeet, what are you picking up on this?
Well, if you look at the overall rate cut journey, it has been a bit a volatile market in the beginning, to say. If you look at the stocks that can be impacted by this particular journey, would be something as the banking stocks. Given the rate cut would help the banks to lower their costs and also increase the overall loan size for them going forward in terms of commercial and retail sectors. If you look at the other aspects, this NBFC that will get benefited by the cheaper funds available, which will improve their credit rating as well as reduce the bad debts for the company. While if you look at the third aspect, this housing sector is basically the retail realty segment which has seen an uptick. Even in the stock today, it's up almost 400 odd points. We see that the home loans will become cheaper, which will motivate people to buy their own house and being in the rented one. That's why that particular sector will be in focus. While lastly, we also have sectors like automobile and others to say. If we look at the overall performance of the company, we said banks have rebounded roughly 500 points since the day lows post the announcement of the rate cuts. When you look at something like a Nifty Realty and PSU Realty, even those have been firm in the trade today, raising by almost 200 to 300 points in trade. So all in all, we see a positive push coming in by the rate cuts, but it's something to watch out how this actually pans out for the companies going forward in the H2 and for FY27.
Akshay, on the charts, within the Nifty Bank constituents, Nifty Financials, as well as among the other NBFCs name, you are seeing a lot of them in action today. Anything on your radar that investors can buy into it right now as well?
See, obviously, the momentum has caught up post the RBI event in the banking space, and I think PSU banks already had their fair share of move till now. So I think I'll be more keen on the private banking space here. And if I were to choose stocks in this, I think Kotak Mahindra Bank is one which you can look forward to, because this stock has been in a range for long. It is trying to get out of the momentum, and the way the technical charts are signaling, probably the stock is heading for upside of 2350 to 2400. So Kotak Mahindra Bank, which is one stock I would be looking to on the buy side. And the second is from Bajaj Finance, where again, technically a very strong setup. It's been pivoting around 1050 odd levels, but considering the broader term outlook, 1150 to 1200 is where the stock should be sailing up for. So positive on these two names, and look best in the banking and the financial services space.
Well, thanks for that, Akshay. But also, Bajaj Twins are also in focus on the back of the investor presentation that has come out. Some key targets that they've put in as well in terms of AUM growth amongst others. And it will put in the company back in focus. And we'll continue to get a lot more updates on that, because in terms of valuation, Bajaj Finance is not cheap by any means. But the targets that they've given, quite something that we'll talk about as well. But Kesoram Industries is the other one, and the final one on Jasmeet's list today. It's up almost, it's an upper circuit right of almost 20%. What could lead to that momentum, Jasmeet?
Well, thank you for that. If you look at this particular counter, though it's a small industry, it has been in focus with a lot of institutional buying. Now, for this particular counter, we see that Frontier Warehousing launches an open offer to acquire roughly 8 crore shares in this particular company, which represents 26% of their equity stakes. Well, this particular counter comes in where they're offering roughly 5.48 rupees per share to buy the stakeholders from the company. While this particular open offer was triggered after the company launches their SPA, that's share purchase agreement, with the promoter buying almost 44% stakes in the company for roughly 44 odd crores. While this SPA is by acquiring roughly 13.8 crore shares from the current promoters. If you look at the recent event for the company, even the Ultra Cement has purchased the cement segment from this particular company. By all means, the current Kesoram stands with the standalone business aspect after removing the cement industry altogether. So it's a wait and watch of how this particular offer pans out for the company going forward, and how this will lead to the growth, given we already see a strong interest from the buying coming in as the stock has hit the upper circuit in trade today.
Well, Mr. Chokalingam, on Kesoram Industries, and Jasmeet, thank you for that. Do you track this counter by any chance?
No, because the corporate events I have not gone through in detail, so I won't be able to give you.
Fair point, fair point. And let's put in perspective about what we've seen in the monetary policy, and RBI's committee has of course cut rates by almost 25 basis points to 5.25%. We have been speaking about it quite a bit, but marking its third reduction in FY26. Now the committee has kept its stance neutral. My colleague Vishwanath Nair is now joining in with his key takeaways from the RBI MPC. Vishi, very good afternoon to you. What is something that you're tracking right now?
Right, so I mean the key takeaways are simple. There's been now a 125 basis point rate cut since the beginning of 2025. So since the rate cut cycle began in February 25 till now, 125 basis point cut in the interest rates. 5.25%. This is the fastest the most amount of rate cuts that have happened since 2019. At that point in time, the RBI had to take rapid action because of flagging growth. Now you're seeing because of flagging inflation, and that is the key discussion point. This is the second key takeaway, that the RBI is actually expecting inflation to undershoot its target further. That is why its forecast has been amended appropriately. For FY26, RBI is expecting inflation to be at 2%. The previous expectation was 2.6%. Next year, that is FY27, the first 2 quarters, is where it comes closer to the 4% target. That is the RBI's estimate. The third one is on growth, of course. That's where the RBI has also amended its estimates from 6.8% for FY26 GDP growth. The RBI is now forecasting 7.3%. This accounts for the blockbuster sort of numbers that we've seen in Q1 and Q2. You will likely see some amount of softening, primarily because of the base effect, but the RBI has a lot of confidence in the way that growth is shaping up. The fourth important thing is liquidity management. For that, the RBI has announced a 1 lakh crore OMO, which is going to support any kind of liquidity needs that the system might have. Alongside that, the RBI has also announced $5 billion worth of buy-sell swaps. It's a 3-year swap, so essentially now in December the RBI will buy dollars at a fixed rate to be converted 3 years later back to rupees. So then this will provide necessary rupee liquidity to the ecosystem, which will ensure that the transmission of interest rates is going on properly. The fifth key takeaway, and this is a question that I asked the RBI governor, was with respect to the exchange rate, whether the tolerance at the RBI has improved on the exchange rate volatility. The RBI seems to be holding strong to the vision that there's really no difference in the way that they looked at rupee previously and look at rupee now. Having said that, we are seeing this more and more in the market, that the RBI is intervening very, very selectively. With the announcement of these liquidity measures, one can expect that more such moves might take place, where the RBI will come in and remove that rupee liquidity, ensuring that the dollar inflow is strong enough for the system.
Well, thanks so much for that, Vishi, and those key takeaways coming in from Vishwanath Nair. He has been tracking the space very closely, so thanks so much for that, Vishi. But viewers, time for a very quick break here on Profit Buzzers. A lot more action on the other side. Stay tuned.
The rupee has weakened past 90 rupees per dollar.
what is the RBI has to say about the rupee under the current context.
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Well, welcome back to Profit Buzzers. And we spoke about in the first half of the show how Indigo and the whole issue is panning out. There is a recent new update coming in that the DGCA has pulled back its weekly the weekly rest directive, which has been the key ones for airlines. And to talk more about what this means, Danish is now back with us with more details on this. Danish, over to you.
Well, in a major relief for all airlines, not just Indigo, the DGCA has withdrawn the weekly rest period mandate. So now what does this really mean for the airlines? As per the old norms, the pilots were supposed to get 2 weekly offs and at least 48 hours rest period. But now what is happening that considering the whole cascading effect of the entire Indigo fiasco around the country affecting the aviation system, now in providing a relief to the passengers as well as to the airlines, DGCA has changed this key norm, to which means that even if a pilot is on a weekly off, then even that will be considered as a weekly rest. Because earlier, while airlines are mandated to give a 36 hours rest period, which was increased to 48 hours rest period under the new norm, But now this provision of weekly off has been removed, so which clearly means that even if a pilot is on a weekly off, then even that will be considered as a proper rest period and a proper relief period for the pilots. So this could be a big win for the airlines and especially for Indigo, because we are seeing the kind of ticket prices that are there and the kind of problems that normal passengers are going through across several airports. But if you look at the overall FDTL norms that the DGCA has brought out, there hasn't been a major change in that, but this is like a temporary relief that has been given by the DGCA to the entire airlines industry.
Well, thanks so much for that, Danish. So that's a key update as we wrap up this edition of Profit Buzzers. Mr. Chokalingam and Akshay Bhagwat, thanks so much for joining in today. Appreciate your time. Apologies for the multiple news updates that came in during the hour, but appreciate your patience for NDTV Profit. But that's all the time that we have on this edition of Profit Buzzers. Stay tuned. Small Cap Buzzers comes up next.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, this means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language.
Welcome back to NDTV Profit. You're watching Small Cap Buzzers, and it's Puneet Zaveri, and there is confusion now at Chennai Airport, and we have been speaking about this for quite a bit, getting you some key updates from what's happening there, because Indigo has cancelled all its domestic flight operations, and CISF isn't letting passengers with Indigo tickets into the airport right now. NDTV Sam Daniel has sent across this report.
There's chaos at the Chennai airport as hundreds of passengers with Indigo tickets have got stranded. For the first time, the CISF at the entrances are not allowing passengers with Indigo tickets as Indigo flights across the country have been cancelled except the international flights. This is the third day of this kind of a major disruption and hardship. Passengers are stranded and many have no option to continue their travel plans with other flights. As they say, tickets have become very, very expensive, something they cannot afford, and the refund, although Indigo offers, could take a long time to come. Here is a family scheduled to travel to Durgapur, but they don't have other options because only Indigo, they say, serves Durgapur. Thank you very much for your time. Tell us about your situation.
Yeah, so actually I'm an employee, government employee in IIT Dhanbad. So I have to go and join there yesterday itself, but then flight got cancelled and now it has got cancelled. They are not letting us inside. So we are just standing here in the airport. We have a child of 2 years old and it becomes difficult. At least they could have informed us some few hours before so that we do not have to.
What are your options now?
We have almost no options because almost to Dhanbad all the flights whichever is available is all now Indigo only, and to Kolkata and all those flights are like 20,000, 30,000 is the fare. So it is definitely not possible to go. Train tickets we all know it will not be available at all now. So it's all at stake.
How was Indigo informing you? Are they taking care of you?
Sir, last day before they informed, but this time there is no communication with them. That's why it is like without any communication we reach here and then there is chaos everywhere. If at all they would have informed us, why to come here and then know the situation about that?
And also last ticket also was not informed 24 hours later. Just the previous day night, 10 o'clock is our flight, they are informing us at night 8 o'clock that it is...
Hope you get flights for your destination.
We'll see. Thank you.
And can I speak to you? Your situation? Are you stranded?
अभी मेरे बच्चे का स्केटिंग का कंपटीशन है विशाखापट्टनम की हमारी फ्लाइट थी लेकिन वो अब कैंसिल हुई है 5 बजे तक हमें पहुंच.
You're traveling to Visakhapatnam, is it?
Yes.
And no flights now?
No. We are going to by bus now.
When is the event?
Tomorrow.
All right. All the best for your daughter.
Thank you.
And heart-rending stories, and there's also another passenger who had a long argument with the Indigo staff, saying that they did not address her concerns. Let's try and speak to her. We could see a series of heated exchanges between passengers and the Indigo management. The Pilots Association has alleged that Indigo has failed to act proactively in terms of overcoming the situation and also continuing its freeze on recruitment. Indigo, in a statement yesterday, has said that it's trying its best to resume their operations and to bring back their schedule on track, but certainly across the country it's a nightmare for passengers, and we'll have to wait and watch now that the entire operations have been cancelled, how soon they'll be able to restore operation. Let's speak to some of the passengers here. Sir, if I can speak to you, you're stranded? No. Many are not willing to speak, but can we speak to you? Are you stranded here? Are you stranded? Are you an Indigo passenger?
Yeah.
Where are you scheduled to fly?
No, sir. Today cancel all the flights. So reschedule करने के लिए बोल रहा है, लेकिन हम तो 2 दिन यहाँ रुक नहीं सकते हैं, इसलिए तो जाना पड़ेगा. कोई तो ऑप्शन.
Traveling to where?
Kolkata.
Calcutta. Thank you so much. So passengers hope this will come to an end soon. But today there's no fresh statement yet from the Indigo management, although yesterday they had assured that they're working to normalize operations soon. At the Chennai airport with Suresh, Sam Daniel, for NDTV.
Well, let's pull up the Interglobe Aviation stock now as well, and I'll give you a perspective of this impact. While minimal is having a huge impact on the stock today, it has recovered quite a bit in the last 15 minutes or so, and that's after we put out the update on the DGCA that they have relaxed some of those norms, which is the rest period which we have been speaking about. Danish, our reporter, gave us that highlight. So you're seeing a sharp pullback on the stock as we speak. We'll continue to monitor if it gets into the green territory. But one stock which isn't having any of those concerns is in the same sector, which is SpiceJet now. It is signaling a major ramp up ahead, outlining an aggressive scale up in operations through H2 of FY26 as well in FY27. What gives them the confidence? My colleague Somit is now joining in to give us this perspective and a lot more.
SpiceJet stock remains in focus given the fact that the company conducted their physical analyst meet yesterday, largely post-market. Now, what are the key takeaways that are coming in from this analyst meet? Firstly, the management has guided for a sharp scale-up in their operations in the second half of this financial year and in FY27 as well. They have clearly mentioned that their fleet size has increased by nearly 18% from 54, which was the number that we had seen in the second quarter. This has increased to 68, while the operational fleet size has increased from 19 to 32, a growth of nearly 65%. 19 was the fleet number that we had seen in the second quarter, while the operational fleet size at this moment for SpiceJet stands at 32. Their ASK, that is the capacity or the available seat kilometer, that has doubled over the same time frame from 55 crore to 110 crore, and they're expecting this capacity to double by the end of 2026. From 110 crore right now, this number will grow to around 220 crore by December 2026. Also, the management clearly said that their focus remains on some or the few main airports and not on pan-India basis. They'll look to increase their operations in certain airports that the management has mentioned. And when it comes to the debt side or the liability side, they're saying that the lesser liabilities now stands at close to 2,381 crore rupees, and the management is confident that nearly 35% there could be a reduction in this liabilities, and they're expecting that for the next few quarters the company could remain profitable.
Well, thanks so much for that, Somit. So it's a space that we continue to track. A lot more updates that will come in, because do remember, it is a weekend heavy with a lot of marriage dates as well. So there was expectation of a huge travel boom that was expected over the weekend. Continue to monitor that space as well. But Keynes Tech is another stock in focus on the back of improving its utilization as well as consistent demand across geographies as well. And now, to talk more about this, my colleague Jasmeet is now here to give us more details on this one. Jasmeet.
Well, thank you for that, Puneet. If you look at this particular counter, it's buzzing in trend up and about almost 12%. While if I understand what does the company does, well, company operates in the IT SaaS space where they have AI-related services as well. Company has two main products, starting with product engineering as well as digital transformation. If you look at the Q2 numbers for the company, we see that a positive up move coming in terms of revenue and margins, as margins have expanded by almost 600 basis points. Now, in terms of other aspect, we see that on the back of better cost efficiency and utilization, the margins have expanded. Company has further noted that see a demand across all the geographies. Now, in terms of key number, the revenues are almost 27%, while the EBITDA is up almost 57%. Given it a product-based company, we have taken into an EBITDA aspects, while the PAT is almost up about 77%, showing an up move momentum for this particular counter. Lastly, in terms of the revenue breakup, we see maximum revenue for this particular counter comes from the US geography. And given the current rupee and US dollar depreciation is something that's also causing a lot of tailwind for this particular counter alongside the overall IT pack. Now, in terms of other aspects, we see the Europe contributes 31% to the company, while the UAE is at 8%, India having a lowest percent of the overall contribution at 5%. So all in all, we see a positive up move coming in for the particular counter in terms of trade as well as in terms of the key numbers.
So much for that, Jasmeet. But let's pull up Keynes Tech as a counter as well, because it is in focus, down almost 7.5% now, and it's been consistently being under pressure. Let's pull up the 1 week chart and it'll give you a perspective of what's happened over the last couple of days as well. On Keynes Tech, it has been a counter down almost 17% for the week. Now, there was a report by Kotak, brokerage firm Kotak yesterday, highlighting concerns that they had on the FY25 annual report. Stock corrected on that at the last hour of the trading session yesterday, and today JP Morgan has also come up with a note. We also spoke to the management on some of these issues. They say that these are transitionary. They will look at the key aspects of what to do in terms of addressing those issues in net working capital amongst others. And it's a counter that we continue to track. A retail favorite nonetheless getting hammered in trade over this week. But time now to dive into the Feno market setup, the BSE Feno market setup, and the cues that are shaping the trade today. Let's bring in Sharad for a snapshot of this. Sharad, over to you.
Thanks, Puneet, for that. Looking at the markets, a significant up move coming in, especially after RBI MPC rate cut which was announced, and largely we see a sea of green coming in. Bajaj Twins in focus as well. As we see, Bajaj Finance has come out with its vision report also. They're giving targets for the next 2 to 3 odd years, which the street is liking. Support also coming in from the IT players on a weaker rupee. And we see the banking names are also doing well. I would like to mention all the interest rate sensitive stocks are buzzing in trade. Open interest also is seeing a good spike, and it's up almost 0.5%, and it's holding up as well. Also looking at the contracts, the option data suggests that the build-up is on the bullish side. Overall, the PCR numbers are still quite stable, and VIX also, if you look at it, there's nothing too much to be concerned of. Let's look at the BankX over here. There's very strong support coming in from larger constituents, which includes SBI, ICICI Bank, and even HDFC Bank. A sea of green coming in, and that's why the contracts are also pushing towards the call side. Also, let's look at the stocks which should be in focus. The first one, of course, is your long build-up coming in from Indus Towers and SBI Cards as well, where we're seeing a move happening. Apart from the long build-up, let's look at the short covering coming in for both the Bajaj Twins here, and there's a significant volumes also there, so we'll be checking the delivery data out as well. Long unwinding for HUL, and there's a demerger impact also, and IEX, that's down almost 1.5%. And lastly, short build-up, 2 candidates come in, that is CAMS, and today itself there was an important share split also. That's why the number which you are seeing, that's around 771, and Keynes, that's also down 8 odd %, and significant selling positions are still coming in this counter. These are the important stocks we should be focusing on in the FNO space.
Sharad, but viewers, let's step into a short break. Stay tuned, a lot more action on the other side.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something.
Well, welcome back to Small Cap Buzzers. Vimta Labs is the company that's now in focus. The company continues to see broad-based momentum across its research, testing and regulatory services portfolio. Talking about this, and there's a lot more, Haritha Vasireddy, the MD at Vimta Labs, is now joining us. Firstly, thanks so much for joining in. And just to take that point forward, that the company is on track for 500 crore guidance, considering the 120 to 125 crore quarterly run rate. Could you give us some perspective of what could investors expect on this aspect?
I would say we are pushing very hard for those numbers. I would be quite pleased if we come closer to those numbers. Will we hit 125 exactly in the last quarter? Maybe not, but the attempt is to go as close as possible from where we are.
In terms of margins as well, because at 34% it's quite healthy given the current prospects. Are these sustainable going forward as well?
I think in the near term they are quite sustainable, give or take a couple of percent. Global margins remain around 27-28%, so that way we are already doing super good, and even if there's an erosion of a percent or two, it should be fine.
Ms. Haritha, when I also look at the split that you have in terms of segments, pharma is almost 65%, while food testing is almost 20% of your revenue. You also have environmental testing services and electronic testings as well. What is the target contribution that you see within these segments?
In the near future, we think the pie will remain similar to what it is right now. Maybe in the future, 4 or 5 years or later, the electronics testing could grow. There's a chance that food also can inch up, but for the near term, I think pharma services will remain the dominant piece of the pie.
And where do you see the outlook on the electronic segments as well? Because you said that in the next 5 to 6 years, you will see good growth in electronics. Any kind of targets that you have in mind?
Yeah, sure. When we started this business, we wanted to achieve, basically our ambition is to, hit 100 crores with all services that we have, and some of these services have already crossed. So the idea with electronics testing is also to reach that nice number. Maybe that will take about 7 years, or if the industry is moving faster than what we are seeing now, that could be achieved even much earlier. The numbers would also depend on the expansion or geographic expansion, because right now we are based out of only Hyderabad. But here it's important that you're closer to the manufacturer. Therefore, I think the presence in other manufacturing hubs would also be vital in propelling the growth.
What could be the capex, Ms. Harita, that we can expect going forward? Any plans that you can share with us?
During the last 2 years, we have spent about 70 crores in building the laboratory infrastructure. For us, capacity is three-dimensional. One is the lab infrastructure itself, the second one is the people, and third one is the equipment. People and equipment we add as we go, but the lab space, I think we are doing this after almost a decade. So here we have spent about 70 crores, and we think that this expansion in terms of space is good for the next 5-6 years at least. And then we are also putting capex in establishing the biologics contract research and development services. So there is a planned outlay of about 50-60 crores for this as well, and half of that we will consume in this financial year, and phase 2 we will do it next year, the remaining half.
My next question, Ms. Harita, was also on the biologics business that you have now. What's the outlook there in that segment? What are the growth that you could expect in the next 2 years?
The first 2 years I think will be a build phase. Fortunately for us, we already have relations with the pharma customers. So the idea is to now backward integrate the services that we are already providing to them, which are preclinical, analytical, and clinical research. So now the formulation development or the process development piece is a precursor to these activities. So I can't exactly state the numbers that will come in the first 2 years, but we are hoping for the best.
In terms of exports as well, in the last quarter it was almost 30%. Any kind of targets that we should expect going forward?
Basically, it's only our pharma services that are of export nature. Food and the other verticals, it's all domestic. So when you see it like that, for the pharma business perspective, the exports are, I think, closer to 40%. And we would like to steadily increase this at least to 50% in the near future.
Ms. Harita, what could we expect for H2 as well? Is it looking better than H1 as of now?
Yes, typically it tends to be better.
Also on the Biosecure Act opportunity as well, are you seeing increase in inquiries for this as of now for Vimta Labs?
Yes, we have been receiving that kind of an interest during the past 1 year, and we think it's a good prospect for CROs based out of India.
Let me also get a perspective on your, the large revenue that comes from the pharmaceutical space, almost 65%. Can you tell me about how is, the order pipeline, whether it's largely, more from the innovator side? Any update that you can provide us?
Most of our export business tends to be coming from the innovator companies. The domestic, as we all know, is dominated by generic companies. So when we increase our exports, then typically the target customer is an innovator.
Any inorganic opportunities that you are looking at right now, Ms. Harita?
As of now, nothing on the table, but it's definitely a possibility in the future.
Well, Ms. Harita, thanks so much for joining and giving us perspective across a whole bunch of information across your segments. We wish you the best, but thanks so much for joining in today. But viewers, that's largely on Vimta Labs, and with that, it's all the time that we have on this edition of Small Cap Buzzers. Thank you so much for watching. India Market Close comes up next.
rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Markets seem to be happy with the 25 basis point rate cut and a higher GDP projection by the RBI. And that's what is keeping everyone busy in trade today as well. Welcome to India Market Close with Sharad Dubey and myself, Hiral Dadia. But very interesting, it's the BFSI space which is actually fueling that rally along with the rate sensitives today. Bank Nifty seeing gains of 0.7%. And if you see the top three gainers on Nifty 50 as well, that 130-point surge right now is mainly coming in from names like Shriram Finance as well as the Bajaj Twins. What is interesting is a closure at 26,200 is something what the analysts and markets are not ruling out, and the trajectory is also looking pretty strong. If you see in terms of gainers, there you go. Along with the three names, Adani Enterprises, Hindalco, SBI, HCL Tech, Maruti are the ones which are gaining. HUL, again, this is an adjustment that is happening right now with regards to where quality listing goes. So 3.5-4% downtick there. Interglobe Aviation, that stock has been under pressure, but the turbulence that we are seeing
and the concerns it is causing for commuters. The cut is not really taking all of that into consideration. That's what it seems like. Eternal Trend, Sun Pharma, a few of the other losers, but the breadth overall, if you see this one, is pretty much in favor of the bulls. Let's quickly pull up the advanced decline ratio because the VIX is also down 3.5%. 10.45 is what you're tracking there. Advanced decline ratio pretty much even, Steven, stable there. 1400 declines to almost 1000 advances is what you're looking at. Let's quickly look at the broader markets because it's the rate sensitives also which are firing today. Mid-cap index again 0.3% higher, but I think the momentum that you want to see in the small caps is what is missing, and that's what you're seeing over here. 0.5% downtick coming in terms of small cap 250. Let's quickly look at the sectoral indices because that will tell you that it's the rate sensitives also which are supporting the markets in today's session. There you go. PSU Bank Index 1.2% higher. IT again pretty much up in trade. Metals is seeing a good day of trade. Banking names, rural, auto, real estate also in the positive. It's mainly defense which is down 0.6% today. But let's see what comes in from India-Russia meet, and if any announcements there probably that could buffle up your defense space today. But overall, the sentiment is absolutely positive, Sharad, in today's session. A lot of individual names which are firing, but your rate sensitives are having an absolute good day of trade.
Yes, Hiral, you are right. Most of the interest rate sensitive stocks, be the mid cap, small cap, all are doing well, hoping that Nifty can close above the 26,200 odd levels. And that happens, of course, a strong momentum comes in Nifty Bank as well. But to the party, small cap indices haven't come in and no value buying signs are coming in the last 2 to 3 odd sessions. Option data is interestingly suggesting a bullish sentiment for both Nifty and Nifty Bank. The gains coming in, Hiral pointed out interest rate sensitives and BFSI. This includes HDFC Bank and Bajaj Finance. But interestingly, the European markets, they have also opened positive, and that is a very important factor as well. Interestingly, metals are seeing a rebound as well. And RBI push, two important things to mention, a 25 basis points rate cut and FY27 GDP forecast. That has actually gone up for the viewers who have tuned in just now. And interestingly, two important triggers to track, the India 10-year bond yield that has declined and rupee has actually strengthened as well, and that's actually favoring the market sentiment as well. But there are two key triggers: defense stocks ahead of PM Modi and Putin's meet, and Fed's FOMC meet next week. That's also a very important trigger which we will be actually looking forward to. But moving on, there is a chaos in the skies and also panic coming on the ground. Indigo, India's largest domestic carrier, has cancelled all flights till midnight at the Delhi airport. Hundreds of flights across Mumbai, Delhi, Bengaluru and Hyderabad over last 4 days have been impacted, leaving thousands stranded and desperate as well. Danish joins us in from Delhi to give us the overview of what's actually happening. There's a lot of chaos here. Danish, what are your views coming in here?
You're right. There's actually a lot of chaos, not only in the skies, not only inside the airport, but also inside the ministries and DGCA, as everyone, the DGCA, which is the regulator, the Aviation Ministry, everyone is doing whatever they can to ensure that the operations that are there, they are running smooth. First, talking about Indigo and the number of cancellations that have taken place till now. First, coming to Delhi airport, there will be no Indigo flights till midnight, and this is being done to recalibrate the entire Indigo network. That's because Delhi airport is the largest airport in the country, and Indigo's primary operations, they operate only from the Delhi airport. So there is, I think, over 200 flights of Indigo have been cancelled, and Indigo flights operate somewhere over 250 flights from Delhi alone. Now coming to the other metro airports, Bangalore has seen cancellation of over 100 airports. Similarly, Mumbai airport has seen a cancellation of over 100 flights. So as far as the overall metro city airports are concerned, at least 600 to 700 flights have been cancelled from these metro airports. Apart from this, Indigo also flies to various airports which are managed by AAI, which is a government body. Even over there, the flights have been cancelled. So very easily, we can say that Indigo's disruptions continue for the third straight day. And this is not going to stop just today. Even for the weekend, we will see a lot of disruptions that will happen. And this is all pre-informed, not only to the regulator, not only to the ministry, but also to the passengers. As Indigo, in its meeting yesterday with the aviation regulator, clearly stated that, look, for the next 3 days, we will not be able to fly as we were flying earlier. So the whole approach why the airline has cut these flights from the Delhi airport is to ensure that a proper recalibration happens from the Delhi airport. And very lastly, I would like to make one point that top government sources had told NDTV Profit that initially Indigo had pitched a no-fly thing till 4 p.m. today. So initially they that if we don't have any flights till 4 p.m. today, we can recalibrate. But the government has its own views.
So Danish, you know, I understand everything, the concerns that we're seeing. But with this, the DGCA has also pulled back the weekly rest directive that was given for airlines. And now they've said that the airlines can actually swap their weekly rest with the leaves when needed. What would this actually mean from an operations perspective?
See, from an operation perspective, this will give the airlines some proper space for rostering, because earlier what used to happen, while there was a 36-hour mandated rest period, along with that, there were also provisions for weekly offs. So now what will happen in order to control the entire situation, if any pilot he or she is on a weekly off, then even that will be calculated as a rest period, which is 36 hours, and that has been changed to 48 hours. So this is a relief for the pilots, but the pilot associations are completely unhappy with this, because they're feeling that the ministry and the regulator, they have this bended in front of the airlines, and they're not considering that what a pilot is going through and how fatigue can impact the entire operations. And like you mentioned, the weekly rest period, besides that, there is also one-time exemption that has been given to Indigo, and this is concerned with the night flying times. So earlier, the night flying destination was between 12 a.m. till 5 a.m. And as per the new FDTL rules, the night period was now being stretched from 5 a.m. till 6 a.m. So now this has been brought back. So now for Indigo only, and only for the A320 operations, the night landing time has been reduced back to 5 a.m. So from 12 a.m. to 5 a.m. that will be considered as night landing.
Stay with us, Danish. Joining us is Bhavesh Oza. He's the director at Blue Star Air Travel Services, and he's the co-founder at mytravelbazaar.com as well. A very good afternoon to you, Bhavesh. A lot of chaos is happening, be it ticket booking or even cancellation and refunds. A lot of phone calls are also coming. But I want to get the numbers aspect from you. Are the air prices going up, shooting up very high? And if yes, what are the key routes where we are seeing a very jump in these prices coming in?
Good afternoon. Very good afternoon to everyone over here. Thank you for having me over here, and I'm really not happy to be here for this particular session, at least at the moment. Well, the situation is really chaotic. From the passengers' perspective, yes. From the online travel agencies' perspective, yes. Your question about the prices, they have skyrocketed at the moment. What we are trying to do is, someone is stuck at a particular airport, we are trying to reroute them to some other airports, alternative airports, and make them fly and reach their destinations. For example, I recently had a case where passenger wanted to fly from Jammu to Mumbai. Trust me, the fares after 2 days is about 65,000 rupees. That's obnoxiously high. We had to reroute them, so we are trying options like Amritsar or some other cities, or make them travel by car or by train to the other major cities and fly them to Mumbai. So finally, we got them at about 30,000 rupees from Delhi to Bombay. They have to travel to Delhi by the road transport.
Okay.
So that's the situation, and the situation at the back office is really chaotic, because every second we are doing cancellations, reissues of tickets, finding them an alternative option, so that the situation is a little stressful for the passengers.
Bhavesh, good afternoon. This is Hiral on this side. What I want to know from you is in terms of the pricing, with the rescheduling that you're doing, with the new tickets that you're booking, what is the kind of increase that you're seeing versus on a normal day on various routes and various sectors? And which sectors are giving you the maximum hike in terms of pricing, and which airlines are the ones which are leading to that kind of pricing?
When you ask me for sectors, obviously the big metropolitan cities, these sectors have seen a lot of jump. Take, for example, Delhi or Bangalore, Mumbai for that matter, because they have been severely affected. So price hike in these sectors is very high. Don't ask me the percentage at the moment, because it's varying like crazy. But I just told you that a particular sector from Jammu to Delhi, it's 65,000 rupees, which is generally not the case.
Okay, I was just doing some, in fact, my colleague Somit has done this data crunching in terms of the flight tickets in terms of routes. And, a couple of them that I would want to cite from Delhi to Mumbai, Mumbai, Delhi, Bangalore, Calcutta, Hyderabad, you're talking about Pune, Chennai, Patna. These are the cities we're talking about inter routes. And the fares have jumped to in that range of almost, the minimum is 3.5 times. And that is for a Mumbai-Kolkata flight, whereas the maximum is almost 10.4 times. So a ticket that would cost you around 6,300 rupees on a normal day is probably costing you 66,000 rupees today. And that's a Delhi-Chennai flight. And that's the kind of surge, Bhavesh, that we're talking about. Is that something that you're noticing? And are people really ready to book these kind of flight tickets?
So you've got two questions over here. Yes, there is a surge. The surge is really high. Like I told you about the cities which I recently sold to passengers, and it is about 3 to 4 times than the actual pricing. A Delhi Bombay ticket is roughly about usually 8 to 10,000 rupees, and now that has jumped to about 35 to 40,000 rupees in that range, and that is across all the airlines. So yes, the surge is really high, and for passengers, since this was a last moment change, and it's the holiday period, it's the period where you've got maximum number of weddings, it's a period where people go to their homes, so this is impacting all type of passengers at the moment. We've got a lot of passengers coming in from the other countries into India for their holidays, so it is impacting everyone.
Yeah, stay with us, Bhavesh. We are getting more perspective in this discussion. Subhash Goyal, he's the Secretary General, Federation of Associations in Indian Tourism and Hospitality. A very good afternoon to you, sir. A lot of chaos is, of course, happening in the aviation segment, but the tourism, this time, October, November, December, and even till March, it's a very busy period when it comes to domestic holidays, international holidays, and even foreign tourists are arriving in India as well. Subhash, what are you gathering actually? Is there any kind of cancellations happening? Is there a concern over here? Because refund is something which most of the viewers and the investors would be actually looking out for. What actually happens for this? So what's the ground update coming in?
There is an utter chaos. It has never happened before. And the tragedy is that since we decided, the government announced 8.2% GDP growth. Earlier, there was some computer glitch with Indigo, and that is why a lot of flights were grounded. And now this is just holding the government to ransom, because they had more than 1 year when this law was there that the rest period for pilot was increased, and the number of crew as per the ratio of the number of aircraft should have been increased in 1 year. When Akasa Air, SpiceJet and Air India could do it, could adhere to it, I see no reason why Indigo could not adhere to it. It is really surprising and shocking that an airline which has 60% of market share, when people who have 40% of market share can do it, why couldn't Indigo do it? The reason is that they think they are invincible, and all of a sudden, grounding of the aircrafts and holding the public to ransom was a pressure tactics which has worked.
Subhash, I would want to come in over here. Subhash, I would want to come in over here. This is Hiral on this side. We're talking about Indigo, which is holding consumers at a ransom right now. But with that, if you have to talk about the other airlines, the other participants as well, their fares have gone and touched the roof. So what are they doing? What are they doing as well? We are talking about one Indigo. What about an Air India? What about an Akasa? What about a SpiceJet? That's one side of it. And secondly, let me complete this one. When it comes to hospitality as well, all your hotels which are nearby the airports, the room rates have also touched the roof in today's day or over the last 2 to 3 days. What are you also doing as an association to make sure, to make sure that this has been taken care of and not every probably participant from the hotel and tourism or hospitality sector is holding the commuters at ransom?
See, earlier when I was Secretary General of Faith, that time also we had written to the government. And now as chairman of the Aviation and Tourism Expert Committee of Indian Chamber, I have written to the government, and I am again going to write to the government today that there should be a upper capping. What they had done after COVID, that there was an upper capping of the airfares. For example, the direct operating cost between the Delhi and Bombay for an Airbus, if it is 4,000 rupees, they could do an upper capping for 200% more. Instead of 8,000 rupees, do it at 16,000 rupees. But there has to be an upper capping. Now, when I was talking to the government on this, they said, no, in a free market economy, it's very difficult. Then why are we fixing the rates for taxi drivers who are operating from airport to the hotel? They are poor people, we can fix their rates. But for rich people who are owning hotels and who are owning airlines, why can't there be an upper capping? Earlier days, when I was president of the Indian Tour Operators, at that time, the government used to fix the rate for 5-star hotels, for 5-star deluxe hotels, and for 3-star hotels.
Yeah, yes,
Now,
Mr. Subhash, that's a very interesting view on that. But let's just show our viewers one important thing. Yeah, I'll just, So one important thing is that chaos is mounting at Delhi airport. Frustrations everywhere. Passengers are raising strong objections. Tanushka joins us live with a strong update on that.
We're still at the Delhi airport, wherein a lot of these passengers, there are passengers here from all, these positions at this point. The lady here just beside me is with an infant right now, ma'am. आपकी flight कब से cancel है? अब यहाँ पे कब से?
2 दिन से cancel है.
2 दिनों से
cancel है. और 2 दिन से आज भी cancel है.
आज का फ्लाइट दिया कल इधर से दिल्ली से कलकत्ता, दिल्ली से हैदराबाद तक, हैदराबाद से जो कलकत्ता तक, कलकत्ता का हैदराबाद से जो कलकत्ता तक फ्लाइट था उसको कैंसिल कर दिया. तो अब 2 दिन से इंडिगो के चक्कर काट रहे हैं विद योर बेबी.
हम
लोग इधर से हैदराबाद जाके क्या करेंगे?
It is really troubling. Really troubling.
And what have Indigo been telling you?
We are extending, we are giving tomorrow another flight, delaying after 4 hours, after 24 hours, and now they are telling again for after 3 days with 2 babies, it's impossible to arrange.
मैम, बॉम्बे की फ्लाइट ओपन की है क्या? बॉम्बे के लिए
आपको जाना किधर है? कोलकाता. एंड कोलकाता की एक भी फ्लाइट आपको इंडिगो से तो नहीं मिल रही है. एंड व्हाट अबाउट अदर एयरलाइंस? आपने बाकी एयरलाइंस देखे?
Charges are very high, 40,000, 50,000. And we are 4-5 members. It's impossible to
accommodate. Yeah, exactly. So clearly here, the struggles of the middle class society here at Delhi airport, wherein Indigo is of course not an option right now, but what about other airlines? Other airlines' fares are skyrocketing. Just as we are talking to this woman here, she is with an infant and her 4-year-old as well. So 2 children here, the account of a mother who's dealing her 2 children at the airport since the past 2 days with no recourse, no dispute, no respite. Let us also speak to more people here. Sir, आप कब से यहाँ पर वेट कर रहे हो?
मैं कल जोधपुर से दिल्ली के फ्लाइट में आया. कल दोपहर से यहाँ वेट कर रहा हूँ. मेरा ऑनवर्ड जर्नी है चेन्नई से कोयम्बतूर. अभी तक मेरा बैगेज का कोई पता नहीं है. आई एम रनिंग a high temperature on this winter cold. My wife fractured her leg. We don't have even a small jacket. और हमको ये बोल दिया कि आपका फ़्लाइट रीशेड्यूल कर दिया है, आप जाओ करके. हमको इन लोगों ने एक होटल का नंबर दिया. होटल जाने से होटल वाले ने हमको कुत्तों के जैसे बाहर निकाल के भेज दिया कि यहाँ पे कोई रूम अवेलेबल नहीं है. रात को 12-1 बजे के ठंड में हम रोड पे सो रहे थे. आज सवेरे टैक्सी भर के हमारे खुद से पैसे से आज सवेरे की फ़्लाइट आए. सवेरे की फ़्लाइट वापस बोल रहे हैं कि कैंसिल है. और पूछ रहे हैं हमारा लगेज क्या है. ये लोग बोल रहे हैं हमको मालूम नहीं है. There is no higher authorities to even come and give us a solution.
So there's a ground report coming in, and that's pretty much big chaos.
And we have this from Bangalore, Mumbai, Delhi, everywhere. I think all of them. The quantum of flights cancelled and everything. It's a mayhem. It's chaos.
It's pretty much it, and the biggest question is, Hiral, is what happens to the refunds? And Bhavesh, I want to get you in on this. A lot of refund queries would be coming in, and if suppose I have a ticket and my ticket has been cancelled, it's a two-way journey or maybe a one-way journey. Now, how does this refund actually work? And by when can this actually come? There's a major questions coming in from viewers. I need to get you on this.
Well, yes, that's a very important question. At the moment, what the airline has given us instructions is they will be getting full refunds. That's actually not the actual solution, because even if they get the refund, the price for a new ticket is way much higher than those refund values. Clients have booked tickets at about 5,000 or 6,000 rupees, which is the average domestic fare. The new ticket prices are about 3 or 4, maybe 5 times at the moment. So I would rather ask the government and everyone to have a collaborative approach on how can they ensure that the passengers reaching their destinations.
In fact, Subhash, I would want to come to you on this. I understand you're saying that you would write to the government, but what is that immediate step that needs to be taken to make sure now this does not go out of control? I mean, it's already gone out of control beyond this, because Indigo has also come out and said, they've in fact put out an apology on Twitter, on X, saying that to each one of our customers, we're truly sorry and we will take care. In fact, they've said that they will ensure that all refunds for their cancellations will be processed automatically to their original mode of payment. They will offer full waiver on all cancellations and rescheduled requests on the bookings for travel between the 5th of December to the 15th of December. The number of days, I mean, we're still talking till the 15th of December. So I think lots in terms of cancellations is what Indigo is already expecting. That's what the date tells me, and that's what I want to pick up. Subhash, what do you say on this now? What should the next step be?
I have a solution. First solution is that the government should intervene. They should pass a law that all tickets, which if I'm holding an Indigo ticket, the other airlines which have spare seats must accept it at face value. And Indigo should endorse it to any carrier at face value. For example, if there is a seat on Air India, 10 seats are empty, they should take 10 Indigo passengers, and the clearance of the account can be done through ITA clearinghouse. Now, this law is being followed earlier on all international flights. It's an established practice. I don't know why they are not doing it in India. That is one thing. Secondly, you see, the Consumers Association should get together and they should, I mean, you refund the ticket. But I just saw on your, channel that a child, a 4-year-old child is on the lap, and for 2 nights that poor lady is there. How will you compensate the harassment? And I think a lot of compensation cases should be filed, and the Passenger Association should get together, and maybe your channel can take the lead of getting these people and filing consumer cases through a good lawyer, because they have to be accountable. They cannot hold the government to ransom and the public to ransom, because the government has been forced to give them extension, which is against the safety rules and regulations. So I think I don't understand that if CASA, Air India and this can follow, why couldn't Indigo follow? And yes, I agree with you that no one has the right to exploit the consumer. And in the free market economy, if they can regulate the fares of a taxi from airport to the hotel, why can't they regulate the fares of domestic airlines, operating in India? I mean, and secondly, if the extension is given, there has to be a ratio between the crew and the number of planes. And Indigo should not get rights for any new routes, and their existing rights should also be curtailed, because all airlines have to file the winter schedule and summer schedule with the DGCA. Now, DGCA should also ask them that what are the pilots and the crew you have to operate these. So this is one step ahead, because this is just, because you have 60% of the market share, you cannot, create chaos in the country. This is anti-national. And ever since our economy has shown 8.2% growth, first there was a computer glitch, and now it is an intentional grounding of planes. This should not be allowed. And if there is a penalty, then other airlines will also, think twice before doing such a drastic step.
Yeah, I mean, lots to do. In fact, the Ministry of Civil Aviation, and they have, as per the directions of Honorable Minister Shri Ram Mohan Naidu ji, the control room, they've set up a control room at the ministry, and that has been continuously engaging to maintain constant vigil over the unprecedented situation that has been arising from the cancellation and delay of Indigo flights. That's the tweet that we're picking up from there. In fact, this morning, the Honorable Minister visited the control room and reviewed its functioning to ensure seamless communication that is going through among all stakeholders, with a special focus on providing timely information to the passengers. In fact, real-time updates from all airports are being monitored to ensure adequate response and deployment of resources, particularly for facilitating all the passengers that are stranded at various terminals. In fact, they've said that the data from airport operators, airlines, and ATC is all being consolidated, and it is being shared with all the airlines, especially Indigo, along with all the necessary directives to mobilize resources and ensure timely, proactive action to ensure that normalcy of operations is restored at all operations, at all airports, I beg your pardon, across the country. That's what the Ministry of Civil Aviation has indicated so far. But thank you, Subhash. Thank you, Pavesh, for joining us on the show. Always a pleasure to speak to you. Let's just quickly pull up the stock in terms of Indigo and see what's happening there, because there is some bit of resilience over there. In fact, that stock managed to climb back into the green, receded from there, 1.2% downtick coming in there. Let's also connect with all our reporters who are standing back at various airports. We're talking about the confusion which is happening at Chennai airport as well. Let's quickly listen into what's happening there.
There's chaos at the Chennai airport as hundreds of passengers with Indigo tickets have got stranded. For the first time, the CISF at the entrances are not allowing passengers with Indigo tickets, as Indigo flights across the country have been cancelled except the international flights. This is the third day of this kind of a major disruption and hardship. Passengers are stranded and many have no option to continue their travel plans with other flights, as they say. Tickets have become very, very expensive, something they cannot afford, and the refund, although Indigo offers, could take a long time to come. Here is a family scheduled to travel to Durgapur, but they don't have other options because only Indigo, they say, serves Durgapur. Thank you very much for your time. Tell us about your situation.
Yeah, so actually I'm an employee, government employee in IIT Dhanbad. So I have to go and join there yesterday itself, but then flight got cancelled, and now it has got cancelled. They are not letting us inside. So we are just standing here in the airport. We have a child of 2 years old, and it becomes difficult. At least they could have informed us some few hours before, so that we do not have to.
What are your options now?
We have almost no options, because almost to Dhanbad, all the flights whichever is available is all now Indigo only, and to Kolkata and all those flights are like 20,000, 30,000 is the fare. So it is definitely not possible to go. Train tickets, we all know it will not be available at all now.
Okay, so those are stranded passengers which are talking to all our reporters as well on the ground. That was Sam Daniel who got us all the information right now. But clearly the spike that you're seeing when it comes to Indigo is just that spike on the back of that mild DGCA relief that has come in, and that's a temporary relief for an Indigo. But post that, again, that correction has continued. So there is a public apology as well that Indigo has put out, and you can go to their Twitter handle to see the process and how they would be giving you all your refunds, etc. But let's quickly cut across to Russian President Putin and Prime Minister Modi speaking to the media.
The next two documents include the agreement between the Ministry of Health and Family Welfare of the Republic of India and the Ministry of Health of the Russian Federation on the cooperation in the field of healthcare, medical education and science, as well as the agreement between the Food Safety and Standards Authority of India of the Ministry of Health and Family Welfare of Republic of India and the Federal Service for Surveillance on Consumer Rights Protection and human well-being of the Russian Federation in the field of food safety cooperation. These two agreements will be exchanged by Mr. Mikhail Albertovich Murashko, Minister of Health of the Russian Federation, and Dr. S. Jaishankar, External Affairs Minister of India. We next have two memorandums of understandings. These include the MOU between the Ministry of Ports, Shipping and Waterways of the Republic of India and the Ministry of Transport of the Russian Federation on the training of specialists for ships operating in polar waters, and the MOU between the Ministry of Ports, Shipping and Waterways of the Republic of India and the Maritime Board of the Russian Federation. These documents will be exchanged by Mr. Andrei Sergeyevich Nikitin, Minister of Transport of the Russian Federation, and Sri Sarvananda Sonowal, Minister of Ports, Shipping and Waterways of India. We now have the exchange of MOU between Messrs. JSC Ural Chem and Messrs. Rashtriya Chemicals and Fertilizers Limited and National Fertilizers Limited and Indian Potash Limited. This document will be exchanged by His Excellency Denis Alipov, Ambassador of the Russian Federation to India, and Sri Vinay Kumar, Ambassador of India to the Russian Federation. The last two documents include the protocol between the Central Board of Indirect Taxes and Customs of the Government of the Republic of India and the Federal Customs Service of the Russian Federation for cooperation in exchange of pre-arrival information in respect of goods and vehicles moved between the Republic of India and the Russian Federation, and the bilateral agreement between the Department of Posts, Ministry of Communications of the Republic of India and GSC, the Russian Post. These documents will be exchanged by His Excellency Denis Alipov, Ambassador of the Russian Federation to India, and Sri Vinay Kumar, Ambassador of India to the Russian Federation. I would like to additionally inform everyone that the two leaders have also adopted a joint statement which would be issued shortly. Both sides have also adopted the program for the development of strategic areas of India-Russia economic cooperation till 2030. And we also welcome the Russian side's decision to adopt the framework agreement to join the international Big Cat Alliance.
Initial snippets coming in from Russia-India's meet, and shortly we'll be getting you the joint statement also. But right now an MOU has been signed and this is positive for RCF and NLF. But we'll get you more details. We'll take a quick break. Stay tuned to NDTV Profit.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
तेईसवें शिखर सम्मेलन में राष्ट्रपति पुतिन का स्वागत करते हुए मुझे बहुत खुशी हो रही है। उनकी यात्रा ऐसे समय हो रही है जब हमारे द्विपक्षीय संबंध कई ऐतिहासिक माइलस्टोन के दौर से गुजर रहे हैं। ठीक 25 वर्ष पहले राष्ट्रपति पुतिन ने हमारी स्ट्रेटेजिक पार्टनरशिप की नींव रखी थी। 15 वर्ष पहले 2010 में हमारी साझेदारी को स्पेशल एंड प्रिविलेज स्ट्रेटेजिक पार्टनरशिप का दर्जा मिला। पिछले 2.5 दशक से उन्होंने अपने नेतृत्व और दूरदृष्टि से इन संबंधों को निरंतर सींचा है। हर परिस्थिति में उनके नेतृत्व ने आपसी संबंधों को नई ऊंचाई दी है। भारत के प्रति इस गहरी मित्रता और अटूट प्रतिबद्धता के लिए मैं राष्ट्रपति पुतिन का, मेरे मित्र का हृदय से आभार व्यक्त करता हूं। फ्रेंड्स, पिछले 8 दशकों में विश्व में अनेक उतार चढ़ाव आए हैं। मानवता को अनेक चुनौतियों और संकटों से गुजरना पड़ा है और इन सब के बीच भी भारत रूस मित्रता एक ध्रुव तारे की तरह बनी रही है। परस्पर सम्मान और गहरे विश्वास पर टिके ये संबंध समय की हर कसौटी पर हमेशा खरे उतरे हैं। आज हमने इस नींव को और मजबूत करने के लिए सहयोग के सभी पहलुओं पर चर्चा की। आर्थिक सहयोग को नई ऊंचाइयों पर ले जाना हमारी साझी प्राथमिकता है। इसे साकार करने के लिए आज हमने 2030 तक के लिए एक इकोनॉमिक कोऑपरेशन प्रोग्राम पर सहमति बनाई है। इससे हमारा व्यापार और निवेश डाइवर्सिफाइड, बैलेंस और सस्टेनेबल बनेगा और सहयोग के क्षेत्रों में नए आयाम भी जुड़ेंगे। आज राष्ट्रपति पुतिन और मुझे इंडिया रशिया बिजनेस फोरम में शामिल होने का अवसर मिलेगा। मुझे पूरा विश्वास है कि ये मंच हमारे बिजनेस संबंधों को नई ताकत देगा। इससे एक्सपोर्ट, को प्रोडक्शन और को इनोवेशन के नए दरवाजे भी खुलेंगे। दोनों पक्ष यूरेशियन इकोनॉमिक यूनियन के साथ एफटीए के शीघ्र समापन के लिए प्रयास कर रहे हैं। कृषि और फर्टिलाइजर के क्षेत्र में हमारा करीबी सहयोग फूड सिक्योरिटी और किसान कल्याण के लिए महत्वपूर्ण है। मुझे खुशी है कि इसे आगे बढ़ाते हुए अब दोनों पक्ष साथ मिलकर यूरिया उत्पादन के प्रयास कर रहे हैं। फ्रेंड्स, दोनों देशों के बीच कनेक्टिविटी बढ़ाना हमारी मुख्य प्राथमिकता है। हम INSTC, नॉर्दर्न सी रूट, चेन्नई व्लादिवोस्टोक कॉरिडोर पर नई ऊर्जा के साथ आगे बढ़ेंगे। मुझे खुशी है कि अब हम भारत के सी फेरर्स की पोलर वाटर्स में ट्रेनिंग के लिए सहयोग करेंगे। यह आर्कटिक में हमारे सहयोग को नई ताकत तो देगा ही, साथ ही इससे भारत के युवाओं के लिए रोजगार के नए अवसर बनेंगे। उसी प्रकार से शिप बिल्डिंग में हमारा गहरा सहयोग मेक इन इंडिया को सशक्त बनाने का सामर्थ्य रखता है। यह हमारे विन विन सहयोग का एक और उत्तम उदाहरण है, जिससे जॉब्स, स्किल्स और रीजनल कनेक्टिविटी सभी को बल मिलेगा। ऊर्जा सुरक्षा भारत रूस साझेदारी का मजबूत और महत्वपूर्ण स्तंभ रहा है। सिविल न्यूक्लियर एनर्जी के क्षेत्र में हमारा दशकों पुराना सहयोग क्लीन एनर्जी की हमारी साझा प्राथमिकताओं को सार्थक बनाने में महत्वपूर्ण रहा है। हम इस विन विन सहयोग को जारी रखेंगे। क्रिटिकल मिनरल्स में हमारा सहयोग पूरे विश्व में सिक्योर और डाइवर्सिफाइड सप्लाई चेन सुनिश्चित करने के लिए महत्वपूर्ण है। इससे क्लीन एनर्जी, हाईटेक मैन्युफैक्चरिंग और न्यू एज इंडस्ट्रीज में हमारी साझेदारी को ठोस समर्थन मिलेगा। फ्रेंड्स, भारत और रूस के संबंधों में हमारे सांस्कृतिक सहयोग और पीपल टू पीपल टाइज का विशेष महत्व रहा है। दशकों से दोनों देशों के लोगों में एक दूसरे के प्रति स्नेह, सम्मान और आत्मीयता का भाव रहा है। इन संबंधों को और मजबूत करने के लिए हमने कई नए कदम उठाए हैं। हाल ही में रूस में भारत के 2 नए कॉन्सुलेट्स खोले गए हैं। इससे दोनों देशों के नागरिकों के बीच संपर्क और सुगम होगा और आपसी नजदीकियां बढ़ेगी। इस वर्ष अक्टूबर में लाखों श्रद्धालुओं को काल्मिकिया में इंटरनेशनल बुद्धिस्ट फोरम में भगवान बुद्ध के पवित्र अवशेषों का आशीर्वाद मिला। मुझे खुशी है कि शीघ्र ही हम रूसी नागरिकों के लिए निःशुल्क 30 डे ई टूरिस्ट वीजा और 30 डे ग्रुप टूरिस्ट वीजा की शुरुआत करने जा रहे हैं। मैन पावर मोबिलिटी हमारे लोगों को जोड़ने के साथ साथ दोनों देशों के लिए नई ताकत और नए अवसर क्रिएट करेगी। मुझे खुशी है कि इससे बढ़ावा देने के लिए आज 2 समझौते किए गए हैं। हम मिलकर वोकेशनल एजुकेशन, स्किलिंग और ट्रेनिंग पर भी काम करेंगे। हम दोनों देशों के स्टूडेंट्स, स्कॉलर्स और खिलाड़ियों का आदान प्रदान भी बढ़ाएंगे। फ्रेंड्स, आज हमने क्षेत्रीय और वैश्विक मुद्दों पर भी चर्चा की। यूक्रेन के संबंध में भारत ने शुरुआत से शांति का पक्ष रखा है। हम इस विषय के शांतिपूर्ण और स्थायी समाधान के लिए किए जा रहे सभी प्रयासों का स्वागत करते हैं। भारत सदैव अपना योगदान देने के लिए तैयार रहा है और आगे भी रहेगा। आतंकवाद के विरुद्ध लड़ाई में भारत और रूस ने लंबे समय से कंधा मिलाकर सहयोग किया है। पहलगाम में हुआ आतंकी हमला हो या क्रोकस सिटी हॉल पर किया गया कायरतापूर्ण आघात, इन सभी घटनाओं की जड़ एक ही है। भारत का अटल विश्वास है कि आतंकवाद मानवता के मूल्यों पर सीधा प्रहार है और इसके विरुद्ध वैश्विक एकता ही हमारी सबसे बड़ी ताकत है। भारत और रूस के बीच यूएन, G20, ब्रिक्स, SCO तथा अन्य मंचों पर करीबी सहयोग रहा है। करीबी तालमेल के साथ आगे बढ़ते हुए हम इन सभी मंचों पर अपना संवाद और सहयोग जारी रखेंगे। एक्सेलेंसी, मुझे पूरा विश्वास है कि आने वाले समय में हमारी मित्रता हमें ग्लोबल चैलेंजेस का सामना करने की शक्ति देगी और यही भरोसा हमारे साझा भविष्य को और समृद्ध करेगा। मैं एक बार फिर आपको और आपके पूरे डेलीगेशन को भारत यात्रा के लिए बहुत बहुत धन्यवाद देता हूं। स्पासिबा।
Thank you, sir. May I now request His Excellency Mr. Vladimir Putin, President of the Russian Federation, to give his remarks to the media.
Уважаемый господин, distinguished Prime Minister, dear friend, ladies and gentlemen, first of all, I would like to sincerely thank the President of the Republic of India, Draupadi Murmu, you personally, distinguished Prime Minister, and all our Indian colleagues for the warm and hospitable welcome accorded to the Russian delegation. The negotiations that we just had with the Indian colleagues, and as well as our talk yesterday with distinguished Mr. Modi in the form of Tega at his residence, the dinner was great. I would like to thank you for this sign of attention. These talks were very useful. They were held in a constructive and a friendly atmosphere in the spirit of the special and privileged partnership between Russia and India. I would like to point out that we and Prime Minister Modi have established close working dialogue. In September this year, we met during the CEO summit in Tianjin. We are regularly having telephone calls. We are personally overseeing some aspects of the development of Russian-Indian cooperation, all the strategic avenues, and also we are monitoring the course of the implementation of key bilateral projects. And today, with the participation of our delegations, we have meticulously and substantively reviewed the whole range of relevant questions of the Russian-Indian multifaceted interaction. We exchange our opinions on the relevant global and regional subjects. In the joint statement that we've adopted with Mr. Modi, we've delineated the priority objectives on the further reinforcements of our ties in the politics and security, economy, trade, and humanitarian and cultural spheres. As you saw for yourself, we have signed an impressive package of intergovernmental, interagency, and corporate agreements. Many of those agreements are intended to broaden the economic cooperation between Russia and India. And this is entirely natural due to the fact that our countries are important partners of one another in trade, investment, and technologies. Last year, our bilateral trade turnover has grown by 12%, setting another record. According to different data, this number may look different, but it is generally around $64 billion. Currently, we are forecasting that the results of this year will remain at the same impressive level. At the same time, as I perceive it, we are up to the task of getting this number to the level of $100 billion. And to reach this important goal, we have harmonized the program of development of Russian-Indian economic cooperation until 2030. This comprehensive document gives us concrete set of objectives. The Intergovernmental Commission, the ministries, and
the rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money, and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry.
an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Welcome back. You're watching India Market Close. Quite a lot of action this Friday afternoon, I should say. And you have the markets that are obviously in focus amidst the conversation between the Prime Minister in India and the President of Russia. Holding out with 0.5% gains for the benchmark Nifty 50, but you have a couple of indices that have dropped quite sharply from the high point of the day. And you have the Nifty Defense, for one, that has dropped about 1.7%. To a certain extent, one can argue that there is a little bit of a disappointment that no major deals have been announced between Russia and India on the defense front. And you have something like a Bharat Dynamics, you have HAL that has dropped quite considerably from the high point of the day, losing further ground. You also have the Realty Index that's losing ground, and it's down about 0.2% after having traded in the green, or let's pull up the Realty Index. It did trade in the green after the announcement of that 25 basis point cut, and then it's lost quite a bit of ground from that point. In fact, the RBI monetary policy and the outcome of that is one of the big talking points this afternoon. 5 key takeaways for you. First, there was a rate cut of as much as 0.25%. Percentage points to 5.25%. That was a unanimous decision. The stance has been retained at neutral. The third point, significant liquidity infused or will be infused, 1 lakh crore rupees through open market operations that will be conducted in December, and also a dollar-rupee swap over the course of the next 3 years. The GDP projection has been raised to 7.3% from the earlier projection of 6.7%, and the inflation projection has been cut to 2% from the earlier 2.6%, and there's expected to be a benign outlook for inflation going forward as well. Listen to some of what the RBI governor had to say at today's event.
After reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission.
All right, we've got Kunal Shah of Mirai Asset, Sher Khan, as well as Neeraj Diwan, who's a market expert. Thank you so much, gentlemen, for taking the time. Let me come to you first. Kunal, good afternoon to you. What are the levels that you're looking at, particularly for the Nifty Bank and for the benchmark heading into the end of today and the start of next week?
Good afternoon, Alex. Good afternoon to everyone. See, I think what we have seen a good recovery from the lower levels for the Nifty indices. 25,900 on a positional basis is the support for the Nifty index. From a short-term perspective, I think 26,100 is a very good support zone. Dips towards the support would be a good buying opportunity, keeping a stop loss of 26,000 on the downside. And I'm expecting positionally targets of 26,500 on the upside for the Nifty index. So I think overall the mood is set up for a good rally or a short covering move in the coming week, and we can see the Nifty index heading higher. For the Bank Nifty, here again, we have seen a good recovery again from the lower levels, and Bank Nifty has been able to surpass the 59,500 mark. So that's positive for the Bank Nifty index. We'll be heading towards 60,000, 60,200 mark. One should keep a stop loss of 59,000 on the downside for the Bank Nifty.
Kunal, what would your top picks be for today and if you have to look at next week?
So I think, again, the NBFC space looks very attractive. So I think my first pick over here from the NBFC space would be Shriram Finance. Good reversals on the technical charts, expecting a good move in the coming week. 850 is where it is currently trading. One can go long at the current levels, keeping a stop loss of 830, looking for targets of 870 to 890 on the upside for Shriram Finance. So that would be the first pick. Second pick, where I think again, the momentum is very strong, and you can expect this is again from the financial space. And I think Bajaj Finance, this looks attractive on the chart, have surpassed the hurdle of 1,050. Buy from the current levels, keeping a stop loss of 1,020, looking for targets of 1,090 to 1,100.
Thanks, Kunal, for that. In fact, Neeraj, let me come to you. You know, I mean, Shriram Finance, an interesting one. Bajaj Twins are also buzzing in trade. In fact, both the counters are up nearly over 2%. And it's the interest rate sensitive sector that is seeing a rally after the RBI rate cut. Now, clearly, your cost of funds would decline. It would lead to improved net interest margins as well. Lower EMIs could increase the credit demand going ahead, boost the loan growth. You're talking about higher profitability on the back of a reduced interest expense as well as rising dispersals. In fact, Bajaj Finserv has given an outlook as well, saying that the GST reforms is something that will boost their auto and financial services growth, and they've received the approval to acquire Alliance's 26% stake in both the insurance arms. And if you talk about Bajaj Finance, their outlook is they're aiming to compound at 17 to 19% over the long term, and they're targeting a 5 lakh crore plus AUM book by the end of FY26. 100 million is what they're looking at in terms of loan dispersals annually by FY30. And they've said that they're aiming to become India's lowest risk financial services firm with gross NPAs less than 1.2% and net NPAs less than 0.4%. ROEs around 19 to 21% is what they're looking at by FY30. And in terms of profit per cross-sell customer, that will scale from almost 1,362 to 3,700 to 3,900 by FY30. So strong guidance coming in from Bajaj as well. What is your view when it comes to these three companies right now, Shriram Finance and the Bajaj Twins, and the rate sensitives which are reacting in trade on the back of the rate cut?
Yeah, good afternoon. Yeah, definitely we've been seeing interest rates coming down, enough liquidity in the system. This further RBI has today announced they'll infuse further liquidity. So, transmission has, I think, started happening. Demand for credit will go up. And I'm very positive on the rate sensitives, whether it's first the banking sector, NBFC sector. Besides Bajaj Finance, which I'm positive on, Shriram Finance I've been positive on since about last 2-3 months. So that stock has done well. So I continue to hold the stock. But Bajaj Finance also, I feel that from these levels also you can see a decent return if you are investing for 6 months to 1 year. Besides this, I'm even positive on ICICI Bank. So ICICI Bank has not contributed the way other banks or NBFCs have contributed to this rally. So I think ICICI Bank has to do a lot of catching up because they have been showing one of the strongest results in the last few quarters and very strong names, very strong asset quality and a decent liquidity. So that I think that should catch up as far as the banks are concerned. And PSU banks, after seeing some correction which happened because of the FDI disappointment, that the announcement has not come so far. So I think they should also do very well if one is a little longer term, like if you have 1 to 1.5 years perspective, their valuations are still attractive. So besides this, real estate is one space where you've not seen any contribution as far as any rally is concerned. So real estate sector should also start contributing because you've seen a lot of this stock correcting or languishing at the lower levels. So I think that is also one space one should seriously look at.
Interest rate sensitive stocks would be in focus as well. But apart from this, let's go on to a very special segment. My colleague Sumit Sarkar joins in with all the chatter coming in from the dealing room. Sumit, what you are gathering here?
It has been quite a volatile day in trade today. From the day's highest point, we did fall, and then we are recovering somewhat from the day's lowest point at this moment. But then a lot of stock action is what dealers have indicated. Firstly, when it comes to Eternal, that stock has been underperforming the benchmark for quite a while now, and now dealers are indicating that the selling pressure is largely to get over soon for Eternal. So keep an eye out for that counter. Dealers are expecting a bounce from the current levels when it comes to Eternal or Zomato. When it comes to BSE, that is Bombay Stock Exchange, there are buy flows on large HNI desks. Dealers are indicating that the volumes have been quite strong for BSE. In fact, on the expiry day as well, the volumes were quite strong, and that's the reason they are quite bullish on BSE. And when it comes to Crompton, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade. And lastly, when it comes to Feno Payment Bank, that stock has been buzzing in trade today. It was gaining yesterday as well, and now dealers are indicating that there's a big anticipation that the small finance banking license is something that Feno Payment might get very soon, and that's the reason the stock has been gaining. And few stocks that we indicated earlier, like Healthcare Global on December 1st, where we did indicate that there are buy flows and dealers are expecting strong management commentary on the analyst meet. Well, that has come true, and the stock is also up 0.8% after the analyst meet. And Tata Power was part of a segment on November 26th, where we did indicate that there are buy flows on DI desk, as they were expecting a resolution for the Mundra plant, which was announced by the company yesterday post-market.
Two confirmations coming in. First is Tata Power, and the second is HCG as well. Kunal, first question is BSE, strong flows coming in as well. Soumit pointed out the operational data is also strong. Would there be another leg to it, up move coming in here? And this is on a very short-term basis, I'm asking you.
I think yes, there could be one leg on the upside is what I'm expecting for BSE. 212 it is where currently trading. We have found support around the mark of 2730, 2735 zone. And this leg of up move can continue toward 2860, 2900 on the upside. So yes, short term looks positive. Can see some good move on Monday's trading session.
Okay, so that's with regards to where BSE goes. That's what we're talking about. In fact, let's just pull up a Grow on the screens as well, because right now we're talking about a Cloudflare that did interrupt services when it comes to Zerodha, Grow and other brokers, but it has been resolved is what the statement was coming in. If you look at a Grow, that stock is going to be important because the employees of Grow have also continued to sell their stake. In fact, let me ask Neeraj this quick question. Neeraj, your view when it comes to your capital markets companies?
Yeah, I'm positive on the capital market space. So the companies are like our mutual fund, like something like a Nippon Dam India. They're like some of these service providers like CDSL, NSDL, CAM, K Fintech. I think the valuations are pretty attractive there. The stocks, have not really contributed to the way the market has really gone up. So these stocks are among the top of my list as far as buys are concerned. Grow, I'm a little cautious on the valuation. I think Grow when it came around 100, 108, that was a fair value, and then it went close to 190, 195. I'd recommended profit booking at those levels. At these levels, I think best is a hold. I don't see any reason to buy at these valuations. So there are Angel One, for that matter, maybe a little more attractive as far as valuations are concerned.
Thanks so much for that, and do stay with us, gentlemen, because we have to address something that is happening on account of these mass cancellations by Indigo. And it's come to a point where, of course, you have dynamic pricing and demand supply that takes all of this into account, but the prices that you are seeing on some of these flights is almost egregious. Let's go across to Soumit to talk about what the trends are and how much of a difference it is from the regular fares. Soumit, some of this is eye-watering.
Well, because of the flight issues that we are seeing for Indigo, airfares have increased across all routes. But what we have tried to do here is we have tried to compile the data for at least the top 20 routes in the country. And firstly, we are showing you the fares for normal days. Now, this is the average of the last 1 year that we have compiled, and this is the average fare that used to be for a Delhi-Mumbai route on a normal day. It used to be on an average close to 5,262 rupees. But right now, if you're trying to book a flight for tomorrow, that is December 6th, the flights cost around 29,280, which is a jump of nearly 5.6 times. Mumbai-Delhi from 5,232, fares have increased to 23,600, a jump of 4.5 times. Similarly, for Bangalore-Delhi, Delhi-Bangalore, Bangalore-Mumbai and Mumbai-Bangalore, prices have jumped anywhere between 5.6 to 6.7 times. But do remember, these are the fare prices that was on the time when we checked for December 6th. Now for the other routes, if you look at, for Delhi-Kolkata, the fares on normal day were 5,900. At this moment, for December 6th, the fares are 38,700 rupees, which is a jump of nearly 6.6 times. For Kolkata-Delhi, Kolkata-Mumbai and Mumbai-Kolkata, fares have jumped anywhere between 3.5 to 5.7 times. For other routes, for Chennai, if that is coming in, okay, Chennai will come in later, but for Delhi-Hyderabad, fares have jumped 6.7 times. For Hyderabad-Delhi, Hyderabad-Mumbai and Mumbai-Hyderabad, fares have jumped anywhere between 3.6 to 6.3. Now, the highest increase in fare is something that we have seen for the Chennai-Delhi route here. If you can see, from 6,366, which is the normal fare that we see on an average day, the fares have increased to 65,985 rupees. And this too is not for a direct flight. It's for a 17-hour long connecting flight. The fares are this much. The direct flight cost was around 81,000 rupees. And that's a jump of nearly 10.4 times. Now, these fares that we have checked for December 6th is the cheapest fare available. And for all the routes, it was a direct flight except for the Delhi-Chennai, where it was a connecting flight with charges of around 65,985. The direct flight costed around 81,000. Delhi-Patna, 4,989 was the normal fare. It is costing now 23,560, which is a jump of nearly 5 times. And apart from that, if you look at fares like Kolkata, that's pretty much largely what we have compiled for the top 20 routes in the country. And we are seeing that fares have jumped anywhere between 3.5 to 10.4 times.
I don't even know. I mean, Alex was talking about it's getting you tears, but clearly this is probably getting off money of someone's pocket. It's like fleecing of commuters. Anything, Neeraj, that you would want to say on an Indigo? And you had a SpiceJet which had their outcome with regards to the board investor day also, which was out, and that stock was also seeing some amount of pressure. What would you advise investors to do, Indigo and SpiceJet?
See, SpiceJet, I don't have a view because there have been troubles there, so I'm not really sure whether they out of their problems as such. But Indigo, I think because the relief that has been provided today until February 9th or 10th, I think that will normalize the situation in, I think, 2-3 days. So as far as Indigo is concerned, that is only one pure play airline company which has been into profits also, has been doing well. So if one has to play the aviation sector, then Interglobe is one, Indigo is one way you can invest. But I've seen that lately that has also become more like a trading game. So you buy when there's a bad news, when the promoters are selling, the stock correct, and you sell if you make some profit and you sell. You can't really buy Interglobe or Indigo and keep it for longest time because it has not given that kind of a return also over last 6 months to 1 year. So it's more like a trading bet.
Speaking of a trading bet, very, very quick view from Kunal on Interglobe Aviation. Would you trade it right now or would you wait on the sidelines?
Definitely, I'll be waiting on the sidelines, not on the current levels. The downside was what I was expecting is somewhere around 5150. So still probably 100-200 point downside is left. The resistance for the stock is now at 5500, which was the earlier support. So still the stock might consolidate in this broad range for the next 3 to 4 trading sessions, and then probably you will get a clear view on the stock.
All right, gentlemen, we have to slip into a very quick break. On the other side, we'll talk about more stocks and buy today, sell on Monday strategy. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, Am. This means a lot to me.
Is a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town?
Welcome back to India Market Close, and the stock which we'll discuss is Keynes Tech. The company came out with its annual report, but then their Kotak Securities pointed out some important views which were actually very interesting, and the company actually came out with a rebuttal as well. So we have taken a lot of points here and created a scenario for bull and bear cases. First of all is the acquisitions front. That's the bull case scenario coming in. They are helping the company enter new geographies and segments, but the concerns are still there. What are the concerns? Ambiguous goodwill and reserve adjustments under the acquisition. That's where the financials get hurt for the company. Also, another bull case scenario is that management is stating that the interest rate cost, that itself will work out to be around only 10%, which includes the bill discounting as well. That's the second bull case scenario which I'm talking about. And the bear case scenario over here is that the average borrowing cost in FY25 was at a very high 18%. So this itself contradicts management statement here. But then management also stated that they have reaffirmed the disclosure norms going ahead for the fixed assets, and they have noted it to the future. That means they have recognized what was raised by the brokerages and the investor community. And also the 500 crore net year-end payables, that's also a cause of concern because of the related party transactions. But what are the analysts stating? That's very much important. 14 out of 26 analysts have a buy call, and still because of the correction we saw, a 53% return potential is expected. But looking at the bear case scenario, JP Morgan, they have stated that they are staying overweight, but they will avoid bottom fishing for now. So there are divergence trends coming up when it comes to the overall analysis for Keynes Tech. But let's move on to the management. They spoke with us and they gave their version of the story.
If you see the 18%, this is including the bill discounting and the working capital. If you split it up, it's coming to only 20%. But if you apply the same logic for the previous year, it was 25%. Because bill discounting as a process when we acquired the new business and the Iskramico, where the metering business, you know the nature of the business, it takes a little longer time to collect it from the receivables of the government and the transactional business of this. It has happened like this. So these are all the transactions. If you apply the same logic, the 17% this year was 25% the previous year. So we fully understand as an organization, we are committed for giving the transparent feedback and information to all the investors, shareholders, and people like in the public. But the only thing that we wanted to say is we have given this response because there is a concern that is raised. Yes. As far as we are concerned on all the 6 points, when you see, most of the transactions is as per the statutory standings. The only thing is, during the year of transaction from Iskramico, during the merger of the year, one disclosure is inadvertently missed, but the balance sheet and P&L has their information. That's as a related party transaction. First 6 months they were as a supplier, second 6 months is the part of the related party transaction. That is the only thing that we feel that we will improve in the governance and our decision.
Mr. Kuniganan, so that's where the issue arises, because this is not a small transaction, it's 180 crore rupees. So I think the concern that is raised, and of course your statement is that it was inadvertent, but then that's where you have...
It is already, we had no disclosure problem, because if you see, it is there in the balance sheet and everywhere it is there. It is only in Keynes Electronics, notes to accounts is missing. So it's an error. We agree, we will correct it.
Okay, all right, so we're going to have to talk about this in more detail. So this was a pretty long conversation. There were some clarifications that the company gave, and you can find that entire conversation on our social media platforms. But Deepan, you may not have, so Deepan Mehta, of course, joining in right now to talk to us. Thank you so much for taking the time as always. Can you hear me, Deepan? Okay, I don't think, so you might have to unmute. Okay, so we'll try and fix that. What I want to hear from Deepan is whether he got that clarification the management shared, whether he saw the response that they shared on social media as well, not on social media, actually on the exchanges. The street does not seem to be buying it, and this is something that they've admitted was an error on their part with regard to the reporting of a certain number with regard to one of their subsidiaries, which they say that they're going to correct. But there are question marks that have been raised about the cost of funding. There are question marks about their working capital. They have stated that they're directionally reducing their working capital days, and they want to bring it to 75 eventually, but it's going to take till FY28 for them to do that. Let me first very quickly on the charts get a view from Kunal. Kunal, Keynes Technology down 12%, and this is a second day of very sharp cuts. How do you react?
I think definitely the structure has got broken on the downside. The next support for the stock, where we have seen buying interest coming in earlier, is around the mark of the 3,900, 4,000 zone. So probably we can see some further dip more into the stock, and probably from those levels we can see, because all the momentum indicators have gone into the oversold zone with this correction. So there could be a technical bounce back coming from around the zone of 4,000 mark. And probably we can see a good bounce back coming back again towards the mark of 4,600, 700 levels. But overall, from a long-term perspective, I think I'll avoid the stock. Even only from a short-term trading perspective, dips towards that 4,000, 4,100 zone could be where one can take a risky bet on the long side, keeping a stop loss of 3,900, and again looking for targets of 4,500, 600 on the upside.
Okay. So that's with the technical view. In fact, we have Deepan Mehta who's with us as well. Deepan, I know we're just probably 3 or 4 minutes, a couple of minutes away from closing, but your view when it comes to the EMS sector, because Keynes Technologies, Amber Enterprises, all of them have been trading under pressure. Now, the kind of correction that has come in from highs, what would you advise investors to do as well, taking the commentary that you heard from the Keynes management today?
Good afternoon, and sorry for the technical trouble which was there earlier on. We got disconnected.
No problem.
But I think that basically all the EMS companies are trading at very rich valuations. And if there's a miss on the earnings or any such controversy around accounting standards, then investors are certainly going to dump the shares. So these companies are trading at valuations which perhaps are not justified. Although in the case of Keynes Tech, I think last quarter was exceptionally good. But any negative news flow comes and we're going to see a correction in the stock price. My advice to investors would be to remain away from the sector for the time being. It's just too richly valued, and I would wait for a situation where the correction is steeper or the earnings catch up and valuations are reasonable, because right now there's hardly any margin of safety.
Deepan, good afternoon. And, it is to our detriment that we're only going to be able to speak to you for a few minutes. I hope that we'll be able to speak to you soon because we've got a lot of questions for you. Let me ask you about a couple of pockets. Interest rate sensitives. In the recent past, you've also seen IT make a comeback. And we've spoken to you about both of these in the past. What do you make of today's move, of course, on account of the RBI monetary policy? We're likely to see the end of the rate cut cycle. So from that perspective, what would you be going out to buy?
No, I'm a bit lost. Are we talking about IT services companies? Or
so we're talking about, okay, so let me qualify. Let me qualify. So you have banks that are in focus today on account of monetary policy. In the recent past, you've seen IT make a comeback. And we're talking about both of these sectors in the recent past on account of foreign institutional flows, which have not come through. We're still awaiting those flows coming through. These are usually two sectors that are in focus for those funds to come through. How would you look at these two sectors in the pulls and pushes on the fundamental side that both of them are facing? Not related, but how are you viewing both of them?
So basically your question is two parts. You want to ask about software services companies.
Yes.
And you want to ask about banks also. So basically, I mean, it's better to just frame one sector at a time than two sectors one gets
I'm trying
confused.
to fit as much time questions as I can in a short period of time.
Okay, so basically banks, we are generally neutral. Software services basically looks like there could be a trading rally in them, but long term doesn't look that great.
Dipan, a quick question when it comes to the defense pack. Started to trade under pressure today because no major announcements that did come in when it comes to India, Russia. I mean, whatever we heard was mainly related to nuclear, related to the fertilizer companies. What would you advise investors to do with defense as a pack?
I think defense is fairly valued at this point of time, especially PSU defense stocks. Within the private sector, I think there's a degree of overvaluation, but investors are not accounting for high degree of volatility which comes in their earnings. It's a largely well-discovered sector as well. And I think if investors have adequate exposure to defense and remain invested, but from a fresh investment perspective, not at these values, hope for a correction, and corrections do come, at least stock price corrections do come from time to time. Those are good entry points. My preference would be for the defense PSU companies. I think they have a far greater edge than the private sector ones in terms of valuation and in terms of the business that they can get from the government.
Sensitive stocks are also in focus, and out of that, interestingly, let's look at the PFCs and the RECs. Over here, there has been a kind of a negative development coming in. MNRE's statements have been coming in, and largely we see both these stocks are in the positive here, but there was a volatility earlier in the session. Kunal, if you had to pick up something here over a REC or a PFC, would this be a good time to enter these stocks or to stay away from them?
I think REC and PFC in the last 3 to 4 months has completely lost the momentum. They are now trading at the critical support zone, but I'll still wait for a confirmation. I'll not be a buyer at these levels. I'll just give you the levels for REC. REC, the resistance now is around the mark of 360, currently trading at 353. So once 360, 365 zone that is taken out decisively, then probably you can say so buying momentum has come back, and then the stock can go towards 390, 400 levels. So I'll be a buyer only above the mark of 365 for REC. For PFC, again, similarly, the correction has been very sharp. All the technical indicators have been in the oversold zone. It is trading in a downtrend. Again, if one wants to go long, wait for a breakout about 365 on the upside. Once that is taken out, then probably one can see some buying momentum coming back in PFC as well. So at the current levels, there is no trade on both REC and PFC. We still require further confirmation on the upside.
Okay. Dipan, do you have an opinion on the aviation space and specifically on Interglobe Aviation in the context of what you're seeing on Indigo? They are losing in terms of course, the cancellations, but one wonders whether this is going to take a little time to settle and also whether there's a shift on account of customers shifting away.
Well, first of all, we're very positive on the aviation sector. And as a measure of disclosure, we and our clients are invested in Interglobe as well. I think these corrections are temporary in nature, and the problems faced by the company also are transient. Eventually, I think they will work around these situation and again go back to the kind of great operating performance which they have given in the past. I think the next couple of quarters will be very challenging for the company because of not just this aspect, but also the rupee depreciation that may affect the revenues and profitability. The more importantly, the mark-to-market losses may affect the net profit as we have seen for the September quarter. But we remain very confident of the long-term prospects of Interglobe, and I do feel it's one of the few companies which can deliver exceptional returns going forward as well. But as I said, we have invested them, so our views could be a bit biased. And eventually, I think this market share which they have and the kind of structure of the industry, so certainly favors existing players because they have the pricing power. And with oil prices remaining stable, I think eventually the profitability come back very strong. So I'm very positive in Interglobe Aviation, and such corrections are great opportunities for investors who are underweight the sector to looking at making an entry over there and getting some exposure to a high growth segment within the economy.
Okay. I just wonder, so we have a colleague that looks at the space very closely, and since you are invested and since you probably studied this, I don't know if you've looked at the back of the envelope calculation, but the rough estimate was that they would make a loss of about 2.5 lakh per cancellation. And so to that extent, if they're able to mitigate the number of cancellations, they will be able to get away with not having too much of an impact either on the revenue side or on the bottom line side. Are you of an opinion that this is logical?
I mean,
Deepan, this was for you.
No, but I mean, I cannot challenge your experts' opinion that the loss is 2.5 lakh rupees. I am not that well versed with what loss they make every time they cancel a flight. Apologies for that. All I can say is that broadly looking at the numbers, looking at the past track record, and overall what the operating metrics are, considering the kind of capacity addition which is going to come into play, as also the fact that so many smaller airports are coming on stream, and we are seeing a great deal of shift from railways to aviation. It's an aspirational product. So keeping all of these things in mind, and my view, or rather my horizon for investing is 3 to 5 years and beyond. So when I look at all of these things, I feel that the stock is reasonably valued, maybe undervalued also on a longer term basis. But as I said earlier also, that these cancellations and whatever is happening just now is basically like a small air pocket, and they will get out of it sooner or later. So I think that, I cannot comment on whether the loss will be 2.5 lakh rupees per flight. I mean, I'm not gone that deep into the company.
Completely fair, Deepan. No, that's fair. That's fair. That's
because
fair.
your question was that we want me to opine on whether 2.5 lakh rupee loss
is fair
per flight. So
that is entirely fair.
I'm not able to respond to that question about 2.5 lakh rupee loss per flight cancellation.
I understand. And so your point is well made. You're investing for 3 years and you anticipate that this will pass. Let me go across to Kunal just to take a quick view on any ideas that you might want to take into next week, Kunal. Something that you're looking on the charts that looks positive heading into the next week.
See, I think a couple of ideas. One is the Indus Tower. I think that looks very attractive on the chart. On the technical charts, we have formed a bullish flag pattern, and I'm expecting that to break out on the upside. 415 is where currently trading. 400 should be a stop on the downside. I'm looking for targets of 440 to 460 on the higher end. I think this could be a good buy from the current levels. And next is Lemon Tree. I think Lemon Tree is the setup is looking interesting on the technical charts. Again, bullish formation on the technical charts. I'm expecting this to go towards the mark of 170 in the very short.
Yes, Kunal. We have less time here. Deepan and Kunal, thank you very much for giving your time for both a fundamental and technical perspective. But this week, we are expecting the markets to actually end near the day's high level. The Friday numbers is expected to come in nearly the 26,200 odd crore mark. If you can just show how the ending is happening, Nifty Bank also almost a 450 point uptake coming in. So largely the markets are cheering RBI MPC meet and of course the macro developments which are taking place globally. Let's see what the constituents have placed in the Nifty 50, how that things have been moving. IT, interest rate sensitive stocks, all of them doing well. Shriram Finance, of course, leading the pack. And in terms of reds, you see Eternal and Interglobe Aviation, that's where the downtick is coming in. But net, it's a very strong day. Let's look at the sectoral names also doing well. Largely, your interest rate sensitive PSU banking, IT, all of them doing really well in the day's trade. But the small caps haven't actually come to this party, and defense stocks also in the red, as no major announcements have come in from PM Modi and Putin's beat as well. Let's see the advanced decline ratio, how it's actually sharpening. And now you see it was largely even, Stevens, but towards the end, the declines were more. Mid caps did well. Let's pull up the Nifty Mid Cap 250 index. Largely, they have been in the green, but small cap, there was no value buying for the third straight session. It's merely ending at the day's low level. Apart from this, let's look at the BSE 500 contributors where the movement has happened. Largely, NBFCs and metal names have done well all throughout, but the downtick is coming in Easy Trip, Indigo. These are the travel aviation stocks, and also some chemical names, Bandhan Bank, also seeing some reversals in their trade as well. But what you will be watching out for over the weekend and even next week, that's also very much important. Eyes for the globe, it's India's forex levels and also China's balance of trade, which would be in focus. Next week, most importantly, is your Fed FMC meet, Bicon's fundraise, and interestingly, financial results from recently listed companies and business updates for these companies as well. So these are what the board meetings is something which we are expecting for next week, and NSCL Industries and 1.1 fundraising also comes in. So major triggers are of course there, but macro triggers are something which you'll be focusing on, and these are the shares where the lock-in, share lock-in will be exiting as well. And IPO opening back to the primary markets, especially Wakefit Innovation, is something which you should have your focus on. So these are the major cues we are expecting for the next week. But hold on, today is Friday, markets are cheering it, and so is the movie industry, the OTT industry, and a favorite segment, one of mine as well, is the Popcorn Pulse. Shreyanshi, guess so Shreyanshi, what's there this week?
Well, absolutely. And Sharad, before I get to that question, what is the longest movie that you've watched off late?
Longest movie off late, I guess Jodha Akbar, 4 hours.
Alright, and so this is the one that you have just after that, because this is the longest movie in a lot of yours that I'll be discussing, in fact, and a bunch of important dialogues. This is one of your favorites, Sharad. This is a movie made with a budget of 280 crores as well.
Exactly, and this one of the best promos they had. And for last 6 months odd, I've been hearing it all across in YouTube, and now this comes in. I don't mind 3 hours run for this.
Well, absolutely, and this is the one that we're going to be discussing on Popcorn Pulse, and this is the first one to be talking about. When you take a look at the next one as well, in terms of some key details when it comes to this one, this is the longest Hindi film in 17 years as well, since Jodha Akbar, and that's the one that you're looking at. But tell you what, let's also take a look at the next plate in terms of the OTTs that you should be watching out for, and the release date for this one is December 3rd. My Secret Santa is the one to watch out for. And this is the one that you can watch for a little bit of a comfort watch when it comes to some of your Christmas movies. And the second one that you should be looking at is also the one with, big fun, big sweaters, big stars. And it's a little bit of a comfort movie when it comes to this one as well. So keep an eye on all of these OTT releases as well. And of course, that's the one to watch out for in terms of the run there.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So benchmarks enjoy the Friday cheer, ending at the day's high on the back of RBI's MPC's decision to cut rates. PSU Bank lead the gains, ending nearly 1.5% higher. Meanwhile, it's chaos in the skies and panic on the ground. Indigo, India's largest domestic carrier, has cancelled all flights till midnight at the Delhi airport. More than hundreds of flights have been cancelled across Mumbai, Delhi, Bengaluru and Hyderabad over 4 days, leaving thousands stranded and also desperate. Passengers have been struggling to deal with the cancellations. What's more, December FAs have soared and ticket prices on key routes rise 4 to 10 times compared to normal days. Indigo has already warned of more disruptions till at least December 8th. And as you can see on your screens, the extent of the chaos is such that a newlywed couple from Karnataka's Hubballi had to attend their own reception virtually. The bride and the groom, who had booked tickets from Bhubaneswar to Bengaluru and onwards to Hubballi for December 2, were stranded after their flights were repeatedly delayed from 9 a.m. on Tuesday until early morning the next day. So the flight was eventually cancelled on December 3. More on the story, the Directorate General of Civil Aviation, or the DGCA, has withdrawn the rule that barred airlines from substituting pilots' weekly rest with leave. The regulator said that the move comes amid major operational disruptions and also representations from airlines seeking flexibility to ensure continuity and also stability of the operations. With the change, airlines can now use leave in place of weekly rest to stabilize crew rosters. Now, the DGCA has said that the withdrawal is effective immediately, allowing carriers to consider pilots' weekly rest as leave. Now, in the wake of Indigo's severe operational disruption, viewers, the DGCA has also granted the airline a series of sweeping relaxations and flight duty time limitations norms. So a move that has triggered sharp criticism from the aviation experts. The regulator has temporarily withdrawn the key restrictions on the night duty limits and also weekly rest rules. So officials have described the move as a one-time conditional measure that will remain in force until February 10, with a mandatory review every 15 days of the FDTL norms. Night duty has been reverted from midnight to 6 a.m. back to midnight to 5 a.m. Another clause which limited pilots to 2 landings during operations that encroach into night duty has been removed altogether. Now, the much-awaited Modi and Putin meet kicks off. His second day includes meetings with Prime Minister Narendra Modi, a ceremonial welcome at the Rashtrapati Bhavan, and discussions on strengthening India-Russia relations. Now, discussions will be focused on the bilateral trade agreement between the two countries. Putin has said that Russia is ready for uninterrupted shipments of fuel to India and that Russia is looking at expanding cooperation in the energy sector. Here's the Reserve Bank of India's Monetary Policy Committee cut the policy repo rate by 25 basis points to 5.25% on Friday, marking its third reduction in FY26. The move has extended the 125 basis point easing delivered this financial year as the central bank continued to steer policy through a period of low inflation and also steady growth. So the committee kept its stance neutral. RBI Governor Sanjay Malhotra said in a video address that all the 6 MPC members voted for the cut, while 5 of them voted for the stance. Now, RBI made the decision against a backdrop of easing the prices and also firm domestic demand. Malhotra said in a video address that inflation had come down faster than expected and described the current environment of the low prices and also strong growth as a rare Goldilocks period. Viewers, the RBI also raised FY26 GDP growth estimates to 7.3% from 6.8% earlier. Now, it reduced the FY26 CPI inflation forecast to 2% from 2.6% earlier. The central bank has been tasked by the government to ensure that CPI-based retail inflation remains at 4% with a margin of 2% on either side. So RBI Governor Sanjay Malhotra said that core inflation remained mostly stable in September and October, and this is despite the ongoing price pressures from precious metals. Excluding gold, core inflation decreased to 2.6% in October. In general, the reduction in the inflation has become more widespread. In fact, the RBI also announced that it will buy government securities of 1 lakh crore rupees through an open market operations in December. So the central bank will also conduct a currency swap worth $5 billion this month. It also plans to buy dollars and sell them back 3 years later. So Malhotra has explained that RBI's move is aimed at injecting durable liquidity into the system. Following the liquidity remarks, the yield on the 10-year benchmark bond fell to 6.45% but recovered slightly shortly after. So the Indian rupee too weakened past the 90 per dollar mark for the second time this week. In fact, RBI's rate cut also had a rippling effect across the markets today, putting several sectors firmly in focus. For banks, lending costs have come down, improving the outlook for both the retail and corporate loan growth. NBFCs are also big beneficiaries, with cheaper borrowing costs likely to fuel stronger credit expansion. The housing and realty sector is seeing renewed buying interest as home loans turn more affordable, boosting the demand sentiment. And in trade, bank stocks have rebounded sharply. US, the Reserve Bank of India cuts the repo rate by 0.25% to 5.25% today, signaling cheaper credit for borrowers. So this move comes as the central bank aims to support growth amid moderating inflation. Home loans, personal loans and business borrowings are all expected to get more affordable. So analysts are saying that this could give a boost to consumption and also investment in the months ahead. Now, in the wake of Kotak's critical report, Keynes Tech Executive Vice Chairman Ramesh spoke to NDTV Profit, where he defended the company's financial reporting practices. The Kotak report had flagged several account inconsistencies, and also, he pushed back against the broader allegations. Among its many allegations, the Kotak report had highlighted a sharp rise in the contingent liabilities estimated at 18% of net worth. So he attributed this, to the bill discounting and working capital requirements specific to the metering business, where government receivables often face delays. Viewers, next up we have Tega Industries, that is in the upper circuit, with Frontier Warehousing launching an open offer to acquire 8.07 crore shares, representing a 26% stake in the company. So the total offer size comes to 44.26 crore rupees, fully payable in cash. The open offer was triggered after Frontier signed a share purchase agreement with the promoters to buy 13.29 crore shares, that amounts to nearly 42.8% of Kesoram's equity. So this development follows Ultratech Cement's earlier announcement of a 1:52 share swap ratio for acquiring Kesoram cement business. Next up, we have Zen Technologies. So it was in focus today as it secured a significant new defense order, receiving 120 crore rupees of contracts from the Defense Ministry. So the order is for supplying a comprehensive training node. With this win, the company's consolidated order book now stands at 675 crore rupees as of October. So for context, Zentech had logged 94 crore rupees in new orders during Q2, making this a notable acceleration in the company's order intake momentum. Viewers, at its analyst meet, SpiceJet has signaled a major ramp-up ahead, outlining an aggressive scale-up in the operations through H2 of FY26 and into FY27. So the airline has already expanded its fleet to 68 aircraft as of December 2025. So its operational fleet has risen even faster, from 19 to 32 planes in the same period. Now, available seat kilometers, or the ASK, have doubled from 55 crore in Q2 to 110 crore by December 2025. So SpiceJet expects that figure to double again to 220 crores by December 2026. The airline has also highlighted a strategic shift, increasing the concentration of operations at a few key airports. Viewers, Ola Electric stock has crashed to half its IPO price and also hit an all-time low in today's session. The stock has slumped to 34.8 rupees, down a steep 65% from its all-time high of 100.4 rupees. Now, trading volumes have also surged to 7 times the 20-day average. So the slide has been relentless. The stock is down 26% over the past month and nearly 64% over the past year. So Ola Electric has, however, guided for 1,000 to 1,200 crore rupees in FY27 revenue. It also says that its Giga factory has been commissioned at 2.5 gigawatt with plans to scale it up to 5.9 gigawatt per hour, and also by March 2026. But for now, market sentiment remains sharply negative as the stock continues its steep correction. Viewers, next up we have Hindustan Construction Company. So the shares have dropped over 22% on December 5, 2025, its lowest level since August 2023, coinciding with the record date for its 1,000 crore rights issue. So the issue opens on December 12 and also closes on December 22nd, offering 277 new shares per 630 held at 12.5 rupee each. So the sharp fall reflects ex-rights adjustment and also dilution concerns, as the share base may swell by over 43%. HCC aims to bolster its balance sheet and also, amid this weaker revenue and margins, following a 25% net profit drop in Q2 of FY26. Now, Moody's have seen some mixed reactions. Earlier, stock rallied around 14% on the record date announcement, but reversed ahead of the ex-rights date. Viewers, next up we have Diamond Power that has secured a major order worth 747 crore rupees from Adani Green Energy. Now the contract is for the supply of transmission cables with completion slated for 2026. The deal adds to the company's growing order book and also underscores strong demand in the renewable energy infrastructure space. Next up, we have Tata Power's Mundra plant that is set to restart operations from December 31, ending a temporary shutdown that began on October 17. So the suspension had been an overhang for the stock, and its removal is seen as a positive for the sentiment. So the resumption is expected to restore the generation capacity and also ease supply concerns in the power sector. Your shares of ITC Hotels, the recently demerged hospitality arm of ITC, has witnessed a large transaction, taking place today. As many as 18.75 crore shares of ITC Hotels, or 9% of the company's outstanding equity, changed hands during the large trade, and is, the BAT, or the British American Tobacco, is likely the seller. So earlier on Thursday, BAT said its wholly owned subsidiaries, tobacco manufacturers and Middleton Investment Company and also Rothmans International Enterprises plan to divest up to 14.58 crore shares. So that represents roughly 7% of the firm's outstanding equity. So for context, BAT currently owns 15.3% of the company. Years, Amazon is aggressively expanding its footprint in India's hyper-competitive quick commerce market, aiming to establish over 300 micro-fulfillment centers across key metropolitan areas like Bengaluru, Delhi and Mumbai by the end of the year. So these small localized warehouses, often referred to as dark stores, are strategically positioned close to residential clusters, enabling Amazon now to offer delivery of thousands of daily essentials within minutes. So the rapid rollout, which will take the total MFC count to over 300, is a clear indicator of Amazon's intent to capture a larger share in the segment currently dominated by rivals like Blinkit, Zepto and Swiggy Instamart. Viewers, Russian authorities have blocked access to Snapchat and Apple's FaceTime in the latest move by Moscow, clamping down on foreign tech platforms. So in a separate announcement on Thursday, Russian state internet regulator has accused both the platforms of being used to organize and also carry out terrorist acts within the country. Now, while cracking down on foreign tech, the Kremlin has promoted its own national messenger app, Max. Developed by the state-controlled tech firm VK-Max, has been touted as a one-stop shop for messaging. Now, online government services is also making payments. Now, in a significant step towards redefining automotive logistics in India, Motherson, through its joint venture, has announced an agreement with Digi Airport Limited, which is a subsidiary of Adani Ports, now to establish a dedicated facility for auto exports at the Digi Airport, in Maharashtra. Now, this is one of APS's, 15 strategic ports. So Digi is now set to expand its capabilities to support India's automotive growth story under the Make in India initiative, enabling seamless export and also import of vehicles for global markets. SEBI has barred financial influencer Avadhoot Sathe and his firm Avadhoot Sathe Trading Academy Private Limited from the securities market. So the regulator has also directed them to disgorge 546 crore rupees of unlawful gain earned from the alleged unregistered investment advisory and also research analyst business. Now, according to the order, it was primarily Avadhoot Sathe who played a major role in devising a scheme wherein course participants were lured to trade in specific stocks. Viewers, Digi Yatra, India's SSI-based privacy by design air travel platform, has reached 19 million downloads and enabled over 77 million seamless journeys across 24 airports, with adoption now at 30%. So in a release, the company said that it aims for 80% adoption by 2028 and is preparing for global integration in 2026. So Digi Yatra has also begun a beta rollout of 6 regional languages through its partnership with Bhashini. So the feature will expand to all 22 Indian languages, supporting the Ministry of Civil Aviation's push to make digital travel more accessible and also user-friendly nationwide. Simone Tata, mother of Noel Tata and stepmother of Ratan Tata, passed away in Mumbai on Friday morning at the age of 95. Now, she survived by her son Noel, his wife Alu Mistry and grandchildren. Simone Tata's contribution to the Indian business landscape and the Tata legacy remain unparalleled. She was a visionary entrepreneur who transformed Lakme into a top cosmetics brand, steering its growth and eventual sale to Hindustan Unilever in the 1990s. Now on to some sports news now. Cristiano Ronaldo has joined the list of high-profile investors backing Perplexity AI following Lewis Hamilton's recent investment. CEO Arvind Srinivas announced the development on Friday, highlighting growing interest from global icons in the AI-powered search platform. Perplexity, known for its conversational search capabilities, has been attracting attention, and amid the rising competition in the AI space, the investment underscores the increasing crossover between sports and celebrities and also technology ventures, signaling confidence in AI-driven innovation. Viewers, with that, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational.
Good evening, viewers. Welcome to NDTV Profit. This time we're doing Profit 360 with a twist. As you can see, I am on the ground at Terminal 2 in Mumbai. Today we're covering Indigo's crisis. People have been stranded here at the airport for hours. Behind me, you see a large crowd, and I'm in fact going to go across to them to talk to a few people. I have a family with me from Kenya. They've flown to India after 19 years, and let's find out what has happened. In fact, they were about to take a flight to Jaipur, but they've been waiting, and they're waiting with no vision ahead. So, sir, could you please tell us your problem?
Yeah, so basically we flew in from Kenya yesterday. And obviously it was a long flight and, quite tired. And then we were looking forward to going to Jaipur. And obviously we've been here, we've come back to India after 19 years. And unfortunately, we found out this morning that Indigo had problems with their flights. And so we decided that we will come to the airport and check. And thinking that our flight's at 4:30 in the afternoon and we'll get on. And on the opposite side, obviously we've already booked our Jaipur hotels, paid for it in full. And now we are not going to be able to get on the flight as it's been cancelled. And my son's here the first time in India. We thought we'd show him India, being with Indian ancestry. Right. And unfortunately, we are facing this problem where we might have to just completely give up on the Jaipur side because what if we get there somehow? Say we get there tomorrow and then on the return we face the same problem. Yeah.
So as you can see, customers here are waiting with no hope. Like they don't know when they will be able to take their next flight. You see behind me these crowds. When I had come to the airport, I saw a lot of them fighting with the crew. And you know what's surprising? Because Indigo, one of India's largest domestic air carriers, just has this booth to cater to a crowd as long as this. And all these people have been waiting here for more than 4 hours. That's a long time. And in the last 3 days, viewers, about more than 1,500 flights have been cancelled. And today alone, over 500 flights have been cancelled. This is a huge number that we're dealing with. In fact, these people, they don't have any clarity on when they'll get their next flight. Some people had checked in their luggages, but some luggages have already gone in, some are out, some have not been refunded their fares, and it's a huge, utter chaos. In fact, we will get our reporters also joining us, from various different locations to give us different perspectives. And in fact, I have my colleague Danish joining us now on DGCA's perspective on all of this. Danish, over to you. What can you give us right now?
The DGCA has withdrew its basically the DGCA has given an exemption to airlines as far as the weekly rest period is concerned. As per the mandate, the pilots were supposed to get weekly off and at least 36 hours of weekly rest period, which was increased to 48 hours as under the new FDTL norms. But now if any pilot is on a weekly off, then even that will be calculated as the rest period. And DGCA has done this because we are seeing a lot of flight disruptions, especially by Indigo from the past 2-3 days. And now what will happen if a pilot is on a weekly off, then that will be considered his rest period. So that is one big update that has come from the DGCA side. But on the other hand, as far as the relief just for Indigo is concerned, DGCA has exempted the night time definition. So as per the earlier FDTL norms, the landing any time between 12 a.m. to 5 a.m. that was considered as night landing, and under the new FDTL norms, this was stretched from 5 a.m. till 6 a.m. So basically, the new FDTL norms talked about night landing from 12 a.m. till 6 a.m. But Indigo has been given an exemption only till 10th of February. So the Indigo pilots that are landing between 12 a.m. Till 5 a.m. Only that will be considered as night and not 6 a.m. So this is a big relief for Indigo as far as relief for Indigo is concerned. But overall, we are seeing that DGCA has been fully active on everything. The DGCA held 2 meetings yesterday. One was with Indigo, in which Indigo clearly talked about the challenges and the problems that they face. The DGCA as well as the ministry, they really pulled over Indigo and they asked them and they really questioned them that if you were unsure about the adequate number of crews that you have, and by that I mean the cockpit crew, the pilots, if you were not sure that you will be having ample number of pilots for your winter operations, then why did you apply for so many slots in the winter period? But all in all, if we see, the government is doing the best that it can from its side, and the government is also facing a lot of resistance from the pilots.
Right, Danish. Thank you so much for giving us that update on DGCA's, rule on the roster format. But I also have my colleague Ronit joining us to understand how is this crisis also flaring up hotel prices. Ronit, if you could tell us, passengers have been stranded, of course, for so many hours on airports, and most of them would, of course, try and go to nearby hotels. But we have learned that the hotel prices have increased over 30%. Could you please give us information on this?
For the past 3 days, Indigo flyers have been facing a lot of trouble due to flight cancellations. During these past 3 days, more than 550 Indigo flights have got cancelled. Now, there is another story that is developing right now. The hotels situated near the T1 Mumbai airport, when I checked the prices of the hotels situated near the T1 Mumbai airport has increased by around 30 to 35%. I got in touch with the management of like 3 hotels situated near the domestic airport. They were saying that at one hotel, when I checked, the price of single occupancy room, it increased by, it was earlier like 6,000 rupees. Now it is like 8,000 rupees. And in another hotel, when I checked the price, now it is like 10,400 rupees. Earlier it was like 8,400. That hotel even said that all the rooms are now booked fully and there are no rooms available right now. So this has been causing a lot of inconvenience to the passengers whose flight has got cancelled due to some unforeseen circumstances. And suppose if those flyers who want to stay near the airport, who want to stay at a hotel nearby the airport, they will also find it very difficult to find such hotels because the prices of those rooms have now got increased. Now Now the hotel management, they were saying that for like around 3-4 days in a row, that is after now, the prices will remain elevated and there will be no changes in the prices of these hotels. Now, as far as the Indigo situation is concerned, there is no normalcy in this situation as well, and the management is saying that it will take some time to bring this situation into normalcy. So only the time can tell.
And viewers, we've also learned that Indigo has issued a statement on this entire crisis. Of course, they've apologized for the chaos that they've caused and the discomfort that they've caused to so many thousands of stranded passengers. In fact, as of this morning, we'd also learned that all the flights departing from Delhi have been cancelled until midnight. And my colleague Danish, in fact, has been tracking this very closely. Danish, you're joining us now. What can you tell us on Indigo's statement and what has been their side of the story so far?
Well, as far as Indigo's side of the story is concerned, they have just clearly apologized and they have accepted that they could have planned the roster in a much better way. And this is what the pilot associations are also accusing Indigo about, that these FDTL norms are not new, and especially these were the second phase of the FDTL norms that was supposed to kick in from 1st of November. So the pilot associations are saying that if this was a very big and a very deep crisis, then even other airlines would have been cancelling the number of flights. But coming to what Indigo said in its statement, first of all, it apologized to all the stakeholders, the passengers, the airports, the AAI, the ministry, the DGCA, and they have really expressed their sadness that such a situation is happening in the country, and because of that, the entire aviation ecosystem has gone for a toss. And they have also, as a goodwill gesture, Indigo has also offered to fully refund for the flight cancellations from 5th December till the 15th of December. So this is what Indigo has said. And in fact, even yesterday we had accessed an internal email, which was written by Mr. Peter Elbers, who is the CEO of Indigo, to its employees. And he clearly told his employees that we need to buck up, we need to stay as one team. The way we rose to the moment when the A320 software update issue happened. So he expects everyone to be close-knit. He expects the entire team of Indigo to work as one unit. They don't want any kind of fights or any kind of issues between the employees. So they're trying to ensure that the employees at Indigo, they're motivated, the pilots are motivated, the cabin crew members are motivated, because no one can understand, because it is very difficult to really understand from a pilot's point of view and also from a cabin crew's point of view that what these guys must be going through, because everyone works really hard, and then ultimately if the management decides that you can't fly because you want to recalibrate the entire operations, then they're completely helpless. But Indigo just offered its apology to the public, to the stakeholders, and they've offered full refunds from 5th December till 15th December.
Thanks for that, Danish. In fact, viewers, we're currently being joined by Jitendra Bhargava. He's a former ED at Air India, as well as Ashwini Kakkar, Managing Partner at InVenture and Director TTPC. Thank you so much, Ms. Kakkar and Mr. Bhargava, for joining us at this given point in time. I'd like to ask you the first question. When I came to the airport, so many people have been angry, frustrated, stranded. I just want to know, according to you, where has Indigo gone wrong, and could all this chaos have been prevented? Mr. Kakkar.
If we look at it, Indigo has been there in the business for 19 years and has done commendably well on all fronts. It's a very, very difficult way to look at it as to what created this 4 days of chaotic reign on the Indian aviation. It has not only impacted Indigo's own reputation, but also Indian aviation. Now, we all know that DGCA had come out with revised FDTL, flight duty time limitation norms. There was enough time given to all the airlines to work out their manpower requirement and plan for it. Why Indigo faltered, one does not know. Your correspondent just said that Indigo has come out with a detailed statement apologizing. Now, my question to Indigo management is, what prevented them from saying so 4 days ago, planning and saying which of the flights will get cancelled, how many flights will get cancelled, so that people did not have to come to the airport and face an ugly situation? And I'm also sympathetic toward the Indigo staff who have faced the wrath of the public. Then comes the role of DGCA. I believe Indigo had approached DGCA some time ago, seeking an extension of the FDTL limitation implementation date. DGCA at that time declined. Now, perhaps the situation could have been worked out and said, look, this will be the scenario that will unfold if the DGCA is not given. Of course, the credibility matters. If Indigo had genuine issues, DGCA had realized it, perhaps we would have prevented these 4 days of chaotic rule at the airports, disruption in flights, very unfortunate part in the Indigo. I have not witnessed this thing at the airports. The way the passengers are angry, fares have shot up, hotel rooms have shot up, and they really do not know what is it. The good redeeming part is that eventually FDTL norms have been given some relaxation for a while for Indigo to pull up their socks, get in more people, ensure stability. The second part being Indigo having suspended all flights, I very often said, now to prevent a cascading effect of the last 4 days on the next few days, the best thing is to stabilize. For stabilization is shut down your operations, reboot your operations, start afresh in the morning tomorrow, so people are credible that the flights that they are taking will operate. Indigo will sound more credible in their claim that we are bringing in stability. So what we have witnessed in the past 4 days is an ugly phase that we should not remember. Let's hope Indigo can pull up its socks, ensure that flights are normalized as early as possible. And DGCA and Indigo and other airlines must learn their lessons. Be credible in what you are saying. If you are seeking DGCA's relaxation, be genuine, unfold the whole scenario before it, because then if DGCA still does not give permission, it can be accountable. But in this case, I think Indigo is at fault. The buck must stop at the doors of the senior management of Indigo.
Ashwini Kakkar into this conversation, sir. Yes, completely understand. I'd actually also would want Ashwini Kakkar to comment on this. Ma'am, the pilot's body believes that Indigo engineered this entire crisis. How do you think that was possible?
Well, it's actually a crisis which was waiting to happen under the new FDTL rules. Because these rules were actually intimated to the airline a long time ago, and the first phase was already successfully implemented. And it is a complete planning failure on the part of Indigo, because Indigo could have planned this much better. It is clearly known that Indigo has a 65% market share in the country's domestic aviation. And it has 2,300 flights a day. Now, clearly, their scheduling process, all this should have been properly managed so that these things could have been sorted out, weeks in advance. Otherwise, they should have pre-announced cancellations of a lot of flights, which they did not do. I think this is clearly like my colleague says, at the doorstep of Indigo Airlines. Now, clearly, they have been planning everything cut to cut, and night flights, day flights, everything, in such a manner that they employ minimal possible staff, especially the flying crew. This has obviously resulted in this complete mess, where there are thousands and thousands of stranded passengers. Even today, approximately 800 flights have been cancelled across the country. I mean, can you imagine all the people who have urgent work or who have deaths in the family, who are elderly, who are going for medical treatment? I mean, what is their status? I mean, it's a complete no situation. I mean, even the trains are overloaded. The hotels, especially the ones around the airports, are facing the wrath of passengers who they have not booked even, because not only are they charging extortionist room night charges, but they are overcrowded. Equally, I think If you look at the ground transportation around airports, it's in complete chaos because people are rushing to the airport to see maybe there is a chance that I will get a flight, but nobody's getting those flights. So people are coming in, people are going out. It's a complete mess. Now, added to this, the weather situation will not help because this is the worst period for fog in the whole country, and that is going to exacerbate the situation. And at the end of the day, who will pay for this? I think Indigo should be responsible and made to pay for this whole fiasco. I mean, I can give you the example of my old aunt who came on a British Airways flight, 90 years old, stranded at the airport for maybe 18 hours,
Mr. Kakkar,
not being able to get the domestic connection
Mr.
on
Kakkar
Indigo.
and Mr. Ashwini Bhargava, just a second, because sorry to butt you in, but another byproduct of this calamity is the fact that airfares have increased 4 to 10 times. In fact, due to this stricter roster rules of pilots and mass cancellations, airfares have gone high. And I was speaking to a passenger just a moment ago, and he was saying that a flight costed him 1 lakh within India. So I, in fact, have my colleague Somit joining us now to help us understand the magnitude to which airfares have ballooned because of this crisis. Somit, over to you.
SpiceJet stock remains in focus given the fact that the company conducted their physical analyst meet yesterday, largely post-market. Now, what are the key takeaways that are coming in from this analyst meet? Firstly, the management has guided for a sharp scale-up in their operations in the second half of this financial year and in FY27 as well. They have clearly mentioned that their fleet size has increased by nearly 18% from 54, which was the number that we had seen in the second quarter. This has increased to 68, while the operational fleet size has increased from 19 to 32, a growth of nearly 65%. 19 was the fleet number that we had seen in the second quarter, while the operational fleet size at this moment for SpiceJet stands at 32. Their ASK, that is the capacity or the available seat kilometer, that has doubled over the same time frame from 55 crore to 110 crore, and they're expecting this capacity to double by the end of 2026. From 110 crore right now, this number will grow to around 220 crore by December 2026. Also, the management clearly said that their focus remains on some or the few main airports and not on pan-India basis. They'll look to increase their operations in certain airports that the management has mentioned. And when it comes to the debt side or the liability side, they're saying that
explaining that to us, Somit. And Mr. Bhargava, just getting you back into this conversation, DGCA relaxed the definition of night and doubled the number of night landings allowed. What is your take on this, and how do you think this is going to affect the entire aviation space?
We need to understand that DGCA had come out with the revised regulations in the interest of safety because pilots had been demanding. Pilots can't be fatigued when they're operating flights. They were fighting it for some years. The court intervened and DGCA eventually came up, even though airlines were not in favor of it. That's one part. The second part is that if you wish to get normalcy in operations, knowing fully well you don't have the number of pilots that you require to maintain your flight schedule, there is a need to give relaxation for a limited period of time. Of course, DGC has made it clear that it's restricted till February. You will submit a report. In the meantime, augment the strength of pilots to work it out. So that is the way it is. I have no reason to believe that Indigo is facing genuine requirement or the shortage of pilots. DGCA is interested in putting normalcy back in civil aviation, so they've taken this step. People may say that, look, relaxation in FDTL, once you've agreed, can lead to compromises on safety. As an airline person, I can say very categorically, no, it will not happen. Airlines have the highest stake in ensuring that the airline is safe, and they will take requisite measures to ensure safe operations. It shouldn't happen. Then your question of the fares skyrocketing, well, it's a demand and supply situation. Indigo has 65% market share. And when you have large-scale cancellation, the capacity drops. And what are people scampering for? Those people who are booked on Indigo wanting to get onto the other airlines which are operating services. And the fares will go up. When the demand exceeds the capacity in the market, fares are astronomical. I have a case of yesterday where a passenger wanting to fly from Mumbai to Dehradun had the fare of 74,000 on Indigo. At the same time, the Dubai fare was only 17,000. Now, this can basically say, well, you have a large capacity available on the Mumbai-Dubai sector, but Mumbai-Dehradun sector limited flights, and therefore the fare shot up. But question comes in. When a passenger cancels his flight, airline forfeits almost 90% of the fare. Now, when an airline cancels flight, why should a passenger be left hanging? Why should a passenger face inconvenience, pay up more when they want to travel on the other airlines? And let's not also forget, they lose their working day, they spend money on going to the airport and coming back, there's compensation to be given. What has DGCA to say on it? What have airlines got to say on it?
Because we're running out of time. So sorry, we're running out of time. I'd also like to get in Mr. Kakkar into this conversation back again. Mr. Kakkar, NDTV Profit had broken an exclusive story last evening where we said that Indigo had offered to buy back leaves of its pilots and offered to pay them 1.5 times their salary. According to you, is this a solution, is this a good solution in the long term, or is this a short-term patchwork?
This is complete patchwork, and in the long run, it will not work. I think the airline has to look at having a sufficient number of pilots who will be able to service the needs of the airline. I mean, and I think DGCA should also insist that there is a proper structural solution to the problem and not a patchwork solution. Because getting a pilot from here or there and then kind of that pilot not being available to the other airlines and so on and so forth, all this will not work. I think it has to be, if you want to run an airline with 65% market share, you have to run it in a manner which behooves the 65% market share. And I also think that, what Mr. Bhargava said is a very crucial point, that the airline must be made to pay for the losses that the customers have suffered. When a customer cancels a flight, the airline just takes away the entire amount and, does not refund anything or next to nothing. Now, in this case, when the airlines are canceling the flights, I think they should be made to pay to the passenger, especially those who have, of course, not for third-party damages, not for the business loss or anything, but for the new flights that they have had to buy at extortionist prices.
Thank you so much, Mr. Kakkar and Mr. Bhargava, for giving us your inputs on this very heated crisis at the moment. And viewers, as you stay tuned to NDTV Profit, there's just one message that I'd like to give you. When we spoke to a lot of stranded customers, all of them told us just one thing. If Indigo couldn't see this coming, at least a solution was expected. As headlines are made on this, one answer will always be a blank space. Until when are these stranded passengers going to wait on the airport asking either for their funds, their refunds, or their luggages stuck inside the airports? This is Malika Mishra from Terminal 2 in Mumbai. Thanks so much for watching. Stay tuned.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry. an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
– 2025 has been a tremendous year.
The Indian economy is one of the fastest growing in the world. Figures speak for themselves. Over a decade, the GDP of the country has almost doubled, and in terms of the purchasing power parity, it increased by 2.5 times. Thanks to the sound economic policy and such landmark initiatives by Prime Minister Modi as Make in India program, India is strengthening its technological sovereignty. The Indian processing and light industry, IT sector, and pharmaceuticals take leading positions in the world. In Russia, we study the Indian experience with interest, and it is used in implementation of our national programs of import substitution and localization of products with high value added. The leadership of two countries, and Prime Minister Modi and I in person, pay particular attention to deepening multifaceted economic ties between Russia and India. Following today's negotiations, we adopted the program for the development of Russian and Indian economic cooperation. This comprehensive document aims at making sure that we can achieve the goal Mr. Modi and I set for ourselves, so that we can increase the trade volume by 2030 to $100 billion. It requires most active efforts of business communities from both countries, aimed at further expanding and diversification of trade volumes and building balanced structure of reciprocal trade. Given the significant trade deficit of Russia, the Russian business, our companies, are ready to manifold increase the purchase from India of a widest range of goods and services. We are interested in it, dear friends, because it makes our economy more resilient. From their part, Indian entrepreneurs, as was demonstrated by the forum, are equally interested in trading with Russia. They have something to offer, so the synergy is obvious. So it would only be logical that projects contributing to greater supplies of Indian products to Russia receive priority attention in implementation of the new export support program recently adopted by the government of Mr. Modi. From my part, I would like to assure the business circles that all useful initiatives aimed at development of mutual economic exchanges will be further supported by Russian ministries and authorities. No doubt, the key role in creating conditions for a truly free trade between our countries is played by the Intergovernmental Commission. It is important that together in close cooperation we eliminate the Romanian customs and administrative barriers which stay in the way of reciprocal movement of goods, services and capitals. In this regard, a strong impetus, as it seems, could be given by rapid signature of a preferential trade agreement between India and the Eurasian Economic Union. Free trade is unthinkable without a resilient system of bilateral settlements and reliable payment and insurance mechanisms. Tangible advantages are offered by the use of national currencies. It makes it possible to ensure uninterrupted financial transactions regardless of external developments. And obviously, accessibility of transport and logistics communications plays a crucial role. A lot is already being done in this regard. Implementation of the project to create the corridor south-north from Russia and Belarus to the Indian Ocean is ongoing. And infrastructure modernization of the Northern Sea route is being modernized in order to use it for the supplies of Indian goods to the world markets. Obviously, the cooperation of our two countries should not be limited to trade alone. We should move on and enhance our industrial cooperation. Together, we should create new cutting-edge products and strengthen technological alliances. First and foremost in such advanced and knowledge-intensive sectors as digitalization, autonomous robotics, pharmaceuticals, including synthesis of efficient pharmaceuticals and production of high-tech medicine equipment. We are ready for broad cooperation with India in the field of artificial intelligence, where our countries have already advanced a lot. Russia is interested in participating in the as I've just mentioned it to Prime Minister, we are ready to participate in the Summit on Artificial Intelligence scheduled to take place in India in February 2026. We will send a representative delegation. In conclusion, I would like to stress once again further strengthening of Russian-Indian trade and investment ties and close cooperation between business communities effectively contributes to economic growth and development and greater well-being of our citizens, and therefore it meets the fundamental interests of our countries and peoples. I would like to wish to the participants and organizers of the forum all the best. Thank you for your attention.
Thank you, Excellency, for sharing your vision on the immense potential of bilateral trade. Excellencies, now I respectfully invite Honorable Prime Minister of India, Shri Narendra Modi ji, to deliver his concluding remarks.
Your Excellency, my friend राष्ट्रपति पुतिन, भारत और रूस बिजनेस के सभी लीडर्स, देवी और सज्जनों, नमस्कार। इंडिया रशिया बिजनेस फोरम, मैं समझता हूँ कि राष्ट्रपति पुतिन का ये बड़ा महत्वपूर्ण इनिशिएटिव रहा कि इतना बड़ा डेलीगेशन लेकर के आज इस कार्यक्रम का हिस्सा बने हैं और आप सबका मैं हृदय से बहुत बहुत स्वागत करता हूँ और मेरा भी आप सबके बीच आना एक बहुत प्रसन्नता का अवसर है। इस फोरम से जुड़ने के लिए और अपने बहुमूल्य विचार साझा करने के लिए मैं मेरे मित्र राष्ट्रपति पुतिन का हृदय से बहुत बहुत आभार व्यक्त करता हूं। बिजनेस के लिए सिंप्लीफाइड प्रिडिक्टेबल मैकेनिज्म बनाए जा रहे हैं। भारत और यूरेशियन इकोनॉमिक यूनियन के बीच एफटीए पर चर्चा शुरू हो गई है और साथियों हम अलग अलग विषयों को लेकर के भी, जैसा अभी पीयूष जी ने उल्लेख किया था और जैसा राष्ट्रपति जी ने जो संभावनाओं का वर्णन किया है, उसे देखते हुए हम बहुत कम समय में बहुत बड़े लक्ष्य हासिल कर सकते हैं। बिजनेस हो या डिप्लोमेसी, किसी भी साझेदारी की नींव आपसी विश्वास है। भारत रूस संबंधों की सबसे बड़ी शक्ति यही विश्वास है। यह हमारे साझे प्रयासों को दिशा भी देता है और गति भी देता है। यही वह लॉन्च पैड है जो हमें नए सपनों, नई आकांक्षाओं की उड़ान भरने के लिए प्रेरित करता है। पिछले वर्ष राष्ट्रपति पुतिन और मैंने 2030 तक द्विपक्षीय व्यापार को $100 बिलियन का उस लक्ष्य को पार करने का हमने निर्धार किया था। लेकिन कल से मेरी जो राष्ट्रपति पुतिन से बात हो रही है और जिस प्रकार के पोटेंशियल नजर आ रहे हैं, मुझे नहीं लगता कि हमें 2030 तक इंतजार करना पड़ेगा। ये मैं साफ देख रहा हूं। हम उस लक्ष्य को समय से पहला पूरा करने के संकल्प के साथ आगे बढ़ रहे हैं और मेरा विश्वास बढ़ रहा है। टैरिफ और नॉन टैरिफ बैरियर्स को कम किया जा रहा है, लेकिन साथियों, इन प्रयासों की असली शक्ति आप जैसे बिजनेस लीडर्स हैं। आपकी ऊर्जा, आपका इनोवेशन और आपका एम्बिशन, यही हमारे संयुक्त भविष्य को आकार देते हैं। फ्रेंड, पिछले 11 वर्षों में भारत में जिस स्पीड और स्केल के साथ हमने बदलाव किए हैं वह अभूतपूर्व हैं। रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म, इस सिद्धांत पर चलते हुए भारत तेजी से विश्व की तीसरी सबसे बड़ी इकोनॉमी बनने की और आगे बढ़ रहा है। और 11 वर्षों की इस रिफॉर्म यात्रा में हम न थके हैं, हम न रुके हैं। हमारे संकल्प पहले से ज्यादा मजबूत हैं और हम लक्ष्य की दिशा में बड़े आत्मविश्वास के साथ बहुत तेज गति से आगे बढ़ रहे हैं। जीएसटी में नेक्स्ट जनरेशन रिफॉर्म और कंप्लायंसेस में कटौती, ऐसे कदम उठाए गए हैं ताकि ईज ऑफ डूइंग बिजनेस को बढ़ावा मिले। डिफेंस और स्पेस को प्राइवेट सेक्टर के लिए खोल दिया गया है। इससे इन सेक्टर्स में नए अवसर बने हैं। अब हम सिविल न्यूक्लियर सेक्टर में भी नई संभावनाओं के द्वार खोलने जा रहे हैं। यह केवल एडमिनिस्ट्रेटिव रिफॉर्म नहीं, बल्कि माइंडसेट रिफॉर्म्स हैं। इन रिफॉर्म्स के पीछे एक ही संकल्प है, विकसित भारत। फ्रेंड्स, कल और आज आपके बीच बहुत ही उपयोगी और सार्थक चर्चाएं हुई हैं। मुझे खुशी है कि भारत और रूस के सहयोग के सभी क्षेत्रों का इस बैठक में प्रतिनिधित्व किया गया है। आप सभी के सुझावों और प्रयासों के लिए मैं आपका हार्दिक अभिनंदन करता हूं। मेरी ओर से हमारे सहयोग को आगे बढ़ाने के लिए कुछ विचार आपके सामने मैं रखता हूं। पहला, लॉजिस्टिक्स और कनेक्टिविटी के क्षेत्र में आज की बैठक में राष्ट्रपति पुतिन और मैंने हमारे कनेक्टिविटी के पूरे पोटेंशियल को रियलाइज करने पर बल दिया है। आईएनएसटीसी या तो फिर नॉर्दर्न सी रूट यानी चेन्नई व्लादिवोस्टोक कॉरिडोर, इन पर हम आगे बढ़ने के लिए प्रतिबद्ध हैं। जल्द ही इस दिशा में प्रगति होगी। इससे ट्रांजिट टाइम घटेगा, कॉस्ट कम होगी और बिजनेस के लिए नए मार्केट्स खुलेंगे। डिजिटल टेक्नोलॉजी की ताकत के साथ हम कस्टम्स, लॉजिस्टिक्स और रेगुलेटरी सिस्टम को वर्चुअल ट्रेड कॉरिडोर से जोड़ सकते हैं। इससे कस्टम्स क्लियरेंस तेज होगा, पेपर वर्क घटेगा और कार्गो मूवमेंट अधिक सीमलेस बनेगा। दूसरा, मरीन प्रोडक्ट्स। हाल ही में रूस द्वारा भारत से डेयरी और मरीन प्रोडक्ट्स के निर्यात के लिए भारतीय कंपनियों की लिस्ट में विस्तार किया गया है। इससे भारत के एक्सपोर्टर्स के लिए नए अवसर बने हैं। भारत के हाई क्वालिटी मरीन प्रोडक्ट्स, वैल्यू एडेड सी फूड, प्रोसेस्ड फूड, इसकी बड़ी मात्रा में ग्लोबल डिमांड है। हम कोल्ड चेन लॉजिस्टिक्स, डीप सी फिशिंग और फिशिंग हार्बर्स के मॉडर्नाइजेशन में जॉइंट वेंचर और टेक्नोलॉजी पार्टनरशिप बना सकते हैं। इससे रूस की डोमेस्टिक डिमांड भी पूरी होगी और भारतीय उत्पादों को नए मार्केट भी मिलेंगे। तीसरा, ऑटोमोबाइल सेक्टर। भारत अफोर्डेबल, एफिशिएंट ईवीज, टू व्हीलर्स और सीएनजी मोबिलिटी सॉल्यूशंस में आज ग्लोबल लीडर है। रूस एडवांस मटेरियल का बड़ा प्रोड्यूसर है। हम मिलकर ईवी मैन्युफैक्चरिंग, ऑटोमोटिव कंपोनेंट्स और शेयर्ड मोबिलिटी टेक, इसमें साझेदारी कर सकते हैं। इससे हम न केवल अपनी जरूरतों को पूरा कर सकेंगे, बल्कि ग्लोबल साउथ, विशेषकर अफ्रीका के विकास में भी योगदान दे सकते हैं। चौथा, फार्मा। भारत आज विश्व भर में किफायती मूल्यों पर उच्चतम क्वालिटी की दवाइयां सप्लाई कर रहा है। इसलिए भारत को फार्मेसी ऑफ द वर्ल्ड भी कहा जाता है। हम दोनों मिलकर जॉइंट वैक्सीन डेवलपमेंट, कैंसर थेरेपीज, रेडियो फार्मास्यूटिकल्स और एपीआई सप्लाई चेन में सहयोग कर सकते हैं। इससे हेल्थ केयर सिक्योरिटी भी बढ़ेगी और नई इंडस्ट्रीज भी विकसित होगी। पांचवा, टेक्सटाइल। भारत के पास नेचुरल फाइबर से लेकर टेक्निकल टेक्सटाइल तक विशाल क्षमता है। डिजाइन, हैंडीक्राफ्ट्स और कारपेट्स में हमारी वैश्विक पहचान है। रूस पॉलीमर और सिंथेटिक रॉ मटेरियल्स का बड़ा प्रोड्यूसर है। हम साथ मिलकर रेजिलिएंट टेक्सटाइल वैल्यू चेन बना सकते हैं। इसी तरह फर्टिलाइजर, सिरेमिक्स, सीमेंट मैन्युफैक्चरिंग और इलेक्ट्रॉनिक जैसे क्षेत्रों में भी सहयोग की कई संभावनाएं हैं। साथियों, सभी क्षेत्रों में सहयोग बढ़ाने में मैन पावर मोबिलिटी की महत्वपूर्ण भूमिका है। भारत आज दुनिया की स्किल कैपिटल के रूप में उभर रहा है। हमारा युवा टैलेंट टेक्नोलॉजी, इंजीनियरिंग, हेल्थ केयर, कंस्ट्रक्शन, लॉजिस्टिक्स, हर क्षेत्र में ग्लोबल रिक्वायरमेंट्स को पूरा करने की क्षमता रखता है। रूस की डेमोग्राफिक और इकोनॉमिक प्रायोरिटीज को देखते हुए यह साझेदारी दोनों देशों के लिए अत्यंत उपयोगी है। जब हम भारत के टैलेंट को रूसी भाषा और सॉफ्ट स्किल में ट्रेनिंग देंगे तो हम मिलकर एक ऐसी रशिया रेडी वर्कफोर्स तैयार कर सकते हैं जो दोनों देशों की शेयर्ड प्रॉस्पेरिटी को गति देगी। फ्रेंड्स, आज हम अपने दोनों देशों के नागरिकों के लिए टूरिस्ट वीजा पर कई अहम हमने फैसले लिए हैं। इससे दोनों देशों के बीच टूरिज्म को बढ़ावा मिलेगा, टूर ऑपरेटर्स के लिए नए बिजनेस अपॉर्चुनिटीज बनेगी और रोजगार के नए अवसर खुलेंगे। फ्रेंड्स, आज भारत और रूस को इनोवेशन, को प्रोडक्शन और को क्रिएशन की नई यात्रा पर साथ चल रहे हैं। हमारा लक्ष्य आपसी व्यापार बढ़ाने तक सीमित नहीं है। हम पूरी मानवता की भलाई सुनिश्चित करना चाहते हैं। इसके लिए ग्लोबल चैलेंज का स्थायी समाधान तैयार करना है। भारत इस यात्रा में रूस के साथ कंधे से कंधा मिलाकर चलने के लिए पूरी तरह से तैयार है। मैं आप सबसे कहना चाहता हूं, कम, मेक इन इंडिया, पार्टनर विथ इंडिया एंड टुगेदर लेट अस मेक फॉर द वर्ल्ड। इन्हीं शब्दों के साथ मैं राष्ट्रपति पुतिन और आप सभी का आभार व्यक्त करता हूं। बहुत बहुत धन्यवाद।
If I think about the movie business and the love that Indians have for the movie, cinema goers have, I think that's uncontested. But there's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now.
Mm-hmm.
You know?
Yeah.
It's available everywhere, right?
Correct,
on my
correct.
phone, on my laptop, on my smart TV.
Yeah.
Does that keep you up at night?
No, basically, for the first time, I mean, cinema has gone through a hell of a lot, right from the beginning. And you must have read the history as well. I'm sure you've done your homework with the Spanish flu coming in. People thought that, cinemas will not remain. But cinema survived everything, because the experience of going out and watching on the big screen is very different to watching anything at home. However, when COVID happened, I think that raised the decibel levels a hell of a lot, because for the first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. So I think this has never happened. Lots of disruptions, as I said, have happened. Lots of distractions have happened. Disruption, I know, is the name of your program, but I find it a very destructive word. So,
it can be both ways.
Yeah, I just find that disruption is too extreme a word. So I think a lot of distractions happened. But this was a big one. This was a body blow to the industry. This is a coup de grace, as they say. Because imagine being shut for so long. So when you're shut for so long, lots of things happened around it. One is that people were incarcerated at home. They couldn't go out, but they wanted to still consume content. They still wanted to be entertained, and the only way they could get entertained is by watching, streaming platforms. Secondly, shooting stopped. So therefore, new content did not get created, and therefore the supply side also got impacted. So demand side got impacted because demand, suddenly they were at home. So the habit of going out, there was also some trepidations of whether we can go out or not. And supply side got disrupted because obviously shooting stopped. So I think that period had a very big impact. And suddenly, there was so much content on the small screen OTT platforms. There was so much stickiness because people were waiting for, what is the next TV show coming. Plus, one more thing that happened is that prior to COVID and prior to cinema shutting down, only TV shows were very popular. But because there was no content available, even movies started coming. And even the producers, the film fraternity, because in India, movies are still very fragmented. Production houses are not like you have in the US, where you have 4 or 5 studios who are making movies. Here, if there are 1,200 movies that get made in a year, there are about 5,000 producers across the country. So I think I don't blame the producers, because their holding cost also was piling up. So they also said, okay, let me monetize my content, and straight away sell it to a platform, because the platforms also were starved of content. So instead of making TV shows the way they were earlier, they said, okay, doesn't matter what content it is, let's just buy it and play it. So that had a big impact. And so therefore we took a long time. So I thought, to be honest with you, that it won't take that long once we open in 2020.
You thought people will flock back?
Yeah, I thought they'll flock back, and they did. Because there were some very big movies and some big producers like Rajamouli and even KGF. They waited. They had the waiting power as well. And when they came, consumers were still starved of going out. They still wanted something big. So suddenly we saw a huge spike where RRR, KGF, lots of movies came, and people came back. So I said, wow, this is fine. Business is back to usual. But then I didn't realize that the backlog of no shootings happening still remains. The habit changes still remained. And therefore, it took us at least two and a half years to come back. There were some green shoots in the middle.
But are you back? Are footfalls and occupancy rates at pre-COVID levels?
In South, yes. So if you look at the southern film industry has always been very robust, and because the movie going habit is very strong and the content flow is also very strong. So South, I would say, is almost back, maybe more than 90%. Hollywood is also back because Hollywood actually got disrupted not just because of COVID. Hollywood got disrupted or had a bit of a setback also because of the Hollywood strike,
the
screenwriter strike. So therefore 2024-25 was not very good for every angle. But 25-26 onwards, we are back now to where we were. We are not exactly at the same occupancy level which we were earlier, but we are getting there.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया, आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty.
Plot a trip from one end of the city to the other and you'll find multiple routes. You can also choose what mode of transport you want to take. For example, taking a bike and zipping through traffic may be faster than taking the train. But there's an element of risk. Statistically speaking, there are more road accidents than train accidents. Now, stretch that analogy just a little bit to talk about investment style and strategy. Mutual fund managers have certain approaches to portfolio management. Value, growth, momentum, quality, growth at a reasonable price, or maybe a mix of some of those. What do each of those styles entail? What is the element of risk? That's what I'm talking about today, or asking about today. But more importantly, should it bother you at all? Does it matter what you choose? Does it affect the outcome for you? This is MoneyWise on NDTV Profit, and I'm Alex Matthew. The person who's going to answer all of those questions sitting in front of me, Mohit Gang, co-founder and chief executive officer of Moneyfront. Mohit, as always, thanks so much for taking the time.
Thank you, Alex. Always a pleasure speaking to you.
So let's talk about this, right? Investment style. And these are necessarily, I think, the need for the investor to define certain things and the need for the seller of a product to also define certain things so it becomes easily identifiable. Is that the reason why you have these defined styles?
Look, I would say these are varying philosophies, right? Not necessarily you and I as a buyer kind of relate to them or pay so much attention to them. Actually, in my personal experience, I haven't seen many investors paying so much attention to them. Yes, few savvy ones do pay, but globally, these are acclaimed philosophies of being successful at the art of investing. You can't be everything everywhere. You have to choose your path. And as you rightly put out that analogy, so my analogy is there are many paths to God and you choose the one which you like or which you think will be more agreeable to your own.
I like your analogy better. Frankly,
I think in Mumbai your analogy works.
You want to start the show again, we can start with that analogy. But having said that, no, let me ask you this. Let's define these styles, right? So that everybody's on the same page and then we can talk about individual mutual funds and how they approach things. So value is something that a lot of people relate to. It's spoken about a lot because frankly over the long term it generates such significant wealth or has generated for somebody like a Warren Buffett or certain other people. How do you define it?
Look, I think Warren Buffett or perhaps a Benjamin Graham are the known philosophers of this philosophy, right? So, and they have given fundamental rules, and they never go out of context. Basically, you are investing by virtue of finding reasonable value at a reasonable price. Now, there could be multiple parameters to it, depending from industry to industry, stock to stock. It could be earnings related, it could be book value related, it could be enterprise value related or EBITDA related, right? So, but the underlying philosophy is same, that you have to find some value or some merit in terms of allocating money, allocating your capital to fundamentally strong sectors or spaces where you think the valuation will grow because of the underlying growth or because it is currently undervalued.
So, and let's talk about this. You've mentioned a couple of them, Benjamin Graham, Warren Buffett, and we've spoken about Warren Buffett on this program itself. Ramesh Damani, who is another proponent of the value style, spoke about his mentor, effectively, or his guru. And he spoke about how Warren Buffett's style itself changed over a period of time. It used to be, at one point of time, a cigar butt approach, where effectively you're buying companies at dirt cheap values and you're not really worried about whether they're great companies or not. And then over a period of time, once he met Munger and once he evolved his philosophy, he was okay paying a little bit more, but getting companies that had strong cash flows and strong businesses. The moat is well defined, all of those things. But which mutual funds right now abide by or use the value style currently in the Indian market?
Got it. Look, so I think the cigarette butt approach right now in the current market context, whether be US, globally or in India, is a little difficult to follow given that there's nothing cheap, right? I think everything comes with a premium. Any good company you go out there comes with a premium. But having said which, I think few of the fund houses which I genuinely think follow the value philosophy intrinsically, I think ICICI, with S. Narain at the helm, they build their franchise around the Pro ICICI Value Discovery Fund. It was called Discovery Fund before, but it's called Value Fund now. So that's their core philosophy. It's just the undertone of all their funds, which is looking for deep value. Now, deep value is a myth, but looking for some value and looking for some contrarian bets as well, right? So they don't shudder to go there.
Small point there. Deep value is maybe not a myth, but deep value is apparent to everybody in retrospect.
Absolutely, possibly, yes. That could be one way of putting it. If you actually uncover something that, yes, in retrospect. But again, the point is, Alex, it's very difficult to find something at substantial discount which has not been covered by the market. Though with their resources, they can. HDFC was one. HDFC was deeply value oriented when Prashant Jain was at the helm. I think with Navneet Monod coming in, the things have changed a little. They have a blend now. They have different styles of fund managers, all forming a good bouquet and giving everything to everyone. But I think that inherently runs in the blood of HDFC, that they are also more value oriented, again can go contrarian at certain stages in life. And then I think value is a part of few of the larger fund houses in a mix and match scenario, right? So they mix it up with growth, they mix it up with GAP, they mix it up with buying at reasonable prices. So in some blend, some way or other, I think there are a few larger fund houses who again follow this one, because no fund house can today say that we don't follow the value approach, because that's not doable, right? If you're in the business of finding good stocks, then you have to be a value hunter.
So let me ask you this. Contrarian and value are often spoken about in the same breath, though they're not necessarily the same. It's like comparing two fruits that are of the same family, but not necessarily the same thing. How would you describe it and explain the difference between the two? And we've spoken about value. So how does contrarian differ from that?
Look, I think a contrarian could be, let's say, an FMCG, right? But it's not deep value. It's not value at all. The price to earnings multiples are still at a reasonable level, if not high 60s, 70s, but they are 40, 50s, right?
Yeah, they're expensive.
So that's pretty expensive given the kind of growth the sector is running. But the sector hasn't worked well for many, many years now, right? So it's not value for sure. It could be a contrarian pick right now, given that a lot has happened in the country on direct and indirect taxes both, and the sector is likely to show some signs of rise up again. So that could be one way of looking at it. Value and a little bit of a contra could be an IT.
Okay.
Right? Value in the sense, because from the historic averages and from the historic multiples, the IT pack is trading relatively cheaper currently. And also contrarian because last 1 year has been extremely bad for the IT
earnings,
pack. Right? So my sense is that's kind of where you draw the line between a contra and a value.
So when it's, okay, so I got the distinction. So essentially if it's most of the street is looking at something unfavorably.
Absolutely.
It's not necessarily true that it's a deep discount or if it's available at cheap, but the prospects for growth according to the street are not very high, and you believe as a contrarian that is false, and there's actually a reason to believe that that's going to go up. Okay.
Completely.
So there is a distinction, and you need to bear that in mind. I ask because there are a few contra funds out there, and some very popular ones at that. SBI has one.
Absolutely. SBI has one, and it's a pretty popular and with a great track record. So there have been good contra pickers along with a mix of value. That's what the SBI philosophy is, right? So it's a good fund.
Okay. So you mentioned growth at a reasonable price, or GARP as it is called, and you've said that it has some elements of value in it. How is it different from value though, and how does it relate to growth, which we haven't yet spoken about?
So look, I think growth in a pure way will mean that you are chasing companies which are plowing back their reserves, who are plowing back their profits back to expansion, right? So that's where you're growing. And India typically has been a growth market. It's never been a dividend yielding market, or never been a market where you look for cash rich companies. Though now a few sectors like IT and all are turning cash rich.
Or an ITC.
Yeah, absolutely. So there are few FMCG players who are sitting on piles of cash, and not those growth oriented companies who are not putting back the money into brownfield or greenfield expansions, right? So growth, by growth, you mean that the capital is getting deployed back in expanding, setting up new projects, expanding the workforce, so on and so forth. So companies which are growing, but which are still coming at reasonable prices. That's the GARP philosophy. Now, growth can be bucketed into multiple things. There are fund houses who chase growth with quality. There are fund houses who chase growth coming at reasonable prices. And there are fund houses who somehow, in some pockets, also play pure growth, right? So when you invest in new age companies or the new tech companies like the Eternals, the Nykas, the Swiggys of the world, you are chasing pure growth. You aren't chasing reasonable prices out there. There aren't no prices. There are no multiples which you can quote when you are running losses, right? So you are chasing pure play growth in those spaces, and there are fund houses who are comfortable doing that. Let's say Mirai is a fund house who's been pretty bullish on the new age sector. Helios is a fund house who's taken good bets on Eternal and other companies, right? Even Paytm for that matter. So there are fund houses, or there are philosophies which blends growth at reasonable prices, or pure growth and aggressive growth. So you can devise a formula as it suits you.
Okay, so we've talked about value. We've essentially talked about growth, and growth at a reasonable price. There's quality. How does quality work?
That's a very interesting concept, and globally it's a big concept, Alex. Now, quality means that you are chasing high quality management, great pedigree, great vintage, good return on capital and good return on your assets, right? So ROE, ROC and ROAs, these three multiples become extremely critical when you're figuring out good quality and consistent profitability growth, consistent
essentially
EPS
all
growth.
of the metrics that will tell you how efficient you are at utilizing the capital that you are generating.
Absolutely, right? And let's say, I'll just give you an example and a context. 5 years back in Indian markets, when you used to go back to fund managers or fund houses and ask, what's your definition? Bulk of them would say, we are quality-oriented fund managers. And when you would ask, what do you mean by quality? What do you do and what do you avoid? The clear-cut answer was, we avoid sectors like real estate, we avoid sectors like gems and jewelry, we avoid sectors like textiles, we avoid PSUs, we avoid metals. Right? So these were sectors.
Infrastructure was also
the borderline kind of thing. But these are sectors where you realize that management can do some trickery. Management, there is a high degree of the cash element running in these kind of companies. There is opaqueness. The things are not very clear. So there was a clear demarcation. Plus PSUs, the government policies could have changed any time. It was difficult to figure out what will happen. So that was the definition of quality. That we avoid these. That's my definition of quality. Then came the 2020 to 22 cycle, where PSUs, the railways and everything just went out of the roof, because they were deep value. They were intense deep value stocks, right? And the quality definitions overnight changed for most of the fund houses. Today, real estate is not a taboo. PSUs is definitely not a taboo for anything. So the quality definitions have evolved over a period of time, and now it is more a balance sheet definition of how strong the balance sheet looks, how less the leverage is, and few other parameters. But I don't think so there is an untouchable, so to say, in the market now. And few of these quality fund houses, let's say Axis was a very high quality fund house, DSP, UTI, these three were extremely quality conscious in their stock pickings, and they went through a very bad patch.
Yes.
Right? And the ones who did well, Alex, in that cycle were likes of HDFC, likes of Pru ICICI, because HDFC was extremely deep value, which meant they had very heavy exposure in PSUs and those railway stocks which were beaten down long back, even some defense names. And suddenly after the COVID cycle, these were the names which were really flying all over, right? And that was actually the legacy of Prashant Jain, because Prashant Jain had
picked those, and those remained in the portfolio, and their time under the sun finally came. And you've named a few of these as well. You've named a few of the schemes or fund houses that operate under quality. I'll circle back to that in just a bit. But there's one that we haven't spoken about, one style, which is momentum.
Absolutely.
And if you look at the last 5 years, there have been large patches of time, Mohit, when momentum has actually, taken everybody else out of the race.
Yes.
Who operates with momentum?
Look, it's a great parameter, not just in India, but globally. In fact, in growing markets, in emerging markets, you will see a trend towards momentum across the globe, right? If you see last 15 years of data in India, from 2010 onwards till date, there have been almost 7 years where momentum has been amongst the top 3 parameters, and even value for that matter, right? But value comes intrinsically to any market, but momentum is not a factor which comes intrinsically to any market. So Indian markets predominantly have been a momentum market, which means prices chase prices. More money begets more money, right? More favor means more favor. When a bandwagon moves on to a particular sector or latches on to a particular stock, until the story crumbles because of some news event or some trigger event, the bandwagon just keeps...
don't blame the news.
No, not at all. I think in a positive way, because obviously you guys amp the entire thing, even a positive thing or a negative thing. It just gets amplified.
The velocity carries it through.
Absolutely right. So and it's such a huge market that by the time it reaches the lowest tier, the momentum just keeps increasing. It is a self-fulfilling prophecy in Indian markets, and that's why momentum tends to do very well. So if you see markets of 2024 and 23 partially, they were high momentum markets, and philosophies like quant, they did exceedingly well, because quant has a philosophy, they have a model called VLRT, right? Which is which actually lays emphasis on momentum driven, liquidity driven parameters. So liquidity is nothing but it's momentum. So wherever the liquidity flows, you flow with the liquidity, and
who
you flow
else
with
apart from quant? And quant is one of the most popular or famous practitioners.
Look, there are multiple fund houses which play it differently. So let's say a Nippon would play it in some form or fashion, depending on the macro cycle and a sector cycle.
Right.
So they would play a sectoral momentum, not per se a stock level momentum. Right. Even Helios, for that matter, would play some bit of momentum depending on their elimination philosophy. So they would eliminate first, and then basis their parameter, they will do that. And there are multiple other smaller fund houses. JM would, let's say, play a momentum philosophy very selectively. Even SBI, for that matter, would play, but wherever they have high conviction on a sector reshaping itself.
They do have a quant methodology which allies to their research methodology. So, but the question that I have, and we've discussed all of the major styles, the question that I have is, what has worked, and these obviously move in cycles, we know this, but what has the data thrown at you? What does the data show? Every style will have had its time under the sun, right?
Look, I think if you, as I said, from 2010 to 2025, if you try and cover the markets, I think there are times when value totally outlives any other parameter. But to me, value and momentum, a combination of these two parameters, if you have in your portfolio, if you have these two blending styles, I think you have a great portfolio going. You can very well try and cover it up with a low volatility or a quality, but even if you don't have those parameters, it's fine. Quality, yes, it does well, but in very, very long cycle. It is good to have that, but it is not an essential part in a market like India. In a market like India, you need to have a strong value undertone and a strong momentum undertone, and you blend both. If you see the 10-year track record, Alex, both value and momentum are almost identical in returns, and they're the top out of all the factors you put together, beating Nifty 50 and Nifty 100 and Nifty 500 by a handsome margin. I think they should be at around 17 odd some percentage points, basically, and Nifty 50 and 500 would be at around whatever 12 to 13 odd % band for a 10-year track record. At a 15-year and a 20-year track record, if you track these parameters, momentum completely outlives any other parameter in India.
Okay.
Right.
What about the others though?
As I said, low volatility could be one, quality could be one, basically, and there are multiple parameters. Quite a lot of them have not come into India. There is an alpha, you sometimes tend to bucket even size as one of the factors, right? So, but all in all, my sense is between value and momentum, the bulk of the play happens there.
So, what about fund houses where it's not very clearly defined? And the reason I ask is that in an ideal world, Mohit, you would want to gravitate towards a fund manager that has a philosophy that fits in with your own.
Yeah.
If you can define your own expectations and philosophy, there's nothing like it, right?
Yeah.
Where you say that the guy who's managing your money is not going to be doing something that is completely different from what you expect. And so when you have a meeting of expectations and outcomes, then that's the ideal. But it very rarely happens. So the reason I'm asking you this is, how do you talk about schemes like, for example, a Helios, where they have, as you've pointed out, an elimination approach where they cut out the chaff and they want to focus on the good stocks and they choose from that, but they have a parameter of 8 fundamental aspects, and one of those is value. One of them is cash flows. So how do you then judge what the bent is or what the style is?
Look, it's very difficult unless you closely interact with the management of the fund house. And that's where basically people like you and I come into picture, right? Because you have to deeply sit with them and try and understand what are they trying to do. And most of these fund houses, they now have complex models. So it's not a simple one parameter model or a broad level philosophy or something like that. Even if you go at Motilal, it's a QGLP way of doing things, which have become GQLP over a period of time. So it was quality first and growth second, but now it's become growth first and quality second, because the cycles have changed, as I told you, how the definition of quality got changed.
How many other fund houses, and I'll come back to, I'll remind you what you were talking about, but how many other fund houses have actually shifted a little bit from what they were doing in your experience?
Oh, quite a bit actually, and there are some who
HDFC you mentioned.
HDFC has shifted from a deep value contrarian style fund, being a fund, to being a blended fund house, having everything under the banner, because at that level and that scale, Alex, perhaps the thought process is that we should have everything for everyone.
Sure.
We should have, so there will be a Roshi Jain with her philosophy, there will be a Gopal Agarwal with a, and there will
Roshi's
be,
on her way out.
Roshi is, actually that news is out, and they've also figured out a replacement. And the guy replacing also is a great guy with a great pedigree. But all I'm saying is Chirag has his own style out there, right? So they are all very different styles of fund managers trying to cater to the larger philosophy of having everything under the banner.
Sure.
So in any market cycle, there will be 2 funds of HDFC which will always do good. And that's a very smart way of doing things, because you need to have a solution for everyone. You cannot go out of favor in Indian markets.
But who else? Off the top of your head, who else has changed?
Has changed. I think, to my mind, Axis has changed quite a lot. So from just being quality fund managers to being quality plus growth and a little bit of momentum, with Ashish Gupta coming at the helm and a lot of changes happening in the fund management team. To my mind, I think Mirai, from being extremely quality conscious, has also become new age, growth conscious, momentum conscious a little.
Sure.
So that's the change which has happened. Motilal for sure has changed from being QGLP to being GQLP.
Sure.
Right. My sense is I see undertones of quant changing from being a poster momentum boy now to being a little more balanced kind of a thing. Hopefully it'll take time for them to get into the new avatar.
So let me ask you this, and we're coming to the crux of the conversation. We've kind of laid the foundation so far. You've already mentioned that value and momentum are kind of strategies that you like. But my question to you is, if you have a diversified fund, a flexi cap fund, and ultimately these metrics like your portfolio commonality. What do you call it?
The overlap.
Yeah. Portfolio overlap. You need to worry about that.
Yes.
But you can have two diversified funds that have completely different philosophies.
Oh, absolutely.
The question is, should you? Like, for example, should you have two flexi cap funds? In the broader market fund, certainly it makes sense, right? In a small cap fund, you can have one that is more aggressive than the other. Should you have multiple funds with different philosophies so that in that form also you are diversified, not just in market capitalization?
Look, Alex, to me, always, and I've said that a number of forums, time in and time out again, that the right diversification is not the size diversification.
Sure.
It's not at all a market cap based diversification. The right diversification is only a fund manager diversification or a style diversification, right? When I say fund manager diversification, you would want an S. Narain, you would want a Vineet Sambre, you would want a Harsha Upadhyay, you would want a Chirag Stilward in your portfolio. You want their philosophies, you want a Samir Arora philosophy, and you want a Sandeep Tandon philosophy, right? And that's a fund managerial. In layman word, to make it very simple, we say fund house mein diversify kar lo.
Correct.
But underlying what we want to say is investing styles ko differ karo. That's the most important part, because that will give you a fund which is dominant in all market cycles.
For a guy who wants an all-weather kind of a portfolio, what is the combination in your opinion?
That's a difficult one. Honestly, you have to get the great value guys, which means you have to get the HDFCs, the ICICIs, and the SBIs of the world in some form or shape in your portfolio. That's the core of your portfolio. Those are inherently value folks. Also, I think somewhere size makes you more conscious of your image and makes you more consciously gives you that
edge,
baritone of value, if I were to call so, right? And the smaller ones can play around. So you need to have those smaller ones, the Invescos of the world, the Helios of the world. Quant, you have to test along with the time as to how well the philosophy continues, but you need to have these new names to give you that growth. You need to have quality names, which will mean a blend of UTI, Axis, Mirai, DSP. So that's the quality pack. Value pack was different, so that's the quality pack. And the momentum pack keeps shifting because everyone plays momentum.
You choose one of each.
You choose amongst these packs that I want to have a blend of all of these. I want to have one or two names from quality. I want to have one or two names from the momentum folks, and I want to have maybe one or two names from the value folks.
So to be clear, we're not saying buy all of the schemes available. We're saying pick and choose and in the kind of...
and then you maybe bucket it and say, okay, at which market cap the guy is better than the other, right? So it's possible that a Nippon is better playing momentum along with value combination in the small cap bucket, right? Or maybe he's also good playing it in the large cap bucket. Shailesh Bhan is extremely good when he plays it in the large cap bucket, basically, right? So that's the way you have to figure it out.
So, and we'll carry this forward in the next chat. I'm sure we'll have lots to talk about when we speak about these individual strategies. But thanks so much for laying this out for us today.
No, always a pleasure, Alex. And as I said, many paths to God, you choose yours.
Absolutely. On that very insightful note, thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
This is not a family business of movies. Tell us a bit about those beginnings.
I went to the trucking business, Amritsar Transport Company, ATC. I struggled. My father had also a cinema, which he acquired in 1978. I felt that Hollywood can be one differentiating point because Hindi movies used to get played in so many cinemas.
This was the beginning of multiplexes in India.
97 is the first multiplex that I was fortunate to open. I was obviously extremely nervous because cinemas were tiny, and I said, my God, will people come to small screen? People loved it, and the rest is history. 1 kilometer long queues were outside.
There's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. Does that keep you up at night?
I mean, cinema has gone through a hell of a lot. When COVID happened, first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. This was a body blow.
IRL experience has now become important as
What is
well
IRL?
in real life.
Achha, in real life, okay, fine.
I'm following my Gen Z.
Home entertainment and out of home entertainment have always coexisted. There is not an either or.
People actually crying in Sayyara as they showed on online reels.
That is what gets me excited and positive about this business. When a content connects, I mean, there's no end.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रेजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year.
Namaste, Putin. What a warm welcome it has been for the Russian president on his India visit, and a very warm welcome to you as well on NDTV Profit. I'm Vikram Oza, and our special coverage continues of the 23rd India-Russia Annual Summit. Yes, it's clear that this meeting isn't just about warm optics or friendly body language. Narendra Modi and Vladimir Putin have unveiled this expansive, future-focused roadmap that is designed to turbocharge a partnership that now runs from fertilizers to fuel, ports to pharma, and yes, firmly into 2030. In just one afternoon, New Delhi and Moscow have signed a a slate of agreements, a major urea plant collaboration, new MOUs spanning food safety, medical sciences, maritime transport, and also consumer protection. Plus, this renewed intent to push forward a free trade agreement with the Eurasian Economic Union. And perhaps the most strategically significant signal of all is that Russia's assurance is coming through of uninterrupted energy supplies to India. And that's a commitment that underscores how, despite the global flux and the shifting of alliances, this relationship between India and Russia for both sides is indispensable. Which is why on NDTV Profit, we are breaking down the trade, the energy kind of pact, and the defense linkages, and the deeper diplomatic signaling that's coming through behind the announcements being made. So what does this summit really mean for India's economic ambitions and its strategic horizon? Let's discuss this with our expert panel. And part of our panel is joining us right now. Veena Sikri, former Indian diplomat and High Commissioner, is with us, along with Jayant Krishna, the Senior Fellow at CSIS. Great to have you both with us. In a moment, of course, we'll have more guests. But, ma'am, Veena Sikri, we've heard the Prime Minister speak, and, you know, he sounded very optimistic. He says that we will not have to wait until the year 2030 for hitting that $100 billion mark when it comes to trade between India and Russia. This against the backdrop of trade that is heavily skewed in favor of Russia. So when you hear what has been said by the Prime Minister and what the backdrop is to the kind of trade that we do with Russia, how significant is this statement to you?
Well, thank you. Thank you for inviting me on your show. Yeah, I think the visit by President Putin is of tremendous significance. It's a very important visit. And I think it has a long-term significance. I do not see it as a tactical visit or something that's happening in the context of a very fractured geopolitical global framework. But I think that our two leaders, President Putin and Prime Minister Modi, have focused on giving stronger foundations to the bilateral relations in a long-term mutually beneficial context. The joint statement has just been released of the agreement between the two sides, and the focus is so much on energy cooperation that will continue under all circumstances. And this is important because there have been sanctions by America on some of the largest Russian companies, but there are other aspects that India and Russia have been discussing, including the Vladivostok-Chennai corridor, the Sakhalin fields, and so on. And certainly a roadmap will come up to continue the contribution by Russia to India's energy security and to India's important concern of having energy supplies for the people at a reasonable prices. So this is a very important aspect of the bilateral discussion. Secondly, I think the trade, you mentioned that, and yes, you're right. You know, when there's a target of $100 billion for 2030 and India's exports are not even $5 billion annually, you do see a very long way ahead. But our Prime Minister has been very strongly optimistic on this and said we may not have to wait till 2030 to reach the $100 billion target. And the mechanism for doing this, the mechanism for increasing India's exports, for giving India access to the very large and sophisticated Russian market is well underway. The FTA, as you spoke about, is going to be between India and the Eurasian, the Economic Union, which is very good because it gives us a wider framework within which to operate. But certainly in terms of the exports to Russia, we're going to see even in the area of, there's some urea deals have been announced, even making, having joint ventures on this and having them in India. Then on IT, information technology, on pharmaceuticals, on access to the textiles and ready-made garments market, the seafood exports, and then access by India seafood exports to the Russian market, and also agricultural products. So there's a very big.
So the scope has gone up. You would have to agree that the scope has gone up, and it's going beyond defense. Brigadier Ramel Dahiya is also with us, defense veteran and former Deputy Director General of the MPIDSA. Great to have you with us as well. But when you look at the dynamics right now, and perhaps I can ask Mr. Krishna this, the Prime Minister, having listed, a sweeping list of sectors whether you look at textiles or healthcare or pharma, EVs, auto components, ceramics, electronics. So many sectors have been covered, and Veena Sikri was just pointing out about the scope of trade that is possible for us to hit that $100 billion mark. The opportunity is big, but which of these sectors do you think the quickest exports can happen from India's side?
So I think one thing is very clear, Vikram, that, these two economies which have had a long strategic relationship, going back to so many decades, with the erstwhile USSR and then with the Russia. But, if you look at our trade relationship, while Russia continues to be India's fourth largest trading partner, but, the overall the trade deficit is in favor of Russia, and which used to be about $3 to $4 billion in 2020 has come to as much as almost $60 billion last year. So I think that is what needs to be plugged. And the areas that you talked about, I think Prime Minister has detailed them rather well. But I think the low-hanging fruits to my mind out of them are four. One is the textile and garment. If India could be exporting it to so many countries around the world, there is no reason why we should not be exporting to Russia. The second category is the farm products, right? I mean, there are different crops, there are different food grains, where and India is gradually emerging as the food bowl of the world, right? I think that's one area where a lot of exports are possible to Russia from India. Shrimps and seafood, marine products. I think this is another category. Russia is a huge consumer of seafood, right? And in India, there are lots of entrepreneurs all over the country, especially in the coastal areas, where such products are available for export, and they are being exported to many other countries in Europe, in the US, and so on and so forth, right? Pharmaceutical is one area. You've seen even with the US has not imposed that 50% tariff on pharma because they need Indian pharma. And so I think that's one area where, again, a lot of exports are possible to the US. So I would think these four are the major categories. Otherwise, the entire laundry list which the Prime Minister has detailed is relevant, and it's worth serious exploration.
Yes.
Because, if you look at today, the basket that we have, almost $65 billion of two-way trade, largely it is, crude oil. And if crude oil goes down because of the American sanction on the two Russian companies, then, we would be very, very far off from the 100 billion target, which they have both the Prime Minister Modi and President, Putin have embarked upon for the year 2030. So I think this is very important,
Yes.
Yeah.
So as we walk through the laundry list, as it were, and Brigadier, perhaps you can tell us, because where does this leave the defense sector right now? Is that equation changing very rapidly? The Prime Minister has spoken about defense and space. These two sectors, now there is private sector participation. So a lot has changed from India's context as well. But when you talk about our traditional defense partners like Russia, what does that really mean when you talk about more private sector involvement in these important sectors?
You see, whenever we talk about India-Russia relations, the first thing that comes to people's mind is the defense relationship. That's because we had overwhelming percentage, a share of imports from Russia. That has gradually come down to about 34%, as your chart showed a few minutes back. We have diversified, but more importantly, we want to start producing our major defense requirements indigenously at home. And therefore, the focus is on joint development and joint production. Now, having said that, we recently signed this agreement, firmed up the agreement on getting the nuclear attack submarine to us for $2 billion, and that will be arriving in 2028, although we wanted it earlier. That's a major deal in itself. In addition to that, there are other deals in works. But having said that, we must also remember that Russians don't give this defense equipment for free. And they are very hard bargainers as far as defense is concerned. Presently, there is another issue with them, and that is because of the Ukraine war. Their ability to export defense equipment is also restricted. So I'm sure that the defense relationship is important. People on both sides must be talking, people concerned must be talking on this. and at an appropriate time, announcements will be made. But I don't think India wanted to make a show of it during this visit.
Yes.
We must understand there are geopolitical sensitivities also involved.
Yes.
Russia and Ukraine, Russia and US are involved very deeply now in resolving the Ukraine conflict. And once that happens, then the relationship will get reset. If we do not want to be showing a red rag to the bull by sort of announcing big ticket defense equipment and all that, where in some sections within the US will start talking about imposing CARSA sanctions against India.
Yes.
And also, we are also signing the economic sort of a free trade agreement with Europe. Europe would be enraged as well. Now, I understand that India exercises strategic autonomy, and we must. And to that extent, I think inviting Mr. Putin to India and giving him a very high-profile visibility, I think itself shows that our relationship matters quite a lot.
Right.
But I think as far as the public face is concerned, we decided to do it more on labor, economy, critical minerals, pharma, and other things.
Yes, no,
So
indeed. I mean,
important
it seems like beyond the defense, there has been a lot more discussion that has taken place on the trade front. Of course, a lot of that defense aspects, they remain shrouded for sensitivity reasons. And like you pointed out, that the USA would be watching, Europe would be watching. But talking about the Ukraine war and what it has brought to the table, I have one more guest joining us on the phone line, and that's Narendra Taneja. He's our energy expert here on the panel. Mr. Taneja, Russia having promised this uninterrupted fuel supply to India, given the sanctions, given the shadow fleets, given the payment bottlenecks, the price caps, how sustainable do you think this commitment could be, even over the medium term?
Well, it's sustainable. Of course, depends on the emerging geopolitical situation, especially involving Ukraine, what happens there, where there would be peace soon mediated by the U.S., or it's probably going to be a frozen war. This is too early to say which direction is going to take. But one thing is clear, that Indian finance, both public sector and the private sector, they're very keen to continue to importing oil from Russia. The simple reason is Russians are offering very good discounts.
I have to interrupt you over there. I'm afraid I might have to interrupt you over there and ask you to hold your thought on this, because I want to come back to it. But we're hearing from the Ministry of External Affairs on the India-Russia summit. Let's just listen to what they have to say.
Of the forum was on the shared ambition of both leaders to expand the economic dimension of our bilateral partnership by increasing our bilateral trade in a balanced and sustainable manner, including primarily by increasing India's exports to Russia, strengthening industrial cooperation, and forging new investment partnerships. The outcomes of discussions during the business and sectoral discussions that have been ongoing over the last 2 days were presented to the two leaders this afternoon. For details on these, I would refer you to our Ministry of Commerce, which has been coordinating these events. Later on in the evening, today, Honorable Rashtrapati Ji will receive President Putin at Rashtrapati Bhavan and will be hosting a state banquet in his honor. Now, as to the focus and outcomes of the visit, both sides have adopted a joint statement, which you might have had opportunity to see. The joint statement testifies to the India-Russia relationship as a time-tested, progressive partnership that is anchored in trust and mutual respect. It reflects the very special nature of our ties and provides a comprehensive framework for further deepening our multifaceted bilateral partnership. In addition to the joint statement, there were several agreements and MOUs that were concluded and exchanged during the visit, some of them in the presence of the leaders this morning. These include agreements on labor mobility, on maritime cooperation, health, culture, trade, media cooperation, as well as several business-to-business MOUs. And I think the details of these are available on our website as well. Economic cooperation, I would say, is the driving impulse and the most important focus of this particular visit. As I said just a while ago, expanding bilateral trade and strengthening economic cooperation requires swiftly addressing non-tariff barriers and regulatory impediments, enhancing Indian exports to Russia in sectors such as pharmaceuticals, agriculture, marine products, and textiles is important to correct the trade imbalance. And each one of these sectors in considerable detail was discussed between the two leaders today, with both of them pointing to the opportunities that existed in these areas and what were the steps that were needed that could be taken by both sides in order to move towards the mutually shared objective of increasing trade in these areas. Agreements in mobility, as I said, and these are two agreements in particular: the agreement on temporary labor activity in both states and the agreement on cooperation in combating irregular migration. They form a centerpiece of the understandings reached during the ongoing visit. Indian skilled workers, especially in IT, in construction, and in engineering, will help meet Russia's labor needs and deepen our bilateral cooperation. In fact, there is increasing interest among Russian businesses and industries to hire skilled manpower from India to support growing economic activities in Russia. The India-Russia Trade Forum that concluded just a short while ago, which the leaders attended together today, thus becomes a very key element of the visit. You would have followed that. Both the leaders gave a joint call for action to their respective businesses to expand the linkages between them. In this context, I would like to point to another very significant outcome of this particular visit, which is the program of economic cooperation going up to 2030 that has been adopted during this particular summit. And it also serves to give overarching guidance to both sides to expand the scope of the economic dimension of this relationship. The discussions today also focused considerably on the proposed free trade agreement that is under discussion between India and the Eurasian Economic Union, which is again expected to help address the issue of the trade deficit. It was agreed between the two sides that negotiations should be fast-tracked for early conclusion within the stipulated timelines. The terms of reference for this agreement had in fact been finalized and signed during the visit just a few weeks ago of the External Affairs Minister to Moscow. I think it was in August of this year when he had co-chaired the India-Russia Intergovernmental Commission on Trade, Economic and Cultural Cooperation with Mr. Denis Manturov, the first Deputy Prime Minister of Russia. During the current visit, both sides also underscored the importance of expediting the discussions and the negotiations on the bilateral investment treaty, which again will help energize investments in both directions. In addition to this, connectivity initiatives were also discussed, including the International North-South Transport Corridor, the Eastern Maritime Corridor, the Chennai-Vladivostok route, and also cooperation along the Northern Sea route. These corridors, again, are expected to energize economic linkages, reduce transit times, and expand our trade access across Eurasia and beyond. India-Russia defense and military technical cooperation remains robust. Russia also continues to support India's Make in India initiative in this domain, including through joint production and technology transfer. This is also an area that was discussed between.
So when it comes to defense especially, there is the entire talk around co-production, and we'll talk about that in a moment, but we're running out of time. But Mr. Taneja, you'd like to finish that thought, because this kind of trade that we're talking about, perhaps I should first take it across to Brigadier. Brigadier, when you talk about this co-production bit, and that's the Make in India push that the Prime Minister has also touched upon in the statement that he made with the Russian president by his side, how much of that push do you see that coming through in the defense manufacturing space now?
Well, I think Russia, first of all, Russia has, as far as intent is concerned, Russia has made it very clear that they are ready to provide help to India in any way that India wants. And no other country is ready to offer that size of technology. They're also talking about, 57F-57, Su-57F. They say that 60% of technology can be transferred. But obviously, we'll have to judge it very, very carefully as to what that means, how much is that we require, and can we really depend upon them to do it in time? Because previously, there have been some hiccups on T-90 tanks, for example, where the promised technology wasn't transferred in time, and delays were involved. Also, there were issues with regard to timely supply of spares. Also, as you know, that INS Vikrant's delivery to India was delayed by a couple of years. So we have to be very, very careful about it. So intent is there, and I think there are negotiations taking place, also probably in air defense weapons.
Correct.
Particularly in S-500 and others, there are discussions taking place. But obviously, I think once there is finality about these projects, programs, these projects,
yes,
that these projects will be declared, not before that.
Correct. But Veena Sikri, if I may come to you as we try and wrap this up, I'm trying to figure out how close we are to this free trade agreement. Negotiations are underway. There are talks that are going on, and both sides are sounding very optimistic. How important is it for this FTA to come through, and how quickly do you expect it to happen?
Well, the TOR, the terms of reference, have already been agreed upon when our external affairs minister was in Moscow. But I think the important point is, certainly the negotiations will be fast-tracked, but the important point is there's so many other agreements around it. I think look at the labor mobility agreement. I think that's very significant, because we are trying to concretize now the interest that Russian entrepreneurs, Russian construction engineers have in looking at the Indian market in the fields of IT, construction and engineering. Now, I think if you have this working out, it's tremendous. These will all come together as components ultimately in the FTA, but I don't think that anybody's going to wait for the FTA to be concluded for these individual segments to be worked on and implemented. So the labor mobility agreement could, start working very soon, because the interest is very serious. And similarly in, connectivity and transportation, those aspects are being worked on directly between India and Russia, and I do see a lot of success in those areas. So I think, judging from what our Foreign Secretary just said, this very important statement that he has made, that these matters are going to go ahead regardless.
Right.
They're not going to wait for saying that only first we'll do the comprehensive FTA and then we'll work for the components. Right. It's rather going to be the other way around, that they're going to go ahead. Energy, for example, is going to be worked out directly between India and Russia, and that's not going to be waiting for any of these components. Similarly, of course, on defense, there's always a lot of detailed negotiations before deals are finalized, but we know that the RELOS, the logistics support agreement, had been finalized between India and Russia, and even the Russian parliament, the Duma, has ratified this agreement. Correct. Obviously, on logistics support, there will be some bits. It's not the only country. We have signed logistics support agreement with several other countries. But certainly with Russia now, you can see advantage in this, not only with the Vladivostok-Chennai corridor, in the Arctic region, and so many other areas where the trade and resources exploration aspects.
So very important takeaway, that it's not going to be really on the FTA getting signed, and we don't know when that will happen, but beyond that, there are several agreements which are very useful, both for India and Russia. But clearly, India-Russia story right now, it's no longer just about legacy defense ties. It's a widening arc that it spans energy security, fertilizer lifelines. There are trade ambitions over here and a fresh geopolitical recalibration that's taking place. This 2030 roadmap, it could be considered as bold. The targets are ambitious, but the signals, both from Delhi and Moscow, they seem unmistakable right now that this partnership is gearing up for a far deeper, more diversified decade ahead. My guests, thank you for joining us. Jayant Krishna, Veena Sikri, Brigadier Rumel Daya, thank you very much for joining us with your insights on this. We'll keep reconnecting with you as we get more clarity. Thanks indeed. And with that, it's going to be a wrap on our special coverage, and we will keep getting you all the details right here on NDTV Profit, but on the special coverage called Namaste Putin. Thank you so much for joining us. I'm Vikram Oza. Good evening.
This is not a family business of movies. Tell us a bit about those beginnings.
I went to the trucking business, Amritsar Transport Company, ATC. I struggled. My father had also a cinema, which he acquired in 1978. I felt that Hollywood can be one differentiating point because Hindi movies used to get played in so many cinemas.
This was the beginning of multiplexes in India.
97 is the first multiplex that I was fortunate to open. I was obviously extremely nervous because cinemas were tiny, and I said, my God, will people come to small screen? People loved it, and the rest is history. 1 kilometer long queues were outside.
There's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. Does that keep you up at night?
I mean, cinema has gone through a hell of a lot. When COVID happened, first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. This was a body blow.
IRL experience has now become important as
What is
well
IRL?
In real life.
That's in real life, okay, fine.
I'm following my Gen Z.
Home entertainment and out of home entertainment have always coexisted. There is not an either or.
People actually crying in Sayyara as they showed on online reel.
That is what gets me excited and positive about this business. When a content connects, I mean, there's no end.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
This is not a family business of movies. Tell us a bit about those beginnings.
I went to the trucking business, Amritsar Transport Company, ATC. I struggled. My father had also a cinema, which he acquired in 1978. I felt that Hollywood can be one differentiating point because Hindi movies used to get played in so many cinemas.
This was the beginning of multiplexes in India.
97 is the first multiplex that I was fortunate to open. I was obviously extremely nervous because cinemas were tiny, and I said, my God, will people come to small screen? People loved it, and the rest is history. 1 kilometer long queues were outside.
There's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. Does that keep you up at night?
I mean, cinema has gone through a hell of a lot. When COVID happened, first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. This was a body blow.
IRL experience has now become important as
What is
well
IRL?
in real life.
That's in real life, okay, fine.
I'm following my Gen Z.
Home entertainment and out of home entertainment have always coexisted. There is not an either or.
People actually crying in Sayyara as they showed on online reel.
That is what gets me excited and positive about this business. When a content connects, I mean, there's no end.
Ajay, thank you so much for talking to us here.
Thanks for having me on your show.
Yeah. So, if I think about the movie business and the love that Indians have for the movie, cinema goers have, I think that's uncontested. But there's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. You know?
Yeah.
It's available everywhere, right?
Correct,
on my
correct.
phone, on my laptop, on my smart TV.
Yeah.
Does that keep you up at night?
No, basically, for the first time, I mean, cinema has gone through a hell of a lot, right from the beginning. And you must have read the history as well. I'm sure you've done your homework with the Spanish flu coming in. People thought that, cinemas will not remain. World War I, World War II, then you had your TV coming in, black and white TV. Even then people said, oh, why should you go out? But cinema survived everything, because the experience of going out and watching on the big screen is very different to watching anything at home. However, when COVID happened, I think that raised the decibel levels a hell of a lot, because for the first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. So I think this has never happened. Lots of disruptions, as I said, have happened, lots of distractions have happened, but this was a big one. This was a body blow. So demand side got impacted, because demand, suddenly they were at home. So the habit of going out, there was also some trepidations of whether we can go out or not. And supply side got disrupted because obviously shooting stopped. So I think that period had a very big impact. And suddenly, there was so much content on the small screen OTT platforms. There was so much stickiness, because people were waiting for, what is the next TV show coming. Plus, one more thing that happened is that prior to COVID and prior to cinema shutting down, only TV shows were very popular. But because there was no content available, even movies started coming. And even the producers, the film fraternity, because in India, movies are still very fragmented. Production houses are not like you have in the US, where you have 4 or 5 studios who are making movies. Here, if there are 1,200 movies that get made in a year, there are about 5,000 producers across the country. So I think I don't blame the producers, because their holding cost also was piling up. So they also said, okay, let me monetize my content, and straight away sell it to a platform, because the platforms also were starved of content. So instead of making TV shows the way they were earlier, they said, okay, doesn't matter what content it is, let's just buy it and play it. So that had a big impact. And so therefore we took a long time. So I thought, to be honest with you, that it won't take that long once we open in 2020.
You thought people will flock back?
Yeah, I thought they'll flock back, and they did. Because there were some very big movies and some big producers like Rajamouli and even KGF. They waited. They had the waiting power as well. And when they came, consumers were still starved of going out. They still wanted something big. So suddenly we saw a huge spike where RRR, KGF, lots of movies came, and people came back. So I said, wow, this is fine. Business is back to usual. But then I didn't realize that the backlog of no shootings happening still remains. The habit changes still remained. And therefore, it took us at least two and a half years to come back. There were some green shoots in the middle.
But are you back? Are footfalls and occupancy rates at pre-COVID levels?
In South, yes. So if you look at the southern film industry has always been very robust, and because the movie going habit is very strong and the content flow is also very strong. So South, I would say, is almost back, maybe more than 90%. Hollywood is also back, because Hollywood actually got disrupted not just because of COVID. Hollywood got disrupted or had a bit of a setback also because of the Hollywood strike,
the screenwriter strike.
So therefore 2024-25 was not very good for every angle. But 25-26 onwards, we are back now to where we were. We are not exactly at the same occupancy level, which we were earlier, but we are getting there. So like, for example, October was fantastic. Our second quarter was very good.
Yeah.
And even now, December is looking very good. So the volatility has got reduced dramatically now. The peaks and troughs are not that this thing. So the good thing that I find is, and I've been saying that even when we were shut, that is home entertainment and out of home entertainment have always coexisted. There is not an either or. This whole binary discussion started getting on my nerves also, to be honest with you, because we are just not realizing that, and I use this analogy all the time, so sorry if I'm sounding very hackneyed or repetitive to you. We have Zomato, we have Swiggy, we have kitchens at home. Okay, people have various choices to eat, but they still go out and eat in restaurants. They go to places, hotels and restaurants. That's number one. People again can get everything through Blinkit at home, but they still go to the shopping malls. So people are not straight-jacketed. They want to do everything. They want to be at home also. So this phenomena will always coexist. What people do at home will not completely obliterate their habits from going out.
No, agreed.
What they're going out.
Agreed,
yeah.
But it's also about the cost differential. What also came into play is the cost differential.
The cost differential of cooking at home.
Cooking, okay, but if ordering in versus going out
is also different.
Maybe, to some, it depends on where you order for, but...
Yeah, then it's exactly the same, but still restaurants thrive. Yeah.
Agreed.
Yeah.
The only aspect, and my question really is in terms of cost differential. If I buy a year-long subscription or a monthly subscription to any of these streaming services, I can watch X amount of voluminous content. To go out to a movie hall, the cost of getting there, my popcorn, my the extras over there, plus the movie ticket. I want to sit in a nice theater like that, I'm going to shell out a lot. So all of that kind of adds up.
Yeah, but I think people are not blind. They see what they're paying for. 7.8 million people have already come to the cinemas this year, and 15 million roughly is the number of people who come. So India is a very heterogeneous market. So what you're saying is true for a lot of people. Not only are they extremely cost conscious, they don't also have a FOMO of a brand new movie. So first of all, the 8-week window, then you will not see this new movie that has come of Kriti Senan and Dhanush just now. So that consumer is also there.
Yeah.
He's saying कि भाई मैंने नहीं जाना. So I'm not saying that consumer doesn't exist. He's also saying I don't care how good the movie is, how popular it is becoming. I will wait for 8 weeks and I'll sit at home and I'll watch the movie. ठीक है? There's another consumer who's saying I want to watch. I want that big screen experience. I can see what has been done. I can't get a 14-meter screen at home. I can't get that communal experience of laughing and emoting with the movie. I can't get that comfort and that going out. I can't get that escapism at home. Okay, so therefore I want to go out. So luckily India is a very heterogeneous and disparate market. We have enough number of people who want to come out as well, and they actually are finding it value for money, because our price points are not just this. There's only 16% of my portfolio.
Yeah.
84% of my portfolio is at 259 rupees. If you look at my Q2 results, my ATP, average ticket price, is 259. So I have ticket prices from 100 rupees also. The balcony ticket price of a single screen is 150 rupees now. Getting this kind of infrastructure for 100 rupees, I don't think people complain.
Yeah.
It is still much cheaper than various other out-of-home entertainments. Look at the amount of money they have to shell out for a Coldplay. Look at the amount of money that you have to shell out for AP Dillon, a concert.
Yeah, no, I agree. And I think we may be swinging to the other side of the pendulum, in the sense of the IRL experience has now become important as well.
What is IRL?
In real life.
That's in real life, okay, fine.
So I'm shadowing my Gen Z.
And then it's fine, it's okay.
Which I'm very far away
I am
from.
very happy to ask the meanings of all acronyms now.
No. In real life.
I can't keep up.
You are in the IRL business, where you actually go out.
So I mean, Aristotle said that, people are animals, they're social animals, they want to come out. So you can't, I think there's no comparison of being at home and going out. Both will happen. So many times I want to kick up, sit at home and watch a movie that I missed out, or a TV show that I missed out.
Yeah. I'm saying people are perhaps now swinging to the other end of it, because you talked about concerts and how concerts are getting sold out. Live events are becoming something that people want to go out and do. What is the way that your experience can catch on to that and add a plus to the movie going experience, because you're already kind of doing it? Gourmet food served at your seat, more than just sitting and watching a movie.
Yeah, look, in India, why PVR Inox is only in India. The only exception is we've got is one cinema in Sri Lanka, and that also was almost like an extension of our South India strategy, is because India is a very volume driven country. You have 1,200 films that come through the system. So alternate programming if that is what you're referring to, is something which is a filler. So whether it's re-releases or showing Taylor Swift's show that we showed a little bit, we showed BTS, sometimes cricket matches, these are fillers. But primarily, there is no dearth of content. The other day, somebody was talking to me on a Friday. He said there is some movie that got released and they didn't know where to see it. I said 42 films got released that particular day. 42 movies in a day got released all across the country. So I don't need to do anything other than making our experience of going very, very experiential, very enhanced.
How do you do that?
One example is where you're sitting here. So by making sure your projection system, sound system, your seating, your F&B, your service is like a hospitality. People really feel good about going. And what people can say, oh, this I can't get at home. So that differential has to be, IMAX, 4DX, ICE. Now we opened something called Dine-In. So all sorts of formats which are more experiential. Everybody is working towards how do we make this experience. LED screens are coming up now. So the Dine-In that we've opened in Bangalore just now, there is no projection room there. The whole thing is an LED screen. So I think people in India are very discerning. They can sense it. So I think we have to be on our toes to make sure that the experience is very different to watching it on airline or your phone or this thing.
You talked about October being good, and yes, Q2 PAT profitability in place and a good set of numbers. A lot of analysts also looking at it favorably. You think this is continuing into Q3, Q4? What is the pipeline looking like? Is this a situation where the H2 second half is going to be better?
Well, so far it's looking very good, and even Q4 is looking first time very good. Eid is a very important date. That's also in Q4. Normally it falls in Q1 of next year. Toxic is a very big movie which is coming. Border 2 is releasing on the 26th of January. A lot of Hollywood films are coming, a lot of regional movies. Pongal is a very big festival, so January gets taken care of by that. So whatever lineup I'm at least seeing is looking very good. But again, coming back to my analysis of why I'm very sanguine about our business is because you also have a lot of sleeper hits now. The number of 100 crore movies which have got done this year is never happened before. And these are sleeper hits. We did not know these movies are going to do well. If you look at how did Sanyara end up doing so well? Yeah. How did Mahavatar, Narsimha end up doing so well? So
were people actually crying in Sanyara as they showed on online reels, or was that
I was not present in every single auditorium. but those were real images only.
Yeah. So it was actually happening. People do emote in that sense.
That is what gets me excited and positive about this business. When a content connects, there's no end. It was almost fanaticism, the way that music connected with the youngsters and how these two became like superstars overnight. And when we were forecasting that how many people will come for Sanyara and what the numbers will be, there's no way on earth anybody could have possibly. So that's why I don't get that. Obviously one is disappointed if a big movie doesn't do well or does below expectations. But then I don't get that disappointed because there's so many movies. So as opposed to a market like UK, US, which is very Hollywood dependent, the number of movies only get released are not even 100. 150, 160 movies get released every year. If India was that market, then I'd be very worried. Secondly, PVR, right from the beginning, when I started, I was very keen that I want a geographical spread where again, I'm not depending on one geography either. Okay, so 33% of our circuit is in South. 27% of my circuit is in North. The rest of the circuit is spread between Center, West and East. So therefore, the geographical, we've de-risked our business model also by not remaining in one region.
I want to rewind a little because you talked about when you started PVR, and it's a story that people don't necessarily know. This is not a family business of movies. Yeah. There was one movie hall in the family business which you decided to take on. Tell us a bit about those beginnings.
Okay. Our business was trucking, and I finished in modern school and Hindu. And then when I went to the trucking business, Amritsar Transport Company, ATC, I struggled. So my father and my grandfather started the business, and I was not very sure if this is what I want to do. So 1988 to 1990, I was going to Naya Bazaar, which is in Chandni Chowk office. But then my father had also a cinema, which he acquired in 1978. So I said, I have to do something to make my father feel proud. So if I'm not able to do something in the trucking business, let me try my hand at Priya. And Priya was in South Delhi. And those days, South Delhi only had 2 cinemas called Chanakya. I think this way before your time, in Archana. And they were the only 2 houses which were showing English movies. So I felt that Hollywood, it can be one differentiating point in that catchment, because Hindi movies used to get played in Liberty, Sheila, so many cinemas in Delhi, and they used to run for 25-30 weeks, because only very few prints used to come because of the celluloid prints that were there. So I said, if I do Hindi, then where is my differentiating point? So when I went to the Bombay studios, Warner Brothers, Columbia, TriStar, Sony Pictures, and all these guys, they said, oh wow, we would definitely welcome another cinema which is going to show Hollywood movies. So that's why I started playing Hollywood films. I didn't realize the response will be so phenomenal, and a third cinema will do well. So that's how it all happened, and I was very fortunate, God was kind, that I made the cinema very clean. I also took some input from a cinema in Bombay called Sterling.
Yeah.
They had a Dolby installed, and I needed a USP vis-a-vis Chanakya and Archana. They did not have Dolby. And I said, if I put Dolby sound, maybe I'll have some USP. These were all just happening without any thought that I'm no marketing thing. It was very obvious things to do. And the response was just phenomenal.
Was it coming from your own love of going to the movies and having a good experience?
So if somebody asks me who's a movie buff in the family, I think it's my children, Niharika, Naina, Amir, and my brother Sanjeev and my wife. I'm not a massive movie buff. I'm really about experience. So I think if you really ask me in retrospect, experience really excites me. How can because I can't control what's happening on the big screen. Yeah. So that's where it continued. And I was very fortunate that little things that I did, people enjoyed, and they said, wow, this is different. And then that's how I said, now the next step is really to get into multiplexes, because again, the same reason. There's so many movies coming. How can 1,000-seater cinema showcase everything under one roof?
Yeah.
Because then you're stuck with that one movie.
I mean, this was the beginning of multiplexes in India.
Yeah, 97 is the first multiplex that I was fortunate to open in India.
And with Village Roadshow.
Village Roadshow.
So not everyone knows PVR is Priya Village Roadshow.
That's right. Yeah, because the acronym, the company was called Priya Village Roadshow Limited. There was a 60-40 joint venture, and therefore we said, let's call the brand PVR. And that's it. God is kind. I mean, after that, I was obviously extremely nervous because cinemas were tiny, 250-seater cinemas, one 300-seater cinema, one 312-seater cinema, capacity was 1,000. And I said, my God, will people come to small screen? They'll think it's a video parlor. All those apprehensions and skepticism was there. But God is kind. People loved it, and rest is history. 1 kilometer long queues were outside, and people were really, really excited about this new format.
When I think about the kind of disruptions that your business had to go through, one is, of course, starting the business, and then this joint venture with Village Roadshow. 9/11 happens, they pull out, and you have to look for funds, you have to list. Then you have COVID coming in.
Yeah.
So many of those, which have been some of the toughest moments.
I think toughest obviously will be when my dad passed away in 92. Nothing can compare. I was all of 25 years old, and I just started Priya, and the trucking business suddenly was headless because my father was looking after that. I don't think there's anything that even comes close to that setback that I had. And because then I had to do both things, my newfound love for cinema, plus the responsibility of running the trucking business. I was married as well, and I was about to have my first, Niharika was about to be born. So that was a tough period. Then we had a fire where we lost a lot of money in the trucking company. That again became a big setback for me. So we just kept going, and of course after that, a Village Roadshow not wanting to expand was a big one because I'd already signed up a lot of multiplexes. I signed up worth about 100 crores of cinemas. I then suddenly said, okay, what do I do? And I was fortunate to have mentors who guided me, and Sunil Mittal, Mr. Mittal has always been a good mentor to me, and he said, Ajit, time for you to now get private equity. You're too small to do an IPO, and accruals are not going to make sure your growth can be funded. So that's the time I went the private equity route. and the business luckily was profitable, and that is something I tell all young entrepreneurs, that make sure your business is profitable.
Yeah, so, no, in this day and age, that's an important lesson.
Yeah.
Where profitability has not become that important.
Yeah, so all the 4 units, let's call it, that I was operating, there was Anupam in Saket, there was Vikaspuri, a 3-plex, there was a Narayana 4-plex, and Priya. So all these 12 screens put together were always very profitable. The EBITDA margins were phenomenal. And so when the private equity people saw that, Renuka Ramnath of ICICI Venture, and she saw a very good pipeline with, prestige, good developers, and they said, oh, this looks like a good business model. You're the only player in India who's doing this.
Today you're in a landscape where there is no competition. After the merger with Inox post-COVID, pretty much this is a one market player?
No, there is a lot of competition.
Is it? I mean, apart from OTT platforms, what really is your competition on this landscape?
Still India's got, by the way, 9,200 screens. And out of 9,200...
smaller single screens?
Yeah, but we're still about 1,900 screens, 1,800 give or take, compared to this thing. So you still have players like Sinopolis with 400, you have Mirage with 200. You still have players, and I would say that only exhibition is not the only thing. Like you just alluded to, like I said, people can have an option to watch at home. Okay, I've got a window. I've got an 8
maybe your biggest competition is tiny phone.
Yeah, that's right. So 8-week window is also there, which also saves you. So actually, piracy is competition as well, because 8-week window, legitimately the producer doesn't want to release a movie on any other platform. He's not releasing the movie on any other platform till the theatrical run is done. But how do you control piracy? So if a great movie sprint gets downloaded on piracy, pirated version, then that's a problem. But as I said, I'm just banking on the fact that if we make our cinemas very experiential, number one. Number two, the habit of people to go out to shopping centers, malls, eat, shop, that is always going to remain. And we just have to make sure we don't disappoint people when they come. They must feel they're getting their money's worth. And as long as we're able to do that, and there's a good flow of movies which is coming, then India's still really number one form of entertainment is going out and watching movies on the big screen. And look at the industry. You put on your TV, all ads have got some actor or the other endorsing it. So there is, Bollywood has got a very strong presence even beyond cinema. So I think the love for movies and movie stars is so much that keeps us going. And even producers have believed in the big screen. Like I said, even Sanyar, I'm just taking one example, like 12th failed. You take so many movies that have come, my mind is blanking out, which were made at a very small budget. Now, if you go to OTT straight away, you only get cost plus. This is the budget and this is how much you'll get. There is no upper limit to how much a movie can earn when it goes on the big screen. OTT players now have got a survey done, and there are a lot of studies for that. People actually, the first movie that they'll watch is the one which has done well on the box office. Because they are not. So when you see a movie which is coming and you say, "Ye kaun si picture hai?" I haven't heard about it, but you suddenly say, "Oh my God, that's Sanyara, yaar. I missed it out on the first time around." So that movie did very well. To be honest, I also missed out on Sanyara when it came out the first time.
You watched it on OTT?
Then I watched it on OTT after 8 weeks, and I loved it.
How much OTT do you watch?
More shows I watch. TV shows I watch. Yeah. I mean, even pre-COVID, I was watching shows only. But if somebody gives me a very compelling reason that this movie is very good and it hasn't come theatrically, I'll watch it.
As we wrap up, what do you think is going to be the next technological disruption that you will face? Is it AI? I think your whole industry, the content side of the industry is facing with AI. Is it going to be another kind of change in habits? What do you think is going to be the next challenge?
I think AI is good from a content point of view, because now people don't have to go to lots of places to shoot. All that can be done AI generated, but use sparingly. Not like, of course, the whole film, but I don't think it's a tool which will be harmful. It will be an enabler to make better content. And I think there are enough experts on the production side who know how to use it properly. We just finished a workshop on AI, how we can use AI on customer service, CRM, looking at our costs, supply management, looking at various things, all aspects, programming, showcasing, marketing. So I think AI is only going to help make our business entire part of the value chain, right from production to distribution to exhibition. It is only going to make it more productive and better.
Yeah.
Yeah.
Thank you so much for speaking with us today. This has been fascinating, and here's to people going back to the movies.
Thank you. Thank you very much for having me.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So benchmarks enjoy the Friday cheer, ending at the day's high on the back of RBI's MPC's decision to cut rates. PSU Bank lead the gains, ending nearly 1.5% higher. Meanwhile, it's chaos in the skies and panic on the ground. Indigo, India's largest domestic carrier, has cancelled all flights till midnight at the Delhi airport. More than hundreds of flights have been cancelled across Mumbai, Delhi, Bengaluru and Hyderabad over 4 days, leaving thousands stranded and also desperate. Passengers have been struggling to deal with the cancellations. What's more, December FAs have soared and ticket prices on key routes rise 4 to 10 times compared to normal days. Indigo has already warned of more disruptions till at least December 8th. And as you can see on your screens, the extent of the chaos is such that a newlywed couple from Karnataka's Hubballi had to attend their own reception virtually. The bride and the groom, who had booked tickets from Bhubaneswar to Bengaluru and onwards to Hubballi for December 2, were stranded after their flights were repeatedly delayed from 9 a.m. on Tuesday until early morning the next day. So the flight was eventually cancelled on December 3. More on the story, the Directorate General of Civil Aviation, or the DGCA, has withdrawn the rule that barred airlines from substituting pilots' weekly rest with leave. The regulator said that the move comes amid major operational disruptions and also representations from airlines seeking flexibility to ensure continuity and also stability of the operations. With the change, airlines can now use leave in place of weekly rest to stabilize crew rosters. Now, the DGCA has said that the withdrawal is effective immediately, allowing carriers to consider pilots' weekly rest as leave. Now, in the wake of Indigo's severe operational disruption, viewers, the DGCA has also granted the airline a series of sweeping relaxations and flight duty time limitations norms. So, a move that has triggered sharp criticism from the aviation experts. The regulator has temporarily withdrawn the key restrictions on the night duty limits and also weekly rest rules. So, officials have described the move as a one-time conditional measure that will remain in force until February 10 with a mandatory review every 15 days of the FDTL norms. Night duty has been reverted from midnight to 6 a.m. back to midnight to 5 a.m. Another clause which limited pilots to 2 landings during operations that encroach into night duty has been removed altogether. Now, the much-awaited Modi and Putin meet kicks off. His second day includes meetings with Prime Minister Narendra Modi, a ceremonial welcome at the Rashtrapati Bhavan, and discussions on strengthening India-Russia relations. Now, discussions will be focused on the bilateral trade agreement between the two countries. Putin has said that Russia is ready for uninterrupted shipments of fuel to India and that Russia is looking at expanding cooperation in the energy sector. Here's the Reserve Bank of India's Monetary Policy Committee cut the policy repo rate by 25 basis points to 5.25% on Friday, marking its third reduction in FY26. The move has extended the 125 basis point easing delivered this financial year as the central bank continued to steer policy through a period of low inflation and also steady growth. So the committee kept its stance neutral. RBI Governor Sanjay Malhotra said in a video address that all the 6 MPC members voted for the cut, while 5 of them voted for the stance. Now, RBI made the decision against a backdrop of easing the prices and also firm domestic demand. Malhotra said in a video address that inflation had come down faster than expected and described the current environment of the low prices and also strong growth as a rare Goldilocks period. Viewers, the RBI also raised FY26 GDP growth estimates to 7.3% from 6.8% earlier. Now, it reduced the FY26 CPI inflation forecast to 2% from 2.6% earlier. The central bank has been tasked by the government to ensure that CPI-based retail inflation remains at 4% with a margin of 2% on either side. So, RBI Governor Sanjay Malhotra said that core inflation remained mostly stable in September and October, and this is despite the ongoing price pressures from precious metals. Excluding gold, core inflation decreased to 2.6% in October. In general, the reduction in the inflation has become more widespread. In fact, the RBI also announced that it will buy government securities of 1 lakh crore rupees through an open market operations in December. So the central bank will also conduct a currency swap worth $5 billion this month. It also plans to buy dollars and sell them back 3 years later. So Malhotra has explained that RBI's move is aimed at injecting durable liquidity into the system. Following the liquidity remarks, the yield on the 10-year benchmark bond fell to 6.45% but recovered slightly shortly after. So the Indian rupee too weakened past the 90 per dollar mark for the second time this week. In fact, RBI's rate cut also had a rippling effect across the markets today, putting several sectors firmly in focus. For banks, lending costs have come down, improving the outlook for both the retail and corporate loan growth. NBFCs are also big beneficiaries, with cheaper borrowing costs likely to fuel stronger credit expansion. The housing and realty sector is seeing renewed buying interest as home loans turn more affordable, boosting the demand sentiment. And in trade, bank stocks have rebounded sharply. The Reserve Bank of India cuts the repo rate by 0.25% to 5.25% today, signaling cheaper credit for borrowers. So this move comes as the central bank aims to support growth amid moderating inflation. Home loans, personal loans and business borrowings are all expected to get more affordable. So analysts are saying that this could give a boost to consumption and also investment in the months ahead. Now, in the wake of Kotak's critical report, Keynes Tech Executive Vice Chairman Ramesh spoke to NDTV Profit, where he defended the company's financial reporting practices. The Kotak report had flagged several account inconsistencies, and also, he pushed back against the broader allegations. Among its many allegations, the Kotak report had highlighted a sharp rise in the contingent liabilities estimated at 18% of net worth. So he attributed this, to the bill discounting and working capital requirements specific to the metering business, where government receivables often face delays. Viewers, next up we have Tega Industries, that is in the upper circuit, with Frontier Warehousing launching an open offer to acquire 8.07 crore shares, representing a 26% stake in the company. So the total offer size comes to 44.26 crore rupees, fully payable in cash. The open offer was triggered after Frontier signed a share purchase agreement with the promoters to buy 13.29 crore shares, that amounts to nearly 42.8% of Kesoram's equity. So this development follows Ultratech Cement's earlier announcement of a 1:52 share swap ratio for acquiring Kesoram cement business. Next up, we have Zen Technologies. So it was in focus today as it secured a significant new defense order, receiving 120 crore rupees of contracts from the Defense Ministry. So the order is for supplying a comprehensive training node. With this win, the company's consolidated order book now stands at 675 crore rupees as of October. So for context, Zentech had logged 94 crore rupees in new orders during Q2, making this a notable acceleration in the company's order intake momentum. Viewers, at its analyst meet, SpiceJet has signaled a major ramp-up ahead, outlining an aggressive scale-up in the operations through H2 of FY26 and into FY27. So the airline has already expanded its fleet to 68 aircraft as of December 2025. So its operational fleet has risen even faster, from 19 to 32 planes in the same period. Now, available seat kilometers, or the ASK, have doubled from 55 crore in Q2 to 110 crore by December 2025. So SpiceJet expects that figure to double again to 220 crores by December 2026. The airline has also highlighted a strategic shift, increasing the concentration of operations at a few key airports. Here's Ola Electric stock has crashed to half its IPO price and also hit an all-time low in today's session. The stock has slumped to 34.8 rupees, down a steep 65% from its all-time high of 100.4 rupees. Now, trading volumes have also surged to 7 times the 20-day average. So the slide has been relentless. The stock is down 26% over the past month and nearly 64% over the past year. So Ola Electric has, however, guided for 1,000 to 1,200 crore rupees in FY27 revenue. It also says that its Giga factory has been commissioned at 2.5 gigawatt with plans to scale it up to 5.9 gigawatt per hour, and also by March 2026. But for now, market sentiment remains sharply negative as the stock continues its steep correction. Here's next up, we have Hindustan Construction Company. So the shares have dropped over 22% on December 5, 2025, its lowest level since August 2023, coinciding with the record date for its 1,000 crore rights issue. So the issue opens on December 12 and also closes on December 22nd, offering 277 new shares per 630 held at 12.5 rupee each. So the sharp fall reflects ex-rights adjustment and also dilution concerns, as the share base may swell by over 43%. HCC aims to bolster its balance sheet and also, amid this weaker revenue and margins, following a 25% net profit drop in Q2 of FY26. Now, Moody's have seen some mixed reactions. Earlier, stock rallied around 14% on the record date announcement, but reversed ahead of the ex-rights date. Viewers, next up we have Diamond Power, that has secured a major order worth 747 crore rupees from Adani Green Energy. Now, the contract is for the supply of transmission cables, with completion slated for 2026. The deal adds to the company's growing order book and also underscores strong demand in the renewable energy infrastructure space. Next up, we have Tata Power's Mundra plant that is set to restart operations from December 31, ending a temporary shutdown that began on October 17. So the suspension had been an overhang for the stock, and its removal is seen as a positive for the sentiment. So the resumption is expected to restore the generation capacity and also ease supply concerns in the power sector. Here's Amazon is aggressively expanding its footprint in India's hyper-competitive quick commerce market, aiming to establish over 300 micro-fulfillment centers across key metropolitan areas like Bengaluru, Delhi and Mumbai by the end of the year. So these small localized warehouses, often referred to as dark stores, are strategically positioned close to residential clusters, enabling Amazon now to offer delivery of thousands of daily essentials within minutes. So the rapid rollout, which will take the total MFC count to over 300, is a clear indicator of Amazon's intent to capture a larger share in the segment currently dominated by rivals like Blinkit, Zepto and Swiggy Instamart. Viewers, Russian authorities have blocked access to Snapchat and Apple's FaceTime in the latest move by Moscow, clamping down on foreign tech platforms. So in a separate announcement on Thursday, Russian state internet regulator has accused both the platforms of being used to organize and also carry out terrorist acts within the country. Now, while cracking down on foreign tech, the Kremlin has promoted its own national messenger app, Max. Developed by the state-controlled tech firm VK-Max, has been touted as a one-stop shop for messaging. Now, online government services is also making payments. Now, in a significant step towards redefining automotive logistics in India, Motherson, through its joint venture, has announced an agreement with Digi Airport Limited, which is a subsidiary of Adani Ports, now to establish a dedicated facility for auto exports at the Digi Airport, in Maharashtra. Now, this is one of APS's, 15 strategic ports. So Digi is now set to expand its capabilities to support India's automotive growth story under the Make in India initiative, enabling seamless export and also import of vehicles for global markets. SEBI has barred financial influencer Avadhoot Sathe and his firm Avadhoot Sathe Trading Academy Private Limited from the securities market. So the regulator has also directed them to disgorge 546 crore rupees of unlawful gain earned from the alleged unregistered investment advisory and also research analyst business. Now, according to the order, it was primarily Avadhoot Sathe who played a major role in devising a scheme wherein course participants were lured to trade in specific stocks. Here's Digi Yatra, India's SSI-based privacy by design air travel platform, has reached 19 million downloads and enabled over 77 million seamless journeys across 24 airports, with adoption now at 30%. So in a release, the company said that it aims for 80% adoption by 2028 and is preparing for global integration in 2026. So Digi Yatra has also begun a beta rollout of 6 regional languages through its partnership with Bhashini. So the feature will expand to all 22 Indian languages, supporting the Ministry of Civil Aviation's push to make digital travel more accessible and also user-friendly nationwide. Simone Tata, mother of Noel Tata and stepmother of Ratan Tata, passed away in Mumbai on Friday morning at the age of 95. Now, she survived by her son Noel, his wife Alu Mistry and grandchildren. Simone Tata's contribution to the Indian business landscape and the Tata legacy remain unparalleled. She was a visionary entrepreneur who transformed Lakme into a top cosmetics brand, steering its growth and eventual sale to Hindustan Unilever in the 1990s. Now on to some sports news now. Cristiano Ronaldo has joined the list of high-profile investors backing Perplexity AI following Lewis Hamilton's recent investment. CEO Arvind Srinivas announced the development on Friday, highlighting growing interest from global icons in the AI-powered search platform. Perplexity, known for its conversational search capabilities, has been attracting attention, and amid the rising competition in the AI space, the investment underscores the increasing crossover between sports and celebrities and also technology ventures, signaling confidence in AI-driven innovation. Viewers, with that, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit.
We're joined by Ashwini Kumar Tiwari, who's Managing Director at State Bank of India. Mr. Tiwari, thanks so much for taking the time and pleasure speaking with you. Help us understand this from the banker's perspective as well. Because, of course, it's positive in that one would assume that credit growth gets a bit of a leg up. But then from your perspective, you also have to defend your margins.
That's always a balance, as you rightly said. So, as we all know, that deposit rates, especially the term deposits, take time to reprice, because as they mature, then they are repriced. And this process had been playing out for the last several months after the last rate cut, and would have ended in the next maybe 1 quarter. So with this rate cut, maybe this gets pushed back by another 2-3 quarters. So that will continue. At the same time, we cannot reduce rates very drastically, because the savers also deserve a little bit of fair compensation. So our committee will meet to decide on that. But loan rates will surely be repriced very quickly, because these are linked to external benchmark mostly, and the deposit rates will take time to get priced in, provided we decide to cut them. So therefore, there will be some pressure on margins, but overall, it will settle down in the next 2-3 quarters. And on the credit growth, I think the growth for us, credit growth, especially on the retail side, has been very strong. So there'll be some more enthusiasm and some more pickup in that. But overall, I think the material impact on credit growth is not likely to be very significant, because it's already very strong.
Just to follow up on a couple of those things, Mr. Tiwari. One, I just want to understand how much of the book currently is MCLR linked, marginal cost of funds linked in that, and also how long do you think that those loans will have to transmit today's cut? And second, already Mr. Sethi is guided towards an improvement in the credit growth for SBI. Does that change at all from this point?
So the improvement guidance was provided recently only. So it was from 10 to 12 to 12 to 14 now. And we stick to that guidance, because what we are seeing is very strong retail growth. Mortgages, auto loans, the personal loans, all of them, gold loans especially, all of them have been growing very strong. So therefore, the guidance reflects the improved sentiment and the growth numbers as we stand. Even the corporate side loans had picked up in the last quarter, and we expect that also to come back into double digits. So we don't, at this point, we don't want to revise it further upwards, because we need to see how this goes from here. It's in my view, it's already quite strong.
Just sorry, on the MCLR portion, sir?
MCLR. So our external linked benchmark rate is above 50% now. So that gets repriced very quickly. The MCLR linked rate is roughly around 30%, if I remember the number right.
Mr. Tiwari, interestingly, in the RBI governor's speech, he pointed out where weighted average lending rates are, and I'm calling back to your point about deposits getting repriced later. But if you look at where the weighted average lending rate for new loans is, that has come down by about 69 basis points between February and October. That's something he pointed out. He said that the effective impact on rates is about 78 basis points. On the other hand, weighted average deposit rate for the fresh deposits is down by 105 basis points. So you're actually seeing the inverse, where the rate cut passing on the deposit side is higher than what is there on the credit side. So I'm just trying to understand how that transmission works out.
So said that the stock of deposits, that rate has come down by 32 basis points. So therefore, the repricing impact clearly is with a lag. And this is borne out, and this will continue to play out as we go forward.
Okay. Mr. Tiwari, very good morning. Tamanna here. Just a question on the kind of transmission that you are expecting to see. And this is not specific to SBI, but on the sector overall, this has always been one question, that is transmission keeping pace with the direction that the central banker is giving. So just your view on that.
Yeah, good morning, Tamanna. So the transmission has been happening. If you recall, the governor in his speech said the transmission has been satisfactory. And what we are seeing is on the lending side, because there is a lot of repricing on the corporate side which is happening. And also on the retail side, since most of the loans are linked to the external benchmark, they get repriced, the new loans get repriced very quickly, and the older loans, again, many people come back to banks and ask for a reduction, or they shift banks. So therefore, reduction on the loan side, even though the what was just said that the overall reduction is 79 basis points and deposit rates seem to be higher. But what we are seeing on the ground is that there's a whole lot of reduction which is happening on the loan side. So that will happen. And deposit side, while reductions have been done, in our view, there is not much scope to cut rates further on the deposit side, regardless of the rate cut which has happened today. And our committee will meet to finalize this. But the deposit rates on the term deposit side are at a bottom, and we don't think we should reduce it further for our savers. So therefore, this rate transmission will happen very quickly.
Okay, so you're saying that deposit rates can't go any lower, close to rock bottom is, I'm assuming, how you look at it. What about lending rates? How much more scope is there, you think?
Oh, lending rates, the external benchmark, which is repo / T-bill rate, will get repriced on its own quickly, because that's immediate. On the other side, the longer term loans, again, as I explained, the corporate side, there is a lot of repricing for longer term loans, the MCLR linked loans. And on the other retail side, mortgages, which are big ticket loans, there again, the customers come back to the bank and ask for reductions. And in case some bank is resisting those, they shift the bank. So therefore, the retail side loans and the overall loans in general will also see the repricing happen quickly. That will be much more pronounced than on the deposit side, in my view.
Mr. Tiwari, just a logical, or logically taking that forward. So on the one hand, you're saying that it's going to be hard for you to cut deposit rates further. On the other hand, you're saying a large portion of your book is external linked loans where the transmission will be automatic. You've managed to defend your NIM at that 3% level for the domestic side. So therefore, the question is, will it be hard to do that in the third quarter? And can you expect there to be an erosion there?
So there will definitely be a pressure on NIM for sure, because that is something which is a natural outcome of these kind of rate cuts. And if we don't reduce the deposit rates, clearly there will be pressure on margins. Now, how much there will be, our endeavor would be surely to make sure that whatever repricing we do for on the corporate and SME loans is not that large. It should be just in line with this, and we hope to improve some realizations in the other categories of loans which are higher yielding. But overall, yes, I take your point. There will be a pressure on the NIMs. How much that will be, we have to see.
This is not a family business of movies. Tell us a bit about those beginnings.
I went to the trucking business, Amritsar Transport Company, ATC. I struggled. My father had also a cinema, which he acquired in 1978. I felt that Hollywood can be one differentiating point because Hindi movies used to get played in so many cinemas.
This was the beginning of multiplexes in India.
97 is the first multiplex that I was fortunate to open. I was obviously extremely nervous because cinemas were tiny, and I thought, my God, will people come to small screen? People loved it, and the rest is history. 1 kilometer long queues were outside.
There's never been a time when the question has been raised of whether people will actually go to the movie hall or not as much as now. Does that keep you up at night?
I mean, cinema has gone through a hell of a lot. When COVID happened, first time in the history of cinema, cinemas were shut for more than 18 or almost 2 years, 18 months to 2 years. This was a body blow.
IRL experience has now become important as
What is
well
IRL?
In real life.
That's in real life, okay, fine.
I'm following my Gen Z.
Home entertainment and out of home entertainment have always coexisted. There is not an either or.
People actually crying in Sayyara as they showed on online reels.
That is what gets me excited and positive about this business. When a content connects, I mean, there's no end.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
Is a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
Hello and welcome. You're watching Profit 360 on NDTV Profit, and I'm your host Malika Mishra. The first story this evening that we bring your attention to is the fact that RBI has granted in principle approval to Feno Payment Bank for its conversion into a small finance bank. Now, this is the first payments bank to transition to a small finance bank, enabling it to transition from its current payments bank model to a small finance bank structure. This should allow a broader range of banking services for the organization. Feno Payments Bank, which started operations back in 2017, had applied for the small finance bank license in October-December 2023. But for more information on what this means for the bank and further details on this upgrade, I have my colleague, banking editor as well as Mumbai Bureau Chief of NDTV Profit joining us on the phone line, Vishwanath Nair.
Right, so it's a 2-year wait that has finally ended for Feno Payments Bank. December 2023 is when they had originally applied to the RBI to transition to a small finance bank. Essentially, what does it do? It allows Feno to start accumulating deposits and also give out loans. As a payments bank, they're allowed to accept deposits from customers, but they can't do lending on their own balance sheet. So that's something that opens up for them. As a small finance bank, however, there are restrictions to the kind of clients that they can lend to and the amount of loan that they can give out. 75% of their book has to be towards the economically weaker or the priority sector. That's what is the definition of the RBI according to the rules that they've set. As far as Feno is concerned, of course, it's a very old company. It became a payment bank only in 2017. It's one of the 11 entities that got a payment bank license. And now, of course, that discussion has gone forward and is becoming a small finance bank, which is just one step below becoming a universal bank. So this is a relatively strong message from the RBI that as long as the entities have some balance sheet strength and strong governance structures, they will allow transitions to happen. This is a question that has been repeatedly raised. When will payment banks be allowed to transition? And now you had the first instance of such a transition taking place.
Vishwanath, another thing that I really want to clarify with you is that is this a full final green light by the RBI, or the bank needs to now prove the fact that whether it can fully transition into a small finance bank or not?
No, so an in-principle approval is typically the initial stage of approvals from the Reserve Bank of India. What follows is that they need to ensure that they are ready to start the small finance bank's activities. There will be certain conditions that will be mentioned in the in-principle approval by the Reserve Bank of India. And as soon as the bank is able to meet those conditions, the final approval comes in. That is, the license will be issued to the bank.
Okay, all right. In fact, hold on, Vishwanath. I also have Ashwin Parekh, MD at Ashwin Parekh Advisory Services, joining us at this given point in time. Thank you so much, sir, for giving us your time. Now, my first question to you is very simple, right? For the common man, what exactly changes tomorrow if Feno becomes a small finance bank? Will loans suddenly become cheaper or easier for a daily wage worker?
Well, nothing changes in significantly immediately, but I suppose what happens is if Feno Bank has been a successful payments bank, so the business activities as a payments bank are very different to the kind of business activities that a small finance bank can carry out. So now what will happen is that, let's say, gradually, as a part of converting the in-principle sort of, approval from the RBI into a proper full-fledged registration or license, as we call it, it is essential that, all Feno, gives an assurance that the technology is in its place, the ability on the part of Feno Bank to do, credit assessment, credit admission, a proper follow-up of the credit on, because, as a payments bank, you don't have a loan book. As a small finance bank, you have a loan book. Of course, there are restrictions on the size of the loans that a small finance bank can provide, but there are those kind of requirements. So when a payments bank, which has received an in-principle approval, sort of works out its operations, works out its people, trains its people, to really create the credit flow, to create the loan book, and to monitor it on a regular basis, then that's one part of, so that's a part of the transition. The second part for the common man, as you pointed out, what it really would mean is that the small loans, small finance banks are actually meant for small and medium-sized enterprises, SMEs, as we call it. So, from that perspective, small businesses, which Feno may have considered as a part of their customer sort of segment, would certainly receive credit flow after a little while, up to a certain restricted amount. Initially it used to be 25 lakhs. And then there are some restrictions on the exposure per borrower and overall exposures as well. But that's something that will happen. It will start taking deposits more than the amount of deposit they could have taken by way of by being a payments bank. So it becomes like full-fledged mini commercial bank, in that sense, basically, except that there are restrictions on the size of the per ticket loan and all, sort of,
Mr. Parekh, Vishwanath here, just take us through what this means for the sector, right?
So hello, Vishwanath, your voice is not clear.
Sir, I hope I'm audible now. I think the question that I want to ask is there have been multiple changes that the Reserve Bank of India has announced just this year. Earlier this year, you had AU Small Finance Bank get a universal bank license.
I'm not getting the audio from Vishwanath.
All right, I'll let my colleague ask that question then. But the fourth question being that there is a huge shift in the way the Reserve Bank of India is looking at licensing guidelines as well as entry into banking. And does this signify a next step in that entire process?
So just to reiterate Vishy's question for you, sir, he was asking that there's been a huge shift in the way RBI treats licensing for the small finance bank. And in that context, what does this mean for Feno Payments Bank now?
See, there are two things about this. One is this a major reform. I would certainly admit this as a very big reform because earlier in 2012, when two committees were constituted by the RBI under the auspices of Usha Thorat on one side and Nachiket More on the other, and they looked at differentiated banking license. That's how the whole creation of Payments Bank on one side and Small Finance Bank was created. When Feno Bank expressed its desire to convert itself into Small Finance Bank, RBI was not even ready with the regulations associated with conversion of a payments bank into a small finance bank. So there was a period that was announced, regulations were announced, and it was very clearly said that after you completed 5 years of profitable existence as a payments bank, you could perhaps look at a transition to small finance bank. And so therefore, as far as the reform is concerned, this is a major reform, quite clearly. What it means to Feno Bank also is something remarkable. What it does is, Feno Bank has been, because they applied it first time in 2023 itself. So they were prepared, they must have prepared themselves in terms of what kind of small finance bank they would like to have, what geography regions they will function from. Because as a payments bank, you don't have to worry about all that. You create payment gateways throughout the country, and and that's what Feno would have done. But as a small finance bank, you have a bit of a regional play, to answer that question. So Feno would have worked that out. They would have also worked out the customer segment that they would like to address. So all that will come into play now, basically,
Sir, another question for you is that RBI has eased entry of foreign players and also recently allowed AU Small Finance Bank to become a full-fledged bank. Are we seeing a seismic shift in the regulatory landscape?
It is. Your point is up. A question is very valid, Malika, because you see what seems to be happening today is that the banking system has to really grow at a much faster pace. Now, because the economy is growing, the credit flow has to really grow. The shortfall, particularly to the and what is provided by the banking system is becoming larger by the day. In 5 years ago, when there was an RBI committee, which was formed under the auspices of Mr. UK Sinha, the estimate was about $25 billion of US dollars of a gap between what MSMEs need by way of credit and what's available to them from the banking system. Today, it's grown to about 50 billion. So you can certainly see that there's a shift in the RBI's thinking in regards the growth of, let's say, credit flow, which will come with the capital. Now, we've seen that the capital that private sector banking has brought so far, its ability to grow its capital and net worth is only so limited. They keep on raising those funds from the market, but it's only so limited. So the shift in thinking in terms of having foreign, that is acceptable from the jurisdiction point of view, foreign strategic, let's say, banking partners to really take up equity position in the Indian banks, that we've seen in case of Emirates, NVD, RBL transaction. Now we are seeing that, let's say, to really have more commercial banks, larger banks, AU also was being considered, let's say, for the purpose of making it into a full-fledged commercial or a universal bank, as the new definition says. So there is certainly a shift in the RBI's thinking. There's one more factor which is making the shift happen. What is happening is that there is disintermediation in the system. The banking system is unable to raise the capital, raise the deposits, raise the deposits the way it used to 10 years ago. A lot of small saving, the household, small savings or savings are flowing into the markets, capital markets, by way of SIPs, as we see, by way of participation in the market, let's say. IPOs, of course, is one more example. So we find, therefore, that the banking system with disintermediation will have limited deposits. It will have to rely on large capital, basically.
Got it,
So
sir.
thinking, the shift is certainly happening,
Got
Malika.
it. Thank you so much, sir, for explaining that to us. Of course, as you highlighted, as RBI opens its door to give more credit access to a lot of people, the example of Feno Payments Bank sits very rightly so as it converts itself to small finance bank. Thank you so much for helping us make sense of the in-principle approval, and a big no definitely for Feno Payments Bank viewers. Viewers, moving on, the Indigo flight crisis has hit day 4, plunging the nation's skies into absolute chaos. Over 1,500 flights scrapped in just 3 days, with more than 500 gone today alone, including all domestic departures from Delhi airport until midnight. Stranded passengers at major hubs like Mumbai, Bengaluru, Kolkata are all facing hours, even days of agony, with hotels booked out and rival airlines hiking fares sky high. Indigo just said that it aims to drop down cancellations below 1,000 by tomorrow. Another major update is that a massive intervention tonight has taken place from the Ministry of Civil Aviation as the government steps in to control the ongoing chaos in flight operations, particularly at Indigo. The ministry has taken urgent and proactive measures, placing the flight duty time limitation FDTL orders in abeyance with immediate effect. Let's go across to my colleague Danish Anand, in fact, who has been tracking this story very closely and all the action from DGCA. Danish, what are you gathering?
Today was a very packed day in terms of relief for Indigo, also for relief for all the airlines. As you said about the FDTL norms, we broke it earlier in the morning and we informed everyone that how DGCA has decided to give a relaxation as far as the weekly rest period is concerned. Even now, if the pilots are on a week off, that will be considered the rest period, and this is going to happen for just some time only. As far as relief for Indigo is concerned, the regulator has given Indigo some more relief, and by that I mean that the Indigo pilots that will be landing between 12 AM and 5 AM, only that will be counted as night landing. Because of the earlier FDTL norms, the definition of night landing was changed and it was stretched from 5 AM until 6 AM. So till 10th of February, Indigo can operate on this end. And now coming to Indigo, so throughout the day, we saw how Indigo kept on apologizing to the public for the large inconvenience that they have caused. And in the earlier statement, Indigo informed everyone that they will be refunding the passengers for the flight cancellations between 5th December to 15th of December. Besides that, whatever extra that they can do on ground, like providing food and hotel and accommodation, that they will be doing that, and they will be focusing on passenger comfort somehow. But just a few moments back, Mr. Peter Elbers, who is the CEO of Indigo, he came out with a video statement, and in that he first of all apologized to everyone, to all the stakeholders, especially to the passengers, because we are seeing that Indigo, which has 2,300 flights every day, and it was very proud of having 2,300 flights per day, but today the number of cancellations exceeded 1,000, which is like almost half of the daily flights that the airline operates. So now Mr. Peter Elbers has said that they're working on a different strategy, and the relief and the temporary relief that DGC has given to Indigo, that will really help them to get back to their feet. Till midnight, all Indigo flights have been cancelled at Delhi airport, and similarly at the Chennai airport, the flights have been completely cancelled, and even at Bengaluru, even at the Mumbai airport, all flights to Delhi and Bengaluru by Indigo have been cancelled. So this is what the CEO said, that he's very sorry for whatever has happened over the past 3-4 days. He accepted that they couldn't actually get a streamline with the FDTL norms. And in fact, I would also like to tell you that the regulator DGCA was still active, and just 2 hours back they passed out an order in which DGCA has created a separate committee, and this committee will be having 4 members of the DGCA. They will be investigating the entire matter, that what actually went wrong, and plus this has come after that point in time when Indigo in the meeting yesterday accepted that they couldn't comply with the FDTL norms. They had a lot of time to implement, but they just couldn't do it. So all of this will be investigated by the aviation regulator, and once the investigation is done, the committee has to submit the report in the next 15 days, and after that we can expect some other regulatory action or the other, and by that I mean we can expect Indigo to get fined by the DGCA. So that we'll come to know in the coming few days what is the fine that will be imposed to DGCA. But all in all, if we see, everyone hopes that things will get back to normalcy from tomorrow.
Right, Danish. In fact, I hope that things get back to normal from tomorrow, because I was at the Mumbai International Airport Terminal 2 and it was utter chaos there. In fact, I have Sanjay Lazar, aviation expert, joining me now to make sense of this entire commotion. Thank you so much, sir, for joining us. The first question to you would be the obvious one, and I've asked some other experts before as well. How much of this Indigo meltdown was avoidable? Could this have been preventable? Because weren't they seeing this coming, because they expanded their winter schedule so extensively despite knowing about the altercations that had happened to the FDTL norms phase 2?
Thank you, Malika, for having me on your show. Like Danish said, they've got, a gift from God, from the DGCA and the minister. Absolutely 100% of it was avoidable. And I think Indigo, which hitherto was probably, the sharpest operator in the skies in India. When I say sharpest, they were the gold standard of operational excellence. And I've been tracking them for a couple of years for our research firm. And I cannot imagine that such a childish mistake could have been made by such a professional airline. First of all, every airline got 2 years to bring this in. And the order of January 2024 was, carried forward to February 2025. In April, there was a contempt petition, and then they introduced phase 1 in July. Phase 2 was coming in November. Now, Malika, what's interesting, and I've been in airline operations as well. I've run rosters, years ago. There is a process which every airline undertakes 2 to 3 weeks prior to the onset of a new roster. You take your entire standard force of pilots and crew and you run the real-time roster as it would be in the new schedule, which is in this case the winter schedule. And you throw in delays, you throw in fog, you throw in disruptions, you throw in accidents, and you see how strong that roster is, whether your standard force meets the requirement. I know other airlines have done it. I'm certain Indigo has done it, and I'm pretty positive they were aware they were under the standard force. What is a standard force? A standard force is
Mr. Lazar, just so sorry to interrupt you. I would continue this conversation, but we're actually also getting live calls at the moment of passengers stuck perhaps. I have K. Ramakrishnan with me on the phone line. Ramakrishnan, if you can hear me, please tell us, where are you speaking from and what is the problem that you're facing?
I am calling from Andhra Pradesh.
Okay.
We booked our Indigo Airlines ticket.
Okay.
On 9th December.
Okay.
To travel from Bagdora to Gorakhpur.
Okay, Gorakhpur. And you